call side, 23,500 call has seen maximum addition of, that is addition of more than 90 lakh shares. And 23,400 call has seen addition of more than 66 lakh shares. Now on the put side, 22,800 put has seen addition of nearly 24 lakh shares. So it indicates you that on the downside, if we breach 23,000, next support comes around 22,850. That is also 20-day moving average. On the upside, resistance around in the range of 23,400 to 23,500. Lastly, in stocks in focus, keep an eye on banking heavyweights like HDFC Bank and ICICI Bank, because the reason is FIs have sold for two consecutive days. And another stock that I'll keep an eye on is Piramal Enterprises, and the reason is Supreme Court has uphold basically the DHFL's resolution plan, and that's the reason this stock will be in focus.
We'll keep an eye out on all of these names. Sudarshan, thanks a lot for that. We take a short break. Up next, we get you more news and updates on the other side. Stay tuned.
I think when you come from the east going into like Gujarat and Mumbai, the fishing fleet that's off the coast there gives you a little bit of a beacon that here we come. And then all throughout India, I think the impression I had was it was just like this network of lights from the bigger cities going down through the smaller cities. Just incredible to look at night as well as during the day, highlighted, of course, by the Himalayas, which was just incredible as a forefront going down into India. I hope, and I think for sure, I'm going to be going back to my father's home country and visiting with people and getting excited about the first, or not the first, but the Indian astronauts who's going up on the Axiom mission coming up. Pretty awesome. They'll have a hometown hero there of their own that will be able to talk.
Welcome back. Now, the US Trade Representative's report continues to place India on a priority watch list, citing intellectual property concerns. It has also flagged concerns over India's internet shutdowns and data localization rules, among others. Abhimanyu Sharma is here with the list of the key concerns raised by the USTR. Abhimanyu.
A day before imposing reciprocal tariffs, the US has raised concerns over several trade practices of India that may harm American interests. Now, these range from localized internet shutdowns that disrupt commercial operations to an Indian regulation that requires that dairy products intended for food must be derived from animals that have not consumed feed which contains blood meal. The USTR report on foreign trade barriers covers 29 major trade partners and has flagged India's regulations on the import of milk, pork and fish products. It has said that it requires genetically modified free certificates without providing a scientific or a risk-based justification. The US has also expressed concerns over India's price caps on coronary stents and knee implants, stating that these have not kept pace with inflation and do not account for production costs of innovation and potentially discourage US companies from serving the Indian market. The US has also expressed concerns about data localization requirements for payment services suppliers and banks. Also, the USTR report has said that India's average MFN applied tariff was 17% in 2023, which was the highest for any major world economy. It has also flagged that budgets since 2014 have completely raised tariffs on imported electronics, telecom, power equipment and renewable energy equipment. It has stated that India's flexibility to change tariffs for agricultural and non-agricultural produce creates a distortion and uncertainty for several American exporters and local businesses.
Abhimanyu, thanks a lot for that update. Now, GST collections in FY25 have risen more than 9% compared to last year. The collections in March stood at 1.96 lakh crore rupees. Now, this is nearly 10% higher on a year-on-year basis. Now, the mop-up in March is also the second highest monthly collection in FY25. So, the GST collections there, an important update coming in last evening. Now, the Indian government is facing a liability of more than 1 lakh crore rupees for outstanding sovereign gold gold bonds at the current price. Now, in a reply to the Parliament, the government also revealed that outstanding sovereign gold bonds have underlying gold of 130 tons. Now, it is highly likely that this liability will increase significantly as the final tranche of the bonds is not set to be fully redeemed until 2032, and gold prices continue to rise steadily. Now, since the initial issuance of the sovereign gold bonds in 2015, gold prices have surged by over a whopping 252%. And in some important national news, the reworked Waqf Bill of 2024 will be introduced today in the Lok Sabha amid staunch opposition from the India bloc and prominent Muslim groups, including the All India Muslim Personal Law Board. The amended bill is likely to have a provision that mandates that the ownership of the existing Waqf properties will remain as is unless they are disputed or are government property. Now remember, this key provision was not there in the bill that was tabled in Parliament in August of last year. Now, at a meeting last evening, the opposition has unanimously decided to have a full discussion on the bill today, and they will vote against it in the Parliament. We take a short break here on Power Breakfast. Up next, we get you cues from the commodities market. There's a lot to track there as well. Stay tuned.
The International Space Station is from his perspective, but I hope I can meet up at some point in time and we can share our experiences with as many people in India as possible, because it's a great country, another wonderful democracy that's trying to put its foot in the space countries, and we'd love to be part of that and help them along.
Getting you the latest now on Donald Trump related developments, we have Dia joining in our special segment, Trump Watch.
President Donald Trump will announce his reciprocal tariff push on Wednesday during an event in the White House Rose Garden. Treasury Secretary Scott Bessent said in a Fox News interview that the tariff announcement would be at 3 p.m. Washington time. The president's team is said to be still finalizing the size and scope of the new levies he's slated to unveil on Wednesday afternoon. President Trump's sweeping tariffs are set to take immediate effect following their official announcement. According to a statement from the administration's top spokeswoman, these new trade measures will be enforced without any delay. President Donald Trump will meet on Wednesday to consider a proposal for divesting TikTok's U.S. operations from Chinese parent company ByteDance, just days ahead of a deadline for a sale of a popular social media app. The administration is considering a deal that would include Oracle Corp and Blackstone Inc. and potentially other investors in a joint venture, reports say. The Trump administration began mass layoffs of 10,000 staffers at U.S. health agencies on Tuesday, according to multiple sources familiar with the situation, with security guards barring entry to some employees just hours after they received dismissal notices. The cuts, which affect several high-profile agencies under the Department of Health and Human Services, including the FDA, CDC, and National Institutes of Health, are part of a broad plan by President Donald Trump and ally Elon Musk to shrink the federal government and slash spending. That's all for today. Back to you.
Dia, thanks a lot for that. Of course, all eyes on that big event later tonight. Now, Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. A slight let-off in both crude and gold prices, but what else are you picking up?
Oh, well, yes, Hormuz. Overnight, we've seen some profit taking come in. So copper was down 0.5%, silver fell 1.5%, and gold prices were 1/10% down. But come Asia morning right now, and we're looking at a bit of a buying coming back. Well, all eyes really on the U.S. Tariffs, the reciprocal ones. And ahead of that, there's, the volumes clearly have suffered in the Asian markets, and you perhaps would see that happen in the European markets as well. So crude oil prices are off its 5-week highs. Reciprocal tariff announcement. The other thing that the crude markets are watching out for is the OPEC and allies meeting, which was earlier supposed to happen on 5th of April, now has been shifted to 3rd of April. And the expectation is that 135,000 barrels per day from the month of May, as an increase in output, perhaps would see a go-ahead. But it's also the gold prices. As you said, yes, we've seen some profit taking, but we're still holding above $3,100 an ounce. The weak U.S. consumer survey data that came in yesterday has been supportive for the prices. And then apart from all of this, it's also going to be about the U.S. non-farm payroll data on Friday. So the next 2-3 days are going to be very, very crucial.
Very crucial indeed. Manisha, thanks a lot for that update. We'll keep an eye out on all of these factors. But with that, we call time on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazar Morning Call sets you up for the day's trade.
મારું યાત્રા ચાલે છે પદયાત્રા અહીંયા જામનગર અમારા ઘરથી દ્વારકાધીશ સુધી અને બસ આ બધાના આશીર્વાદ રહે અને શ્રીજી બાબા દ્વારકાધીશના બધા ઉપર કૃપા રહે આ જ મારી પ્રાર્થના છે અને અમે હમણાં પદયાત્રામાં 5 દિવસથી ચાલીએ છીએ અને 2-4 દિવસમાં પહોંચી જશું દ્વારકાધીશનું કૃપા રહે અને બધા શ્રીજી બાબા બધાને સંભાળીને રાખે ને બધાને આશીર્વાદ આપે બધા યુવાને ભગવાનના પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને સનાતન પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને બસ એ જ મારી બધા યુવાને એક મેસેજ મોકલાવું છું મારા ભાઈઓ અને મારા મિત્રોને કે આ બધા શ્રીજી બાબાના આશીર્વાદ લઈને આગળ વધો અને જ્યારે ભગવાન છે તો કંઈ ચિંતા નહીં કરવાનું
Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. It's the middle of the week. It's Wednesday morning, but it is also, more importantly, April 2nd, which is, of course, the reciprocal tariffs day. And that essentially, I think, will dictate how markets trade, the commentary, views, everything, at least for the next 24, 48 hours is going to be around that. I'm Prashant. With me, my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, morning folks. I don't know, are you feeling liberated? I don't know who is or who isn't. But yeah, I think we're all fully strapped up, waiting for those headlines to roll in.
Well, that's right. All eyes on President Trump. And by tomorrow, this time, we should have some more clarity, at least. Some more.
Some clarity, by the way, seems to have come in last night. One of the points was, well, how are these tariffs going to be implemented? They're saying immediately.
Yeah, I was thinking about your questions, what you put up on the wall. One of those questions has been answered.
And that is an important question, not in a good way. Because, you know, if they had said these tariffs are going to be implemented in 1 month, 2 months, 3 months, it gives time for negotiation. I mean, the markets would have read it like it was maybe a little dovish, but this is now, immediately. So using emergency powers. But, you know, it's not done till it's done. It's not, it's not dull till the man's spoken. And that's going to be later tonight. I think about 1 o'clock, roughly 1 o'clock, we got exact timings now which are coming through. But about 1:30 our time is when essentially those will start to happen. Now, let's just quickly rewind the clock back to tell you, in terms of what has happened and what you need to know as we start another session. So U.S. equities were down once again, at least intraday. They were down over 1%, but they essentially wiped out those losses. We ended higher. What was the weakness triggered by? There was weak ISM data. And again, I mean, you know, the ISM number once again is showing consumer confidence, etc. is lower. Prices paid component is higher. Once again, that stagflationary kind of a data point, adding to the many that we've had, high-frequency data points, pointing in that direction for the last many weeks now. There was also the job openings data, which was also weak. But while we ended higher, maybe a little to do with positioning, S&P was up about 1/3%, NASDAQ was up almost 0.9%. I mean, names like Tesla, etc. were up 3-4% last night. But pretty choppy day into what Trump has been calling Liberation Day, Reciprocal Tariffs Day, as we all know it. And of course, he's expected to deliver remarks, as I said, 4 p.m. Eastern time, about 1 o'clock or so, 1 a.m. Later today, which is, of course, I mean, Thursday early morning. But we'll, of course, react to this tomorrow morning. Now, the important point is that White House confirmed that tariffs will be effective immediately. And I think that is pretty significant for all the reasons that we discussed. If there was some time given, if these tariffs were supposed to be phased in, which is, well, they want to do 20, they do 10 now, and they kind of dangle 10 over everyone's heads till, people come and negotiate according to what they want. I mean, it would have been treated and seen as opening gambit, which is maximum. And then you kind of sort of try and walk back based on how negotiations go. But, well, if you say 20 and do it immediately, the room is lesser. And I think that is the implication. But again, I mean, we've heard White House say it. As I said, we need to see it happen to believe it, because we've heard many, many things over the last many weeks now with how these tariffs are going to be. We had, a Fed representative who said that Trump tariffs could raise both inflation and unemployment and basically create an issue for central bank and what they'd want to do. The 10-year was down 3 basis points. We're about 4.22. The oil prices went up again, almost 75. So we had about 1.5% move to just under $75. Dollar was a little mixed as you compare the broader dollar, that is, as compared to some of the bigger peers. Now, just to circle and tie in the levels, now the Nifty's managed to hold on to 23,142 yesterday. That is a number that we put out yesterday, which is a 38% retracement of the entire rise from the 3rd of March low to the recent high, which was, I think, around the 25th of March. So 23,142 is that number. The Nifty broke that, but we ended slightly above it, 20 points above it. So that becomes the first one. And of course, the next downside level then becomes the 50% retracement, which is 22,917 on the way down. Bank Nifty broke below its 40-day exponential moving average. The support zone comes in at 56.41 to 57.95. Basically, it's a gap area. It's also 5641 is also a double bottom. So this is the range which the Nifty Bank needs to protect. And of course, if it does not, the 38% retracement to the same rise that we saw on the Nifty, that stands at 50,398, 5,400 roughly. So that's the setup this morning. I mean, again, it's going to be all based as a bit of a binary kind of a thing. We don't know whether, as I've been sort of calling it, this is a clearing event for markets, a hump to get over, or, I mean, it can still surprise on the downside. And it's possible. I mean, both are possible. So maybe stay on the sidelines at least for today. I mean, you know, for large caps, etc., that FII selling bit is back. And we'll talk more about that in a bit. GIFT Nifty will come up on your screen, which gives you a sense of how we are starting absolutely flat. Like I mean, it's basically holding pattern, I guess, till we get that clarity. Surabhi.
Absolutely. And that's the sort of, you know, fate of markets around the region as well. Very, very quiet right now, waiting for this storm to pass. By the way, yesterday, U.S. Treasury Secretary Scott Bessent, he said that whatever is going to be announced on Wednesday, the 2nd of April, that would be the highest tariff cap. And then he made the point that there would be some scope for negotiation downwards from there. So you declare the highest cap, and then if the reciprocal country is willing to kind of work with the U.S. and bring those numbers down, then you could see eventually lower tariffs. So that's the starting point, and it's the highest point at which things will kick off. And then, of course, we know now that this is going to be absolutely immediate. That highest tariff cap will be in effect immediately. No waiting for any new legislation on that. So Asian markets, what are they doing? They're just treading waters. Very, very quiet out there. Not too much movement. You're talking about a 0.25% up or down, depending on which market you're looking at. The Nikkei is flashing a little bit of red now. The Hong Kong market is still slightly positive. The Hang Seng, you can see there, it's up about 100 odd points at this juncture. There continues to be obviously that sense of unease in the market, which is why risk haven assets like the yen, they're continuing to be pretty well bid. The yen is still below 150 to the dollar. There you see 149.82. So it gives a sense of the unease that's playing out in the market. Okay, now for us, the issue is that the market here, the Nifty, has repeatedly been making lower highs. Last 4 sessions or so, we've been making lower highs ever since we hit the 23,800 marks. There's distribution in the large cap space that's very, very clearly playing out. The Nifty yesterday lost the 200-day exponential moving average. It lost the 50-day regular, the daily moving average as well. So the weakness has been becoming a little more persistent. And the VIX yesterday, by the way, it was surging big time because of all this uncertainty. Almost 9% rise on the VIX, and we are about at around just under 13, just under 14 for the time being. Now the flows picture, and this is the slightly more worrying part. March was a lot better. April so far not that great. I mean, Friday we had a big sell number of over 4,300 crores. Yesterday selling was almost 6,000 crores, 5,900. Domestic institutions, as usual, are offering some support, 4,300 odd. So the FPI selling resuming is a bit of a worry point. Not too many major stocks in focus. It's more global today in nature as we're starting with the overall setup. Coal India has hiked prices by about 10 rupees a ton for various varieties of coal. So let's watch out for that. Moil has hiked prices on various grades of manganese ore. By about 0.5% to 0.3%. So some of those PSU names, the miners, will be in focus. And by the way, I'll just end with the interesting comments coming in from the Parliament, from the Finance Minister in the Parliament yesterday on divestment, since PSUs have been such a flavor. I think it was in response to a question about the divestment target. She said, FY25, we didn't put in place a divestment target because the government is taking a quote-unquote calibrated approach to divestment. This gradual dilution in stake is also in the interest of minority shareholders. Remember what used to happen earlier? Suddenly an OFS is announced and then the stock would be under pressure, that particular PSU stock. That's not happening. And she says that's why we're taking a calibrated approach. So let's see. But yeah, Nigel, we have this volatile next 24 hours to navigate now.
Well, that's right. And the FI, the net selling that we see in the cash market, that's something that's making you a little bit uncomfortable. And what they've done in the last couple of trading sessions is they've unwound some longs and they've added some shorts. So that's what they did even in yesterday's trading session. And now the short positioning moves up to around 69% or thereabouts. But on a low base, both the FIs as well as the clients, well, they are piling on their respective positions. So if you look at the FI short positions, that's doubled, from the start of the series, just two sessions into the series. But that, in fact, has doubled. And even the client longs from very, very low levels, that's tripled. As of now, both of them, FI is net short and the clients net long on, on the index futures. What did the clients do yesterday? If you look at it, they were lightening positions both on index futures, even on stock futures. But they seem to be playing this event big time via the options data. And that's precisely what it suggests. Just take a look at it. Massive addition on the call as well as on put side. But overall for the market, the PCR has come down, which is telling you that yesterday there were some puts that were written, they got unwound, and the calls, they got stacked up. So that's why now the PCR has come down to the lower end of the range. And just take a look at that. 23,400 call, 23,500 call, extremely active. However, the 22,800 put as well did see some activity. And going by this particular data point, which is the 23,400 call, which saw aggressive writing in yesterday's trading session, you get your near-term resistance that you're looking at. This is 23,450. That's the level that we're looking at. While on the downside, till the 20 DMA is protected, well, you'll say pretty much everything is okay. This is the line in the sand. You don't want the 22,800 odd mark to get broken. On the Nifty Bank, two levels we're looking at. Yesterday, the 200 DMA got broken, which was a bit of a problem point because it got broken and we ended below that. The next reference point comes in at around the 100 DMA or thereabouts. The PCR, if it moves down to around 0.7 or thereabouts, normally we see a bit of a bounce. The 22,800 mark, that's extremely crucial going into the big event. So let's see how this plays out.
All right, no, it's a big one, and we'll see what happens. We have someone, who's been closely watching this and has got lots to say. Marco Papik is Chief Strategist at BCA Research. Marco, good to have you with us here. Thanks very much. I remember you, I wish we had that. I think you'd put out was it a meme? Various stages of Trump tariffs, right? And I wish we had that for our viewers. It was quite funny, but also actually was true to the point. What's your sense now? Moment of truth is here later tonight. How will this play out in your opinion?
Well, I think that Liberation Day, as it's being called here in America, strangely, I don't get a day off or to raise prices on my clients. But anyways, the Liberation Day, April 2nd, of course, is coming. And I think that the reason that Scott Bessent comments were important, and I'm so glad that you introduced him, not many people in the markets are actually picking up on that, but that's a very crucial point. This idea that this is the highest level we're going to get. In other words, we could have April 2nd come in pretty hot with a very, very high level of tariffs, a pretty shocking moment, lots of selling, lots of VIX going up, but it may be the peak in deglobalization hysteria. And so that's how I would reference this. I think that that's the most important point, that this will be the worst, the moment when every new news item after this, in sort of rate of change terms, becomes better and better.
But Marco, that's is that so? You're saying that is not priced in? I think I have read a fair bit which kind of points to that, a maximalist kind of approach, like an opening gambit, which is high, and then you kind of walk back from there. You work back based on negotiations and how things go. I mean, it's tough to say what is in the price, right? I mean, we don't know what is the news and then what is in the price, but that is kind of understood, isn't it? Otherwise, I mean, the markets. Are you saying the markets see a big relief from that point on? I mean, how would things pan out? They shouldn't sell off if that is not in the if this is known, right?
So I would say that, yeah, you're right. I mean, I think that there could be a pretty interesting buying opportunity from April 3rd and 4th and onwards. And then, of course, the question becomes pretty technical, which is, okay, fine, it's an opening gambit, it's a negotiating tactic. How long will it take these negotiations to happen? That's where the fundamental economic data will drive price action going forward. It won't be really the back and forth on trade negotiations. It will be like, well, look, I mean, if the negotiations to lower tariffs take 18 months or 24 months, as most trade negotiations take, well, then we could have a global recession while you're figuring out, where to end up. So I agree that there will still be a level of uncertainty. But I think that the fact that the Trump administration has pivoted pretty hard away from some other verbiage towards this kind of idea that they're just simply seeking fair trade and that they want to lower tariffs, I think that that is extremely positive. So what kind of verbiage have they pivoted away? Just to be clear, just to answer this question, remember when tariffs were about raising revenue for the US Treasury? Remember when it was about punishing the rest of the world, which has been free riding and which has tasted sweet taste of liberty thanks to American sacrifices? That's where we were 4-5 months ago. That's where the verbiage from the White House was. And now suddenly, no. It's just an opening gamut. We just want India to lower tariffs on America. Well, wait a minute. That's not what you were saying 3-4 months ago when this was really about financing American tax cuts with raising prices on, Indian imports or any other imports. And I think that shift in rhetoric is extremely important and we should acknowledge it.
A reality check, Marco. That's what some of the commentators here in India, some of the big market watchers have been saying, that finally the U.S. administration is going to be in for an economic reality check. Prices, costs, commodities, final output, productivity, all that is hard math and you can't take away from that. And eventually it'll prevail. So I really want to believe what you're saying. I got the same sense that you start with this, big opening gambit, then the reality, then the negotiations. You give some, I give some. And then we come down to sort of better levels. So perhaps this indeed is the worst, the peak. And then for markets, it just gets better from here. So in that context, tell us what you've been doing last couple of weeks. Have you been sort of hedging your bets when it comes to U.S. equities? Are you looking outside the U.S.? If yes, which markets?
Well, yes, as you guys know, I've been favoring this kind of tilt towards the rest of the world. I think ironically, Trump's America First policies have pricked the bubble of American exceptionalism. That's how the market that's what the market has been telling us. So it's European and Chinese markets, even EM, broad EM, that have outperformed the US. Dollar has been declining. I think that we're in a secular shift towards that. So I think the next 5 years are going to see outperformance of EM and Europe and Japan relative to the US. I'm not shifting away from that. But in the short term, I think it is a correct move to kind of stay on the sidelines and not be sticking your head out with anything, whether anything risk on. I think gold has been a great hedge for the last month that I've been playing. Yen, less so. Surprisingly, yen hasn't really rallied relative to the dollar, but that would be my other hedge as well. So those are my two favorite hedges for kind of surviving the next moment of turbulence. Your point is reality check is coming in. It's already come. The 10-year yield has not come down as much as it should have, given the increase in recession probabilities. And that's telling you that those long-term inflation expectations, thanks to President Trump's policies, are already feeding into actual market moves. So borrowing rates in the U.S. continue to be uncomfortably high, even though recession risk has gone up. And I think that's something that folks in the White House are watching very carefully.
Hi, Marco. Good to see you on the show. Marco, talking about yields, the difference between the Indian bond as well as the US bond, that's come down drastically, right? And sometimes that's a recipe for, the domestic currency seeing some kind of weakness. And it could be followed by FI selling as well. The flows here into India in the equity markets have been mixed. We had a burst of a week or so of a good amount of inflows, and that's reversed as well. What kind of feedback are you hearing from the foreign institutional investors with regard to the Indian markets? Because we were expensive at one point of time, but those valuations have pulled back now. Your take?
Yeah, so I think there won't be an instinctive, reactive move into India like there was in 2018 during the last trade war, where India was seen as a kind of a safe haven because it's such an insulated economy. In many ways, I think that the world is just different between 2018 and 2025. You're right, valuations have improved. I've been relatively bearish on India for the past 12 months because of those valuations, and I do think that flows are going to return to emerging markets. I just don't know if India is necessarily the top of the pack, and this is kind of the same answer I always give you. I think India is going to be okay. I just don't think it's going to be the best performing market, as it was, if you remember, from 2020 to 2024. I'm asking you if you remember. Of course you do. It's been a great 4 years for India. But I think that's going to, the delta in Indian performance is going to slow down. I don't think it's going to be my #1 pick in emerging markets, but I'm also not bearish.
Why is that, Marco? Very quickly, 30 seconds left. So what are you liking more than India? Why wouldn't India get the lion's share of that flows benefit?
So I think that there's two answers to that question. I think we're in a commodities secular bull market, and I think that's going to continue. So if you look at the price of commodities, for example, over the past 18 months, even when China was effectively plumbing lows in terms of its economic performance, commodities actually held up. And I think that's an incredible setup. If China so much as shows a pulse, if China so much as shows a blip of life, I think commodities will be on fire. So that's number one. And in emerging markets, I think India is often sort of fighting against commodity producers for that attention from institutional investors. The second reason is that I think there's a huge right tail risk for Chinese equities and Chinese assets. Now, I say it's a right tail risk. It's a positive. It's not my base case scenario, but there is the chance, and I think it's pretty substantive, like 20, 30%, that there is some sort of a grand bargain between the US and China. And that will recapture some of that attention that China lost, which again will sort of push India down the list of favorables for institutional investors. It's not a knock on India or what's going on in India. It's just more from a valuation perspective and from a interest perspective. Other stories may capture the imagination of institutional investors.
Marco, very, very quickly, just one last point. We heard some over the weekend comments with regards to Russia, Putin. Apparently, Trump was angry. What does that mean? Does it mean that maybe we're not going to see a ceasefire soon? Will that force a ceasefire sooner than expected? How is that developing according to you?
Well, I would just say that too many people overreacted to the Zelensky meeting. There was this sense that America's abandoning Europe. It's not. Trump just objectively wants the war in Ukraine to end, and he's going to just be mean to everyone who stands in the way of that, whether it's Zelensky or Putin. But one thing that I would say, your chyrons on the screen are talking about oil. And I do want to point out that oil prices could be in for a surprising increase, in part because Trump is now threatening secondary sanctions on Russia, which of course would affect, for example, Indian corporates that are buying it. But also, there is something we didn't talk about today, which is strikes against Iran, which could be threatened over the next couple of months. And so I would focus on that as well. And that's maybe a topic for conversation for our next gathering.
Got it. We've made note of that. And absolutely, yeah, we had a chartist yesterday, by the way, was calling $90 plus on Brent oil. So who knows, never know when it's geopolitics. Anything's possible, right? Marco, thank you so much for joining in. Good conversation as always. All right, with that, let's quickly move on and talk about some of the other interactions that are lined up on the show today. Coming up at 8:35, we'll have Peter Maguire of Trading.com to actually put the spotlight on commodities in a more deeper way. What lies ahead as these tariff negotiations roll on? At 9 o'clock, we have Praveen Sahai, who's the analyst at PL Capital, to talk about the consumer durable sector as the summer season sets in. Pradeep Bhattacharya of Edelweiss Mutual Fund is our market master of the day. He joins in at 9:20. At 9:30, we chat with Mr. Vimal Kejriwal of KC International. Company's been backing lots of orders as the last fiscal year ended. After that, we have a full discussion on the trade and tariff issues coming up. Anup Vadhavan, former Commerce Secretary, and Avijit Das, international trade expert, will be talking to us about the current issues at play. At 9:50, Lalit Agarwal of V-Mart Retail joins in to talk about demand trends. And finally, in our special segment, Indianomics, Lata today will be in conversation with Dinesh Khara, former chairman of State Bank of India, S.S. Mundra, former deputy governor of RBI, and Srinivasan Varadarajan of Union Bank of India to talk about how the Indian banking system is going through a structural shift.
Time to slip into a quick break. We've got a lot of stock-specific action to track for you. Get to that in just a bit in our special Top 10 segment. For the time being, I'll run you through the list. We're looking at Hyundai, NMDC, Coal India, CSB Bank, SBI Cards. All of them will be reacting to positive news flow. Add to the list V-Mart Retail as well. On the flip side, Hindalco, Tata Motors, MCX and RITES will be reacting to negative news flow. Slip into that break, come back, we'll get into further detail on all of these names.
Welcome back. So some of the markets are flashing a little bit of green across Asia. The Hong Kong market's actually doing okay. The Australian market's up about 0.25%. The Nikkei that was in the red has now, turned towards the flat line. So that's how it is. Keeping fingers crossed. That's the mood across Asia. Let's get at the implied open up. It was very quiet last week. Checked it. Still the same, just about 4-5 points up. That's how we could actually start up. Okay, let's straight away get to the stock list of the morning. Plenty of names to watch as always. We have our team standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. Nigel, some news coming in on Hindalco. What's happening?
Well, that's right. Hindalco, they had their annual meet and they've given the broad takeaways. So just run you through a few of them. They're saying that Novelis in the near term will return to the Q2 FY25 profitability, which means it'll be closer to around $500 per ton. That's good. They're saying the longer term guidance of around $600 per ton, that holds as well. That's positive. They said that before. They're talking about, moving to 75% recycled content from around 63% right now. That's at Novelis. Novelis, the growth capex has been maintained at around $5 billion. No worries on that front. I think the problem will be on the Indian capex, and that could be the lone point that could pressurize the stock. Otherwise, everything else is more or less in line and more or less positive. The Indian capex has increased from around $1 billion that they had outlined earlier to around $5 billion odd. And the capital allocation priorities, they say that the debt to EBITDA will be maintained at around 2x on a consolidated level. Phillip Capital, they have a buy rating on the stock with a target price of around 760 rupees. However, they are talking about this FY27 capex number, which is expected to peak at around $4 billion, $2 billion for India, $2 billion for Novelis as well. And because of this capital intensive year, they say there could be a bit of a mismatch on the cash flows, which could be a bit of a risk to the stock in today's trading session. So because the Indian capex has been increased, I expect some kind of pressure on the stock in today's trading session.
Oh, okay.
All right, Nigel, thanks very much for that. So keep an eye out on this one on the downside. Auto sales numbers, we've been, of course, telling you what's been coming our way. Sudarshan is here with a summary. So over to you.
Morning, Prashant. So today I have two stocks in focus. First one is Tata Motors. Here I'm going with red despite company reporting sales that were higher than estimates. And the reason of going with red is because it's underperformance against the peers. Talking about the CV segment, it has shown a decline of 3%, while for Ashok Leyland, the growth was at 15%. In the passenger vehicle segment too, it saw a minor increase of 3%, while on the other side, M&M SUV segment saw a growth of more than 23%. Even Maruti has shown a growth of almost 6% for its utility vehicle or say SUV segment. And that is the reason I'm going with red for Tata Motors. Next up is Hyundai Motors. Here, total sales were higher than estimates, and the main contributor remains the SUV segment. Its Creta remains the highest selling SUV in India, and in FY25, SUVs share to total sales for Hyundai remains around 70%. That's the highest that company has reported in the recent times. Also, the total sales were up nearly 3%, with both domestic and exports seeing a healthy increase. And that's the reason I'm going with green for Hyundai India.
Okay, all right. Thanks a lot for that, Sudarshan. Well, I'm looking at two more stocks, NMDC as well as Coal India. Now, we have the operational performance that's coming for NMDC. And it looks actually pretty good because, remember, they had a strike in the past month that would affect the numbers. And even taking that into account, actually, they've given a mid-single-digit growth in the total sales numbers, which is heartening because at Chhattisgarh, those numbers were hurt by the strike that was there. So on expected lines, that's lower. But they seem to have made up most of that at Karnataka. And that's why you're getting a mild growth. Though for the year, it's more or less flattish, expecting a bit of a green tinge on NMDC. Because of this operational performance, and as Sudarshan said, maybe that higher royalty tax in Karnataka may be pushed back a little bit. So we'll have to see how that pans out. Tinge of green on this one. Coal India, a very, very minor increase is what they've taken of around 10 rupees per ton, both for the coal, for coking coal as well as for non-coking coal. And it's for both the regulated as well as the non-regulated sectors across Coal India. They're saying that the contribution of this will go to a particular corpus, which hasn't been factored in by the state. And it comes into effect from the middle of April. So mild green on the stock is what we're going with. Just a 10 rupee increase per ton. But let's hop across to Vamakshi. She's here to tell us about MCX. Vamakshi?
Well, Nigel, good morning. MCX has, will be in focus on the back of a trading activity update going with the red for this counter, and that is because, as per Morgan Stanley, MCX transaction revenue stood at 289 crores in the fourth quarter. This is a downtick of almost 4% as compared to the previous month, and it is also a tad bit lower as compared to Morgan Stanley's own estimate of 293 crores. The average daily transaction revenue stood at 3.9 crores for the fourth quarter. This is slightly below Morgan Stanley's estimates of 3.95 crore. Now keep in mind that Morgan Stanley has an underweight call on this counter, target price of 3,400, which is significantly lower as compared to where the stock is trading today. They're building in 4.02 crores of ADTR in FY26 and 4.19 crore for FY27. UBS also has a note that has come out on MCX. They have a buy call, but they've gone ahead and cut their target price from 7,800 to 7,250 crores. They believe that the volumes this time around indicate a soft quarter, but they're expecting the volumes to improve further on. Overall, they're expecting the quarter 4 revenue to decline by almost 5% sequentially. So therefore, going with the red for MCX.
Okay, that's a classic tug of war, bull versus bear, between the views coming in, UBS on the bullish side and Morgan on the bearish side on MCX. Got it, Pamakshi. Thank you very much. Over to Abhishek then. Some of the quarterly updates have been coming in for CSB Bank, I think, and SBI Card. Abhishek?
Well, to begin with CSB Bank, it's been an outstanding quarter for them on a sequential basis with respect to the business momentum. Take a look at deposits. That's grown by 24% YOY and more than 10% on a sequential basis. Calculation shows that the CASA ratio might have improved quarter-on-quarter by about 10 basis points, which is heartening to see. Gross advances are up nearly 30% YOY and about 10.1% quarter-on-quarter. In this, the gold loans have grown at 42.5% YOY and about 4.5 to 8% on a sequential basis. The gold loan share has increased to, has declined on a sequential basis, but it's improved on a YOY basis. X of gold loans, the total loan growth is at 25.3% YOY and about 11.65% on a sequential basis. Now, RBI has given out, credit card data for the industry. So, for the industry, the total card issuances have grown by 8.7% YOY and about 0.4% sequentially, but the spends have declined massively on a month-on-month basis. So overall, the spends have declined by 9.2% month-on-month, and average spends hence have declined by 9.5% on a month-on-month basis. For SBI Card, the total card issuances have grown by 10.2% YOY and about 0.9% on a month-on-month basis. The spends have increased by 12.5% YOY and declined by 9.7% on a month-on-month basis. So average spends over there have declined more than 10.5% on a month-on-month basis. So take a look at the market share. The credit cards, overall the total number of cards, that market share has improved both YOY and month-on-month. However, the spends market share has declined on a month-on-month basis. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Well, let's wind this down with Vinny, who's here to tell us about V-Mart Retail and REITs. Morning, Vinny.
Good morning, Nigel. So starting with V-Mart Retail, Q4 update that has come, and a good update is what we could call it, because revenue has seen a growth of around 17%. This is for Q4 itself. Overall, V-Mart Retail's revenue, that's seen an improvement of 18%, and LimeRoad continues to be a bit under pressure. That's seen a decline in terms of revenue of 47% on a year-on-year basis. Now, same-store sales growth, that's an important one for the retail company. Q4 same-store sales growth has come in at 8%, while for the full year, they've seen a growth of around 11%, and V-Mart itself has seen a 7% improvement in terms of same-store sales growth. Overall, when you're looking at it in terms of commentary compared to Q3 also, they have done well, and in line with what the company had highlighted. They said that the revenues would be in that mid to high single-digit revenue growth, and that is what they've achieved in terms of for FY25. So we're expecting green coming in on the screen for V-Mart Retail. Other than that, REITs, a bit of an issue coming in on this front, because REITs and the UP State Bridge Corporation, they have actually terminated one of their agreements. Now, REITs is saying that this was mainly due to some interpretation issues that they had in terms of the agreement. No work had started still for the company, but and they're not going to see any financial impact, but still, this is a big contract that is for the company which they have lost. So that is why we could see some bit of a red coming in on the screen for REITs.
Okay, all right. Got it, Vinny. Thanks very much. By the way, on V-Mart Retail, we'll be touching base with the management. They will be joining in at around 9:50 this morning to talk about demand trends and, of course, the outlook for FY26. Let's quickly recap our list of stocks to watch this morning. The ones that have positive news flow around them are Hyundai Motors, NMDC, Coal India, CSB Bank and V-Mart Retail. The ones that have negative news flow around them, SBI Card, Hindalco, Tata Motors, MCX and RITES. Okay, we'll take a quick break. Come up on the other side and we'll talk commodities. What do these tariffs mean for the commodity universe? The huge rise in gold. Peter Maguire of Trading.com will join in.
If they pump in more capex,
Welcome back to Bazar Morning Call. Well, we've told you about the equity markets, but the commodity space is buzzing around. Manisha Gupta joins us to help us out with a complete wrap of what's going on overnight. Morning, Manisha.
Morning, Nigel, and thank you for that. Well, I'll start with the gold prices because we finally seem to be taking a bit of a breather after a string of record highs. Well, let me tell you that in this year, we've seen 20 days of all-time highs already, and we are up by nearly 19% for the gold prices in this year. A lot of safe haven money, new money, and a lot of alternate money really seems to be flowing into gold right now. We've seen 10% of gains in the previous month itself. Well, ahead of tariffs, the volumes in the Asian markets are slightly on the lower side, but we still are holding about 3,100 and not too far away from that all-time high. What has seen profit taking, though, has been metals as a sector. Silver fell 1.5% overnight. Copper was down 0.5% as well. But because the dollar index also is declining, there is some support we've seen coming because of that. And finally, about the crude oil prices, we did see 5-week highs yesterday, but that has come off a bit ahead of the reciprocal tariff announcement today in the evening. The U.S. crude inventories also surged by 6 million barrels. And for crude, more importantly, it is going to be about the OPEC and allies meeting. Earlier, it was scheduled for 5th of April. Now it is rescheduled for 3rd of April. And there is an expectation that you could be looking at an approval of a hike of 135,000 barrels per day from the month of May. So plenty happening. And in addition of that, you also have the U.S. non-farm payroll data that comes in on Friday. So the rest of the week, clearly, very, very volatile.
Oh, absolutely. It's almost dizzying, Manisha. So many cues, right? And on oil, like you said, the U.S. inventories are higher. Then there's this OPEC meeting. And then there is Trump saying that he's very, quote-unquote, pissed off with Putin. So, yeah, there's a lot going on. Thank you very much for wrapping it all up for us. Let's actually, take that point forward with Peter Maguire as well, CEO at Trading.com. Now that this big day is finally going to be behind us, 24 hours from now, what is the commodity world looking out for? Peter, hi, great to have you on. I want to start with gold. I mean, it's been sort of the mother of all bull runs, at least in the last 12 months, including, of course, this calendar year. But a lot of commentators are saying that maybe April 2nd is the peak of the tariff tantrum. And then you gradually start moving to more certainty. The numbers are known. The negotiations start getting known. Do you see gold anywhere close to a top?
Well, good morning, Surabhi. I mean, lovely to see you. I think the overall momentum, and building on what you have just said, and certainly what Manisha mentioned, it's been extraordinary. You can't take your eyes off that 19% up to the upside since January 1, that 3-month window, extraordinary. Now, whether we're going to see whether we're at the top now for the next 3 to 6 months, or there's further legs to run, 3150, 3250 are those sort of psychological barriers, and everyone's focused on 3250 as the key number. Now, I'm conscious as far as President Trump, we all understand, and no one knows until 2000 GMT today when we get that drop from, and how he explains moving forward. So, Surabhi, I'm still believing that there's much more upside over Q2.
Peter, you said that would be the first port of call. And what's the next medium-term level?
I think it's got to be 32.50. I feel as though that overall momentum, if it was to put on another $100, that's the big psychological barrier, and that's what many analysts are saying is the real key driver. If it gets to that number, then I think we're really going to see some, further horsepower to the upside.
Hi, Peter. Good morning. Good to see you, Ben. One bearish call or one point that people have been raising is the gold RSI. That's moved to 70 plus levels, and normally we see a bit of a pullback, but it appears as of now it's got the momentum with it. The other question I wanted to ask you is on silver, because many are talking about silver actually being a better play, and from here on maybe it outperforms gold. Are you in that camp?
Yeah, I am, Nigel, and good to see you. And I think a couple of things. I'll answer the silver one first. We've had 2+ decades of underinvestment across that whole capex moving forward, and when we look in retrospect. So for the gold to silver ratio, I think it's very much out of kilter, and I think that you probably see further up, not only further upside for silver, but really start to take some big leaps forward. And I feel as though that you'll see a narrowing of that relationship between the gold to silver ratio. I'm not prepared to go out there on a limb, but you've only got to divide one by the other, and that'll tell you where it is at the moment. The other side is, as you mentioned, the overall US dollar impact, what's happening as far as risk, where does the rest of the world see it? Precious metals seem to be the place to be, and it's certainly everyone's focus at the moment.
But beyond the very near term, right, and markets will, they're forward sort of looking mechanisms in that sense. If the US, the Trump administration is able to do some of what they are wanting to do, lower the cost of debt, lower deficits, etc., etc. I mean, that is long-term positive for some of the other risk assets, and not exactly safe haven assets like precious metals. Would you agree with that?
Well, I do agree with that in a lot of ways, Prashant. Good morning. I feel as though that there are so many moving parts with this. You've got huge central bank buying, if I look at the gold situation over the last, let's say, 5+ years. Secondly, retail investment, and India is just a classic case. People storing it as and you've been doing that for hundreds, if not thousands of years. And that momentum seems to be picking up across the fabric of society. And that's global. And then, of course, you've got the paper market, and then you've got the other side, the fear entering the markets. Where do people see? And if President Trump, as you mentioned, is able to pull off all of these major structural changes, which would in turn boost the US economy, one would think that maybe a little bit of that hot air would come out of gold. But again, this is a work in progress, and at the moment, it's very hard to stand in front of this train, because I think you'd get run over by it.
Yeah, absolutely. Not that too many people in India would be complaining. I think they've been on the train for many years, like you're saying, right? So they're happily riding along. Peter, on oil, and oil is interesting. Yesterday we had a chartist who suddenly said that he's seeing $90 on the charts. I don't know how, because Manisha was telling us that OPEC is getting ready to pump more. Trump is all about drill, baby, drill. The only outlier I see in the situation is that ceasefire not going through. Because they're still talking around it, Russia-Ukraine. What's your sense on oil?
Well, Surabhi, I mean, that's right. But there would have to be, I think, for that to hit $90, and I'm not in that camp at the moment, but that would be, I think, a geopolitical play, and that would be something dramatic happening as far as Strait of Hormuz, and there'd be an attack of some description, I think, on Iran for that to materialise. And let's just hope that we don't go down that side of, from an economic and from a warfare side. But that would be, I think, would underpin from that geopolitical risk premium built into it. I agree with you. I think President Trump's going to increase it. The Gulf, as he renamed it, Gulf of America, he is going to add value and really drive production. So there's the first side. And I think OPEC are going to certainly pump more. So I'm looking over this Northern Hemisphere summer, actual softness across the crude market as far as price.
And in terms of levels then, since you're not expecting any sort of a spike unless there's some outlier geopolitical event, but otherwise, what's the range for the summer?
Well, I think I would like to be under 70 for Brent, and I think 65-ish for sort of WTI. If it was to break those sort of numbers and further downdraft, I'm conscious as far as US dollar. I'm really conscious as far as what's happened with equities over the last couple of months. There's so many components to this, and naturally you think of far as what happens with US dollar. The bond yields, 4.2 for the 10-year, all of these factors. So, yeah, I'm thinking weakness, and yeah, there's plenty of crude out there.
Okay, well, it's good for us, Peter. We can do with oil staying stable. We're a large consuming country, right? Thank you very much for joining in. Good to have those views with you today. All right, that's Peter Maguire. With that, let's move on. Just about 15 minutes before we start getting our pre-open rates, we have Devin Choksi joining in for some ideas. Devin, thanks for being with us. I'll start with the big event. Everyone's talking about this whole tariff business. We'll eventually get that number. Let's start with the pocket of the market that has the maximum amount of exposure. I mean, textiles is still a smaller part of the market, but pharma is big. A lot of these companies are exporting to the US. What would your advice be? Have you been advising clients to reduce exposure at all?
Yeah, good morning, Sylvie. Well, we are of the view that the pharma being an essential item, probably I think the tariff business would be the least, I think, which will get impacted with as far as the pharma is concerned. And maybe I think we are likely to see some corrective actions, I think, happening on that front, at least if not others. Because I think that's where probably US is largely dependent, including the healthcare industry is completely dependent on it. So I don't think that I think it is going to be changing big time. Maybe some indirect impact, I think, which we are not fully clear about, and that includes the duties on the chemicals, which are basically getting applied onto, could possibly have some impact on the input cost side. But that is something which we would not like to speculate at this point of time. Let the game get played out a little bit more in detail, and then probably I think one could take a view. But as of now, no negative news per se on pharma, particularly the companies which are with the specialty generics, the client's model is continuing to do well, and they will continue to do well. That's what we believe.
Yeah, all right. Hi, Devin. Good morning and good to see you, Ben. Devin, what about Hindalco? You know, they had their analyst meet where they laid down their guidance and everything looks very, very good. You know, they're talking about being prudent in capital allocation. They EBITDA per ton of Novelis. There is a path set out where it moves from the last reported, $450, $500 per ton, all the way to around $600 per ton. The problem, I think, is going to be on the capex they've lined out. For Novelis, $5 billion, no worries. On India, though, earlier they were talking about around $1 billion or thereabouts. Now they have increased that because they've put on a couple of, plans for the India business itself. And sometimes in the past, I've seen that the stock gets derailed just in the near term because of this capex going up. What's your view on the stock? If it dips today, is it a buy?
Yeah, good morning, Nigel. You're spot on, absolutely. I think the experience says that whenever the commodity companies gets into the capex program, till the time the capex gets completed, the stock prices goes nowhere. Maybe I think it forms a range, and within that range it keeps on moving. And that's what is likely to happen. The expansion program, as you rightly indicated, both in Novelis as well as on the domestic front, is basically sounding quite steep as far as the spending is concerned. And it is going to take a good amount of time before we just start getting realization out of it, maybe 27, 28 financial year. So from that perspective, I would like to think that the stock probably would remain in the range bound movement, I think, going forward. We don't have much view at this point of time, even of the commodity prices, given the kind of disturbances that we have in the global markets. So as a result of which, I think we would like to play a little bit safe. Maybe I think the market is giving opportunity at lower level for traders, but I think that's not one at this point of time for Hindalco as I see it. One will have to look at it, I think, from that perspective for at least next 2 years. The stock could remain in the trading range in this particular period.
This entire Telecom, David Morning, Telecom was in focus yesterday, right? I mean, Voda Idea, 20%. I think Indus was up about 5-6%. Bharati, of course, is everyone's favorite name there. Any thoughts here, David?
Roshan, good morning. Well, I think I asked a fundamental question that yes, you converted the loan into equity, agreed. The repayment part is to a greater extent taken care of, definitely a breather. What next? The capex program. You already have 5G implemented by the competitors, and the company is still rolling out the 4G in some pockets, and they are talking about implementing 5G. It's going to be a major capex program, and this program has to be funded. So one will have to be interestingly watching it out as to how this is going to get funded and how exactly the resultant benefit coming out of this particular program for the company. In my viewpoint, the re-rating might happen in the market because this market has a habit of finding some stocks, I think, at lower levels. But I don't think that the fundamental changes beyond a point. The breather is definitely there on the repayment side of the loan, but certainly I think the performance, profit performance, will be one thing which we'll have to be looked out for. So for that, I think one will have to definitely argue for the valuation at that point of time. We'll wait. I don't think that except momentum, we'll buy into the company on the fundamental basis, particularly what are our ideas.
What about trend, Deven? The stock was at 8,000 rupees, came down to 5,000 rupees. In the last couple of trading sessions, actually the stock has seen a good bounce. Even yesterday with the market ending at the low point of the day, I think the stock was up close to around 5%. One element could be that the number of stores that were added in the past quarter was better than what the street was working with. What's your take on the stock added on this 5,400, 5,500 rupees?
Adequately priced, as I see it. I think the valuation's not cheap, and I think most of the store opening, increasing the footfall, adding into the top line and the profits, everything is being factored into the price at this point of time. So maybe I think the market gets a little bit more excited at this point of time, largely because some part of the momentum was seen returning back in the last 15, 17 days in the market. And that's where probably I think some of the momentum activities are happening in the counters. But on the valuation side, everything is in price. Unless I think we see meaningful time correction, probably one would not like to get into it in a hurry.
Devin, so let's just consider one scenario that today we hear about tariffs, and I mean, there is kind of peak pessimism, and then maybe the environment turns a little constructive. We don't know. I mean, it could go completely the other way. There's no real playbook here. But if that is the case, what do you think will do well from here? I mean, how to position for more constructive markets in your opinion, in your coverage universe?
So yes, Prashant, I think it's a very important part, and we keep on fielding this situation daily. The past experience also says that I think whenever these kind of storms have happened in the universe, I think we have strongly come out with we come out very strongly and we remain winners in this particular game. I believe that I think it's going to play out that way. On one side, India is structurally bringing down the cost. We are having the renewable participation happening into the energy cost. Today, the captive power is available at a cheaper cost, and I think most of the main power companies are main manufacturing companies, be it in the area of metal, be it in the area of refinery. They have started getting benefit out of it. So structurally, we are bringing down the cost structure. Even the logistic cost structure, I think we are bringing down in the country. So in a way, if you look at it, manufacturing sector will remain quite competitive, and that's what we try and see in our portfolio stocks, whether the companies are getting benefit out of it. I don't think that the tariff business is going to play out for a longer period of time. Maybe a couple of quarters, you are likely to see some amount of jerks and maybe adjustments. But beyond the point, I think that the companies would try and adjust themselves. And that is a good part. I think we see the really strong India coming out of this particular tariff implementation activity. And that's where I think we believe that strong companies, companies with a proper approach on the cost structure will definitely remain winners or emerge as winners.
Which ones, Devin? You mentioned names, I missed it.
I didn't mention name per se, but maybe I think some of the companies within the heavy power users, particularly the metal commodity companies, the refining companies in particular, and some of the manufacturing companies who are basically resorting to the captive power are likely to be the winners in the near term as far as I think their cost structure is concerned. And we remain distinctly positive on the possibilities on that side.
All right, no, fair enough. Devin, stay with us. We're going to take a quick commercial break here. We'll just come back and get you some technical view on the markets as well, right? I mean, we've bounced off important levels yesterday. So we'll get Mitesh and Sudarshan join in with what they're making of things. Stay tuned.
Business then Indus Tower gains definitely, because they'll get better tenancies and they will also get newer towers with that capex. And the last stakeholder is Bharti Airtel and Jio. They are stakeholders to this as well. Contrary to many beliefs, my belief is that a stronger VIL is better for both those companies than a weaker VIL. For a simple reason that a weaker VIL will resort to pricing and discounting.
Okay, welcome back. Just I think, 6 minutes to go for the pre-open session to kick off. Sudarshan Sukhani and Mitesh Thakur are with us with what they'd want you to do as we start another day, or maybe not do. I guess that's a more important question nowadays. Gentlemen, morning. Mitesh, to you first. What's the setup?
Good morning, Prashant. So, the setup was quite positive, and in fact, the indicators haven't declined much, despite the fact that in the last two sessions, we've had a good fall. My sense is that I think, with the first level of support being taken out, we've gone in a bit deeper, which is also okay, I think, because we're still above the daily averages. And therefore, I would be watching levels of 23,100 and then 22,950 as the bigger 150 point support range. Today, we might open flat, which means that we might be around 23,100. My sense is that if we don't break below these levels, then I think in the next few days, we should start some kind of an up move, because the indicators are still, as I mentioned earlier, are still strong. The Bank Nifty is even better in the sense that the averages are at about 50,200 odd levels, but there's a gap support around 50,700, 680 zone. So as long as that is not being filled, I'll maintain a positive bias. So overall, a positive bias, though a bit worried about the fact that in the last 3-4 sessions, as the markets have given a pullback, the hourly charts have slightly turned negative, but I think the overall strength is positive. So we'll maintain the positive stance.
Okay, that's interesting. So keeping the positive view intact on the indices. Got that, Sudarshan. Got that, Mitesh. Sudarshan, let me ask you for your view as well. Morning. What's the call on the indices?
Yeah, good morning. Well, yesterday was a surprise. I thought maybe the markets will hold on and give an opportunity to go long and buy, and that never happened. And the sharp decline was also, at least for me, it was not anticipated. So today is again a day of confusion. Now the markets, ideally, the market should stop at some point and say, okay, this is the final end of this correction, this downside move. But we don't know when that will happen. So unfortunately, I don't have a trade. The best trade is to wait for tomorrow morning.
Okay, so wait for clarity and then kind of wait in the market. Got that. What about stocks though, Sudarshan? Are you trading stocks today?
Yes, and there are stocks on the long side also. Stocks sometimes do their own thing. AB Capital, Aditya Birla Capital is a buy with a stop under 181. Gas Authority, GAIL is a buy with a stop under 182. HDFC Life, again, is a buying opportunity with a stop under 680. I have only one intraday short, that is Tata Elxsi. That's an intraday short with a stop above 5,160. Primarily focus on stocks that are giving signs of life. Even if the Nifty were to fall tomorrow, some stocks would do well.
Absolutely. Mitesh, what about you?
I have 3 buys to a sell. On the buying side is Gas Authority. Keep a stop at 182, look for targets of 186. Bank of India is a buy with a stop at 108 for a target of 115. And Astral, after a long time, comes on the buy list. Keep a stop below 1288, look for targets of 1350. One sell call, that's Godrej Properties. Keep a stop at 2066 for targets of 1985.
Okay, all right. Thank you very much, Mitesh, for that. So that's basically the trading setup. 3 buys, 1 sell from Mitesh, and more on the long side as far as Sudarshan is concerned. Expecting, as always is the case, some winners, even if the market tomorrow is on the downside. 2 minutes to go for the pre-open session. We'll take another quick commercial break here. We'll turn our attention also to the consumer durables space. I mean, look out of your window if you're in Mumbai and it may be sort of, cloudy and overcast, but summer is coming. And what are demand trends looking like ahead of that? Praveen Sahai of PL Capital on the other side.
VIL has taken care of its spectrum dues till FY27. And this will allow them to borrow money from the market and pump it back into capex, which allows them to stay competitive in the market. That's immediate gain that they have. The issue is that the problem doesn't get completely solved here, because in March of 26, they'll be due for their AGR dues, and their current EBITDAs do not allow them to cater to that fully, although there'll be some growth in the ARPU, etc. But for now, the money is available with them on their cash flows are not good enough to take care of their capex requirements in the immediate future. So, so they're not completely out of the woods.
Welcome back. This is Open Exchange. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, yesterday we had a few stocks that were moving around in trade. And one stock that was under pressure was actually Voltas. Let's talk about the consumer durable stocks. In yesterday's trading session, there were a couple of them, besides Voltas as well, that was down. And this is surprising because summer demand is shaping up quite well, which in fact should be good for them. Praveen Sahai, the research analyst at PL Capital, joins us on the show. Hi, Praveen. Good morning and good to see you in as always. Praveen, what was the reason for Voltas to see that sort of a sell-off? Everyone's talking about pre-buying. They're saying that, the compressor shortage will not be a factor, at least initially, unless demand is very, very strong. Why was Voltas down close to 5-6%?
Yeah, hi. Good morning, everyone. So basically, see, if you look at for a Voltas prospect, definitely you are right that summer has been, so far has been good, and the way forward also the severity of the summer is expected to be a very good. Definitely the volume growth for the industry is expected to come in. Few things about the Voltas, because Jan, Feb, March, usually for them, they lose a market share to the second and third years. That's a trend from the last 4 years, and that was a visible one. Second thing is there is a escalation in the prices, the cost, and that is not able to pass on. So that is the the another reason that the volume is going to be a good, but the margin may see some under pressure. Being one of the good quarter, the fourth quarter and the Q1 are the usually seasonally better quarters. And in that, if the company is not able to pass on the prices, increased cost, then definitely that's one of the concern. So I believe...
Yeah. So,
sorry.
Praveen, you're saying they could potentially lose some market share because the volumes may not be as much, and margins as well could be under pressure because input costs have gone up. Is that correct?
So, regarding the market share, it's a usual trend from the last 4 years, and usually it gets recovered by the first quarter.
Okay. By the way, the rupee has opened, and there's fair amount of weakness that we're seeing. Yesterday, I think the money markets were shut. Banks were shut because first of the financial year. Now we have the opening. 85.68 is what we're getting on the rupee. Okay, Praveen, hi. I was going through your note on fans, and that's where you were pointing out that I think third quarter, most of the companies undertook some price hikes. And you also say that Havells and Crompton, they've more or less managed, they've maintained their market share and they're seeing stable demand in their regions. So let's talk about this space. And I just throw in maybe a Symphony here as well. I don't know if you track that stock or not, but in the fans and cooling space, which is your preferred stock and why?
Yes, so my preferred is preference right now is RAC, because the room air conditioner growth is quite huge or strong. Now coming to the the another seasonal product, which is a fan, and in this quarter, the fourth quarter, we had seen there is a good improvement in the prices, so around 2 to 5% of increase in the prices across the brand. And in our channel check, that reveals. Second important thing is the inventory level at the dealer has been very strong. So that has above average. So that indicates that the primary sales has been also good for the fourth quarter for all the brands, and especially for the Crompton Havels, because they were sitting on the higher base of a last year fourth quarter. And if the price hike and the good primary sales, that indicates a good number for their ECD portfolio for this quarter.
Okay. So Crompton and Havels, you like these two stocks. And room air conditioners, like you said, you spoke about Voltas. What about the others, Blue Star? Which would be your preferred pick? Which company is showing the maximum, the expectation in terms of growth as well as decent margins?
So the growth-wise, all the Voltas, Blue Star, or Lloyd are expected to deliver a 20 to 25% of a growth. Now here is important is to look at the margin. Who is expected to maintain their margin from here on? And Blue Star, I believe, is better placed in that scenario. That they are the benefit of own manufacturing as well as the penetration improvement, market share maintenance, and the margin maintenance is also evident for the Blue Star. So it's a better placed as compared to the others.
All right, Praveen, any view on Whirlpool? Yesterday that was the lone stock that was up, but it's been the biggest underperformer in the last 1 year or so. The stock has halved from the top. But in yesterday's trading session, the one was up close to around 5% or thereabouts. Valuation seemed to be in favor. The stock trades, I think, at around 27 times in comparison to 45 times in the past. The problems at the promoter end. But any view on the stock at around this 1,050 level?
So we don't track Whirlpool, but overall, general in the category where they are in, that's washing machine and the ref. So those are definitely expected to do well, around 12-13% of a growth in the industry, and being one of the best player in that, and also premiumization is a story. So fundamentally, I'll not see any problem, especially for the Whirlpool. That is only related to the promoter, I believe, whatever the correction is happened for them.
Could it be a strategic fit for any of these players?
No, that's I can't comment on that actually. But yes, the LG is also coming up with an IPO, and I believe this sector, would be in the focus way forward.
Okay.
Okay. All right, Praveen, we'll leave it on that note. Thanks very much for joining in. That's a view on some of the consumer durable stocks, fans, ACs, coolers, as the season is coming in full bloom. By the way, we've got the pre-open rates now kind of settling in. It's very, very quiet out there. 20 points higher on the Nifty. That's all we're getting. Let's talk about any noticeable stocks on the upside. There's Coal India. Some of the consumer names are looking good, at least in the pre-open. Tata Consumer, Titan, Trent. All of these stocks are up and about. And then that's pretty much it. Zomato as well, which was up about 1% yesterday. That's also higher slightly. We have, I think, our technical experts back with us. Sudarshan, if you can hear me, before I ask you about your 9-10 call, just a word on Trent. Because of the fundamental positive news flow yesterday, suddenly Trent was springing back to life. On the charts, what do you see ahead?
Oh, the charts are excellent. In fact, Trent was in my list, but I had to select any four, so I left it. Trent is a buying opportunity, not just for the day, it's also a positional trade. I think there's a significant upside here.
Okay, so that's on Trent separately. Otherwise, what's your 9-10 call?
Otherwise, it's HDFC Life, buy HDFC Life with a stop under 680.
Okay. And Mitesh, let's come to you. 9-10, what's the call?
Gas Authority for target of 186.
Sorry, I missed the stock. Gas Authority, GAIL. Okay.
All right, so those are specific trades which are coming through. Mitesh, just two other names I wanted to get your sort of thoughts on. One is HBL, which was a big mover, 514. It was ended in a down market, but it's mid-cap, smaller name, so but 8-9% higher. Any thoughts here? Huge volumes. I think Mitesh, are you there? Okay, I think the line.
Yeah, I said I'm not tracking. I'm not tracking the stock.
Okay. I didn't get that. The audio didn't come through. Thank you, Mitesh, and we'll speak again. Let's talk about the standout brokerage note this morning, which Nimesh is going to bring to us. Nimesh, morning. What do you have?
Hi, morning, Prashant. So today's standout is on Tata Consumer. Interesting note from Goldman Sachs. They've today upgraded the stock to a buy from neutral, and they have a target price of 1200. Now, for Tata Consumer, the company has been struggling with earnings for the last many quarters. Now, Goldman Sachs believes that it's at an inflection point, and from here, the company is poised for a strong EPS growth over FY25 to FY27, and that's going to be largely driven by a couple of factors. One, recovery in the tree margins because they've raised the target, they've raised the prices there. Two, strong innovation and distribution expansion on the growth businesses of Tata Consumer, and third, lower interest cost as acquisition debt has been paid off. So these are the three reasons why they believe earnings will improve from here on, and hence they've raised the FY26, FY27 EPS estimates between 3 to 7%. And Goldman believes that within the consumer basket, this is one stock, one company which is going to report the strongest earnings. So on back of all this, a big upgrade on Tata Consumer to a buy now, and they've raised the target price to 1200 on Tata Consumer.
I think Gurmeet is a big fan of Tata Consumer. I remember I would probably ask him to be pleased to read this. But thanks very much, Nimesh, for that. 2.6 higher. It's a 26 rupee move on Tata Consumer this morning. Let's revisit Hindalco and the metal space as well. Nigel, tell us.
Well, that's right. Hindalco had their annual investor meet, and they've laid out their strategy for the next few years. Remember, in yesterday's trading session, the stock went into this meet at the low point of the day. It was down close to around 3% or thereabouts. What are the key highlights out there? They're talking about Novelis in Q4 FY25 to deliver an EBITDA per ton in line with what they delivered in Q2, which means it should be in the vicinity of around $490 per ton, which is an improvement. That's good. They're also saying in the longer term, Novelis's EBITDA per ton will start moving towards $600 per ton. They laid out the path on that front. On their EBITDA front, they are targeting doubling their upstream EBITDA. And on their downstream EBITDA, they're talking about it going up by close to around 4 times. Now, that's very, very good operationally. On their capex front, they're saying that Novelis's growth capex will be at around $5 billion. That was known. However, various brokerage notes like Phillip Capital, they have highlighted that for the India business, the capex actually has been increased from $1 billion to around $5 billion. And normally in the past, you have seen that the street gets a little bit skittish when the capex number moves up. They also say that they have a strong balance sheet, cash flows are going to be pretty good, and they'll maintain their debt to EBITDA at around 2 times on a consolidated basis. Remember, the India operations as of now are debt-free, while the debt is only sitting in the Novelis business. Phillip Capital, they have a buy rating, target price of around 760. However, they point out that FY27 is going to be the big capital-intensive year where they'll spend close to around $4 billion. That's $2 billion in India, $2 billion in Novelis operations as well. And that's what could throw up some cash flow mismatch, which is a bit of a risk. So that's the lone negative in this analyst's takeaway. Otherwise, even Citi, they have a buy rating with a target price of 725. So that's Hindalco. Yesterday, the stock went into this analyst meet at the low point of the day. So maybe that's saving them the blushes. But otherwise, this capex number is something that bothers the street.
1 to 5 billion.
Yes.
That's a big increase.
On the India
capex, yes. Yeah. So we'll watch out for that. Got it. By the way, 2 stocks we should not lose sight of. V-Mart Retail and CSB Bank. Both are reacting very well to their quarterly updates. Both are up 4.5%. V-Mart, remember, the growth is 17% on the top line. Same-store sales growth is 8%, which is better than what they did in Q3. And CSB Bank is blowing the lights out. 30% growth in advances, 24% growth in deposits. So market has really taken note of these quarterly numbers. But let's talk about some other broker notes, which are looking quite interesting this morning. Yeah, and by the way, a reminder, we are chatting with Mr. Agrawal of V-Mart on those, of course, really good-looking numbers for the fourth quarter and the outlook ahead. That's coming up at 9:50. Stocks holding up 4.5%. Let's also talk about Premier Energies as well as Vari. Vivek is joining in. Vivek, there's a slightly negative broker note out on these stocks.
Well, that's right. A cautious stance coming in from Bernstein as far as the solar PV space is concerned. So Bernstein has written a very interesting note. They've initiated coverage on 2 of the stocks, both Vari as well as Premier Energies. Now, both of them, they have an underweight rating, and the target price for Vari is at close to 1,902 rupees a share. For Premier Energy, close to 693 rupees a share. What is it? Number one, they actually like the business model. They also like the fact that both of the companies have made smart moves at the right time. So, number one, smart investments have been made. They are banners as far as the India's solar PV space is concerned, and potential, especially in the near term and coming quarters, is actually quite promising. What is it that makes them quite cautious on the space? They say that they recognize supernormal returns won't last indefinitely. So on the back of that, companies are actually diversifying into energy transition areas such as batteries. Why do they have an underperform rating if they like the business model? Number one, the cycle positioning is such that there could be significant competition coming in, expectations of deteriorating returns from this point on, and also the high valuations at which the regulatory arbitrage-based businesses, so that cannot be justified at such high valuations. They also say that the industry currently is at close to cyclically peak returns. This on the back of the fact that the retail prices currently in India are almost 2 to 3 times the global levels, and also the export at which the company does is significantly higher. There is very low entries to barrier. On the back of that, they expect much larger and deeper pocket players to enter this particular industry, and they expect, number one, it's too early to give a credible value to new ventures, especially with large conglomerates entering the space. So overall, they are positive on the space, but they're quite cautious, especially when it comes to share price returns from this point on the back of deteriorating returns that they expect, given the fact that it's cyclically peak.
All right, nice wordplay and title of the report: sand, gold. Price of gold, value of sand. We'll talk about we'll discuss this in greater detail with the analysts concerned. But Vivek, thank you very much. Market open right on cue. 23,210 is where the Nifty is at, about 1/3% higher. The Nifty Bank is up about 0.5%, 51,065. The small cap index is that down 3/4? It's showing 3/4% lower. Okay, no, I think that's changed. 0.14 higher on the small cap index, more like it. The mid cap index will come up on your screen next, and that'll give you an indication as well. About 0.16, 0.15 higher on the mid cap index as well. So it's a pretty decent start. But last 2-3 days, go back to last I think Thursday, Friday, and this week of course as well. The open has been pretty useless in trying to predict how the close actually has been. Because you tend to see a fair bit of shifts coming through. So we need to watch this one. It's almost equal number of gainers and losers cut in the middle, and the heat map, Nifty heat map, is giving you that sense. 40 points though for now on the Nifty, 23,200. Let's do stocks now, Surabhi.
Okay, Tata Consumer. We should maybe get Nivesh back, when he was just telling us about that report. The Goldman Sachs upgrade. The stock is flying 6.5%. I went back and just checked the numbers. Goldman Sachs is saying that FY26 EPS will be higher by 3%. Next year, they've increased it by 7%. Look at the stock, 6% higher. As we're seeing, the target is, by the way, 1,200 on Tata Consumer. And that's the best performer on the Nifty. Let's move on and see what else is working. Infosys, Tech Mahindra. There's some buying in large cap, auto, some of the other larger stocks like ICICI Bank, HDFC Bank also holding up. There is a little bit of positive move on Trent again this morning, 0.7% higher. There's ONGC, Apollo Hospitals, Titan. It's a whole mix. ITC, lots of stocks moving on the upside. The downside, Nestle's fall is a little pronounced, about 3% down on Nestle. Even Lever is down actually. Lever's down about 1.5%. These two names from the FMCG basket. BEL is continuing to cool off as it did yesterday as well. And there's some weakness in Power Grid as well. So a couple of these PSU names are cooling off. But the stock of the morning definitely has to be Tata Consumer. Still up almost 5%.
Well, that's right. Tata Consumer, that one's bursting away in trade. On the flip side, Nestle is down closer on 3%. So that's coming for some profit taking. BEL as well down closer around 2.5%. So that's under some pressure. And HUL is another one that's on the losing end, which is down closer around 2%. What's doing well actually today is the tech index. Let's pull up the tech index. The Nasdaq did relatively better overnight. And the street seems to be taking a cue from there. Infosys is up, Tech Mahindra is up as well. Both of them doing pretty well. HDFC Bank, yesterday the stock went, ended the day at the low point of the day. That's the fear with regard to the quarterly update. For starters, at least it's up closer around 1% or thereabouts. From the broader markets, what's under pressure? You have Central Bank of India that's down 10%. So big downtick is what we're seeing out there. ITC Hotels, the stock is down 2%. Yesterday, towards the end of trade, it went higher on very, very large volumes. So I'll be interested to see what happens on, ITC Hotels from this point on. It's down closer around 2% or thereabouts. But otherwise, a good start to trade, a bit of a flip-flop from what we saw yesterday. Yesterday, you had the index that was under pressure, but you had the broader markets that outperformed. Today, it's a bit of a role reversal. Mid-cap index is down closer around 0.2%. while the headline index is higher.
Absolutely. And 50 points now, I think 23,212 is where the Nifty is trading at. Maybe just a few more names. Actually, by the way, 1,400 stocks are lower and about 800 stocks are higher at this point. I mean, all these Vari and the Solar Premier and, these are all down between 2 to 4% or so. Dabur is down about 2%. That's coming up with some volumes. I think we will be speaking with the management of KEC in a bit. Sorry, I think 2% lower, 775 on KEC. It's got some volumes as well at this point. Nestle is down about 3%, stocks at 2162. And of course, I think we already mentioned Central Bank and BEL earlier. So those are other names. Quest Corp, maybe on the upside. 6% on Quest Corp is the number two volume-led gainer on the across the board. 701 or so on Quest Corp. There is AG's Logistics, which is up about 4%. Lodha, that is Macrotech, is coming up with about a 2% pop. It's got decent sized volumes for this point of the day. And Credit Access is another one, which is up about 1.5, 1.7. But I mean, still 98, 970, 980 in that zone. V-Mart is up 3%. Stocks at about 3,045 at this point. But it's got no real volumes at all right now.
I'm just checking Central Bank of India. Let's pull up the stock. Yeah, I mean, I was just checking, my screen is wrong, but 9-10% down on Central Bank of India. A little unusual, yeah. I checked it from the exchange as well. Indeed, that's a sharp knock. We'll just look into it and see if there's anything very specific. Otherwise, I mean, some of the other banks where updates have come out, like CSB Bank, they've been doing pretty okay. CSB, I think, is still holding up. But yeah, I just wanted to point that out. It's a bit of an unusual move on Central Bank of India.
All right, well, let's welcome in Trideep Bhattacharya, President and Chief Investment Officer Equities at Edelweiss Mutual Fund. He's with us here in our studios. Trideep, good to see you.
Good to see you
in person.
Thanks for having me.
So, how are you feeling about the market and in stock picking? And I mean, what have you been doing? Give us a sense through the course of this year.
I think if I were to summarize the market today, it will be receding macro uncertainty. Earnings still uncertain, but at this point in time, I would say that expectations are reasonably benign. So a combination of all of these three is what we are seeing market, where I think
which is the first one? Receding macro uncertainty.
Yeah. So I think with the Trump, whatever he says this today or in a week's time, we are almost ending a year and a half of macro uncertainty, starting with Indian elections, its impact on earnings, and now Trump and his impact on earnings. And after this, as we move on, the earnings start to take precedence. It will take some time to adjust, which is why I called out uncertain earnings, particularly in this result season. But if you give it 1 or 2 quarters, I think earnings will also start to come back. Net in FY25, putting all of these together in numbers, we started off with expecting roughly about 15% growth in earnings. We are going to end up being practically flat. So almost about 12-13% cut in earnings. And as we head into FY26, by the time we end it, I think we should touch double digits. So it's basically an earnings reset, summarizing macro uncertainty and gradually making a comeback. So that will be my summary of how I read the situation right now.
All right. Hi, Trideep. Good to have you in the studio. But you think the street is prepared to look through a weak showing in Q4 earnings? Because it's not going to be great. However, the commentary could be very, very good. And the low base effect will play out from there on, Q1, Q2 as well. So looking through Q4, that's par for the course. That's okay?
I think it gets very company specific from here. Like you read out some of the stock specific movements. If it is within a range, would be probably taken okay.
Yeah.
But if it kind of beats or misses beyond a particular 5% range, would be kind of I think you would see severe reaction onto that. I still think that market this result season will miss the gunpowder of earnings.
Okay.
Earnings upgrades, which you've sort of lost our mojo from roughly about September quarter onwards. I see that coming back maybe June or September quarter this year. Till that point in time, we might get into a bit of a time correction, get of a flattish market where we have to kind of live on stock picking to kind of outperform the markets. And from there on, we start to take off, would be my read.
All right. So you say the street is prepared, that Q4, no great shakes.
Yeah.
Since there's so much of uncertainty with regard to Trump's tariffs, or call it tamasha, whichever way you like to term it, let's talk about domestic-facing themes.
Yeah.
The real estate space is something that you've liked in the past. Both the core real estate players as well as the ancillaries.
Yeah.
Do you think that theme is good for more?
I think, first of all, it has done quite well over the last couple of years. And I think we are in the twilight zone where the second part of real estate, which is the ancillary sectors, like for instance building materials, which haven't done well at all, they might actually see a bit of a time in the day over the next couple of years. Right. So I think real estate builders is what you probably talk about as the primary beneficiaries of real estate theme, have played out more or less. There's some more remaining to come. But I think where valuations are reasonable are in the building material space, which should pick up over the next couple of years, is where I have my eyes on.
Okay, that's quite interesting. Let me actually build on that, Trideep. So a combination of reasonable value and reasonable growth. One pocket you've identified, building material, allied real estate plays. What else?
I would say that there are pockets within quite a lot of sectors where there is value. So, for example, within financials, there is NBFCs, reasonable valuations, decent growth, and particularly if the regulation eases out a bit, they would stand to benefit from the same. I would say probably chemicals. They are making a comeback after 4 or 5 years of hiatus.
But isn't that still very risky, because it's a fully globally, facing globally linked sector?
It is.
Supply chains, etc., with so much going on. Would you still bat for chemicals?
Tactically, but because there is a price shortage, which is kind of which is leading to buoyant prices, which will benefit the sector.
And which kinds? I mean, it's a very large basket without getting into names, but generally, I mean, are you looking at pharma intermediaries, or would you be looking at the whole fluorine chemistry part of it? Any particular?
Chemistry mostly.
Fluorine chemistry, got it.
And whatnot. And thirdly, power. I think within subsegments of power, where companies can have a bit of a moat and make margins, I think that's the place to be. So those would be 3 subsectors, not big sectors, where I think money could be made in the next year or so.
So pharma, NBFCs and select chemicals.
Yeah.
Got it.
Any names in pharma? I mean, just for educational purposes.
We'll keep the education out. We'll limit to sectors. But I think one of the other things which I do see in the market happening is basically shifting profit pools. I think what's happening is there is competition coming in almost every sector from different directions, which will take supernormal profits out. So I think the other way to slice and dice your question is, over the next 1 or 2 years, the execution kings within the sector would actually stand to do significantly better than others, because as outsiders try to want a share of the profit pool, and I mean, of late we saw in wire and cables, the pharma sector with the GLP-1 and many different kind of such incidents. I haven't seen in my last 25 years in one go so many sectors impacted by disruptive forces at a time. So interesting time ahead.
What about the telecom space? Suddenly we're going to be getting used to a 3-player market. I mean, the third one's going to survive. The government of India is now the largest stakeholder in there. What do you make of that? I mean, will you look at the one that could survive, the core telecom player, or the other large conglomerate?
Quite frankly, having done a bit of global investing, telecom has not been a great place for investors. A bit like airlines, as Buffett would say. So within this, I think there is one large incumbent which will stand to benefit from that. Maybe slightly higher competition in the near term, but on net balance, what's happening is really kicking the can down the road. I don't think it's a solution to the problem of the troubled entity that you're talking about. On net balance, I think the incumbent player should stand to benefit from the same.
The core player?
Yeah, core player.
Okay, all right. Since you spoke about aviation, there's one core play over here. And Interglobe Aviation has seen a big run. You have crude oil prices that are benign, which is good for them. Yeah. And I was just doing a rough check the next few months as well. Airline fares are going through the roof.
Yeah.
Do you think that's going to hold them in good stead? It's already had a big run. It had a dip when you had a couple of entities selling, but those dips are getting bought into. There's plenty of appetite.
Yeah.
Your view?
So my sense is that luxury, and this is of course there is a value into it, but luxury, travel, leisure, hotels, these are the place to be in the next couple of years overall.
Good for more even from here?
Good for more even from here, because I think if you look at even the hotel sector, for instance, people expected the prices to peak out a couple of years ago, but actually if you see today, even them, they are kind of rising as we speak and have further room to go.
Yes.
So I think net hotels, hospitals, less so aviation, I must admit, are places where I think a few other pockets where structurally money could be made over the next 2 or 3 years.
And you're not too uncomfortable with the valuations there? I mean, especially after this correction now?
Yeah, so valuations have become reasonable. They will not be die-hard cheap because obviously there is economic momentum in there. You're going to pick your spots, but within that, yes, I am comfortable with a few names. We hold it in our portfolios.
I completely agree with hospitals. Hotels, I don't know. Hospitals, I agree with. I mean, hotels also, I mean, they've done well. Why not, right? But hospitals...
See, you have to go to one place by force. The other you go by choice, but eventually you have to sort of deal with both.
A friend of mine was saying that instead of buying insurance policies, I mean, obviously it's not serious. I mean, this is joking. Might as well buy stocks, right? I mean, you'll healthcare costs rise what 10, 15, 20% every year.
Yeah. Oh, it's huge.
And you got
premiums have been shooting higher.
Maybe some appreciation in stocks as well, which takes care of the cost. But of course, I mean, as I said, buy your healthcare insurance policies absolutely. But what else, Trideep? You're not sounding. It's sounding. You said interesting times ahead. Sounded to me like tough times ahead, Trideep.
I think for it's old school bottom-up stock picking time ahead. Basically, that's what I mean. The easy answers, the big themes, the manufacturing theme that played out.
Done, dusted.
Those are kind of our themes of yesterday. Going forward, and as I said, the profit pool are shifting within the sector. So which spot you pick within the sector is important, and then a couple of shades, where a little bit of momentum is there from a sectoral theme standpoint. So it's basically die-hard stock picking, and hence I am sounding a little kind of the easy pickings are done. It's hard work ahead.
The rising tide is now flattened. There's no.
He's actually sounding a little optimistic to me because he's brimming with ideas. And like you're saying, this is, I think, is going to be the period that will separate the men from the boys in terms of fund managers. So very interesting times ahead. Having said that, just a quick final question from my end. So the general wisdom in the market, if you ask, I mean, 8 out of 10 people will still tell you that don't go to mid caps, large caps is the way to go, etc., etc. But let's face it, I mean, we need some mid caps in our portfolios as well. Now, what is the approach? Where do you see still too much of over-exuberance? Which are the interesting mid-cap opportunities?
So I think, first, I must admit that when I look at a business for stock picking perspective, it's very unlikely that I look at large, mid, or small. We look at the quality of the business, the mode that it has, and the growth prospects and whatnot. And in that context, in some of the subsectors that I mentioned, the largest companies are actually mid-caps.
Mid-caps, yeah.
So, and you could call them mid-caps and hence higher exposure to mid-caps. But overall, I think, as I said, there are certain segments within mid-cap domain which are hardly there in a large cap. For example, if you look at hotels, hospitals, and
even chemical companies, it's all mid-caps.
Chemicals or capital markets. These are not part of large caps at all. So for you to hunt in these spaces, you've got to kind of dig deep down as well. And I think that's where I was meaning that one has to deep dive to get to those pockets where there is value, and hopefully kind of we can tide this period through. So
without
that's
the tide.
my recipe.
Tide this period through without the tide.
Without getting swept away.
No, I mean, but yeah, it's. I think Sanjeev Prasad was with us yesterday, and he was also making the similar. I mean, the competition is a. We don't talk about it too much, right? We talk about companies and what they can do, but so many sectors seeing disruption, extra competition, etc. So. Have to take note of all of that. Thank you very much, Trideep. Appreciate your time here.
Pleasure.
And thank you for dropping by
to
the studios. I think, the market, by the way, the Nifty, it flatlined and then now we have a 100-point gain. So it's a bit of a, already we've had quite a bit of a move on the Nifty index from the opening level to the low that we saw. So, I think we were up just 10 points at the low, and now being up about 100-odd points on the index. Market breadth is still slightly negative. 900 stocks are higher and about 1,500 stocks are lower to sort of begin the session. Nigel.
All right, well, let's talk about KEC International. They backed new orders worth around 1,200 crore rupees for the T&D projects in India and West Asia. To discuss these order wins, their business outlook as well, we're joined by Mr. Vimal Kejriwal, the Managing Director and CEO at KEC. Hi, Mr. Kejriwal. Good morning. Thanks a lot for joining in. Well, give us a few details. What was the total order inflows that we saw in Q4? And if you could tell us, for the year, it appears you have surpassed the guidance that you've given on order inflows. What was the number you're ending at?
So Nigel, I think Q4, if I'm not mistaken, we're around 6,000 crores of order intake. We are still L1 in some of them. People are saying we'll issue it on 31st. Let's hope that we do it. But anyway, we are very close to 25,000 crores. We are not surpassed the guidance in that sense because we are slightly below 25. Okay, we had said we'll do 25,000. And if you look at these orders, 55-60% is from transmission, and then civil, and then cables. I think that's the broad breakup of this particular order.
Okay, all right. And what about for the coming year? Since you're saying you're L1 in some positions, could you tell us, could you quantify the book at which you're L1? And for FY26, what kind of an order inflow are you looking at? What does this take your current order book first to?
So our order book plus L1 currently is around 38,000 crores. Okay. And it will go down slightly because we'll still have to factor in what would be the March revenues, etc. So I think broadly we'll end up around 37,000, including L1 for the year. That's our expectation. We expect to grow around 15% or so next year. So we are still working out our order intake target, but it will definitely be 30,000 crore plus.
34,000 crores plus. Okay. All right. I got that, Mr. Kejriwal. Great to have you on. Just going back, I mean, looking at the overall environment and how you're looking at the bidding pipeline ahead for this year, FY26. I mean, we've discussed this in the past that, you know, the margin profile didn't improve as much as you would have liked it to in Q3, but you've always been maintaining that FY26 and 27 will be much better from a margin expansion perspective. I mean, you've been talking about levels of maybe even 9%. So looking at the bidding intensity, the pipeline, are you still confident of getting to those levels?
So to me, what is happening is that bidding pipeline is definitely increasing. We've always been talking about around 140,000, 150,000 tender pipeline. Right now it's gone above that. It's almost 170,000, 175,000. A large part is driven by Middle East also, and also especially Saudi. Also, we are seeing water projects which were on hold getting sort of bid out. So some traction we are seeing on the water side also, which is why the bidding pipeline seems to have increased by 25,000 crores as compared to last time. Margins, I think we are pretty comfortable. We have given a guidance next year of 8 to 9%, and I think we are pretty hopeful of doing that because a large number of legacy projects are getting over or have got over in FY25. So I think 26 and 27 should definitely be better on the margin side.
Okay. Which of the segments, I mean, where you're likely to see maximum traction? Of course, I mean, the last couple of orders, you've managed several orders from the Middle East as well. In India, I mean, in all our past conversations, you've been telling us that obviously the T&D segment has been doing well. Railways was weak. So now, as you sort of look forward to this year, let's say talk about the next 4 to 5 months at least, which segments will drive the order book growth?
So primarily it will still be T&D. Even this year, out of our order intake of roughly 25,000, 72% is T&D. And if you look at that number itself, T&D, almost 60% is international and 40 is India. So although, you know, we understand India T&D much more and we track it much more, I'm just generally saying that T&D international also is doing very, very well. So T&D will clearly drive. Second piece will be civil, which was a bit, I'll say, low this year on order intake. We do expect that to I'll say go up significantly, especially driven by residential and the water piece. And we're still seeing a lot of traction happening on the metals, mining, etc. So most of our orders in industrial have been on the steel side. Okay, so I think these are the three areas which we see driving our order book next year. FY26.
Okay, so T&D remains the primary workhorse.
Yes.
Metals and
Yes.
mining. And also civil construction opportunities with real estate seeing hectic activity. Got that.
Yes.
Final question, sir. Again, and this is coming from the past where you spoke about labor issues that were sort of becoming a bit of a challenge to deal with. Has that sorted out?
So let me put it this way. It is sorted out, but we are trying unconventional means, etc., which were not been like, we were never using labor aggregators, contractors like that. So we have started using them. Obviously, the mechanization has picked up a lot. So we are trying to see how do we sort of optimize the need for labor. It's improving. I'll say it's slightly better than the last quarter.
Okay. Good to know. Thank you very much, sir, for joining in. We'll, of course, connect again once the Q4 numbers are out, and we'll have more questions for you. But thank you very much for joining in this morning. That is KEC International with sort of an update on their order book. They're saying 25,000 crores was the target, maybe just slightly shy of that. That's how they will be closing out FY25. Let's move on and get you our special segment, Young Turks Reloaded. Shireen sat down with PVR Inox's MD Ajay Bijli to look back at the incredible journey from a single-screen theatre to India's largest multiplex chain. Ajay speaks about how he plans to adopt an asset-light model for new cinema expansion to improve margins. Take a look.
On the consuming habits changing, and what this potentially now means as far as occupancy is concerned. You know, it's been stagnant at around this 25%, 25.7% for the last quarter is the occupancy levels. What do you do now to drive footfalls? Because the experience is in your control. The content is not. You can't do anything about the content.
I'm still as sanguine and optimistic about the business. So when I go and look deep into what happened 2021, 22, 23, 24, 24, 25, which is going on just now, the number of movies, first of all, got reduced. Only 85 Hollywood films got released, as opposed to 174 movies. This year, again, the number is going above 150 because that screenwriters strike and all that happened. So if the movies become 175 or 174, that means you've got more content. The chances of hits and misses will always remain. But because
hopefully more hits.
So our businesses in India, this is the only market I'm comfortable with, is a volume-driven business. Volume in consumption and volume in supply. So therefore, if one or two movies don't do well, doesn't bother me, because you'll always have a sleeper hit that makes up for a movie with high expectation that gets compensated. So I think because the movie flow coming in, it'll be more appealing even to the consumer. Even in India, a lot of movies got bunched up in 23 and 24 because shootings had stopped. So Shah Rukh Khan, 3 movies got released in 1 year, which is unheard of. Amir Khan, no movie has still got released post-pandemic. Ranveer won, Hrithik only won. All these guys also, to be honest with you, and obviously that's my supply side, were also a little figuring out what does the consumer want. I think now they've got their act together. A lot of work got done on the script. And as I say, it has to be on the page before it goes on the stage. Sorry, I'm quoting these.
No, please quote away. More dialogues. We are in a movie theatre.
So I think a lot of time is getting put on what's on the page. And I feel that this 25, 26 onwards, these occupancy levels that we're talking about are bound to improve because the supply side
But hope can't be a strategy, right?
Hope is not a strategy. So what we're doing is a couple of things. I'm saying, okay, if we reach the 31% level, excellent. If we don't, let's align all our costs and our strategies to 25, 26%.
Right.
Okay.
Right.
So therefore, one is that FOCO model.
Yes.
I've already spent 5,200 crores on this circuit by inorganic and organic. So we are only doing what hotels have done all their lives. Okay. Get basically monetize the brand. And have.
So somebody else sets up the infrastructure, you run it for them.
Correct.
To put it simply.
Absolutely. And I must confess that I've been fortunate enough to meet a lot of chief executives of Trent, various other Titan, hotel like Puneet Chatwal. I've exchanged a lot of notes. Nobody in the exhibition business has done this globally. First time in India, this has been done.
And first time worldwide?
Worldwide,
okay.
Yeah. So we're very fortunate, and some of the developers, have been incredible. People like DLF, I don't mind mentioning them, I'm a big fan. They've also realized that this is the model to go. Cinema is a necessity for their shopping centers. They will invest some money and we will manage it. And in smaller towns, tier 3, tier 2 also, we've had this response. Like people feel very proud to be part of a hotel.
Right.
People own a hotel or a Tanishq. Or a Titan or a Zudio or whatever. Similarly, they have this pride that, PVR is mine or an Inox is mine, and they spend the money. We've had to spend more money on our SOPs, brand, and what we bring to the table. So that's one thing that we've done to make sure our ROCE improves. If we can do more and more screens, around 100 screens got signed last year. This year also about 100 odd screens.
So who are these developers who are coming on board for the 100 screens that you've already got in play and the additional that you are looking at?
Mix of people who are organized and unorganized. One are just one off, two off, in Jaipur, Udaipurs of the world, Nandeds, Ujjains, Indore, Kota. these kind of Ajmer, these kind of places, and then big ones who definitely need a cinema, and then they are also. So a mixed bag, but we've got a tremendous response.
So
on
what
this
does
as
it
well.
mean in terms of additional revenue? Because, you know, on the back of the management fee that you're going to be able to get in from this.
So initial fee, technical fee, and then management fee. That is one. That's one model that we're doing. And then line by line costs we're looking at, and also all the new deals that we're doing are on revenue share. That will make sure that the volatility taken care of. So the minimum guarantee are paid, but their minimum guarantee is not very high rentals. And also when the business is good, then they share the spoils with us because we give them a revenue share. So that's one model. Other is line by line, zero-based, costing of every single, whether it's manpower, marketing, electricity. We're looking at a lot of solar to help us bring the cost down. So we're saying that if we, even at 25%, if we can get those margins that we were getting pre-COVID, we are okay. But if we do go back to the occupancies we were getting pre-COVID, then fantastic. That's all gravy. Other than that, the 3 Fs that I spoke about, I'm saying that we already have an infrastructure. We have 15 million square feet, in India, which is, by the way, I think the largest for any retailer. I think so, I've been told. Why can't we use those spaces for alternative kind of entertainment? So that's the fun part.
Yes.
Some by repurposing the cinemas, some without repurposing. So if we're showing IPL, we don't need to repurpose. If we show Taylor Swift's Eras Tour, we didn't have to repurpose. BTS, we didn't need to repurpose. A comedy, stand-up comedy, whatever, all those kind of things. We did something called Candlelight show. Those are without any repurposing.
Right.
There's one more strategy that we're doing. We're doing about 4 pilots just now. One in Bangalore, Gurgaon, Bombay, everywhere, where we're repurposing certain cinemas, creating green rooms, having bleachers where your seats can, combining 200-300-seater cinemas into one seat, this thing, and doing gaming. Going, and by the way, everybody's not Ed Sheeran and Coldplay or Diljit Dosanjh. You have so many artists who are happy with 1,000-seating capacity getting filled up. So I'm, as you know, fond of music as well.
Yes, we know.
So I'm in touch with a lot of artists, a lot of managers. There's so many artists.
So you're getting into the kind of Book My Show, Zomato district kind of space?
Only providing the infrastructure.
Right.
So I don't want to do something that I can't. There are experts who are doing it, whether it's district or whether it is...
So do you tie up with them?
We tie, they can, sell our tickets. And so that's the fun part. Where can we repurpose our cinemas? Some amazing things are happening on some of the projects which are basically still under fit out.
All right, so that is PVR 2.0, how they're reimagining the business given the new environment. Young Turks Reloaded. You can catch the show, which is going to be coming soon on CNBC-TV18. All right, time now for a quick break. Up next, Anup Vadhavan, former Commerce Secretary, as well as Abhijit Das, international trade expert, will be joining in to talk about what Trump's new tariffs could mean for India.
Okay, welcome back. We're, of course, talking about Trump tariffs tonight. is the moment of truth when we will know what President Trump wants to do as far as tariffs are concerned. And tomorrow morning, of course, we'll be reacting to it. I just thought before we dive into our next discussion, put two data points on board. One is, what is the impact on India? I mean, of course, it depends on the tariffs which are imposed. Now, JP Morgan economists say that the difference between the tariffs which India imposes on the US and US imposes on India on a weighted average basis is about 8%. So, I mean, if the increase were to be just that, 8%, the impact would be about 20 basis point hit on GDP. If JP Morgan economists say the Trump administration decides to include VAT of 18%, you're essentially looking at an impact of 50 basis points as far as GDP is concerned. So, I mean, this is data points as we are looking at it. And of course, this does not include what India is already offering as Parikshit has been telling us and our Delhi reporting team has been telling us, there have been hectic parlays and proposals and, maybe more firmer kind of proposal is being readied. Maybe it's been discussed with Trump administration. And Trump, of course, is on record and they've said that, some of this stuff is indeed happening and they will be sort of taking note of it. So we don't know the reaction function. And of course, what Trump is going to make of it, and then sort of, will that mean a carve out in some sense for India, etc. So without knowing all of that, I mean, this essentially are the numbers. This is this particular table is sector-wise exports to the US, ranked by the contribution to the GDP. India's exports to US percentage GDP. This is tariffs imposed by US and India, and this is tariffs imposed by India on the US. So the way to do this is basically you take this number, subtract that number. That is essentially the difference, which, if they're going to be purely reciprocal and if they go sector-wise, I mean, you get a sense of where the hit is likely to come. And here, and taking into account contribution to GDP, there are three sectors which are in focus. One is pharma, the other one is textiles and clothing, and the last one is agri and meat products. I mean, here the difference is the largest, and the contribution is not very small. I mean, it's still small, but as relative to some of the other sectors, these are the three areas, these are the three sectors where perhaps the impact looks higher, perhaps they are more vulnerable as well. So let's, with this short kind of sort of setup or a preamble, let me welcome in Anup Vadhavan, former Commerce Secretary, and Abhijit Das, International Trade Expert and former Head Center for WTO Studies. Thank you very much, gentlemen. Appreciate your time here on CNBC-TV18. Mr. Vadhavan, if I can start with you, sir. You must have seen news reports about, proposals being readied here in India to lower tariffs. What can we here in India in terms, offer? I think the deficit is about to the tune of about a little over $40 billion as of the last financial year. What can India offer to offset, to preempt some of these tariffs, which are going to be announced later today? Go on.
I think, that is not very consistent with our intention to have a bilateral trade agreement negotiation in good faith. So there is a view that, that might be kept in mind by the US. We had a very successful visit by Mr. Brendan Leach recently. And so there is some conjecture, perhaps with significant basis, that the US might realize that, these reciprocal tariffs and the acrimony associated with them and the tensions associated with them are not consistent with the good faith, bilateral trade negotiations. So it is still conjecture as to what will happen, and as to what India can give will all be part of the negotiation. And typically trade agreements are balanced. You give mutual concessions which are commensurate with each other and balance the trade agreement. So certainly, areas of US interest, they have some interests in things like, motorcycles and...
Vadhavan, if I can come in, you're saying the lowering tariffs now will not be consistent with trying to strike a bilateral trade deal. Is that what you're saying?
Absolutely. Absolutely. All that has to be negotiated as a matter of give and take in the trade deal. Trade deals involve give and take. You take
No,
American
Mr. Madhavan,
emissions.
but the point is, so you're saying take the reciprocal tariffs as they come, that's more consistent, and then negotiate a deal separately. That's the way to do it.
What I'm saying is that reciprocal tariffs should not come if better sense prevails as it should. Reciprocal tariffs should not come. Quick trade negotiation should happen, and you should reach an early harvest agreement on goods of interest, which both countries have in their wish list. So that is what I'm saying.
So it's possible, Mr. Vadhavan, you're saying that if better sense prevails, I mean, now who knows, but it's possible later today when we hear about countries where this will be imposed, you're saying it's possible the Trump administration says since discussions with India are in advanced stages and they're happy about what they're seeing, we're going to hold off in terms of tariffs on India. It's possible.
It is entirely possible in my view. Let's see what happens. If reciprocal duties are imposed, we have to see what the levels are, what the goods are on which they are imposed, and then we'll have to take stock of that and suitably react to it. So that becomes a separate channel away from that trade negotiation. That has to be dealt with separately, and let's see what happens.
All right, fair enough. I mean, I think that gives a fair sense. Now, let's welcome in Abhijit Das as well. Mr. Das, good to have you on the program. What is your sense? You heard Mr. Vadhavan.
Dr. Vadhavan has given one side of the picture. No doubt that there is a possibility that India might be spared of the reciprocal tariffs. But to my mind, that possibility is rather low. If we look at President Trump's statements over the past 3-4 days, it doesn't give me much ground for optimism that India will be spared of the reciprocal tariffs. If India does have to confront reciprocal tariffs, then this clearly, to my mind, would be something like a breach of good faith, since India and US are already engaged in the bilateral trade agreement negotiations. It would be prudent for US not to impose the reciprocal tariffs. But as all of us know at this juncture, prudence doesn't seem to be the order of the day. So to my mind, the possibility is fairly high that India will be at the receiving end of reciprocal tariffs. What will be the extent? What will be the sectors? I'm sure we'll have to just wait for a few hours and then we'll get to know where we stand on reciprocal tariffs. But as Dr. Vadhavan said, if we are confronted with reciprocal tariffs, then while the BTA negotiations continue, we must not hesitate in trying to protect our national interests. And one way to do it would be to impose some tariffs from our side as a signal mainly. Otherwise, if we don't do it, then in the bilateral trade agreement negotiations, much of our negotiating capital will be spent in getting rid of the reciprocal tariffs, whereas in the BTA negotiations, our endeavor should instead be to see if we can secure new and additional market access in the US in sectors like textiles and clothing and leather.
Gentlemen, I also want to draw your attention to the remark that Mr. Trump made overnight. He said that, and I quote, "I heard that India is going to be dropping its tariffs substantially." So I don't know. I mean, the fine point or the finer points will only be revealed once those trade negotiations are done. Because tonight we'll only get the US number. And what is India willing to relent on, that we have to see. But some signs are already there. For instance, bourbon whiskey, cars, all that is already up in the air. So Mr. Das, if you could comment on this, which could be some of the product lines, tariff lines, where if we cut a little bit, it will not hurt our trade interests too much? Which could be those segments?
In the industrial goods sector, there is not too much that US can export to us. So one could be fairly selective, fairly targeted, and India could cut tariffs. But as Dr. Vadhavan said earlier, the tariff cuts should not be unilateral. These should be accompanied with the United States extending tariff concessions on products of our interest. Otherwise, what will happen is, if we keep on giving unilateral concessions, which we seem to have done so far, we will not get anything in return. US will only pocket those concessions. Bear in mind that these are negotiations, and in negotiations, it's a matter of give and take.
Yeah.
So we have to make sure that concessions which we have already made and which we might make in the near future, these are accompanied with reciprocal concessions from the US side.
Sure. So let me actually ask, Mr. Vadhavan, exactly that. So the common sense logic that one is hearing all around is that, let's say, pharma. And pharma imports into the US are really important for the US as well. I mean, getting drugs at reasonable pricing. So maybe that could be one bargaining chip, that they don't hike tariffs, import tariffs on incoming pharma products too much. And similarly, the same question I asked Mr. Das, where could India cut a little bit to appease the US maybe to an extent without hurting our own trade interests?
As Dr. Das said, America is not a major manufacturing nation, so industrial goods are not a major aspect of their exports. Of course, they have interests in motorcycles, two-wheelers, four-wheelers. They have some limited interests. So we could possibly accommodate some of the interests with various safeguards. Typically in trade negotiations, you have various measures like staging of duties. The duties don't kick in immediately. You can have a tariff rate quota where the concessional tariff is on some limited quantities so that your domestic industry does not get, hurt. Similarly, the other area is agriculture. So it's not a question of what we are willing to give. That what we are willing to give has to match with what they want. So we have to consider what they want, and typically they will want concessions on, two-wheelers, four-wheelers, agri-products, dairy products. So we have to then see which are the things we can do comfortably, which are the things we can do with some sort of, safeguard measures, maybe a tariff quota where there's a limit on the quantities that come in. So it's very technical, and we've done it before. We've done, trade agreements with more, significant industrial nations than the US, say Japan, Korea, ASEAN. So there is a method in this, and I'm sure we can, accommodate American requests while protecting our sensitivities and adopting various measures that can, prevent our industry from being hurt beyond an acceptable degree, let me say.
Let's see, gentlemen, very, very interesting times, whether our negotiators, and more power to all of them, people within the Commerce Ministry, whether they can walk this fine line between giving America a bit of what it wants while protecting, of course, our own Indian industrial interests as well, industrial as well as agricultural interests, of course. Thank you very much for joining in. Of course, this is an ongoing story, and live coverage will be starting a little past midnight tonight, and we will continue it well into the morning tomorrow. So, long hours coming up. But for the time being, let's shift our eye back to the market and corporate conversations. Market's holding quite steady, 60 points higher on the Nifty. Not too much of a problem there. Midcap is flashing a little bit of red for the time being. So with that, let's quickly get into our final corporate conversation on Bazar for this morning. V-Mart Retail, like we've been telling you, the stock has been holding up. Last I checked, it was still up about 3%. Let's pull up the stock price on the screen. Can we do that? Yeah, there we go. Okay. It's cooled off a little bit from the opening highs. But the fourth quarter business update has been looking very good. 17% revenue growth, same-store sales growth at 8%, which is even better than what they did in the third quarter. Mr. Lalit Agrawal, founder and managing director of V-Mart Retail, is with us. Mr. Agrawal, thanks for joining in. It's good to hear, good to see, good to note, and you've been managing those growth numbers despite this ongoing, slowdown that is being spoken of. Tell us, what's driving it? Is Tier 2 demand still strong? And is it all volume, or is there any elbow room to look at pricing growth as well?
Hi, good morning, Survi. No, definitely there's a lot of work which has gone behind this, and we have been struggling for the last 3 years, but yes, this year finally has been a good year where we could achieve the growth back to what we wanted. So there's a lot of changes that we have done in the organization, but yes, definitely we are also seeing the mass consumption and the rural consumption inching up a little more, becoming a little better than the last year. And that also has driven some kind of consumption, especially in markets of Uttar Pradesh, Bihar, where we were struggling fundamentally. But I think, yes, volume growth is something which is very, enlightenment. We're really getting good news about that volume growth. And this is also being led by fashion, because there's a lot of fashion change which is coming to the market. And that is also something which is driving a little more consumption, because consumer now need a little different wardrobe in their house. These are largely also led by Gen Z and that particular population, that age group. That is something also that we are trying to drive.
No, absolutely. And you know, full marks to you and your team, because this fast fashion category is also fast moving, right? Fast moving fashion. And it's fairly competitive as well. Lots of players in this space. So just tell us, given the strength that you've seen in the fourth quarter, and I think you'll be ending FY25 exceeding your guidance of 15% top line growth. Now, FY26, what is the kind of growth aspiration that you'd like to put in place? Volume growth, or rather, let's say top line growth, and same store sales growth that you would like your teams to deliver in FY26?
I think we definitely want to replicate this result that we have done in the last year, and we will want to have better outcome, because we are getting the grip over the business. We are getting the grip back on the fashion. There are a lot of competition which had walked into our space for the last 2-3 years. So now most of their effects have got neutralized. We are seeing them deperforming now. So I think we are gaining back some consumer. More consumers are walking into organized retail, which is a good news. And then consumers are also shifting bases from ineffective or improper retailer to a proper retailer, because we are trying to focus more on quality. We are actually trying to focus more on our repeat customers, and our repeat customer sales to drive up to 75%, which is right now hovering around 70%.
Okay, all right. Hi, Mr. Agarwal. Good to see you on the show. The total store count, I think the net addition last year was close to around 50 stores?
Yeah.
53, I think so. So what
This last year, we have added 62 stores.
62 stores.
Gross number. But we also closed down 8 stores. We also closed down 8 non-performing.
Yeah, that's how I come to the net addition of around 53 stores for the year, roughly. For this year, what kind of store addition are we likely to see? Point number 1. And SSG, what should the growth number look like for this year? Last year, I think it was around 11%, which was relatively higher in comparison to what you were guiding of high single digit. No. All right, I think we've got you on a bit of a scratchy line, Mr. Agarwal. We'll try to get you back. Last year they added a net amount of stores of around 53 stores. That's including the additions and deducting a couple of stores that they are shut. I think we have Mr. Agarwal back with us. Mr. Agarwal, you're making that point. Please go ahead. Number of stores you're looking to add and SSG growth for the year.
Yeah. Of our square feet addition every year, we have been consistent for a decade, and then that is what we would want to again add. So maybe adding around 62 stores or 65 stores on net number. That is what we would target even the coming year. And then definitely numbers will definitely come back. And there's a lot of hue and cry going around consumption in rural, consumption in urban. FMCG companies have not been reporting too much. But yes, there is a lot of fight going on. The middle class and lower middle class consumers still don't have too much of money to spend on these areas. They are definitely gaining back. There is a lot of tax rebates that government has given. That is also helping the consumption. And we expect some more consumption coming in especially from the tier 3 and the rural areas. That is where we believe if those consumptions are back and monsoon remains good this year as well, we would definitely clock once again almost a double-digit growth. That is what we should expect from our team, and that is what we are all getting prepared for on the like-for-like.
Okay, all right. Thanks for joining, Mr. Agarwal. You've revamped your business, as you're saying. You've put in a big effort to deliver these numbers, and we look forward to chatting up with you at the end of Q4 numbers and then lay out the path for FY26. For the time being, we slip into a short break. On the other side, Manish Gupta is waiting for us to give us an update on the commodity space.
મારું યાત્રા ચાલે છે પદયાત્રા અહીંયા જામનગર અમારા ઘરથી દ્વારકાધીશ સુધી અને બસ આ બધાના આશીર્વાદ રહે અને શિવજી બાબા દ્વારકાધીશના બધા ઉપર કૃપા રહે આ જ મારી પ્રાર્થના છે અને અમે હમણાં પદયાત્રામાં 5 દિવસથી ચાલીએ છીએ અને 2-4 દિવસમાં પહોંચી જશું. દ્વારકાધીશનું કૃપા રહે અને બધા શ્રીજી બાબા બધાને સંભાળીને રાખે ને બધાને આશીર્વાદ આપે. બધા યુવાને ભગવાનના પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને સનાતન પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને બસ એ જ મારી બધા યુવાને એક મેસેજ મોકલાવું છું મારા ભાઈઓ અને મારા મિત્રોને કે આપ બધા શ્રીજી બાબાના આશીર્વાદ લઈને આગળ વધો અને જ્યારે ભગવાન છે તો કંઈ ચિંતા નહીં કરવાનું.
Okay, welcome back. Well, let's shift focus to what's happening in commodities. Manisha is here with what's going to be top of mind as we head into the tariffs day. Manisha, morning.
Well, that's exactly on top of the mind, the tariffs that is, and various asset classes clearly reacting to that. If you look at the Asian markets today, Prashant, we haven't seen much of volumes come in. The total focus clearly is on what kind of announcements we would be seeing. And in turn of that, we also are looking at weaker US data that has been coming in for the last 4 or 5 sessions, starting with weak US consumer survey data. The manufacturing numbers were on the weaker side. And then it also has been about the weakness in the jobs data that the markets are reacting to at this point in time. If you look at the Citi report, it says on US tariffs, that is, that the world, as we are going into that event right now, the best case scenario would be if we look at US tariffs between the tune of 5 to 10%, that is something that the markets or the world can live with. But the worst case scenario in their sense would be if the tariffs come in between 15 to 30%. That is when you will see that big knee-jerk reaction come into the markets as the US would be on there. There also is a report from Goldman Sachs saying that depending on what kind of tariffs we do see today, there is already a 35% of a probability building up of a recession in the US market. So that clearly is the narrative that we are going into the event with. In the meanwhile, when you look at the gold prices, well, we have seen record highs into this one, 10% of gains in the previous month and 19% of gains already in this year until now. It has been a string of all-time highs coming in for gold in sense of safe haven buying from tariffs, from geopolitical tensions, because the US dollar also has declined and political unrest. All of that money seems to be coming in sense of gold. And most importantly, this is the reason that you have seen gold prices go up quite strongly in the previous week, is that the China gold ETF has added 233,000 ounces in the previous week itself, and China perhaps would be accumulating more going forward by their insurance firms, supportive clearly. Take a look at the crude oil prices then, and we were trading at a 5-week highs yesterday, almost nudging that $75 a barrel mark. Now, markets are watching out for reciprocal tariffs, but in the meanwhile, it also is about the OPEC and allies meeting. That happens on 3rd of April, and an expectation that they could approve an output hike of 135,000 barrels per day from the month of May there. The US crude inventories also have surged slightly, and that also seems to be weighing onto the markets right now. But as I said, all of the data that has come in from US has been on the weaker side, from consumer survey to jobs data and to the manufacturing numbers. All of that has come in on weak. What the street will also want to watch out from here on is, one, of course, the tariff announcement. Then you have the OPEC and allies meeting. And then you have the US non-farm payroll data. Well, that comes in on Friday. So it promises to be a very, very eventful rest of this week.
All right. Thanks very much, Manisha, for that. It's absolutely eventful next 2 days, Thursday and Friday, after what we will hear later tonight. Well, it's our special segment, Indianomics. My colleague Lata will be in conversation with a host of guests to discuss if the Indian banking system is going through a structural shift that could keep margins and loan growth much lower than in the past. It's a very interesting chat. We'll have Dinesh Khara, S.S. Mundra and Srinivasan Varadarajan help us sort of understand this issue in greater detail. Stay tuned.
quarter of a century, zillions of designers, and orders of style later, Lakme Fashion Week is back to rock the ramp. This year's collection promises to showcase modern sophistication with effortless elegance. The showcase is set to be bold, reflecting a connect between beauty and style. Let's take a look at the showcase straight from the runway.
How do you think beauty and fashion empower young women like you in today's world?
So I think beauty and fashion, if you have fun with it, can be very, very empowering. Like me, I like dressing very casually. I like being very chilled out. I don't play too much with like colors and stuff, and that makes me feel very empowered and very beautiful. So I think it can be used as a tool to enhance your strengths rather than cover up your weaknesses.
Who are you walking for, and tell us about your inspiration behind it?
So I am walking for AKOK. I'm walking for Anamika Khanna, and I'm wearing her silver collar collection. And I think the inspiration around it is just warrior princess, something to make women feel very powerful, very strong, very modern, very cool. That's her inspiration. I'm assuming I'm just channeling that.
Welcome to Indianomics. This is a banking special. Banks have been facing pressure on their margins because their lending rates have fallen because of the repo rate cut. You know, their lending rate is linked to repo rate. But the cost of their deposits has remained high. Bankers and Reserve Bank are hoping that as the Reserve Bank floods the market with liquidity, deposit rates will fall. But that hasn't happened so far. It's 2 months since the repo rate was cut. 7 trillion rupees have been infused, but deposit rates haven't fallen. Now, the other reason why deposits are staying high is Indians are saving less and less via bank FDs. Instead, they are preferring mutual funds. The mutual funds also keep their money in banks, but in the current account, from which they are frequently withdrawing for transactions. Such current accounts are unstable, so for longer-term loans, banks are forced to raise one-year money at 8% through certificates of deposit, CDs or bulk deposits. The question we are asking today, therefore, is, given the new savings pattern of Indians, is it likely that bank margins will continue to remain under pressure and never return to the pre-2022-23 levels? Will loan growth also be under pressure for want of stable deposits? In short, is the best of margins and loan growth behind us? For all these questions, I'm joined by 3 veterans: Dinesh Khanna, former chairman, State Bank of India; S.S. Mundra, former deputy governor and a former chairman of BOB, Deputy Governor of the Reserve Bank; Srinivasan Varadarajan, Chairman of Union Bank and a veteran banker at Axis in his previous avatar. Gentlemen, thank you very much indeed for sparing time for me. I'm deeply grateful. Let me start with someone whom I can call a practicing banker, Srini Varadarajan, who is still the Chairman of Union Bank. Srini, what is your sense? Is this shift in savings behavior going to permanently impact banking as a business, as Uday Kotak puts it, that there is a challenge to the business model?
I think you've got to look at it from multiple perspectives. You're looking at the last couple of months, which has been, which everyone knows is the busy season as far as the banking system is concerned. And the maximum growth happens in that quarter. I think looking at it as a signal for what is deposit rates, it's not necessarily the right indicator. We will see some of the deposit rates coming down this quarter, which is typically sort of a lean season. So that is one aspect. The other aspect which you've touched upon is that whether the peak of bank margins in terms of NIMs is behind us, and is that something which we need to factor in going forward? I would think the market to a large extent is reflecting that, even though every analyst on the street is to some extent overweight banks or recommending banks. I think the banks are struggling to perform over the last couple of years. That, to a large extent, is due because of consolidation of market share amongst few banks. If you look at the last couple of years, incremental market share of 3-4 banks is above 50%. And therefore, every other bank is forced to fight for the remaining piece of the pie. And that which means that when you're looking at bulk deposits or CD rates, when rates are set at a high level, others typically become price takers, and therefore costs are not coming down on the deposit side. As you said, CASA and retail term deposits are growing at a steady pace, but nowhere to the pace which credit growth is happening. And therefore, NIMs continue to be under pressure and will continue to be under pressure.
Okay. Well, let me get Mr. Khara in on this. Clearly, he is a price setter. I mean, State Bank is one of the guys who's doing the consolidation. Mr. Khara, we don't see rate cuts even from State Bank. And liquidity aplenty has been given. A CRR cut in December, almost 7 trillion rupees by way of OMOs, swaps, you name it. And now we have ended the quarter with a little bit of a surplus, actually, in the interbank system. What is your sense? Is there a permanent problem? In spite of liquidity, will this deposit cut not be commensurate with the lending rate cut?
Well, I think I tend to agree with what Mr. Srinivasan has just mentioned. There are different segments of the economy, and when it comes to the seasonality of the deposit and the credit of the economy, there are various dimensions. And when we look at that, from that point of view, what you mentioned in terms of repo rate cut, whether repo rate cut will get reflected into the reduction in the loan rates, well, you know, when it comes to external benchmark, when it comes to public sector banks versus private sector banks have got a very significant portion of their assets which are on the external benchmark, which is essentially linked to the market rates, which would be repo rate, which would be external benchmark, could be the repo rate, or it could be commodity rate, or MIBOR, etc., etc. So those are the rates which have got undergone a change immediately. So that particular segment has witnessed the reduction in interest rate. But when it comes to repo and also the MCLR, majority of the public sector banks have got MCLR as the rate, as a benchmark rate. That's one of the reasons why probably we don't get to see the reduction in interest rates as far as the public sector banks are concerned. But there also I would like to mention that I've seen ever since the repo rate cut has happened, many of the banks have reduced their home loan rates. And that is something which is very clearly a reflection that, you know, when the asset book of a particular segment is performing very well, so naturally the credit cost is much lower. And that is where the banks are in a position to pass on the reduction in the repo rate also. It's more indicative also. But nevertheless, when it comes to MCLR competition, there are multiple factors which are at play. And one of the very important factors in MCLR happens to be the deposit rate. So when it comes to deposit, particularly, you know, when we look at the credit deposit ratio for the system as a whole, which is around 80%. So naturally, when the credit deposit is at 80%, so there are many banks which are clamoring for the deposit. And similarly, when it comes to the price setters also, what you mentioned in terms of, you know, banks like State Bank of India, who are witnessing about 12% plus growth in terms of the loan book. And also when it comes to deposit, they have to maintain the pace of the deposit growth. So they cannot be out of the market. And that is the reason why perhaps they have not seen the reduction of interest rate in the deposits.
Okay.
There are, you know, we look at it from the point of view of the structural changes, a couple of structural changes which have happened. We have seen that, you know, for last 10, 12 years, there is significant growth in the mutual fund AUM.
Yes.
It used to be about 12 trillion. Today it stands at about almost about 67 trillion. So that very clearly means that it's one segment of the society who have become saver in this particular situation. They have only seen the upside of the mutual fund. Only for last about 2 months' time, they have started witnessing the reversion to mean.
Yes.
And that is one of the reasons why probably you would have seen that, you know, when it comes to SIP, whether those SIPs have been paused or there have been stoppage of SIPs. So I think this is one phenomenon, what you mentioned, whether deposit will go away and people will go for only for the mutual fund. Perhaps this is one area where now the behavior will undergo a change.
Yes.
This generation of the savers will probably have much more matured outlook, will be allocation principle which they will be applying. They will be going deposit and as well as for the market instrument, depending upon the risk appetite.
No, that's the point, sir. You know, my father saved only on FDs. Whereas I would assume that, and I am on the threshold of retirement in a few years, I would perhaps be more, different in my asset allocation. So, Mr. Mundra, my more elementary point, I take what Srini and Mr. Khara are saying, seasonal, slack season, busy season, all that is taken. But isn't there a permanent issue that lazy deposits era is over? And therefore, bank margins won't be what they were. Banking business won't be as easy as it was.
Okay. Interesting point, Lata, and both Srini and Mr. Khara has made very relevant point. But let me start with, there had been certain narration, and you have also mentioned recently. Number one is about, looking at that you raise deposit 8%, where the cost ultimately comes near to 9%, and you land at 8.5%.
Yeah.
Similarly, there had been narration that CD ratio is running at 80%. Now, what I would like to argue that these are a very valid point, and they indicate to a long-term trend, but they are not as binary as we can very simplistically look at them.
You're referring to the, I think we should run the Uday Kotak tweet. I think you're referring to that. That 8% cost and 9.5%, 8.5% home loan.
Yes, I am referring to that. The fact remains that while you are raising deposit at 8%, you are also having the CASA, which is maybe 3 to 5 or 7% in saving rate and zero cost at current account. So ultimately, you look at blended cost. Why I'm telling it is not as binary. Similarly, you are talking about that a home loan is given at 8.5%, but at the same time, there are loans which are also earning 11, 12%. So again, you have to talk about the blended yield. The point I am trying to make, Lata, that with all this, even with the trend which is little declining, but if you look at the NIM of Indian banks, they are still very high if you look at globally. So there is a room, and there is a atmosphere is building up where I agree these NIMs have to come down to a level which is more matching with that. But the basic point is, to my mind, yes, there may be seasonal factors. It's quite possible that banks are also building up the war chest. So I agree with Srini that couple of months or 3 months did not to be taken as a permanently lasting trend. But my opinion, fact remains, this is a high time for Indian banks that they will have to look at the credit side and move away from this model of, getting into wedlock with an asset. Means you underwrite an asset and then till maturity it remains. It has to be originate and distribute model. And for originate and distribute model, you have to have an efficient market. It was not there at all a few years back. Today there are avenues are available, but fact remains that lot more is to be done, and banks have to be prepared for this change where the NIM would be under pressure, NIM would be declining, and they would have to learn to recycle their assets and do the new underwriting. As well as one last thing. One cannot
can I come to you? Can I come to you in a minute? I'll come to you in a minute. I take your point entirely that one point you make, yes, the era of lazy deposits and therefore high NIMs is under challenge. And secondly, that now banks have to circulate their assets, buy and sell their assets a little more. I'll come to that in a minute, but I wanted to ask Srini another thing. The constant criticism, I get even trolled for that ultimately money remains in the banks. And therefore, why are you all cribbing? I got trolled terribly on X for this. You tell me why it is not different. That money coming as FDs and money staying in the current account of a mutual fund, why are they fundamentally different?
Clearly, as you initially said, the behavioral analysis indicates that, the current account deposits are volatile and you cannot rely on them for long-term lending. So the point one needs to understand, and one possibly the market or the regulator needs to sort of mandate, is that banks need to disclose quarterly average balances of all these deposits, whether it's current accounts, savings accounts, retail term deposits, and bulk and CDs. Because the composition of this is changing. The liability composition is changing. Even though a year-end number looks like X, actually the average balances are not that. And the composition of current and savings accounts in the overall liability profile is coming down. The system is growing credit at a faster pace than the average balances of CASA are growing in the system. Therefore, even though these are low-cost deposits, their share in the overall liability profile is coming down. Therefore, the cost is getting pulled up. So structurally, the NIMs are actually declining, and that is the truth, and that is going to continue. And I agree with Mr. Mundra that, yeah, banks have to be prepared for lower NIMs. I think whether you call it lazy banking, whatever we call it, I think the CASA profile of banks and as a percentage of the overall liability is coming down on an average basis. That has implications for cost of funds, and that has implication for NIMs, and that is not going away.
Okay, I was going to put that last line to vote. Are NIMs structurally headed lower? Srini and Mundra have already said yes. Mr. Khara, where do you stand? Just yes or no. Are NIMs structurally lower?
I would say that if at all you're looking at NIM of 4, then perhaps yes. If at all you're looking at NIM of 3, then perhaps no.
Okay, well, I will take it as 2.5 votes out of 3 that NIMs are headed structurally lower. I have to take a break. I'm going to come back with what regulators can do or maybe need to do. After a break, for Bazar viewers, that part will be available after market hours, Chartbusters time for you.
The opening night showcased designer Anamika Khanna's designs that celebrated bold, ambitious women who own their space, lead with confidence and inspire with their individuality.
It's been 25 years of Lakme Fashion Week. What is in store and what can we expect?
As you can imagine, it's the most emotional, sentimental moment for us. 25 years of all of us together. It's going to be a spectacular celebration and I'm so looking forward to it.
Can you tell us on what the collection is all about?
This collection, it's called the Silver Collar, and as the name suggests, it's about elevating workwear for women and the very fact that we don't really follow rules anymore. Everybody is bringing that power to the workspace, but they also bring that emotion, the gentleness and all of that. So it's just about elevating workwear to another level.
One message that you would like to see your brand on these young empowered women wearing your collection?
I feel like if my collection can give you a sense of freedom, I've done my job. And that's what I want to do. I want to make people feel free.
From legacy designers to fresh voices, Lakme Fashion Week continues to redefine not just trends, but the business of fashion. In Mumbai, Zenia Baria.
The markets open slightly higher ahead of Trump's Liberation Day tariffs that will be unveiled later tonight. Midcaps relatively underperform.
Tata Consumer, that's the top Nifty gainer. It's rallied close to around 6% after Goldman Sachs upgrades the stock to buy with a target price of 1,200 rupees, expecting the company to return strong EPS growth. On the other hand, BofA Securities downgrades Nestle to underperform with a target price of 2,140. They've cut their earnings estimates by around 3 to around 5%, citing soft demand trends, among other factors. The stock slips close to 2%.
CSB Bank climbs more than 2% on the back of its Q4 FY25 business update that saw strong sequential growth, with deposits rising 10.34% sequentially.
Pari and Premier Energies slip after Bernstein initiates coverage on both the stocks with an underweight rating. The brokerage cites current market cycle, decline in return expectations and rich valuations as the key triggers.
Bharat Electronics is under pressure on the back of its FY25 business update. While revenue growth surpassed guidance, order inflow missed the guidance of 25,000 crores. We had a brokerage note on this front as well.
Hello and welcome to Chartbusters. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel, and with me today is Vinny. Hey Vinny, looking quite good for the markets. The Nifty is up close to under 100 points. The Nifty Bank has bounced back. It's pulled back close to half of yesterday's losses. And getting into Trump's tariff day, that's Liberation Day as he is terming it, it appears the bulls, they're taking some bullish bets. I think the question is, how bad can it get from here on? What more can he do? Or is the bad news in the price? Well, time will tell. For the time being, we had pulled back close to around 600 points from last week's highs.
Absolutely, and an interesting day coming in. Good morning to you as well, Nigel, firstly. But today what we're seeing is a bit of an underperformance that came in from the broader end of the market, right? So that is something to watch out for as well. And that advance decline ratio in the morning at one point of time was more in the favor of declines and advances. Now it's almost in the middle. We're seeing 1,000 stocks in advance, 1,000 stocks in declines as well on that front. So yes, we're seeing it nearing that advance decline ratio gap is surely coming down, coming off. What's doing well today is obviously we're seeing Nifty Realty that's managing to hold on to some bit of a gain and a very strong gain among the top sectoral gainers. So that is something that we should watch out for. But on that note, let's get started with the show. And welcome on board Chandan Taparia of Motilal Oswal Financial Services for technical check on the market. Chandan, good morning and thank you so much for joining in with us. Like Nigel was mentioning is there as well is that tomorrow is the D-Day. Liberation Day is what Trump is calling. Today, market surely have seen that recovery that has come in, or we're seeing it in the green. But as a level, what are we watching out for in terms for the Nifty as well as the Nifty Bank?
Good morning, Vinny and Nigel. Thanks for having me. So yes, I believe volatile cues could continue to be in the market. The good part is that index is holding well above its 50-day exponential moving average. But the concern is it failed to hold 23,400 zone and yesterday drifted lower to 23,150 marks. The good part is that selective stocks are doing well and Bank Nifty is finding some support. But the concern is that call writing is intact at higher levels. So I believe that buy on decline stance could continue with some volatile cues ahead of an important day. As of now, I believe that 23,000 could act as a major support for an upside move towards 23,550. So we have to play a broader range in between 23,000 to 23,550 marks. However, volatile swings could be there. So one can play with some option strategy or can play the range by going with the option spread or buying with at the money strikes. Looking at the Bank Nifty index, comparatively Bank Nifty is holding well. Just a couple of days back, it surpassed a key hurdle of 50,000 and after that, it headed to 52,000 marks. We have seen a consolidative move. On last trading session, it drifted below 51,000, but again, we are holding above the same. So I believe that 50,750 could act as a major support and Bank Nifty has potential to recover to us 51,500 led by recovery in SDFC Bank and ICICI Bank in heavyweight snake.
Okay, all right. Hi Chandan, good to see you in. Any individual stocks you'd like to give us? Individual stock ideas?
Yeah, Nigel, thanks. So I'll focus on Indian Hotel as a first preferred pick. I believe that consumption and vacation theme will continue to be in the market over the next couple of weeks, looking at the long extended weekends. So Indian Hotel is one name which recently taken support at 780 marks. That is exactly 50-day exponential moving average. If I look at the rollover data, that is indicating on the positive side with build-up of long positions. We have seen some put writing at lower strike, and this is one of the strongest counter with margin of safety. So one can buy with support of 808. And Indian Hotel can head towards 860 marks. Second trading idea, there is buy on Bharti Airtel. We have seen a strong momentum in the Telecom counter in last 2-3 days, and Bharti is one of the counter which is heading to us or gearing up to us is new lifetime high. We have seen a long consolidation of last 8 months, and now a small follow-up above 760, 770 can open the upside of 5 to 8%. So in that scenario, one can buy Bharti Airtel with support of 1725 for an upside target to us 1820. Last but not least, there is buy on UPL. I believe selective chemical name could be in focus. UPL has seen a profit booking from 670 to 620, but yesterday is bottomed out with exact support of 50-day exponential moving average, and that is working well from last 55 trading session. If I look at the data setup, some short covering is clearly visible, and the counter is holding well. So expecting next leg of rally, one can buy with support of 632, and UPL can head to us 670 plus zone.
Sure. Chandan, just a quick word in terms of public sector banks. Anything on that front, PSUs that you're looking at? We're seeing a bit of a fall coming in here, but anything that you find interesting here?
So like if I look at the Nifty PSU Bank index that has been consolidating in a range, the good part is that in the last month, we witnessed a decent recovery after the corrective move of last almost 9 to 10 months. In last 3 to 4 weeks, we witnessed some recovery, but now from last 5 to 6 days, it has been consolidating. PSU index has been finding hurdle at 6370, but at the same time, 6100 zone is providing a major support level. So some support-based buying and consolidative move could be there. And if I have to pick one name, then it will be State Bank of India, SBI. It has been consolidating in a range, but multiple supports are visible at 760 marks from last 5 to 6 days. So with a small support of 760, one can go long for an upside target to us 785 to 800 zone. Apart from State Bank of India, one can also look at the counter like non-FNO name like Union Bank or Indian banks. I think some support-based buying could be there. And I noticed that even after the market declined, most of these counter have not corrected, remain resilient, or either witness some accumulation at lower levels. So I think one can focus on selective PSU bank, including SBI as a top bet.
Right. Thank you so much, Chandan, for that. And thank you so much for joining in with us on the show as well. But now let's shift focus to our special segment where we will get you a few ideas of profit from Money Control Pro. Kanchi Shah of moneycontrol.com is joining in with us to talk to us about the stock that she has been tracking closely. Kanchi?
So the company that I've chosen for today is Bajaj Auto Limited, which is the largest three-wheeler manufacturer and second largest motorcycle manufacturer in India. Bajaj Auto has reported a 22% increase in export volume in Q3 FY25, which is reflecting a very strong presence in international market. Latin America emerges as the largest emerging market for motorcycles, nearly twice the size of Africa, presenting a very significant growth opportunities for the company. Also, the depreciation of the Indian rupee is expected to benefit Bajaj Auto's bottom line by enhancing the value of foreign currency earnings, which is derived from the exports. Bajaj Auto has made very significant strides in electric vehicle and CNG segment. EVs now contribute up to 22% to the domestic revenue. The Chetak EV scooter has experienced a very remarkable turnaround, achieving a 25.8% market share in March. Additionally, Bajaj market share in EV three-wheeler has also increased to 35% in Q3 FY25. The company also launched Bajaj GoGo, which is an electric three-wheeler, and plans to expand its EV portfolio further into the three-wheeler segment. With a very positive outlook for two-wheeler demand and strong recovery in rural sales, Bajaj Auto offers a very compelling investment opportunity. The stock is currently valued at 25.5 times FY26 projected earnings, thus presents a very solid growth potential for the investors.
Thank you so much for that, Kanchi. But on that note, we're going to slip into a very short break. We'll get you more on the markets and stock-specific action on the other side.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable?
Welcome back. I think we should pull those crisscross lines up for you yet again on the screen, and that's telling you the sentiment is tilting towards the positive side. Because when we started off trade, there were very few stocks that were on the advancing side that compares to the number of stocks declining. But take a look at that. They almost kissed each other at the start of the show. And now you have more number of stocks that are advancing than declining because a lot of those mid-cap names have recovered. That said, let's focus on the top winner and the top loser on the Nifty. BEL, that's the top loser following its release with regard to its business update for FY25. And it appears it's fallen a little bit short in comparison to what the street was expecting and in comparison to their guidance. Upasana joins us to break it down for us. Upasana.
Well, the defense major BEL continues to remain in focus this week also after the company reported its FY25 provisional numbers. Now, overall, if we see, the revenue guidance of the company for FY25 was 15% and companies reported a revenue growth of 16%. So the company beats its revenue growth, but there's a miss in terms of the company's order inflow guidance of 25,000 crores. Now, if we look at the FY25 revenue, it stands at 23,000 crore with an uptick of 16% on a YoY basis, as mentioned earlier. And if we look at the Q4 revenue, it comes at 8,462 crore with just a single-digit growth of 3% on a YoY basis. Now, Q4 revenue is a miss according to Nuvama estimates, and it has reported a low single-digit number. As compared to the 9-month FY25, the growth was as high as 25%. Now, if we look at the FY25 export sales, they saw an uptick of 14% on a YoY basis and stood at $106 million. And FY25 order inflow stood at 18,720, which is just 75% of the overall full year order inflow guidance that the company has given. Order book, it stands at 71,650 crore with a degrowth of 6% on a YoY basis, and company's export order book has also seen a sharp degrowth of 12% on a YoY basis. Now, Nuvama says it prefers BEL over HAL, and it does not see any earnings guidance, any earning cuts, or downgrades on BEL on the back of this. Morgan Stanley has also given an overweight call on this and has given a target price of 364 per share. So all in all, that's the reason the stock remains in focus today. Let's see what happens ahead of this.
Absolutely, Upasana. We'll keep an eye out on this one. Second consecutive day of fall. This came in yesterday just before market close. And in that, yesterday and today's trading session, it's down 7%. But let's move on and talk about now the top Nifty gainer for today, and that is Tata Consumers. This is after Goldman Sachs has upgraded the stock. Nimesh is joining in with us to give us more details and what is standing out in the brokerage report. Good morning, Nimesh.
Hi, morning, Vinny. So, as you rightly pointed out, 7% higher, biggest F&O gainer today on the back of a big upgrade on Tata Consumer from Goldman Sachs. So they've upgraded the stock to buy from neutral and they've raised the target price to 1,200. Now, Tata Consumer for the last many quarters have been struggling with the earnings. That looks like it's changing according to the Goldman note. So Goldman believes that the company is poised for a very strong return of EPS growth over FY25, FY27, largely on back of few reasons. The first reason is recovery in the tea prices on the back of price hikes. So that's the first thing. Second, strong innovation and distribution expansion of the growth businesses. So that's going to be a big kicker for Tata Consumer going forward. And third, lower interest cost as the acquisition debt has been paid down by the company. So these are the three reasons why Goldman believes that the earnings are going to improve from here on. On back of this, Goldman has raised the earnings estimate, EPS estimates for FY26, FY27 by 3% and 7% respectively for Tata Consumer. And Goldman believes that within the FMCG basket, Tata Consumer, according to them, is going to report the strongest earnings going forward. So that's the reason why a big upgrade. And I guess because of the fact that the earnings are going to be so strong, you've seen a very sharp reaction in the stock price today.
All right, so that's the big one that's moving in today's trading session on the upside. But Nimesh, stay on. BofA, they have issued a couple of downgrades in the FMCG sector, both HUL and Nestle under pressure because of that. Tell us more.
Correct. So I'll only focus on Nestle to start with. BofA issued a downgrade the stock to an underperform, and they've cut the target price to 2140. They've cut the earnings by 3 to 5%. Couple of reasons why they believe that earnings will be disappointing. One, a combination of soft demand trends, cost push and aggression from the competitors. That's going to impact the earnings going forward. Nestle has to do a very tight balance between growth and margins. And given that there is so intense competition, the margins are going to get impacted at least in the near term. And that's the other reason why they believe the earnings will be under pressure. And also the valuations. It's still rich in terms of context of the growth as well as margin. So on back of all this, a downgrade on Nestle to an underperform by BofA, and they've cut the target price now to 2140 on Nestle.
Okay, Nimish, thank you so much for that. As of now, Nestle is down almost 2% in today's trading session. But as we slip into the break, here's a programming note for you all. The future belongs to Bharat, and the Rising Bharat Summit 2025 is where visionaries show us how to lead it. Get inspired by Arvind Srinivas, co-founder and CEO at Perplexity, the AI distributor, redefining how the world researches and searches for knowledge, gaining transformative insights from Vivek Wadhwa, CEO of Vinox Biosciences, as well as acclaimed academic entrepreneur and author, on how India can lead the next wave of breakthroughs in AI science and innovation. Join us at Bharat Mandapam, New Delhi on April 8th and 9th for a powerful exchange of ideas shaping the nation's next leader.
Market masters, macro pundits and chart wizards. Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bazar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube.
Welcome back. Well, the markets continue to hold with good gains. We're up 120 points or thereabouts. So we've cut close to around a third of the losses that we saw yesterday. In terms of stocks moving around from the broader markets, DB Realty comes on your radar. That stock has seen a sharp spike up in the last few minutes. I think let's get the intraday chart out there. Big uptick is what we're seeing. HFCL, that's another stock that's suddenly seen a good recovery from the low point of the day. So I think we should get that one out. And Tata Steel, that's moving higher because a couple of reports indicate that ArcelorMittal in Europe, they have gone ahead and they have hiked prices. So that's having a bit of a rub-off on Tata Steel, up close to around 1.5%. Let's focus on the energy stocks though. Waaree Energies as well as Prima Energy, both of them are under pressure because there's an underweight rating come about from a brokerage. Vivek joins us to tell us more. Well, Vivek, both the two stocks, they're down between 2 to around 3% because of this. Tell us more.
Absolutely right, Nigel. Very interesting report coming from Bernstein today. So they've written about the solar PV space and they've initiated coverage on both of these stocks. They have an underperform rating on both of them, or underweight rating. Waaree, they have a target price of 1,900 rupees a share. Premier Energy is close to 693 rupees a share. What is it that they're saying? Number one, they actually like the entire space. They also like the moves that the companies have made. So what do they like about the company? First, have a look at that first. They've made smart investments. They're both pioneers as far as India's solar PV space is concerned. Both of them potential, especially in the recent quarters or in the near term, is very, very promising. And along with that, what is it that they don't like? They also say that the supernormal profits or supernormal returns that the company have enjoyed in the recent past is something that may not continue for a longer period of time. Companies, though, are aware of this and they are diversifying into energy transition areas such as batteries. Now, however, why does Bernstein have an underperform rating? Number one, on the back of the fact that we are now in the late stage as far as the cycle positioning is concerned, expectations of deteriorating returns from this point on, high valuations, regulatory arbitrage business is how they look at this entire solar PV space, and they believe that this particular space cannot justify the kind of high valuations that the companies currently enjoy. Along with that, they say that the industry is now close to cyclical peak returns. This is on the back of the fact that retail prices are almost 2 to 3 times the global levels. There is low entry to barrier, big competitors on the horizon. Remember, whole host of large conglomerates have gone ahead and announced big plans to set up solar PV plants and module facilities. So what they're saying, it is right now too early to assign credible value to new ventures, especially with large conglomerates entering the space. On the back of that, they're quite cautious and they have an underweight rating on both of these stocks, on the back of which both the stocks are under pressure today.
Okay, Vivek, thank you so much for that. Now, let's move on to MCX. That's a stock that's in focus as well. And this is on the back of its Q4 business update that's coming. Mamakshi is here to tell us more details on this one. Good morning, Mamakshi.
Good morning, Vinny. Well, MCX is in focus on the back of its trading activity update. MCX transaction revenue stood at 289 crores for the fourth quarter. Now, compared to the previous quarter, this is a downtick of almost 4%. And it is also slightly lower as compared to Morgan Stanley estimates of 293 crores. ADTR, which is the average daily transaction revenue, stood at 3.9 crores for Q4 as compared to a Morgan Stanley estimates of 3.95 crores. So, therefore, it's slightly coming in slightly lower as compared to the street's expectations. Morgan Stanley has an underweight rating on MCX. They have a target price of 3,400, which is significantly below where the stock is currently trading at. But going forward, they're building in 4.02 crores of ADTR for FY26 and 4.19 crores for FY27. On the other hand, UBS has a buy call on MCX, although they've gone ahead and reduced their target price on this counter from 7,800 to 7,250. They say that the volume information that the exchange puts out has indicated a tad soft quarter, but however they're expecting the volumes to improve going forward. Overall, however, quarter four revenue in their opinion is expected to see a decline of nearly 5% quarter on quarter. So therefore, given the kind of trading activity that has panned out over the last quarter, MCX is in focus today.
Okay, all right. Thanks a lot for that, Vamakshi. Well, before we wind down, a few stocks in the broader market. Force Motors, that was a stock that was down close to around 1% at the start of the show. That's done a bit of a U-turn. Currently, the stock at the high point of the day. Well, on that note, though, we'll wrap up on this edition of Chartbusters. But as the global markets remain on the hedge, ahead of US President Trump's Liberation Day, tune into CNBC-TV18 tonight at 1:30 a.m. onwards to get the latest updates and analysis as Trump's tariffs come into effect.
I think the first thing we have to address is safety and hygiene. I think we have to be perceived, and we'll only be perceived if we are a very safe place to travel for everyone, including particularly women travelers. So I think we all know there have been enough incidents, they keep happening. That has to stop. Otherwise, what happens, we'll have two kind of tourists. We'll have the super rich tourists who come and have the 5-star premium holiday, rose-tinted glasses, blah, blah, blah. They go see everything. They don't really feel India, but they're seeing a very sanitized India. Or you have the backpacker who's out in the hills and doing whatever they're doing, coming from wherever, etc. That's so you don't have the classic middle class.
And there have been stories, Shireen, believe it or not. I mean, I remember those moments because when IPO happened, they suddenly started going back to their records and saying, where's that damn paper?
Where's that piece of paper?
Where's that piece of paper? Because nobody really realized that it had any value. And some of them came back and then we've lost it and can we just get it back, right? So it was really, really good to see.
They probably didn't think that anything would come off it, right? So we are tucked away in some files
luckily
somewhere.
finance had all records and everything's electronic. But yeah, people were like that. Like I remember them coming saying, "Aapne kuch ek wo diya tha letter nahi mil raha." They were scared. It's gone.
So you're the big daddy at Make My Trip, but you're also the big daddy for the startup ecosystem.
Yeah, from young Turk to not so young Turk, 25 years. So I think we all grow up. Now that you showed me the old young Turks we did.
Yes.
And you and so Shireen and CNBC, you might be our good luck charm. So you've seen us through thick and thin. And I officially want to thank you for being a huge supporter through our toughest times. So, we recall that, and don't forget when people, help out when in the tough times. So thank you for that.
Access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
India is amazing. Every time we went over the Himalayas, and I'll tell you, Butch got some incredible pictures of the Himalayas. They're just amazing. And you can see, like I've described it before, just like this ripple that happened, obviously when the plates collided, and then as it flows down into India, it's many, many colors. I think when you come from the east going into like Gujarat and Mumbai, the fishing fleet that's off the coast there gives you a little bit of a beacon that here we come. And then all throughout India, I think the impression I had was it was just like this network of lights from the bigger cities going down through the smaller cities. Just incredible to look at night as well as during the day, highlighted of course by the Himalayas, which was just incredible as a forefront going down into India. I hope, and I think for sure, I'm going to be going back to my father's home country and visiting with people and getting excited about the first, or not the first, but the Indian astronauts who's going up on the Axiom mission coming up. Pretty awesome. They'll have a hometown hero there of their own that will be able to talk about how wonderful the International Space Station is from his perspective. But I hope I can meet up at some point in time and we can share our experiences with as many people in India as possible, because it's a great country, another wonderful democracy that's trying to put its foot in the space countries, and we'd love to be part of that and help them along.
Good morning. Welcome to Trading Hour. It's a Wednesday morning, one day before the D-Days. Not even one day, right? A few hours to go. A few hours to go before what US calls the Liberation Day. Markets are holding up pretty well. We've got the benchmark indices in the green with a gain of about 0.6, 0.7%. The Nifty is above 23,300 as it surges about 150 points. Sensex is scaled past the 76,500 mark with a 550-point up move. Broader markets moving up. The Midcap index is outperforming. The advanced decline ratio is got more stocks gaining compared to declining stocks.
That's right. Good morning, Ima, and hello and welcome from the CNBC-TV18 Motilal Oswal studio. Quite a few stocks is what we want to actually go in and address. And we have to start off with the consumption pack. So it's a very mixed view as far as the consumption space is concerned today. On one hand, where you have Tata Consumer, one of the top gainers as far as the Nifty is concerned, is on the back of the Goldman Sachs upgrade. On the other hand, you've actually seen two stocks, two heavyweights as far as the FMCG pack is concerned, both HUL as well as Nestle. Both of these are under pressure. This on the back of a BofA Sec downgrade valuations continue to be a bit of a concern. The other stock that's seeing quite a bit of selling pressure today is actually Bharat Electronics. Yesterday, just prior to market close, the company gave a provisional update as far as its FY25 both order inflow as well as top line performance is concerned. The order inflow missed guidance, the stock seeing a sell-off. This is after the sell-off that the stock saw yesterday as well. And yesterday, one of the weakest sectors were the banks, but today, very sharp recovery in select banks, HDFC Bank, ICICI Bank, both of them up quite significantly. And lastly, we will discuss this particular space in a lot more detail a little later down the show. But Waaree Energies, Premier Energies, both pure play solar PV module makers, both of these stocks in focus today. A Bernstein report. They believe that cyclically the peak may be over for these names, and both of these stocks under pressure today.
Okay, let me also talk about IT. Next week on the 10th, TCS reports numbers, and then it's followed by Infosys on the 17th, and then all the numbers will flow through. So we're getting in a lot of brokerage notes, preview notes, and the latest one is from JP Morgan, and they say with the NSE IT index down 14% on a year-to-date basis, according to them, a lot of the negatives are priced in. So what they will play for is relief rally in the beaten down names. So they're overweight Coforge, Infosys, KPIT and Tech Mahindra. These are stocks that they like, and the stocks that they will avoid this quarter include TCS, Wipro, HCL Tech, Tata Tech and Tata Elxsi. There are two changes that they've made. One is they've downgraded HCL Tech from an overweight to a neutral because they're saying that according to them, HCL Tech is likely to report FY26 growth lower than FY25. Q4 is likely to be subdued. Deal wins have been a bit muted. So there is a downgrade on HCL Tech from overweight to neutral. Target price cut to 1700. And on the flip side, they've upgraded Tech Mahindra to a neutral from an underweight. And here the key thesis is that because all the companies are struggling on top line, this is a company which will manage to grow its margins because margins are beaten down. Like in Q4, it will report 10% margin. Right. The company's aspiration is to get to 15%. So it's like a low-hanging fruit to improve margins. And therefore, when everyone's struggling on the top line, this is a company which will do well, at least on the margins. And therefore, the numbers could look good. So they've upgraded Tech Mahindra, but it's a neutral call because the company is still in a turnaround. Target price is 1500. And they're also saying that Q4 is going to be soft, as everyone's been saying, because macro uncertainty has increased since the beginning of March. 2 to 5% is the Infosys guidance for FY26, according to them, and HCL Tech is likely to guide for 3 to 5%.
Thank you so much, Reema, for telling us about what exactly to expect as far as IT is concerned. Remember, it's the end of Q4. It's also the end of FY25, and IT results will be among the first sectors to go ahead and announce their results. But remember, today is D-Day, especially when it comes to Indian companies that have significant exposure to the US markets. What will be the quantum of tariffs? And one particular sector that will remain in focus is the entire pharma pack. Going into this particular event, the entire pharma pack has been under significant pressure. But today, what we're actually seeing is going into the event, a certain amount of short covering has come by, especially in some of the large cap names. So look at names like Lupin, look at names like Aurobindo Pharma, Loris Labs. All of these stocks today are seeing quite a bit of a recovery from the day's lowest points. But on this particular topic, remember, Trump's Liberation Day, the 2nd of April, is nearly here. And investors are awaiting Trump's latest tariff rollout. CNBC's Megan Kessler joins in with more details.
David, I was just inside the White House talking with officials on this to try to bring you guys the latest. And what I can tell you is that deliberations on exactly what tomorrow will look like are still ongoing. There are still meetings scheduled today where they will be talking through the different options that are on the table, and no options have yet been removed from the table. There's three main options that the president is considering here. One is a blanket 20% tariff on most all imports from most all countries that are sending goods into the U.S. Another is sort of a tiered basis, meaning that countries can fall into one of maybe three buckets. There will be maybe just three different rates and tiers of countries depending on the trade barriers that they have up. The third is the option we had previously been talking about the most, sort of a customized country by country approach. One White House official did tell me that that blanket 20% tariff rate, that's still back on the table, but that appears less likely than the other two at this moment in time. Here's what we know about tomorrow. We know it's going to be a 4 p.m. ceremony in the Rose Garden. Most cabinet officials in attendance. Some workers, some manufacturers, some CEOs have also been invited. So we'll see who's there in the Rose Garden tomorrow. We know that the goal, they say, is country-based tariffs, not sectoral. So though there's been a lot of talk about pharmaceuticals and semiconductors, we do expect those at this point to come later and not to be announced tomorrow. And then one final thing, guys, is that as big as these reciprocal tariffs could be, they are just one piece of what we're getting tomorrow. And I don't want viewers to forget that we're also expecting the pause on Canada and Mexico imports to be lifted. We're also expecting those secondary tariffs on Venezuela to take effect, and the auto tariffs will take effect, guys. So no matter which of these options on the table that they choose, a big day tomorrow, no matter what, guys.
Indeed, and now only a few hours to go. Madhavi Arora, Chief Economist at MK Global Financial Services, is now joining in with her insight. Madhavi, thank you so much. You know, the 2nd April date has been drummed up so much that, you know, everyone thinks it's going to be this big binary event. A lot may change in the next few hours. There are so many closed-door negotiation parlays taking place, and a lot of what we discuss could be in the realm of speculation. But give us your base case, your insights on this particular issue.
Hi, morning. Well, to start with, we don't think the April 2 event would see a resolution in tariff policies, but instead, I think it would be beginning of the next stage of the trade war. So, I think we are in for a much more volatile world that we are assuming. It's just the starting point of the noise that, Trump administration might end up making. As of now, one is still not clear whether the mode of tariff is going to be reciprocal on sectoral basis or on a broad country level basis, or it will go in the in the depth of commodity wise tariff differential treatment that they might end up facing. I mean, we might end up facing. So as of now, there's not much of a clarity as to how the implementation is going to be. It's going to be extremely sketchy. But our assessment suggests that there's too much noise with regard to this bit as far as India is concerned. Indeed, there are going to be certain sector which would be hit. But there will be a lot of segments within those sector which could have mitigating impact. So on an average, I think India probably would face roughly around 6 to 7 billion hit on the exports to the US if at all we get reciprocal tariff on a broad country level basis. But within that also, I think sectors like auto, pharma, electronic, which are seen as the ones which could get hit, probably are much better placed than feared. While we think sectors like apparel, gems, and jewelry, they may not have much of an escape route and might end up really facing, the brunt of the tariff noises. But as of now, I think it's extremely sketchy. While numbers are floating here and there, I believe that we are in for a much more volatile world.
Yeah, beginning of a trade war, as you said. So Madhavi, I get that, imposing reciprocal tariffs at an individual commodity level is going to be an accounting nightmare. We've got 200 countries and, on an average, I think about 13,000 items. So we're looking at 2.6 million. So let's keep that, let's keep that on the side for now. If reciprocal tariffs are imposed at an aggregate country level, you said the impact on India could be about 6 billion at 10%. Can you tell us how you've arrived at that math?
So we've basically taken into account the demand elasticities of these commodities which are exposed to the US, whether there's any kind of a substitution effect that we can face immediately, and of course whether we can also sort of find the mitigation route or substitution from India's point of view in terms of these commodities. So net, given the current elasticity of these commodities, we've come out with this number that there would be a marginal hit of around 0.1 to 0.2% of GDP worth of hit in terms of exports.
Madhavi, that's very helpful. You've also, done an analysis where you looked at the imposition of tariffs across 3 broad sectors, or maybe in 3 separate ways. The first is broad country-level tariffs. The second is sector-level tariffs. And the third is commodity or sub-sector level tariffs. Analyze this for us, and where do you see the most impact happening, especially for a country like India?
So as I said, first and foremost, when we study the importance of US as India's market for these sectors that you mentioned, when we see the tariff differential and to try to understand, how gullible these sectors are, we identify that not only India's exports to the US is very concentrated on top sectors, but vast majority of India's exports are not materially high to be extremely vulnerable in the first place. So overall, India exports roughly around 80 billion plus to the US, which is around 2% of GDP. And the sectors that actually, are gullible or exposed to these tariff noises are roughly around 1.1% of GDP. Of that, also, when we, get into these sectoral analysis like auto, pharma, electronics, as I said, they're extremely noisy in terms of the positioning that they have versus the US and the exposure that they have to the US. But when you end up studying these sectors, like for example, auto sector, it seems to be a sector which could be massively hit given the differential of tariff that we have with the US. But when you really get into details of that, what we really see is that they're actually insulated from the tariff noise, because 80% of that auto exports that we do to the US are basically components. Only 20% is what we really export as a finished good, and that also is a very small amount in terms of value. So, of course, if at all the tariff reciprocal hit comes onto us, auto component sector could be massively hit. But again, since it's going to be a broad country level a hit that everybody will face, we can still have a competitive edge compared to the likes of Canada, Mexico, China, which may actually end up facing much higher tariff differential. While we agree that at this point in time, the auto supply chain or value chain is extremely integrated between the US, Canada, and Mexico. But of course, if these kind of differential tariffs come into play, there could be some escape routes and some shifts that could happen away from these countries to actually countries where there could be a relatively less higher tariff that US may end up imposing. Same with electronics. If we look at the electronic component exposure to the US, essentially it's all iPhone, right? And there also India practically has literally no value add per se, because if you look at our exports of smartphone to the US, we exported roughly around 6 billion to the US last year, and our actual earnings from that was just about 0.3 or 0.4 billion dollars, which is, if I adjust for the PLI scheme, our net economic earnings or net value add to the economy was zero. So we'll end up just passing on these prices to the US per se if at all we end up facing any tariffs, and we will not take a margin hit on our exports per se. Same with pharma. If you look at the composition of pharma, it's a low-cost, high-volume provider to the US. We roughly are around 6% of US pharma imports. But if you look at the composition of that, 50% of US generics actually are coming from India, which is difficult to replace. We are very cheap in terms of generics that we supply to the US, very competitive. Even with the cost pressure that we may face because of the tariff imposition, we won't have to face any hit, because, again, the demand is extremely inelastic from the US end. They will have to bear the price of it, not the domestic, pharma companies that are providing these supplies to the US. So there are a lot of nuances within sectors wherein we also can have bargaining power. It's not going to be a one-way street.
So let's talk, before we wrap this up, some easy wins. We could lower the import duty on some products to try and mitigate the damage. We could increase imports from the US on certain items. So take us through the easy wins in this particular scenario.
So basically, now we are talking about India's negotiating power as well. As I said, pharma is one sector where we can actually have some bargaining chip, and when we are getting to a BTA or an FTA with the US, if at all, we can use it as a bargaining chip and ensure that we don't get hit. Secondly, where we can also try and probably shift our energy demand away from the likes of Russia to some extent to the US. Actually, it's already happening at the margin. If you look at the last 3-4 months, Russia has become an extremely important player in our energy imports. But at the margin, now the shift is happening towards North America as well. At the same time, we can also increase our defense purchases from the US. It's extremely concentrated again in terms of our defense imports to the likes of Russia. We can move a little bit away from that and give some leeway to the US. At the same time, we can reduce tariff on certain agriculture and food commodities, wherein we are actually importing a massive amount from the US, especially in apples and fruit and nuts, where we are not only imposing a very high tariff on the US, but also are importing a decent amount. So it makes sense for us to actually reduce those tariffs and let US have some market share in India, because we any which way are importing a lot from the US. Same with foreign EV policies. We can probably lower tariffs on foreign EVs, which could give some kind of a easy entry to Tesla, which obviously would be liked by the Trump administration in some form or the other, and may not necessarily hit the domestic players, because the entry point of Tesla, the cheapest Tesla that we can probably would enter Indian market, would not be less than 35 or 40 lakhs as per assessment, which will not hit the domestic guys, but again will hit the likes of BYDs, which are already in the Indian market at the marginal space. So I think domestically, guys may not be hit immediately in the EV space, but it could be a good bargaining power, wherein you let Tesla enter India, but also put some conditionalities that 30-40% of your production would be sourced from domestic market or Indian market. So that also helps, Indian auto component industry to some extent, but also will somewhere mollify the US administration in terms of giving them entry in certain segment where we have so far kept it very restricted. So there are these small, easy wins which could reduce or mitigate part of the tariff threat. But as I said, it's going to be a long drawn process. We're not seeing the end of it immediately. I think come tonight, we will probably just hear more noises than a definitive plan from the US administration. And thus, probably for the next 6 months, we keep discussing what is the actual impact, but nobody will really have a number to that. But, from our end, we have to start discussing negotiations with them.
Thank you so much, Madhuri, for joining us, giving us a sense of what exactly to expect, especially later today when we do hear about the final imposition of the tariffs, and look forward to having you here to discuss the impact of those tariff impositions. But moving on, remember, India has seen a sharp increase in crude oil imports from US. India's crude oil imports from the US rose 67% on month-on-month basis to 244,000 barrels per day in March, amid President Donald Trump's efforts to boost American energy exports. In February, India had imported 146,000 barrels per day of US crude.
In fact, earlier this year, in the month of February, Oil Minister Hardeep Singh Puri had hinted that India will increase its energy cooperation with the United States. Listen into excerpts from that conversation that the minister had with Shireen Bhan at IEW 2025.
Energy cooperation, President Trump saying that India should buy more LNG, more energy from the US. He's even put out a number there saying that should increase from $15 billion to $25 billion. I wanted to get your comments on that. We have spoken about this previously as well. Do you believe it makes sense? It is something that we should actively pursue and build on.
Energy cooperation between the United States and India was widely expected to figure in the bilateral talks. If you read the joint statement, if you read what the President said, what the Prime Minister said, that's evidence. And I think there is already fairly substantial energy cooperation. The fact of the matter is India needs more energy. We have long-term deals on gas with one country which was there till 2028. You've signed another 20 years there. We are in the market for more gas. We have a stated policy of taking it from 6% to 15% in the energy mix. And I think we have a very substantive relationship with the United States, mostly on gas. I see definitely those quantities being addressed for increase.
Well, very important comments coming in there from Hardeep Singh Puri. But let's now slip into a short break. Up next, we'll discuss what's buzzing in the commodity space with Manisha Gupta.
Welcome back. Let's talk about gold. Manisha is now joining in to tell us more about the sparkling metal. Manisha.
Thank you for that, Rima. Well, as is the case with all asset classes, there's a bit of a pause in commodities as well, especially gold, where we did see an all-time high of $3,149 an ounce, an all-time high in the previous week itself. From there, there's a bit of a correction there, but we still are holding above 3,100 and some bit of a gain coming back into that market as well. Well, but the prices have seen nearly 10% of gains in the last 1 month, and they are 19% higher in 2025 till time there. So the strength continues there. What is also supporting prices is the weak US data in last 2 or 3 trading sessions, whether it has been about manufacturing numbers, jobs data and consumer survey. All of that in US has come in on the weaker side, supporting that buying in gold. The tariffs is another thing that the street is waiting for right now, and that in turn also seems to be leading to some safe haven buying into the markets. But yes, the newer highs are not coming because the street does not understand those numbers as yet. If you read various reports from global banks and brokerages and those global economists, people are putting out number of 5% tariff to 30% of tariff on the higher side as well. So it's all up in the air at this point in time. But most importantly, most people believe that gold is here to stay higher for a longer term. That is because China insurance companies have started to buy gold now. The data that has come in from China tells you that in the previous week itself, the Chinese gold ETF added 233,000 ounces of gold within that. And this is just 10 insurance firms. Out of that, only 4 have started to buy. So you would be looking at that number going higher going forward. If you look at the overall ETF numbers globally, the first quarter of 2025 has seen total inflows of 130 to 150 tons. Last year, same first quarter 2024 was an outflow of 114 tons. So that's a positive as well. The global ETF holdings, while are still 700 tons off the kind of high that we saw in 2020, but the markets believe that this trend will continue and you could be looking at higher highs in that space.
Thank you so much, Manisha, for joining us and giving us a sense of what exactly is transpiring as far as the market gold is concerned. Well, a couple of stocks on the radar. IndusInd Bank, near the day's highest point, the stock once again has reclaimed this 700 rupees per share mark. And another stock that's doing quite well in the session is Tata Steel. Tata Steel, remember, there are news reports that are indicating that the company's peer, ArcelorMittal, has gone ahead and hiked steel prices in the European market. On the back of that, a positive rub-off effect is seen in Tata Steel as well. But we'll now slip into a short break. Up next, we'll discuss market technicals with Mitesh Thakkar and also discuss their top trading bets.
Baton of power set to shift, Bharat's youth will drive the next wave of change. The biggest leaders and policymakers, global trendsetters, business icons, and entrepreneurs will come together to inspire the next generation of change makers. Don't miss your chance to witness it all live. Rising Bharat Summit 2025.
મારું યાત્રા ચાલે છે પદયાત્રા અહીંયા જામનગર અમારા ઘરથી દ્વારકાધીશ સુધી અને બસ આ બધાના આશીર્વાદ રહે અને શ્રીજી બાબા દ્વારકાધીશના બધા ઉપર કૃપા રહે આ જ મારી પ્રાર્થના છે અને અમે હમણાં પદયાત્રામાં 5 દિવસથી ચાલીએ છીએ અને 2-4 દિવસમાં પહોંચી જશું.
Welcome back. Largely steady. The Nifty is up close to about 100 points. Mitesh is now back with us for a quick technical check on the markets. Mitesh, your thoughts on the morning so far?
I think it's been a good morning. And see, I think, I was talking about this, that basically we have retraced a little bit more than what I anticipated, but we were not breaking below the daily averages. And the structure still is positive in the sense that the daily indicators which had turned up, despite the last few days of consolidation and pullback, were still rising. So I think that comes into play. This will confirm two things. One, 50,700, 750 about for the Bank Nifty is a key support zone. Similarly, 23,100 for the Nifty, I think, should appear as an important level. And now going forward from here, as long as these levels are not being violated, I think a sense of upmove should be maintained.
Mitesh, individual names, anything that you like, dislike at current levels?
So I think Indian Hotels is on the list. I think that's one stock, which was anyways outperforming, has after 3-4 days of pullback again turned up. Buy here with a stop just below levels of 812 and look for a target of around 850, 855 to begin with. And the other one is ICICI General Insurance or ICICI GI, as we know it. That's breaking above the previous day's swing high and a good setup over here. So buy with a stop just below levels of 1800. So 1798 would be a good level. And look for targets of around 1860.
Got that. Thank you very much for that. We will slip into a very short break. On the other side, we'll discuss market fundamentals. Siddharth Vora from Prabhudas Leeladhar joins in on the other side.
અને બધા શ્રીજી બાબા બધાને સંભાળીને રાખે ને બધાને આશીર્વાદ આપે. બધા યુવાને ભગવાનના પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને સનાતન પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને બસ એ જ મારી બધા યુવાને એક મેસેજ મોકલાવું છું મારા ભાઈઓ અને મારા મિત્રોને કે આપ બધા શ્રીજી બાબાના આશીર્વાદ લઈને આગળ વધો અને જ્યારે ભગવાન છે તો કંઈ ચિંતા નહીં કરવાનું.
Welcome back to Trading Hour. Well, one particular sector that's in focus on the back of a very interesting note from Bernstein is actually the solar PV module making space. Two stocks within that are in focus. Both are pure play solar PV module makers. Both Waaree as well as Premier Energy. Both of these stocks today are under pressure. What is it that Bernstein is saying? Number one, Bernstein actually has quite a positive view on the entire space and especially on these two companies in terms of the near-term return potential that both of these companies have in anticipation of increased demand, especially as far as solar PV modules are concerned. What is it that the Bernstein analyst is saying as far as both Waaree and Premier are concerned? He says both of them have recently made very smart investments. They also say that they are pioneers as far as the Indian solar PV space is concerned. They say that the potential in the coming quarters is quite promising. However, what is it that he doesn't like as far as the space is concerned? Number one, the super normal returns that the space is enjoying not going to last for too long. Along with that, he notes that the company is, however, diversifying into energy transition areas, especially battery storage. However, why does he have an underperform rating or an underweight rating? Number one, due to cycle positioning, he believes that both of the companies are now in the late cycle, especially as far as the high return stage is concerned. He believes that from this point on, there are going to be expectations of deteriorating returns. Along with that, he believes that the valuations that the companies currently enjoy don't really justify the fact that, remember, at the end of the day, they do belong to regulatory arbitrage based businesses, and he believes that this particular high returns that they enjoy cannot last for too long. Along with that, he believes the industry is close to globally cyclical peak returns on the back of the fact that, number one, when you look at Indian prices as well as export prices, almost 2 to 3 times that of global levels. Along with that, there are very low barriers to entry in this space, and there are large conglomerates, including the Reliance Group, that will be coming into this particular space. So he says, at this point of time, too early to assign credible value to the new ventures that the companies are undertaking, and large conglomerates are entering and high valuations. On the back of that, he believes, that both of these stocks, they've done quite well, especially in terms of P&L performance has been very strong, but maybe the peak is behind.
Got that. Let's now move on and talk about BEL. That's the top Nifty loser today. Stock is down 3% today, 7% gone over the last 2 days. This is on the back of the business update for FY25. It came out during market hours just towards the close of markets yesterday, and stock fell, and it's followed it up. It's extended its losses today. Upasana joins in for the numbers.
Well, BEL continues to remain in focus this week itself after the company's reported its FY25 provisional update. Now, all in all, if we see, the company has surpassed its FY25 revenue guidance of 15%, but it's a miss in terms of order inflow guidance of 25,000 crores. Now, let's break down the numbers. Now, FY25 revenue stood at 23,000 crore with an uptick of 16% versus the 15% revenue guidance on a Y-on-Y basis. Now, if we look at the Q4 revenue, it's a miss in terms of brokerage estimates, as the growth just stood about 3% on a Y-on-Y basis. Now, company was able to meet its guidance because 9-month FY25, if we look at the revenue growth, that stands really strong at 25%. FY25 export sales saw an uptick of 14% on a Y-on-Y basis, and company's FY25 order inflow stands at 18,720 crore, which misses the guidance of 25,000, as company is only able to achieve 75% of its overall order inflow guidance for the year. Now, order book of the company stands at 71,650 crores as of 1st April 2025, with a downtick of 6% on a Y-on-Y basis, and export order book has also seen a downtick of 12% on a Y-on-Y basis. Now, Nuvama says on the back of this, it still prefers BEL over HAL, and it does not see any earning downgrades on the stock. Morgan Stanley has also given an overweight rating on the stock and has given a target price of 364 per share. Hence, this stock continues to remain in focus today on the back of this.
Thank you so much, Upasana, for joining in and telling us about why exactly Bharat Electronics is under pressure today. But the other stock in focus is actually MCX. This on the back of its fourth quarter business update. Vamakshi joins in to tell us more.
Well, Vivek, MCX has disclosed its trading activity update for the fourth quarter. MCX's transaction revenue, as calculated by Morgan Stanley, stood at 289 crores for the fourth quarter. When we compare it to the previous quarter, it is a downtick of almost 4%, and in fact, it has come in slightly below their estimates of around 293 crores. The ADTR, which is the average daily transaction revenue, stood at 3.9 crores on a sequential basis. This is a dip of almost 6%, but it has come in slightly lower Morgan Stanley's estimate of 3.95 crores. Keep in mind that Morgan Stanley has an underweight call on this stock. They have a target price of 3,400 per share, which is a significant downside to the current levels that we're witnessing. They're also factoring in the ADTR to improve to 4.02 crores in FY26 and 4.19 crores in FY27. There's another note that came in on MCX, and that is from UBS. They have a buy call, but they've gone ahead and reduced the target price on this counter from 7,800 to 7,250. They believe that the volume data indicates that this quarter, that is the fourth quarter, could be a tad softer in comparison to the previous quarter. However, their expectation is that the volumes are expected to pick up. Overall, they're estimating quarter four revenue to decline by 5% sequentially, but both of these brokerages expect that things should look up for MCX going forward in the future. So therefore, MCX on our radar today.
Thank you very much for that, Vamakshi. Get into a break. As we do that, some good news for all our viewers. because India's business news leader is now just a click away, introducing CNBC TV18 all-new app. Get instant access to breaking news, our in-depth articles, financial world updates at your fingertips. So download the CNBC TV18 app now from the Apple or the Google Play Store, or you could just scan that QR code on your screen.
Welcome back to Trading Hour. Well, as promised, Siddharth Bora from Prabhudas Leeladhar joins us now to discuss market fundamentals as well as his top sectoral picks. Thank you so much for joining us, Siddharth. Well, a very important day today, and remember, an even more important day tomorrow, given the fact that we will wake up to the news of the tariffs. So, going into that particular event, how are you positioning yourself? How are you analyzing the entire tariff impact and any portfolio changes you've made?
So, I think currently in the markets, there could be 4 or 5 pockets or sectors which are slightly more vulnerable to the whole tariff policy. But the whole domestic focused market is quite shielded, right, in terms of demand, in terms of pricing, in terms of margins. So I think pharma, IT, electronics, some export jewelry, some auto ancillaries. Some of these pockets are more vulnerable, and as we go into the big event day, we don't have any pharma, any export electronic companies, any jewelry players which are export oriented, or any auto ancillary players which have a larger share of their revenue from global markets. Even the OEM players which have larger revenue from global markets, we don't own any of them. The only sort of pro-tariff or anti-tariff, let's see how it plays out tomorrow, exposure we do have right now is IT. We are slightly underweight IT, but we still maintain an exposure to the IT sector.
Yeah.
Please go on.
No, I was saying you look at the quant models very, very carefully, and your models are suggesting that the Indian markets are ripe for a bounce back, and that's already happened. From the lows, we've rebounded. But how strong could the rebound be? What are the indicators telling you?
So there are 4 or 5 indicators that are flashing green right now. I think the note that we've released, I think it's 20-25 days old now. But what the models are telling us is that the cyclical to non-cyclical sector spread is now in favor of cyclical sectors. So cyclical sectors should do much better, whether you talk about metals, cement, infrastructure, power, capital goods, defense. Some of the cyclical sectors are better positioned than, say, FMCG, pharma, IT. So I think from a sectoral perspective, that's definitely one signal we are getting, both at a market level and from a sector rotation level. 90% of the times, 1 year forward, this signal tells us that cyclical sectors will outperform non-cyclical sectors and markets will yield positive returns. So that's one signal. The other signal that is giving us a slightly positive indicator is the momentum and low volatility spread. So the momentum factor had corrected roughly 35% from its recent highs, and it's now at a level where it can suggest historical mean reversion. So historically, momentum has picked up after correcting to these levels. So we believe, again, with some mathematical probability that momentum should outperform in the next 12 months as we go ahead. Also, it's important to know that market breadth in India had collapsed to a very, very high level. So I think market breadth was down to roughly 40%. So I think that's a very, very low number. And historically, markets have, been in the oversold zone, or value buying has started happening in the markets whenever market breadth over a 6-month and 12-month basis has corrected to these levels. So I think it's important to see that markets were oversold. Positive fundamental and macro triggers were in place. Whether you talk about PMI numbers, whether you talk about the RBI liquidity action, the rate cuts, the tax cuts in the budget. So there were a lot of fundamental cues which were shaping positively. DXY is stabilizing, US bond yields are stable. So I think domestic focused issues are getting more resolved now. The whole valuation froth also, I'm not saying markets are cheap. Large caps are, I think, 10%, trading at a 10% discount. Mid caps and small caps, which were trading at a 40% premium, are now trading at a 15% premium. So I think the froth in mid and small caps has come off. Large caps offer very fair valuations to enter. So I think domestic issues are more or less resolved. Global issues remain to be resolved. So I think from here on, the direction of the markets will be decided by global issues rather than domestic issues.
We get that. You spoke about domestic cyclicals, you spoke about commodities. Let's focus on two specific sectors. The first one, of course, being the cement pack. Do you feel margin pressures for this particular space is largely over? Price hikes haven't really come through, but so that is one sector. Q4 and FY26. How do you see that panning out? And do you feel that steel margins have made, or steel spreads have made a bottom as far as Q3 is concerned?
So I think the whole play on cement and metals, at least in our portfolio, is coming from the perspective that if you look at metals, it's a global commodity. And I think with China sort of recovering, with the stimulus packages announced in China and Chinese demand coming back, I think metals will do well both on the volume front and the pricing front. That's the broad play. And I think metals have underperformed over the last 2 to 3 years because of muted global demand and China being out of the whole economic stimulus play. And in terms of cement, I think it's mainly to do with all the infrastructure and government capex that we see panning out in India over the next 12 months. I think the margin situation is not going to change significantly. It's the volume uptick that we are more concerned with on the cement pack. Along with volume triggers, I think valuations were also reasonable. So the way our model picks stocks, it basically focuses on which sectors do we want to be in, given the relative risk reward in the market, where we feel cement is well positioned both from a valuation perspective, a growth perspective, and a volatility perspective. That was one thing. And the other thing is a broader portfolio flavor for the last, I think, 8 to 10 months has been stick to quality, stick to low volatility, and have a slightly large capish bias in the portfolio. So we continue to hold anywhere between 50 to 55% in large caps and roughly 45% odd in mid and small caps. The simple reason being large caps give you valuation comfort but are vulnerable to global cues, and mid and small caps don't have the valuation comfort but are more resilient because they are more domestic focused. So overall, getting this balance in the portfolio in terms of size and sectors is quite critical.
Siddharth, thank you very much for joining in. Enjoy these conversations. Look forward to the next one. Get into a break. On the other side, we'll get you more on markets and individual stocks.
I think the first thing we have to address is safety and hygiene. I think we have to be perceived, and we'll only be perceived if we are a very safe place to travel for everyone, including particularly women travelers. So I think we all know there have been enough incidents, they keep happening. That has to stop. Otherwise, what happens, we'll have two kind of tourists. We'll have the super rich tourists who come and have the 5-star premium holiday, rose-tinted glasses, blah, blah, blah. They go see everything. They don't really feel India, but they're seeing a very sanitized India. Or you have the backpacker who's out in the hills and doing whatever they're doing, coming from wherever, etc. That's so you don't have the classic middle class.
And there have been stories, Shireen, believe it or not. I mean, I remember those moments because when IPO happened, they suddenly started going back to their records and saying, where's that damn paper that you had?
Where's that piece of paper?
Where's that piece of paper? Because nobody really realized that it had any value. And some of them came back and then we've lost it and can we just get it back, right? So it was really, really good to see.
They probably didn't think that anything would come off it, right? So tucked away in some file
luckily
somewhere.
finance had all records and everything's electronic. But yeah, people were like that. Like I remember them coming saying, "Aapne kuch ek wo diya tha letter nahi mil raha." They were scared. It's gone.
So you're the big daddy at Make My Trip, but you're also the big daddy for the startup ecosystem.
Yeah, from young Turk to not so young Turk, 25 years. So I think we all grow up. Now that you showed me the old young Turks we did.
Yes.
And you and so Shireen and CNBC, you might be our good luck charm. So you've seen us through thick and thin. And I officially want to thank you for being a huge supporter through our toughest times. So, we recall that and don't forget when people, help out when in the tough times. So thank you for that.
If they pump in more capex into their business, then Indus Tower gains definitely, because they'll get better tenancies and they will also get newer towers with that capex. And the last stakeholder is Bharti Airtel and Jio. They are stakeholders to this as well. Contrary to many beliefs, my belief is that a stronger VIL is better for both those companies than a weaker VIL. For a simple reason that a weaker VIL will resort to pricing and discounting.
Welcome back to Trading Hour. Well, this is our special offering, Young Turks Reloaded. Shireen Barnes sat down with PVR Inox's MD Ajay Bijli to look back at the incredible journey from a single-screen theatre to India's largest multiplex chain. He speaks about how he plans to expand beyond his core business. Let's listen in to this exclusive conversation.
Amazing things are happening on some of the projects which are basically still under fit out. We can have pickleball. We can have so bowling centers, small bowling centers, gaming centers. So youngsters are coming out anyway. We are also looking at in Bangalore and Gurgaon to get some liquor license. Okay. Where we're sitting just now, we have a liquor license. Yeah. Because kids do want to mingle. So one is passive socializing, which is watching a movie. One is active socializing, competitive socializing. Pickle is a pseudo sport, I call it.
Pseudo sport.
Definitely.
You'll have many angry pickleball fans writing to you now.
I've played squash all my life. I know it's a pseudo sport, but it is active socializing because people are playing and then they have a beer after that and all that sort of stuff. So I'm saying, why can't these things be brought into our fold as well, the fun space? And food is what we've done with Devyani. Yeah. Food courts, again, we have relationship with all developers. Zomato tie-up, to be able to deliver at home. Some of our branded, things like, which are non-benchmarkable, hot dogs are non-benchmarkable. So we have a brand called Dogfather, which we are taking out of cinemas.
Very original. Very original. Very original.
So these are the things that we do.
So are you going to be doing more like that? I mean, private label stuff as far as the food business is concerned?
Getting out of, so not having everything post-ticketed, have something pre-ticketed, because it's one lesson that pandemic has taught us. It's all binary. Shutters down, all revenue is gone. Whether it's cinema, whether it's tickets, whether it's F&B, whether it's advertising. So I said, God forbid, we must have a strategy where even if shutters are down,
outside of the theatre.
So it's early days.
You didn't mention the sleeper hit of 2024.
Which Stree 2?
No, the popcorn wars. Well, the hero being caramelized popcorn. I thought you would bring that up. How's that doing for you?
The popcorn wars.
Well, the GST on popcorn was the big hit of 2024.
Yeah, there was some complications, and finally I think it got settled.
Yes.
That I think it needs to be at 5% only.
Yeah.
And you can't differentiate between caramelized and all that. I think
there is a differentiation between caramelized and the rest
but
of it.
not when it comes to GST. Luckily that got sorted. That did give us palpitations for some time. It got sorted out.
But on the fun side, I want to talk to you about how the IPL is doing, because we're in IPL season at this point in time. And what's the expectation as you look at many of these pieces that you just took us through on the fun side? What do you believe this engine, this vertical could be in the next few years for you?
It can be, these are early days. But as I said, I first have to look at the infrastructure that I've already got. I've already got 15 million square feet.
So you're sweating your assets.
I first need to sweat this before I say, okay, let's take over a stadium. That's another real estate. But if we can do it without any capex involved, then I think it's something that PVR definitely should be looking at. Nothing should stop us from going out and also having artists and because it's the same consumer. We, even at this time, we'll get 150 million people to our cinemas, and they're all youngsters. There's the same guys.
So you're actively looking at that possibility?
We're looking at that. We may do it ourselves, or we may tie up with an expert, but definitely that's an area that should not out-of-home entertainment, not in-home. In-home, I think there's too much crowd just now. The number of OTT platforms which are there, deep-pocketed players, Apple, Amazon, Netflix, all the studios have got their own streaming service, Jio. I don't want to get into that. But out-of-home entertainment, I think we understand, because that's all we've been doing all our lives. There, if there's an opportunity to do something on the music side as well, concert side, I think we should be looking at.
But, how far are you into putting those plans into play?
Well, conversations have started. Conversations have started, and we're evaluating.
In India or global conversations as well?
Like India. India to look at bringing the... I just like to be in the Indian market.
No, I mean conversations with Indian players or also with global players to bring global artists into India.
Side, We still need to look at the economics, because I think the infrastructure still needs to improve. You still need to have studios like O2, you need to have studios, I'm saying stadiums, which can have a 52-week programming, not sporadic programming. So sporadic programming is like cinemas again. You've got this infrastructure, and only one Ed Sheeran will come or Coldplay will come, then what do you do the rest of the years? But I've seen, at least whatever little studies I've done, that 52-week programming is done throughout. So therefore, you don't have to keep rebuilding the infrastructure only when one big event happens. So I think we need to examine it. But that is something that I think will come pretty naturally to us. But as I said, I don't want to, again, go ahead and invest capex in something new. First, I have to look at my core. How do I get my core even at 25-26% to get the same margins that we were getting earlier?
So what about the food aspiration now? You talked about what you're doing with Devyani in setting up these food courts. Again, I mean, what can we expect as far as the build-out is concerned of these food courts, and what else you're likely to do in the food space?
One is really these food courts which are adjacent to our cinemas, and Devyani's got their own brands. And not all the outlets get filled up by their brands, so we can get new brands as well. The other is taking our own brands out, coming out with some brands, as I said, which are non-benchmarkable.
Dogfather being one of them. What are the others?
Like burgers are very crowded spaces. Pizzas are very crowded spaces, but there are some more stuff which I will talk about later.
Give us a bite. Give us a bite.
My entire...
Give us a bite of what we should expect.
I can serve you a bite after the... So many things.
No, but the restaurant business, that's not something that you want to...
This is like a one-off where we are because the space, but you never know. I mean, touch wood, this is doing well. It's a combination of music and fine dining. But I think more QSR, more adjacencies to our core business. Like, for example, with the 350 properties that we've got, we have 350 box offices which are not being used because, people are buying online and hardly anybody's buying from the box office.
Right.
Now, those are sitting ducks to be converted into a QSR. Space utilization. Also, we are looking at if some spaces can be carved out, open up the foyers, make them non-ticketed. So ticket checking only happens at the gate, at the auditorium entrance. So these kind of experiments. As I said, I must get my core sorted out. These are all pilots which any company should always be doing. So some will work, some will not work.
Looking at adjacencies, but trying to sweat the core assets. Fun conversation, and stay tuned for the full episode of Young Turks Reloaded coming soon on CNBC-TV18. Well, that brings us to a close on Trading Hour from the entire team. Thank you for watching. Don't go anywhere. On the other side is Halftime Report.
VIL has taken care of its spectrum dues till FY27, and this will allow them to borrow money from the market and pump it back into capex, which allows them to stay competitive in the market. That's immediate gain that they have. The issue is that the problem doesn't get completely solved here because in March of 26, they'll be due for their AGR dues, and their current EBITDAs do not allow them to cater to that fully, although there'll be some growth in the ARPU, etc. But for now, the money is available with them on their cash flows are not good enough to take care of their capex requirements in the immediate future. So, so they're not completely out of the woods.
મારું યાત્રા ચાલે છે પદયાત્રા અહીંયા જામનગર અમારા ઘરથી દ્વારકાધીશ સુધી અને બસ આ બધાના આશીર્વાદ રહે અને શિવજી બાબા દ્વારકાધીશના બધા ઉપર કૃપા રહે આ જ મારી પ્રાર્થના છે અને અમે હમણાં પદયાત્રામાં 5 દિવસથી ચાલીએ છીએ અને 2-4 દિવસમાં પહોંચી જશું. દ્વારકાધીશનું કૃપા રહે અને બધા શ્રીજી બાબા બધાને સંભાળીને રાખે ને બધાને આશીર્વાદ આપે. બધા યુવાને ભગવાનના પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને સનાતન પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને બસ એ જ મારી બધા યુવાને એક મેસેજ મોકલાવું છું મારા ભાઈઓ અને મારા મિત્રોને કે આપ બધા શ્રીજી બાબાના આશીર્વાદ લઈને આગે વધો અને જ્યારે ભગવાન છે
Stocks notched some gains after US President Donald Trump suggests he may go easier on tariffs to be announced today than earlier expected. Realty and consumer durable stocks gain while utilities and energy are the big drags.
Even as US President Donald Trump is expected to announce the imposition of reciprocal tariffs today, trade experts say India may be able to offer some concessions without hurting the Indian industry to blunt the impact.
Even as reciprocal tariffs loom, India's crude oil imports from the US have jumped 67% in March, suggesting that President Donald Trump's efforts to boost American oil sales are having an impact. Oil Minister Hardeep Singh Puri had earlier hinted that India will increase its energy cooperation with the US.
Hyundai India's March sales numbers beat estimates, riding on strong growth in the SUV segment. Tata Motors, however, disappoints with a dip in the CV sales and a sharp drop in EV offtake.
Peak of net interest margins of banks is behind us as savers have matured to become investors. Veteran bankers Dinesh Khara, SS Mundra and Srini Vardarajan tell CNBC-TV18. Separately, bank stocks gain as bond yields fall sharply after the RBI announced a massive 80,000 crore rupee bond purchase in April.
Hello and welcome to Halftime Report. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel and with me is Hormuz. Hey Hormuz, good to be on the show. Had a good time with the markets, given all the uncertainty. At least we pulled back some of those losses that we saw in yesterday's trading session.
Oh, absolutely, and you would want to be that. You wanted to be that way as well as you close down on today's session as well, right? But yes, clawing back some of the losses that we had in yesterday's trading session is the index 23,250 is where the index is currently placed at, slightly off the highs of the day, but still holding on to some bit of gains. But of course, the Nifty Bank, as we just highlighted, is the one that is leading the charge, almost 400 points higher on the index, convincingly above the mark of 51,000 as well. And it is the Nifty Bank that is ensuring that the Nifty stays in the green, because it was HDFC Bank and ICICI Bank that were the principal culprits to the downside in yesterday's trade. And in today's session, it is the Nifty Bank that is ensuring that the Nifty stays in the green, Nigel.
Well, that's right. I think the biggest positive today is the advance decline ratio, right? When we started off trade, there were way more number of stocks that were declining than advancing. And now that's done a quick U-turn, because at around 10:30 a.m. when, I was on the show, it was pretty much even Stevens. Now just take a look at that. You have two stocks that are advancing, one stock that's declining. So clearly the broader market mojo is back, and that's reflected in various stocks. One stock that's doing pretty well and seen a bit of an uptake is Tata Steel. Now, the reason is that there is a positive read-through that's come because of what ArcelorMittal has done. They've gone ahead, they've raised their HRC prices by around 20 euros, which means that, in fact, Tata Steel as well could replicate some part of this. And that's why the street is reading this as a positive read-through. The reason that ArcelorMittal has said that they've gone ahead and increased prices by close to around 20 euros is because there's increased inquiries in booking, and also there is a safeguard review that will protect them from imports coming in to the European region. So put all that together, a bit of a positive read-through for Tata Steel because of what's happened at ArcelorMittal. Let's focus on a few more stocks though. V-Mart, that's buzzing in trade on the back of a good Q4 update. In our special segment, Inside Edge, Vinny focuses on the stock. Vinny?
Yes, so we are keeping an eye out on V-Mart Retail today, and Q4 business update, when you talk about it, a good update that's come in, right? Last quarter also they managed to see that recovery and growth coming in, and this time that momentum has continued. Revenue growth this time in Q4 is what they're seeing is 17%. SSSG growth, which is important, that is coming at 8% for Q4, and for the full year that's coming at 11%. So that double-digit growth which they're given a guidance of in terms of SSSG, that is also something that they have maintained. 53 stores is what they've added in FY25, that given the target between 50 to 60. So yes, in line with the estimate of what they had spoken about. And revenue per square feet, this is from Motilal Oswal, what we're picking up, that has seen an improvement as well. This time it's 5.4% increase versus last year at 1,825 rupees. Management is quite bullish in terms of the commentary that's come in. Why? Because they're saying that now rural has started seeing a recovery. Mass consumption, that has started seeing an uptick as well versus Q3 and the last year is what we were talking about. Seeing improvement in terms of demand trends, UP, Bihar, that's the side tier 2, tier 3 cities where they're seeing an improvement. So that is something that has improved. Volume growth has seen an improvement as well. And they're expecting next year in FY26 around 60 to 65 store additions. Better consumption trends that they expect to see a pickup in terms of rural areas, and double-digit growth in terms of revenue in FY26 is what they're talking about. Today, the stock is up 5%, but let's also listen in to what the management had to say furthermore in terms of the target for FY26.
Seeing the mass consumption and the rural consumption inching up a little more and becoming a little better than the last year. And that also has driven some kind of consumption, especially in markets of Uttar Pradesh, Bihar, where we were struggling fundamentally. But I think, yes, volume growth is something which is very enlightenment. We're really getting good news about that volume growth, and this is also being led by fashion, because there's a lot of fashion change which is coming to the market. We expect some more consumption coming in especially from the tier 3 and the rural areas. That is where we believe if those consumptions are back and monsoon remains good this year as well, we would definitely clock once again almost a double-digit growth. That is what we should expect from our team, and that is what we are all getting prepared for.
That was Insight Edge on V-Mart Retail. The stock doing very well for itself, 6% higher now on the stock, near the highest point of the day. But a sector that has been in focus courtesy the fall in the Nasdaq, the uncertainty surrounding the Trump tariffs, is IT. IT stocks today are doing fairly okay for themselves if you look at the mid-cap IT names. But JP Morgan has come out with a note on the sector saying that the negatives here are priced in. Rima is here with more details on that. Rima.
Thanks so much for that. So JP Morgan indeed says that with the NSE IT index down 14% on a year-to-date basis, a lot of the negatives are priced in, and they will play for a relief rally on beaten down names. So they prefer stocks like a Coforge, Infosys, KPIT Tech, and Tech Mahindra. Stocks that they will avoid in this quarter include a TCS, Wipro, HCL Tech, Tata Tech, and a Tata Elxsi. They've also downgraded an HCL Tech from an overweight to a neutral because they're saying Q4 is going to be soft. The deal momentum has been a bit subdued, and they're anticipating the company to report lower growth in FY26 versus FY25. So they've downgraded the stock to a neutral and lowered the target price to 1700, while they have upgraded Tech Mahindra to a neutral. And here the thesis is that at a time when growth is challenged, Tech Mahindra is likely to report an improvement in margins, and that will hold the company in good stead. They've set a target price of 1500 for Tech Mahindra. Back to you.
Okay, all right. Thanks a lot for that, Rima. Well, CSB, that's surging in trade on the back of a robust showing in the Q4 business update. Abhishek joins us to fill us in. Some details on that. Abhishek?
Well, Nigel, the sequential growth in the entire business line, whether deposit, CASA or advances, have been pretty robust for CSB Bank. Take a look at deposits. They are up 24% YOY and about 10.3% quarter-on-quarter. Now, calculation shows that CASA ratio has improved 10 basis points quarter-on-quarter, suggesting that the CASA, absolute value growth is more than 10% on a sequential basis. So the gross advances are up 29.5% YOY and about 10.1% quarter-on-quarter. The gold loans have grown by nearly 8 to 8.5% quarter-on-quarter, which suggests that the gold loan share has declined on a sequential basis. However, ex-gold loan, the loan book has grown by 25.3% YOY and 11.65% quarter-on-quarter, which suggests that they have had strong business momentum in Q4 FY25 when compared to Q3 FY25 numbers. Back to you.
All right, Abhishek, thanks a lot for that. CSB Bank also doing fairly well for itself today, 3.25% higher on the stock in today's trade. We take a short break. Up next, we get you more on the markets and specific stocks on the other side. Stay tuned.
With the baton of power set to shift, Bharat's youth will drive the next wave of change. The biggest leaders and policymakers, global trendsetters, business icons, and entrepreneurs will come together to inspire the next generation of change makers. Don't miss your chance to witness it all live. Rising Bharat Summit 2025.
quarter of a century, zillions of designers, and orders of style later, Lakme Fashion Week is back to rock the ramp. This year's collection promises to showcase modern sophistication with effortless elegance. The showcase is set to be bold, reflecting a connect between beauty and style. Let's take a look at the showcase straight from the runway.
Welcome back, and on to the big event which everybody across the globe, across all global markets are waiting for with bated breath is the so-called Liberation Day announced by Donald Trump, which is the 2nd of April. And investors are also awaiting this latest tariff rollout. CNBC's Megan Casella is joining in with more on this.
David, I was just inside the White House talking with officials on this to try to bring you guys the latest. And what I can tell you is that deliberations on exactly what tomorrow will look like are still ongoing. There are still meetings scheduled today where they will be talking through the different options that are on the table, and no options have yet been removed from the table. There's 3 main options that the president is considering here. One is a blanket 20% tariff on most all imports from most all countries that are sending goods into the U.S. Another is sort of a tiered basis, meaning that countries can fall into one of maybe 3 buckets. There will be maybe just 3 different rates and tiers of countries depending on the trade barriers that they have up. The third is the option we had previously been talking about the most, sort of a customized country by country approach. One White House official did tell me that that blanket 20% tariff rate, that's still back on the table, but that appears less likely than the other 2 at this moment in time. Here's what we know about tomorrow. We know it's going to be a 4 p.m. ceremony in the Rose Garden. Most cabinet officials in attendance, some workers, some manufacturers, some CEOs have also been invited. So we'll see who's there in the Rose Garden tomorrow. We know that the goal, they say, is country-based tariffs, not sectoral. So though there's been a lot of talk about pharmaceuticals and semiconductors, we do expect those at this point to come later and not to be announced tomorrow. And then one final thing, guys, is that as big as these reciprocal tariffs could be, they are just one piece of what we're getting tomorrow. And I don't want viewers to forget that. We're also expecting the pause on Canada and Mexico imports to be lifted. We're also expecting those secondary tariffs on Venezuela to take effect, and the auto tariffs will take effect, guys. So no matter which of these options on the table that they choose, a big day tomorrow, no matter what, guys.
Well, and sources tell CNBC-TV18 that the US has received a far-reaching offer from India to bring down the average tariffs. Parikshit's the one who's bringing us those exclusive details, and he joins us to fill us in. Take it away, Parikshit.
Well, yes, we've been hearing from top sources privy to the negotiations between India and US that India has offered to bring down the average tariff rate down. Now, the biggest complaint of the US government and Donald Trump was that US average applied tariff is around 3.5%, whereas India's average applied tariff is way higher than 12% or 13%, and it needs to come down drastically. That is what Donald Trump's demand was from India. So we believe that the negotiations over the last few weeks have gone off well, and sources tell us India has made a very far-reaching offer in terms of providing tariff concessions to the US products and also on reducing non-tariff barriers. There have been some positive negotiations when it comes to reducing non-tariff barriers such as quality control orders. Whether access would be given in the agriculture sector, that remains to be seen. But voices here in the Indian government and also certain experts have been saying that it's high time we do open up certain sectors, product lines within agriculture and dairy also for the US market. Having said all of this, there are 3 or 4 scenarios that are possible tomorrow when Trump makes that announcement in the Rose Garden on reciprocal tariffs. Number 1, India-US reach an agreement on tariff reductions, and this leads to suspension of any reciprocal tariffs on India for a temporary period. Number 2, there is progress in India-US trade talks, and this leads to a mitigation of reciprocal tariff impact on India, and the reciprocal tariffs on India are lesser compared to other nations. And thirdly, reciprocal tariffs hit all nations, including India, without exceptions and without any consideration for the bilateral negotiations that have happened between India and US. So these are 3 possible scenarios we're looking at, but the signs so far have been encouraging as far as the trade negotiations between India and US have gone.
Encouraging signs, Parikshit, thanks a lot for that. That is also something that the markets would appreciate hearing, encouraging signs. But of course, the final outcome is something that is awaited, and we will be on top of this from 1:30 a.m. only on CNBC TV18. You can catch the live coverage of Donald Trump and his announcements on the reciprocal tariffs tonight at 1:30 a.m. But his push, Donald Trump's push, of course, for increasing energy exports has seen an impact and that's because of the sharp increase that we have seen in crude oil imports from the country. India's crude oil imports from the US have now risen 67% month on month to 2.44 lakh barrels per day in March. And that is, of course, amidst President Trump's efforts to boost American energy exports. In February, India had exported close to 1.5 lakh barrels per day of crude, so a significant increase compared to the month of February. And in fact, earlier this year, in February, of course, Oil Minister Hardeep Singh Puri had hinted that India will increase its energy cooperation with the US. Listening to excerpts from that conversation the minister had with CNBC TV18's Shireen Bhan at the IEW 2025.
Energy cooperation, President Trump saying that India should buy more LNG, more energy from the US. He's even put out a number there saying that that should increase from $15 billion to $25 billion. I wanted to get your comments on that. We have spoken about this previously as well. Do you believe it makes sense? It is something that we should actively pursue and build on.
Energy cooperation between the United States and India was widely expected to figure in the bilateral talks. If you read the joint statement, if you read what the President said, what the Prime Minister said, that's evidence. And I think there is already fairly substantial energy cooperation. The fact of the matter is India needs more energy. We have long-term deals on gas with one country which was there till 2028. You've signed another 20 years there. We are in the market for more gas. We have a stated policy of taking it from 6% to 15% in the energy mix. And I think we have a very substantive relationship with the United States, mostly on gas. I see definitely those quantities being addressed for increase.
The Oil Minister Hardeep Singh Puri in that conversation in February of this year. By the way, the Nifty has seen some bit of an up move in the last few minutes, 125 points higher now on the index, back towards the highs of the day at 23,300 is where the index currently stands. Where is the index headed ahead of a major event? Pritesh Mehta of Yes Securities joins in on the other side with his views and some trading strategies as well. Stay tuned.
Do you think beauty and fashion empower young women like you in today's world?
So I think beauty and fashion, if you have fun with it, can be very, very empowering. Like me, I like dressing very casually. I like being very chilled out. I don't play too much with like colors and stuff, and that makes me feel very empowered and very beautiful. So I think it can be used as a tool to enhance your strengths rather than cover up your weaknesses.
Who are you walking for, and tell us about your inspiration behind it?
So I am walking for AKOK. I'm walking for Anamika Khanna, and I'm wearing her silver collar collection. And I think the inspiration around it is just warrior princess, something to make women feel very powerful, very strong, very modern, very cool. That's her inspiration. I'm assuming I'm just channeling that.
The opening night showcased designer Anamika Khanna's designs that celebrated bold, ambitious women who own their space, lead with confidence and inspire with their individuality. It's been 25 years of Lakme Fashion Week. What is in store and what can we expect?
As you can imagine, it's the most emotional, sentimental moment for us. 25 years of all of us together. It's going to be a spectacular celebration and I'm so looking forward to it.
Can you tell us on what the collection is all about?
This collection, it's called the Silver Collar, and as the name suggests, it's about elevating workwear for women and the very fact that we don't really follow rules anymore. Everybody is bringing that power to the workspace, but they also bring that emotion, the gentleness and all of that. So It's just about elevating workwear to another level.
One message that you would like to see your brand on these young empowered women wearing your collection?
I feel like if my collection can give you a sense of freedom, I've done my job. And that's what I want to do. I want to make people feel free.
From legacy designers to fresh voices, Lakme Fashion Week continues to redefine not just trends, but the business of fashion. In Mumbai, Zenia Baria.
Welcome back. And as Nigel had highlighted earlier in the show, that the advance decline ratio has now firmly moved in favor of the advances. There are a lot of movers in the broader markets. Kalyan Jewellers is one of them, 7% higher now on the stock at the highest point of the day. Also at the highest point of the day is Poly Medicure, 6% higher on that stock as well. So good going for a couple of these names there. Kalyan Jewellers, as you can see, some strong moves seen there, and Poly Medicure at the highest point of the day as well. But good time to get a quick chart check as well. Pritesh Mehta, the Executive Vice President at Yes Securities, is joining in now. Pritesh, good afternoon. Thank you for joining in. What do you do ahead of a massive event like this? Would you like to stay on the sidelines, then wait for the event to play out and then put in a trade? What are the charts indicating though for the Nifty as of now? And what are your stock recommendations as well for the afternoon?
Good afternoon. In this kind of scenario, we need to stick with the leaders, with the outperformers. See, we had a solid rally in the month of March. We are talking about a rally of almost 6%, even more than 6%. But out of the first round of rally from 22,000 to 23,800, I'm yet to see a turnaround in Nifty's relative strength against the other asset classes. So when you talk about relative strength, I need to see a turnaround in the ratio of Nifty versus gold, Nifty versus silver, or something like GSEC versus Nifty. So I'm not yet to see Nifty's outperformance kicking in against these precious metals. So that would be the time I would be more gung-ho, more excited of going all out in Nifty. But during this point of time, ahead of the critical event, I think we need to stick with the big players, with the solid outperformers, rather than going gung-ho in the markets, in the broader market space.
What about specific stocks, Pritesh?
So we have two recommendations. First is buy on Exide Industries. This stock has come off of the lows in last couple of weeks. Thereafter, we have seen formation of bullish anchor column. Stock is trading above this 10 column average and has given a double top buy. So buy for a target of 400. The stop loss would be around 360. The second recommendation is buy on Indian hotels. Now see, our customized hotel and restaurant index has bounced off the point of polarity zone. This particular stock, Indian hotels, is outperforming the customized hotel index. So on a standalone chart or relative basis, it is showing showing strength. So buy for a target of 930. Stop loss would be around 800.
Okay, all right, Pritesh, before we let you go, IndusInd Bank, any view out there? The stock saw a sharp correction, 25% in a single session. And from there, it's seen a gradual recovery. But today, it's moved to that 710 rupee mark, which it was seeing selling at those levels. At around 700 or there was a resistance. How's it looking in the charts?
So, as I was mentioning earlier, rather than trying to go after the stocks which have not participated in the rally, which we saw in the month of March, stick with the outperformers, something like ICICI Bank, even something like HDFC Bank, which came off sharply in the yesterday's trade. I think they are solid bids, solid winners in this kind of scenario. IndusInd Bank would be too far-fetched of a call at this moment.
All right, Pritesh, thank you so much for sparing time and joining us with your views on the index and on specific stocks as well. It's still 120 points higher on the index, Nigel, and still trying to claw back some of the losses.
Well, that's right. Just do a quick F&O check. Earlier in the trading session, at the start of trade, we had mentioned the PCR had moved to the lower end of the range, which is around 0.76. Now that's moved back up closer to around that 1 odd mark. Why is that? Because, some of those called writers have got trapped on the wrong side. Well, there is put writing that's come back into play. So pull up a couple of strikes at 23,200 put. That's seeing a fair bit of writing in today's trading session. So that one comes up for you on the screen. The 23,350 call, though, that as well is fairly active. So in the near term, just punching in the levels, you have some kind of resistance that comes in at around the 23,450 odd mark. Incidentally, you have the 100 DMA that comes in at that mark. So 23,450, that's important. 23,500, first level of resistance where you have the 100 DMA. If you get past that, then you're seeking higher levels, which comes in at around 24,000 odd mark. But give and take everything, you don't want the 20 DMA to break on the downside, which is around 22,800. So for the time being, it appears we're in a bit of a range. We'll have to see whether or not we break at either of those levels to trend even higher from here on.
Important levels there, of course, the 100 DMA, the 20 DMA. Of course, the 100 DMA is the first level on the upside that the index will have to cross for further upside as well. So for now, still 130 point gain now on the index, 23,300. But as we slip into this break, here's some good news for our viewers. India's business news leader is now just a click away, and that is, of course, CNBC-TV18's all-new app, which gets you instant access to breaking news, in-depth articles, and financial world updates right at your fingertips. You can download the app from the Apple Store or the Google Play Store, or even scan the QR code that's up on your screen to download the app. We take a short break, back on the other side.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits, and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bazar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown.
Welcome back. And a top mover in today's trading session, of course, is Tata Consumers, and that comes after an upgrade that has come in from Goldman Sachs. Nimesh is joining in to tell us more about this standout brokerage upgrade today. Nimesh.
Hi, Majana. So, big move on Tata Consumer, one of the biggest F&O gainer today, up 7%, large volumes as well. Largely because after a long time, you're seeing an upgrade on Tata Consumer. So Goldman Sachs has today upgraded the stock to a buy from hold, and they've raised the target price to 1,200. Now, the biggest drag for Tata Consumer in the last few quarters has been the earnings, which have been a disappointment. Now, Goldman believes that that's going to turn, and the company is poised for a very strong EPS growth over FY25 to FY27, and largely driven by a couple of reasons. The first reason is the recovery in the team margins because they've raised prices there. Second, strong innovation and distribution expansion of the growth businesses of Tata Consumer. And the third is lower interest cost as the acquisition debt has been paid down. So these are the three reasons they believe that earnings are going to improve. So on back of this, Goldman has raised the EPS estimates for Tata Consumer for FY26, FY27 by 3 to 7%. And they believe that within the FMCG pack, Tata Consumer is going to report the strongest earnings going forward. So that's the reason why a big upgrade in Tata Consumer, and hence the stock is reacted 700% in today's market.
All right, Nimesh, stay on, of course, because BofA has also, on the flip side, issued a couple of downgrades in the FMCG space, while Tata Consumers has received an upgrade. A couple of downgrades have come in for HUL and Nestle.
Correct. So both has been downgraded, HUL and Nestle. I'll focus on Nestle to ststart with. On Nestle, BofA has downgraded the stock to underperform now, and they've cut the target price to 2140. They've cut the earnings as well by 3 to 5%. The earnings cut is essentially because of a couple of reasons. One, the combination of softer demand, cost push and aggression from the competitors. So that, BofA believes will have an impact on the margins going forward for Nestle. To add to it, while there is enough competition, the valuation is still rich for Nestle, and hence they believe that in this context of lower growth and impact on margins, there will be an impact on the earnings as well. So hence, On back of that, BofA should have downgraded Nestle to an underperform, and they've kept a target price of 21.40.
Okay, all right. Thanks a lot for that, Nimesh. By the way, in the last few minutes, the pharma stocks actually have moved up. Pull up a few names. Biocon, that stock has done a U-turn. Big uptake is what we're seeing out there. Lupin's another stock that's moved to the high point of the day. So I think we need to get some of these up for you on the screen. Sharp uptake is what you're seeing. Even Polycab, that's seen a sharp correction from the peak because of fears of competition coming in there, both the Birla Group as well as the Adani Group. But for the time being, that's moved higher, and it's moved higher on very, very large volume. So that's another name that you should be tracking. And Angel One, I think we'll get that operational update for the past month or so. The stock as it is has pulled back a great deal from the recent peak. From the highs of the day, that slipped a little bit. But let's focus on the top Nifty loser, BEL. The release that came out, it seems to have fallen short of street expectations. Upasna joins in to break it down for us. Upasna.
Well, the stock remains in focus this week also. The company has released its FY25 provisional update, and the company has surpassed its FY25 revenue guidance, but it misses its order inflow guidance of 25,000 crores. Now let's break down the numbers. Now if we look at the FY25 revenue, it stands at 23,000 crore with an uptick of 16% on a YoY basis versus the guidance of 15%. But the company's Q4 revenue came in much lower, just a single-digit growth of about 3% on a YoY basis, much lower than what the brokerages were estimating. Now, FY25 export sales saw an uptick of 14% on a YoY basis, and company's order inflows stood at 18,720, while the company was only able to achieve 75% of its FY25 order inflow guidance, that is 25,000 crores. Now, order book of the company stands at 71,650 crores as of 1st of April 2025, with a downtick of 6% on a YoY basis, and even export order book saw a downtick of as high as 12% on a YoY basis. Now, on the back of this, Nuvama prefers BEL over HAL. It says that it does not see any earning cuts or downgrades on this stock, and Morgan Stanley has also given an overweight call and increased the target price to 364 per share. Hence, this stock remains in focus. Let's see what lies ahead for BEL.
The slight recovery from the lows of the day as well. Upasna, thanks a lot for that. It was down almost 6.5% at one point of time was BEL. Recovering some ground, but still down 4%. And the top loser on the Nifty in today's session, of course, a miss on the order inflow guidance for FY25. On the other side, Bernstein has initiated coverage as well on the two renewable energy names, which is Vari Energies and Premier Energies. Both of them are under pressure in today's session, and that's because of an underweight recommendation that Bernstein has come out with. Vivek is here to tell us more on what Bernstein has to say in their recommendations. Vivek.
Well, what Bernstein is essentially saying is that the sun could be setting as far as, the sunshine that was on the solar PV module space was concerned. What they're doing is they've gone ahead and initiated underweight on Vari as well as Premier. Initiating coverage, they're very positive as far as the entire sector is concerned, but they're wary about possible headwinds that could soon come in. First, let's have a look at the positives. Number one, they're saying that both Premier as well as Vari have made very smart investments. They are pioneers as far as India's solar PV space is concerned. They have the potential as far as an outperformance in the next coming quarters or in the near term is something that is quite promising. And also what they're saying is that as far as understanding that there could be significant competitive pressure, both of these companies are diversifying into energy transition areas such as battery storage as well. However, what are the key worries for Bernstein? Number one, they recognize that supernormal returns won't last indefinitely. They have an underperform rating largely due to the cycle positioning, where they believe that the companies are at the late cycle. They expect deteriorating returns at this point on. High valuations for regulatory arbitrage-based businesses cannot justify the kind of prices that the companies are currently trading at. Along with that, they believe that the industry is currently close to cyclical peak returns on the back of the fact that retail prices are at almost 2 to 3 times global levels. There are low entries to barrier, and they expect significant competitive intensity in this particular space. Conglomerates are coming up with very large capacities in the near term. On the back of that, they have an underperform rating, and they say it's too early to go ahead and assign any credible value to the other businesses the companies are venturing into.
Okay, all right, Vivek, thanks a lot for that. By the way, just want to point out a few stocks actually that are moving around. V-Mart, they joined us earlier today, And the management is sounding quite optimistic about prospects getting into next year as well. So V-Mart is sitting with a gain of close to around 2%. But we have V2 Retail as well. Now, they have come up with an operational update. And you compare the quarter 4 of the recently concluded quarter with other quarter 4s. They've given that on the exchange and it looks quite good because you have 499 crores is what they delivered in the past quarter. If you compare it with the same time last year, it's under 300 crores. And even, prior to that, the numbers are much, much lower. FY23, they were at sub 200 crores and FY22 as well. Just comparing quarter 4, well, things are looking good. No signs of a slowdown, I guess. That's why V-Mart is higher, V2 Retail, and Vishal Mega Mart. That's the other one in there. Big uptake is what we're saying. That's one of the top gainers in this hour, in fact. I think we should get a few of the stocks up for you on the screen.
Oh, heading towards the shopping zones as well, our consumers, it does seem like with the updates that they've put out. Of course, we'll be awaiting updates from both D-Mart and from Vishal Mega Mart. But in line with what has been reported so far by some of their peers, V2, V-Mart or even Bazar style retail, that too is up 16% in today's trade. It seems like these two are also seeing some bit of sentiment impact in today's session. MCX is the other one that we're putting the radar on, and that's after its quarterly business update. Vamakshi is here to tell us more on that. Vamakshi.
Well, Hormaz, MCX did disclose the trading numbers, and the trading activity so far indicates that MCX's transaction revenue stood at 289 crores in the fourth quarter. This is a Morgan Stanley estimate, and this implies a downtick of almost 4% as when we compare it to the previous quarter, and it is also slightly lower than what Morgan Stanley was penciling in. The ADTR, which is the average daily transaction revenue, stood at 3.9 crores for Q4. This is again slightly lower as compared to Morgan Stanley. Morgan Stanley has an underweight call on the stock. They have a target price of 3,400 rupees per share, which is significantly lower as compared to where the stock is trading today. They're building in 4.02 crores of ADTR for FY26 and 4.19 crores for FY27. Going forward, they believe that many investors are expecting regulatory approval for launch of weekly options, and they believe that if this does take place, it could mean a potential upside to the forecast that they have given. Apart from that, there's also a note that came in from UBS. They have a buy call on this stock, but they have gone ahead and reduced the target price on this counter from 7,800 to 7,250. They believe that the volumes indicate a soft quarter is in for the company, but they're expecting the situation to improve from here on. Overall, they're estimating that Q4 revenue could see a decline of almost 5% sequentially. However, continued volatility in key commodities and new products are likely to support growth for MCX. So as of now, the volume data for Q4 does not indicate a very good quarter, but the expectation is that the performance for MCX could improve going forward, resulting in the stock is trading higher.
Indeed, 3.5% higher on MCX. Vamakshi, thanks a lot for that. Take a short break. More on the markets and specific stocks on the other side. Stay tuned.
I think the first thing we have to address is safety and hygiene. I think we have to be perceived, and we'll only be perceived if we are a very safe place to travel for everyone, including particularly women travelers. So I think we all know there have been enough incidents, they keep happening. That has to stop. Otherwise, what happens, we'll have two kind of tourists. We'll have the super rich tourists who come and have the 5-star premium holiday, rose-tinted glasses, blah, blah, blah. They go see everything. They don't really feel India, but they're seeing a very sanitized India. Or you have the backpacker who's out in the hills and doing whatever they're doing, coming from wherever, etc. That's so you don't have the classic middle class.
And there have been stories, Shireen, believe it or not. I mean, I remember those moments because when IPO happened,
they suddenly started going back to their records and saying, where's that damn paper?
Where's that piece of paper?
Where's that piece of paper? Because nobody really realized that it had any value. And some of them came back and said that we've lost it and can we just get it back, right? So it was really, really good to see.
They probably didn't think that anything would come off it, right? So we had tucked away in some files
luckily
somewhere.
finance had all records and everything's electronic. But yeah, people were like that. Like I remember them coming saying, "Aapne kuch ek wo diya tha letter nahi mil raha." They were scared. It's gone.
So you're the big daddy at Make My Trip, but you're also the big daddy for the startup ecosystem.
Yeah, from young Turk to not so young Turk, 25 years. So I think we all grow up. Now that you showed me the old young Turks we did.
Yes.
And you and so Shireen and CNBC, you might be our good luck charm. So you've seen us through thick and thin. And I officially want to thank you for being a huge supporter through our toughest times. So, we recall that and don't forget when people, help out when in the tough times. So thank you for that.
And ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the
Well, Macquarie has identified a set of high conviction investment ideas categorized into 3 segments based on time frame and fundamentals. Hormuz has popped across to the big ball to tell us more. Hormuz.
There is a long list of stocks that Macquarie has come out with recommendations for the short as well as the long term. Now it has clubbed its list of 18 stocks into 3 buckets. One, which is opportunistic or tactical ideas with a 3 to 6 month time frame. The second one are stocks that are part of their core portfolio holdings and that are backed by strong fundamentals. And the third one is where they highlight some mid-cap and small-cap names which have the potential to double in value over the next 3 years. So let's start off first with the short-term tactical ideas, and first up is Reliance Industries, where Macquarie has a target of 1,500 rupees, and they say that a recovery in the retail segment revenue will be a key sentiment positive for the stock going forward. The other one that they have on the list is NTPC, where Macquarie is seeing a 35% upside, and they are adding that this heat wave warning by the IMD is making a case for building long-term power-based capacity going forward as well. The third one on the list is Wipro, and here Macquarie is seeing a 25% upside on a healthy dividend yield and prospects of growth converging with its peers, something that the buy side has not yet factored in. Tata Motors shares are oversold according to Macquarie, and JLR turning net cash, better margins and a focus on premiumization is likely to aid its near-term upside going forward. Now, BEL missed its FY25 order inflow guidance, but Macquarie sees this as just a spillover and anticipates a strong FY26 for the stock. Now, Shriram Finance is the other one where Macquarie is saying that it's a valuation catch-up, and at the current price, it is trading at almost a 50 to 60% discount compared to some of its larger peers. So that is also in the list for Macquarie. Now, moving on to its core portfolio holdings, Macquarie has called TCS a marquee buy, and it is expecting a 15% EPS CAGR over FY25 to 27, and that, along with an attractive ROE, makes it a compelling investment case according to Macquarie. Now, HDFC Bank will report EPS growth growth and ROE in the high teens over the next 2 years, according to Macquarie, thereby driving their conviction as a marquee buy on HDFC Bank as well, with a 2,300 rupee price target. Another one is Sun Pharma, which is also a marquee buy for them, as it is expecting a 16% EPS growth and an 18% ROE over FY25 to 27. Now, the brokerage is expecting Mahindra & Mahindra to deliver industry-leading passenger vehicles volume growth, and its core valuations also has an upside risk due to this consistent growth and ROEs. Now, Macquarie had recently initiated coverage on Trent with a 7,000 rupee price target. Now, it says that competition concerns here are excessive and that the current weakness is an attractive entry opportunity in the stock. Now, the brokerage also sees re-rating scope for Power Finance Corporation and says that its valuations are currently inexpensive and has a target of 660 rupees on the stock. Lastly, they have identified 6 small and mid-cap names that have the potential to double in value over the next 3 years. Those include the likes of IRCTC, Uno Minda, Aditya Birla Capital, and Devyani International, Delivery, and Lemon Tree Hotels. Yes, 2 foreign brokerages had last week set out with their shopping bags for Indian stocks, and now Macquarie has added 18 more stocks to that cart.
Okay, all right. Thanks a lot for that almost interesting one coming in from Macquarie out there. Well, time to slip into a short break, but on the other side, Manisha Gupta joins in with Kunal Shah of Nirmal Bang. Stay with us.
Cover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC-TV18 weeknights at 7 p.m.
India is amazing. Every time we went over the Himalayas, and I'll tell you, Butch got some incredible pictures of the Himalayas. They're just amazing. And you can see, like I've described it before, just like this ripple that happened, obviously when the plates collided, and then as it flows down into India, it's many, many colors. I think when you come from the east going into like Gujarat and Mumbai, the fishing fleet that's off the coast there gives you a little bit of a beacon that here we come. And then all throughout India, I think the impression I had was it was just like this network of lights from the bigger cities going down through the smaller cities. Just incredible to look at night as well as during the day, highlighted of course by the Himalayas, which was just incredible as a forefront going down into India. I hope, and I think for sure, I'm going to be going back to my father's home country and visiting with people and getting excited about the first, or not the first, but the Indian astronauts who's going up on the Axiom mission coming up. Pretty awesome. They'll have a hometown hero there of their own that will be able to talk about how wonderful the International Space Station is from his perspective. But I hope I could.
Welcome back. Joining us now is Kunal Shah from Nirmal Bang. Kunal, hi, thank you so much for joining in. And I want to start with gold prices first. And while we have seen an outperformance there, it seems to be taking a pause, a breather perhaps, ahead of the US tariffs announcement today in the evening. What's your sense? What are the kind of case scenarios that you are working with? And how are you looking at the gold prices life after reciprocal tariffs?
Okay, so I generally try to give you a clear view. And my clear view is it's time to book profit. So I'm of the very firm view that all the positive news, because of which gold should have been at $3,100 by the end of the year, in the month of April only, it is at it has tested $3,180. So I think that all the positive factors like tariff, rate cuts, everything is priced in. Central bank buying, everything is priced. ETF buying, each and every good news is in the price. So even though I don't know what Mr. Trump is going to do tonight, But no matter what it does, the likelihood of gold opening down is very high. So for the first time, I'm saying that it's the time to take profits on gold. And if you are having a good inventory with you, you can perhaps hedge your positions by going short on the farm contract. So I think it's the time to take profit, and gold should be witnessing at least $100 to $150 of correction, profit taking, whatever you want to. $2,850, $2,800 are kind of downside, which you can see over a period of time. But the trend is not going to be upward going forward, no matter what Trump says.
So are you saying that the all-time highs for 2025 are done with?
I think, yes, we have seen all-time high as per me. And the possibility of, see, what has happened is that after a 35% rise in gold prices, everyone is realizing and coming up with target of $3,500, $3,600. Doesn't make sense. They should have identified that kind of target at $2,000. So now trying to catch up $100, $150, not a big deal. So I think it's a time to book profit. The gold has become a consensus trade right now. You ask anyone what is the fundamental outlook on gold, everyone will say it looks bullish. So from the behavioral aspect also, I see that there is quite a bit of consensus that gold is going to go up and up and up only. But the fact is that the actual demand is faltering quite sharply. People are coming to jewelry stores to sell their golds. So I think it's an inflection point in gold market right now, and it is asking for a correction. And I think it should come in a matter of next 10, 15 days or 1 month's time. So timing is not something which I can predict, but the likelihood of profit taking is very high in gold.
Kunal, what's your sense on silver then? Because even as gold has taken a step back, silver underperforming gold in 2025 till time. Are you looking at further corrections for this one too?
I would recommend somebody who's been holding gold and booking profits, invest in silver. Same amount you should invest in silver, because silver is going to outperform. It's just a matter of time. A commodity which is in a deficit from last 4 years, and the industrial demand of the commodity is growing at a double-digit growth rate, especially from the clean energy segment. Silver is 100% underperformer. It's just a matter of time when metal takes off. The fundamental outlook of metal is also bullish. No matter this Trump volatility, whatever it comes, it's the right time to accumulate silver, and silver is poised to give you at least conservatively 10 to 15% return in a matter of next 6 to 7 months.
And how are we looking at the rest of the metals as well? Because we've seen some pause coming in here. Copper, after making those all-time highs on COMEX, and as would have been the case, has seen some profit taking. But same has been the case for the rest of the metal pack as well. Slight directionless trade happening there for the last couple of sessions now.
So the reason why metals are witnessing profit taking is because of the tariff effect. The actual consumers of these metals in the US are shying away from the market. They have done the stocking of inventory of copper, aluminum, zinc from last 3 months, and now they are waiting what Mr. Trump is doing. So it's because of that the actual demand has gone down a bit, and that's why we are seeing the profit taking. But the ultimate call on metal is bullish, because what China is doing is very important, not just US. And China has clearly mentioned that they are going to add copper, aluminum, zinc in their strategic reserves. So these are small profit taking, small correction, what you are seeing in metals. The directional view in metals is bullish. And I am expecting another 10% upside in base metal prices in next 6-7 months. And whatever downside you are seeing right now, or tomorrow, if because of the Trump's announcement, if metal goes down, that will be a great opportunity to add metals. The fundamental outlook for metals for the year 2025 remain very bullish. The outlook on the US dollar is quite negative. So because of that also, you are going to see a funds coming and buying metals. So I think it's a time when outlook of industrial metals looks pretty bullish to me.
So Kunal, what you're telling us is that book profits in gold and invest that money in silver for sure, and some part of that in metals also. Let me throw another scenario to you, and there are also concerns about recession or even stagflation coming in for the US markets. So even as you're bullish on China, with US perhaps not throwing out those kind of numbers, would that cap many gains for many metals?
So yes, because 50% of the industrial demand of all these metals coming from China. So US stagflation, okay, recession is far off. US has come up with 2.5% GDP growth rate last quarter. So there's no question of recession, at least for next 6 months. Next 2 quarters, no possibility of recession. After that, nobody knows. But I believe that this tariff thing which is going on and this slowdown which is coming in the US, this will be used by the US to roll over their debt. And once they roll over, their bond yields goes down and they roll over their debt, believe me, they will start with another interest rate cut cycle, no matter what is inflation. So they have another $3.5 trillion of debt maturing in 2026. So totally their debt next year will be $10 trillion. How interest rate can remain at 4%? So no matter what happens, interest rates are going to go down. And that remains very strong. That remains very strong reason why industrial metals, why land, why industrial commodities are going to do well. Commodity as a complex is going to do well. Gold also, I'm expecting a profit taking. I'm expecting a correction. I'm not saying it is going to go for a structural bear trend. So commodities will continue to remain in focus, and they are the best to remain in this kind of uncertain scenario. That you should remain, you should have some portion of your wealth in commodities or commodity stocks.
Right.
Tangible it is.
Very strong words coming in there from Kunal. Thank you so much for joining in this afternoon. Manisha, thank you for joining in as well. Book profits in gold, invest in silver. That's the word from Kunal Shah of Nirmal Bang. But we call time on this edition of Halftime Report. Business lunch for the next 30 minutes.
Point in time, and we can share our experiences with as many people in India as possible, because it's a great country, another wonderful democracy that's trying to put its foot in the space countries, and we'd love to be part of that and help them along.
અમારું યાત્રા ચાલે છે પદયાત્રા અહીંયા જામનગર અમારા ઘરથી દ્વારકાધીશ સુધી અને બસ આ બધાના આશીર્વાદ રહે અને શ્રીજી બાબા દ્વારકાધીશના બધા ઉપર કૃપા રહે આ જ મારી પ્રાર્થના છે અને અમે હમણાં પદયાત્રામાં 5 દિવસથી ચાલીએ છીએ અને 2-4 દિવસમાં પહોંચી જશું દ્વારકાધીશનું કૃપા રહે અને બધા શ્રીજી બાબા બધાને સંભાળીને રાખે ને બધાને આશીર્વાદ આપે બધા યુવાને ભગવાનના પ્રતિ પ્રેમ રાખવું જોઈએ અને
Stocks notched some gains after US President Donald Trump suggests that he may go easier on tariffs to be announced today than earlier expected. Realty and consumer durable stocks gain while utilities and energy drag. Yields fall sharply after RBI announced the massive OMO bond purchase last evening. Even as US President Donald Trump is expected to announce the imposition of reciprocal tariffs today, trade experts say that India may be able to offer some concessions without hurting Indian industries to blunt the impact. Even as reciprocal tariffs loom, India's crude oil import from the United States jumped 67% in March 2025, suggesting that President Donald Trump's efforts to boost American oil sales are having an impact. Oil Minister Hardeep Singh Puri had earlier hinted that India will increase its energy cooperation with the United States. Indian government faces a liability of more than 1 trillion rupees for outstanding sovereign gold bonds at current price. Finance Ministry tells Parliament outstanding bonds have underlying gold of 130 tons. Peak of net interest margins of banks is behind us as savers have matured to become investors. Veteran bankers Dinesh Khara, S. Mundra, Srini Varadarajan tell CNBC-TV18 separately bank stocks gain as bond yields fall sharply after RBI announced massive 80,000 crore bond purchase in April. Hello, good afternoon. You've tuned into CNBC-TV18. You're watching Business Lunch coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala and thank you so much as always for tuning in. A quick look at what the market is doing today, right? Nifty, a good show, good performance continuing for the markets, holding on to gains of almost 0.4% like you can see on your screens. 23,250 levels, managing to hold on to that mark, up almost 100 points is what we're seeing the Nifty 50 trading at. Look at the contributors coming in on the screen, right? We do have those banking names coming in on the positive side. HDFC Bank, ICICI Bank, Infosys as well as Bharti Airtel among the top supporters for the Nifty 50. A bit of a drag coming in from L&T, Hindalco as well as NTPC is what I'm seeing on the screen. Now, other than that, when you're looking at the advanced decline, an interesting move that has come in for the advanced decline ratio. Look at it. In the morning, we had seen that there was more declines than advances, and now that has changed. It's crisscross that's come in at around 10:30, 11, and now advances is much higher than we're seeing in terms of decline. And because of that, we're seeing the performance also coming in for the mid and small cap. Broader markets that have seen a sharp recovery from the day's lowest point. Nifty Midcap up more than 1%. Small cap also outperforming now the benchmark indices. So Nifty small cap is holding on to gains of almost 0.8% in today's trading session. All sectors as of now are trading in the green, and the top sectoral gainer for the day is Nifty Realty. That's holding on to gains of almost 3% in today's trading session, day's highest point. Any name that you see in the real estate side is buzzing in trade. Valor Estate, Godrej Properties, Prestige Estate, all these names are holding on to very strong gains. Other than that, we had updates coming in from retailers. So V-Mart, V2 Retail, Bazar style retail, these are the ones that are managing to hold on to very strong gains in today's trading session. And lastly, jewelry retailers also performing well, Titan as well as Kalyan. And other than that, we have HEG Graphite that have picked up some bit of a pace. So let's watch out for those two names in the trading session as well. Look at the run-up that's coming for both these stocks suddenly. So that's holding on to gains of 3%. But yes, that's how we are looking at in terms of the market. But the most important thing that we're keeping an eye out on is Trump's Liberation Day. That is the 2nd of April, and that is here. Now, investors are awaiting Trump's latest tariff rollout that will be coming in. Let's get in a quick take from CNBC's Becky Quick, who's joining in with us to give us more details on that one.
We're now just hours away from President Donald Trump's tariff announcement, with America and its trading partners holding their breath. The White House has provided little detail on what to expect, but what we do know is this. Reciprocal tariffs will take force from today, immediately after the announcement. Treasury Secretary Scott Bessent has labelled this as a cap of the highest duty level, which could go down if countries meet demands. On Tuesday, the Washington Post reported that one draft proposal would see the US impose a levy of 20% across nearly all imports into the United States. A blanket tariff is a potential. Donald Trump will deliver his tariff announcement in the Rose Garden today at 4 p.m. Eastern Time. That is 9 p.m. BST, in an event that some are calling Make America Wealthy Again. Alongside reciprocal tariffs, there are further measures coming into effect from today. The US will place an extra 25% levy on countries that buy oil from Venezuela. It will also lift the pause on additional duties on Mexico and Canada, and the 25% tariff on all autos imported into the United States that Trump announced last week will come into force from today. So even complex on the detail we already have. Now, Europe is planning to retaliate. European Commission President Ursula von der Leyen has vowed to respond with a strong plan against the US, telling the EU Parliament on Tuesday that the bloc holds a lot of the cards in negotiations. Meanwhile, UK Prime Minister Keir Starmer has reportedly told cabinet members they should brace for tariffs to hit the UK from today, but that he remains hopeful of striking a deal down the line. Starmer has already signalled he's willing to pare back the UK's digital services tax on American technology companies.
And tariffs continue to be the main focus across the globe. Let's listen into the Chief Economic Advisor of Alliance, Mohammed Al Arian's comments on what could be the effect of this rollout.
There is a case for a fairer trading system. There is a case for a fairer distribution of defense spending. And people see that. The question is, do you get there in one round or do you get there in multiple rounds? And that's really important because ultimately, I think we're looking at a 50-50 outcome, and I hate saying this. This could be a major rewiring of the domestic economy and of the global economy, a la Thatcher, a la Reagan, where you get a more enabled private sector, streamlined government, a fairer trading system. Or alternatively, if we get tit-for-tat tariffs, we slip into stagflation. And that stagflation becomes well anchored, and that becomes problematic.
And Goldman Sachs reduces its economic and earnings outlook for the year on the back of a tariff impact. Here's the chief U.S. equity strategist, David Costins, who's commenting on the same as well. Listen in.
Right now, we're looking for around 3% earnings growth this year. The consensus expectations for all the analysts, other strategists on Wall Street are 9%. So that's a pretty meaningful gap. Expectation is you're going to get a pretty difficult first quarter. Companies will be less, inclined to give guidance, given a lot of uncertainty around how do you price products in an environment where the tariff situation is unknown. Even if we do get some announcements tomorrow, which of course we will. The question is, what will the negotiation process be from that starting point? And so we've been focused a lot with clients on companies whose share prices are less sensitive to the three big issues that investors are focused on, which is the tariff risk, the recession risk, and AI risk.
We also spoke to Marco Papik, the chief strategist at BCA Research, and he said that this may be the peak of deglobalization after the tariffs get imposed. Listen in.
The Liberation Day, April 2nd, of course, is coming. And I think that the reason that Scott Bessent comments were important, and I'm so glad that you introduced him, not many people in the markets are actually picking up on that, but that's a very crucial point. This idea that this is the highest level we're going to get. In other words, we could have April 2nd come in pretty hot with a very, very high level of tariffs, a pretty shocking moment, lots of selling, lots of VIX going up, but it may be the peak in deglobalization hysteria. And so that's how I would reference this. I think that that's the most important point, that this will be the worst, the moment when every new news item after this, in sort of rate of change terms, becomes better and better.
Okay, and to understand more about the impact of the tariffs on India, Abhimanyu is joining in with us now with what sources are telling him. Abhimanyu, take it away.
Well, all countries, including India, are watching with bated breath on what is going to be the impact of tariffs and reciprocal tariffs being applied by the United States. What sources have indicated till now that the US has received a far-reaching offer from India to bring down average tariffs, and the discussions were held around removal of QCOs and agricultural tariffs as well last week. And three possible scenarios have been discussed about the reciprocal tariff amendments. The first is that the India-US agreement is already reached in the first scenario, and of course India gets immune to the impact of tariffs. The second scenario, of course, seeks the fact that India is going to mitigate the impact of reciprocal tariffs, and the third scenario is that India gets hit with reciprocal tariffs without any exceptions, like any other country is being impacted by that. Also, additionally, the Commerce Ministry is working on different scenarios to assess the possible fallout of the US tariffs. It's preparing different solutions to help Indian industry deal with the impact of reciprocal tariffs. Now, the impact of tariffs may vary from sector to sector, and it's still not clear whether they are going to be impacted, whether they are going to be levied sector-wise, product-wise, or country-wise. So clearly, all options remain open on the table for the government, for the industry. The industry had earlier approached the government and had sought an early conclusion of the bilateral trade agreement, or at least the first tranche of it, which is being negotiated with the United States. It remains to be seen what is going to be the impact of reciprocal tariffs as and when they are going to be applied, and what exactly is going to be the strategy being devised by the government.
Okay, Abhimanyu, thank you so much for that. All eyes are going to be on the US Trump tariffs that he will be announcing tonight. So keep an eye on that. But do remember, you can catch our special coverage on how Trump tariffs will impact India. A special discussion will be coming up for you all tonight at 7:30 p.m. only on CNBC-TV18. Okay, and India has seen a sharp increase in crude oil imports from the United States. India's crude oil imports from United States rose by 67% on a month to around 244,000 barrels per day in the month of March is what we're looking at. And this is coming in amid President Donald Trump's efforts to boost American energy exports. In February, India had imported around 146,000 barrels per day from the United States. So that is something interesting that we're seeing coming in here. Now, in fact, earlier on this year, in February, we had spoken to the Oil Minister Hardeep Singh Puri, who had also indicated that India will increase its energy cooperation with the US. Listen in to an excerpt of that conversation.
Energy cooperation, President Trump saying that India should buy more LNG, more energy from the US. He's even put out a number there saying that should increase from $15 billion to $25 billion. I wanted to get your comments on that. We have spoken about this previously as well. Do you believe it makes sense? It is something that we should actively pursue and build on.
Energy cooperation between the United States and India was widely expected to figure in the bilateral talks. If you read the joint statement, if you read what the President said, what the Prime Minister said, that's evidence. And I think there is already fairly substantial energy cooperation. The fact of the matter is India needs more energy. We have long-term deals on gas with one country which was there till 2028. You've signed another 20 years there. We are in the market for more gas. We have a stated policy of taking it from 6% to 15% in the energy mix. And I think we have a very substantive relationship with the United States, mostly on gas. I see definitely those quantities being addressed for increase.
Okay, on that note, we'll slip into a break. But as global markets remain on the edge ahead of US President Donald Trump's Liberation Day, tune in to CNBC-TV18 tonight at 1:30 a.m. onwards to get the latest updates and analysis as Trump tariffs come into effect.
યુવાને સનાતન પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને બસ એ જ મારી બધા યુવાને એક મેસેજ મોકલાવું છું મારા ભાઈઓ અને મારા મિત્રોને કે આપ બધા શ્રીજી બાબાના આશીર્વાદ લઈને આગે વધો અને જ્યારે ભગવાન છે તો કંઈ ચિંતા નહીં કરવાનું.
Welcome back to Business Lunch on CNBC-TV18. Now let's move on. And Indian bond yields have fallen by nearly 10 basis points. And this is coming in after RBI has announced late last evening that it will be buying 80,000 crore of bonds in the month of April alone. Lata is joining in with us to give us more details on this front. Lata, good afternoon.
Yes, a 10 basis point fall is rather unusual. So the benchmark 10-year now, the new 10-year has fallen from 6.58 to about 6.49. So basically 9 basis points at least of fall. And that is, as you said, because of this quite unexpected 80,000 crore bond calendar. Very rarely does the Reserve Bank say that I'm going to do one every week. And it's, 4 bond auctions of 20,000 crore each. It indicates a determination of the part of the RBI to keep liquidity plentiful. Actually, we ended the financial year FY25 as well with a decent surplus in the interbank borrowing market. What you call core liquidity was positive surplus by about 1.5 lakh crore. And the Reserve Bank coming proactively and saying we will be doing every week indicates that they probably want to keep the liquidity at a 2 lakh crore surplus. The market is reading this as extremely dovish because that means they will be dovish in the monetary policy coming up on Wednesday next, April 9th. A rate cut was always factored in by the market, but now the market's reading more. Will they also go in for a stance change? The stance currently is neutral. Will they go in for something like, a more accommodative stance? Will the language change? And therefore, you are seeing a fairly outsized reaction in the bond market. But now the 25 basis point rate cut expected on April 9th is completely priced in. And then, of course, there are other small positives as well. The US bond yields have also fallen, and there is rising talk, including from Goldman Sachs, about a possible recession. So all that is also abetting the rally in the Indian bond market.
Okay, Lata, thank you so much for that. But moving on, and the Indian government is facing a liability of more than 1 trillion rupees for outstanding sovereign gold bonds at the current price. In a reply to Parliament, the government revealed that the outstanding sovereign gold bonds have underlying gold of 130 tons. Manisha Gupta is here to give us more details on this one. Manisha?
We did hear a similar kind of a statement in the last month as well in the parliament itself. And when you look at the gold prices in last 1 month, we've seen prices gain up by 10%. If you look at the previous quarter, the gold prices have gained up by 18%. And we've started this financial year on a record high as well. So when you look at the calculations that we have been doing in the office today, RBI did issue 67 tranches, and the first tranche was put out in 2015-16. And the total tranches that were put out, that comes to 146.9 tons. Now, 6 of these tranches have been paid off, have been redeemed, but 61 tranches still remain, and 130 tons of redemptions still remain as well. So when you look at the gold prices right now, the outstanding, if we calculate that to today's price, today's price really comes in at around 9,284 per gram. Now, when you multiply that to 130 tons, the outstanding that the government has to pay to the Indian investors is to the tune of 1.2 trillion rupees. And we are only taking the prices of today because as and when these tranches will continue to come in, you will have to pay them as per the gold price that day. And with the way the gold prices have been moving higher, this number perhaps can go higher as well. Now, just to give you a sense that the last tranche that the government put out was in Feb 2024. So the last of the redemptions will come in 2032. So we still have those years left by, and the gold prices, the way they have been moving, you could be looking at higher prices as well. Another thing is that the government also is paying 2.5% to the investors as per their investment, and this is paid bi-yearly to them. So this is an added calculation as well. The finance minister in the parliament did say that they are maintaining a gold reserve fund where everything is accredited in time, but clearly this 1.2 trillion rupees that stands outstanding as of today is only going to grow going forward.
Absolutely, Manisha. Thank you so much for that update there. But moving on, Shireen Barnes sat down with PVR Inox's MD, Ajay Bijli, to look back at incredible journey from a single screen theatre to India's largest multiplex chain. He spoke about how they plan to increase occupancy levels. Listen in to this exclusive conversation.
And I feel that this 25-26 onwards, these occupancy levels that we're talking about are bound to improve because the supply side
but hope
is looking...
can't be a strategy, right?
Hope is not a strategy.
Yeah.
So what we're doing is a couple of things. I'm saying, okay, if we reach the 31% level, excellent. If we don't, let's align all our costs and our strategies to 25-26%.
Right.
Okay.
Right.
So therefore, one is that FOCO model. Where
yes.
I've already spent 5,200 crores on this circuit by inorganic and organic.
Yeah.
So we are only doing what hotels have done all their lives.
Yes.
Okay. Get basically monetize the brand.
Yeah.
And have
so somebody
a lot
else
of people.
sets up the infrastructure, you run it for them.
Correct.
To put it simply.
Absolutely. We've had to spend more money on our SOPs, brand, and what we bring to the table. So that's one thing that we've done to make sure our ROCE improves.
Yeah.
If we can do more and more screens, around 100 screens got signed last year. This year also about 100 odd screens are
So who are these developers who are coming on board for the 100 screens that you've already got in play and the additional that you are looking at?
Mix of people who are organized and unorganized. One are just one off, two off, in Jaipur, Udaipurs of the world, Nandeds, Ujjains, Indore, Kota, these kind of Ajmer, these kind of places, and then big ones who definitely need a cinema, and then they are also, so a mixed bag.
On that note, we're going to slip into a very short break, and after the break, we'll get you more news and updates, so don't go anywhere.
if they pump in more capex into their business, then Indus Tower gains definitely, because they'll get better tenancies and they will also get newer towers with that capex. And the last stakeholder is Bharti Airtel and Jio. They are stakeholders to this as well. Contrary to many beliefs, my belief is that a stronger VIL is better for both those companies than a weaker VIL. For a simple reason that a weaker VIL will resort.
Welcome back to Business Lunch on CNBC TV18. Thanks for staying tuned into CNBC TV18. Now let's move on and shift the focus. And in some important national news updates, the reworked Waqf Bill 2024 has been introduced in the Lok Sabha today amid staunch opposition from the India bloc and prominent Muslim groups. Now CNN News 18's Arunima is joining with us to give us more details on this one. Arunima, afternoon, and what are you picking up on this front?
So Kiran Rijiju, the Minority Affairs Minister, has already made his opening remarks. He's taken a point-by-point clarification. First and foremost, he said that there was one criticism as to why you allowing non-Muslims into the Waqf board. So he said Waqf has nothing to do with religious practices. This is purely a matter of property ownership and therefore it can't be ruled on grounds of religion. Second criticism that the opposition threw at the government is what Kiran Rijiju countered. He said this is in no way a retrospective law. It's not as if all the Waqf properties, all the masjids, all the graveyards, which have been Waqf properties since 1947 and registered, so there are proper documents. It's not as if this law is going to turn those registrations around. This is a law which will have prospective effect. The third objection was that why are you making the collector the designated authority to decide which land is government land? To that, Rijiju said that we have accepted the JPC's recommendation and now any official over and above the collector, any designated official will be in charge to decide which property is government and therefore it should be litigated. The tribunal also initially proposed to be a two-member tribunal will have now 3 members and you can appeal against the decision of the tribunal also. So Rijiju has tried to set the record straight by saying that this is not an anti-Muslim bill. This is meant to help poor Muslims, the women and children, but the government's clarification is not cutting much ice with the opposition. Gaurav Gogoi is currently rebutting and his speech is very political, saying why is it that the government is suddenly caring about Muslims when they were not even allowed to offer Eid namaz on roads where masjids were overflowing.
Arunima, thank you so much for the latest update coming in here. But on that note, we're absolutely out of time on this edition of Business Lunch on CNBC TV18 Nifty. Almost near the day's highest point. But don't go anywhere. Up next, you have Midcap Radar to take you through all the market action.
With the baton of power set to shift, Bharat's youth will drive the next wave of change. The biggest leaders and policymakers, global trendsetters, business icons, and entrepreneurs will come together to inspire the next generation of change makers. Don't miss your chance to witness it all live. Rising Bharat Summit 2025.
And discounting. VIL has taken care of its spectrum dues till FY27, and this will allow them to borrow money from the market and pump it back into capex, which allows them to stay competitive in the market. That's immediate gain that they have. The issue is that the problem doesn't get completely solved here because in March of 26, they'll be due for their AGR dues, and their current EBITDAs do not allow them to cater to that fully, although there'll be some growth in the ARPU, etc. But for now, the money is available with them on their cash flows are not good enough to take care of their capex requirements in the immediate future. So, so they're not completely out of the woods.
મારું યાત્રા ચાલે છે પદયાત્રા અહીંયા જામનગર અમારા ઘરથી દ્વારકાધીશ સુધી અને બસ આ બધાના આશીર્વાદ રહે અને શિવજી બાબા દ્વારકાધીશના બધા ઉપર કૃપા રહે આ જ મારી પ્રાર્થના છે અને અમે હમણાં પદયાત્રામાં 5 દિવસથી ચાલીએ છીએ અને 2-4 દિવસમાં પહોંચી જશું. દ્વારકાધીશનું કૃપા રહે અને બધા શ્રીજી બાબા બધાને સંભાળીને રાખે ને બધાને આશીર્વાદ આપે. બધા યુવાને ભગવાનના પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને સનાતન પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને
The bulls are showcasing some fight going into an important event later tonight. You're watching Midcap Radar live from the CNBC-TV18 Motilal Oswal studios. I'm Hormas Fatakia. With me as always is Vivek Iyer. Vivek, good afternoon and welcome back to you. And the Nifty at the highest point of the day. We take that considering the uncertainties that we are surrounded by currently and of course the sell-off that we had in yesterday's trading session.
Good afternoon, Hormas. Absolutely nothing to complain about if you're a bull, especially if your portfolio is packed with mid-caps. The mid-cap index up over 1% in today's trading session. Small cap index up 0.9%. It's an action-packed show. Let's start off with the top headlines. Stocks notched some gains after US President Donald Trump suggests he may go easier on tariffs to be announced today than earlier expected. Realty and consumer durable stocks gain, while utilities and energy drag. Mid-caps surge.
Central Bank and Punjab and Sindh Bank continue to remain under pressure after the lenders conclude their fundraising via the QIP. Central Bank is down another 10% in today's trade.
Wari and Premier Energy slip after Bernstein initiates coverage on the two stocks with an underweight rating. The brokerage cites the current market cycle, declining return expectations and rich valuations as the key downside triggers.
Dixon Technologies has seen a surge as well after Kotak believes that the company is a key beneficiary of the component PLI scheme. The brokerage forecasts healthy sales growth and profitability in the fourth quarter for EMS players.
Quest Corp gains in trade after the company announces April 15th as the record date for its demerger, which is set to create 3 listed entities. The resulting companies are expected to come in trading in the next 2 months.
Still continuing to remain around that 23,300 mark is the index, remaining around the highest point of the day. That's a positive that the bulls would like. Of course, the broader markets are doing even better in today's trading session. Of course, they did better in yesterday's trade as well by virtue of not falling as much as the Nifty did. The mid-cap index, as you can see, up 1.25% at the highest point of the day. The small cap index too showcasing some green in today's trading session, and the advance decline firmly in favor of the advances. 0.9% higher for the small cap index, both of them at the highest point of the day. And as you mentioned, the advance decline, the line is only getting wider, and that is in favor of the advances, of course. But which are those advances that are leading the charge in the broader markets? Vamakshi is here to tell us just that. Vamakshi, good afternoon.
Well, good afternoon, Hormas. You know, it's been such a roller coaster ride over the last 2 trading sessions. Yesterday, the markets were, of course, slower, and today they've seen a very strong recovery. And a trend that has been consistent is the outperformance of the mid-cap index. So let's look at some of the stocks that are actually contributing to this outperformance. The top gainers include DB Realty. That stock is seeing an uptick of almost 12%. Started at the day's lowest point, has now moved to the day's highest point. Kalyan Jewellers is one such at the counter, up 7.6%. Bombay Burma coming in focus again, up nearly 6%. And Sham Metallics is up nearly 5.5%. Apart from that, let's also look at the Realty pack. Now, keep in mind that yesterday, the Realty index was down and out in trade. In fact, it was the top sectoral loser, and today it has reversed all of that and is, in fact, the top sectoral gainer today. Godrej Properties is contributing to the gains, up nearly 5%. So is Macrotech Developers, Prestige Estates, and Phoenix Mills are some other counters that are trading in the green. But apart from that, there are several newsmakers in trade today. Look at VMart Retail. They came out with their Q4 update. Koenig's Microsystems secured an order, secured a coverage order. That stock has been locked in upper circuit, up 5%. CSB Bank too, a good operational update coming in from there, 4.7% higher. Bari Energies, Premier Energies on the back of that note from Bernstein, wherein they have initiated coverage with an underweight call. Both of these counters are seeing some on some stocks that are, bucking the trend, are declining in trade today. That includes Central Bank of India, down nearly 9.5%, has been the top sectoral loser. In fact, the top loser on the broader index as well. Fortis Healthcare down nearly 3.46%. RHI, Magnesita and AstraZeneca too seeing very sharp cuts in trade today.
Thank you so much, Mamakshi, for joining us and giving us a sense of how exactly the market breadth is transpiring in the broader end of the markets. Well, it's now a good time to welcome Jay Thakkar from ICICI Securities for a technical check on the market. Good afternoon, Jay. Thank you so much for joining us. Well, it's a sharp bounce that we're seeing after yesterday's pullback. The Bank Nifty too, up almost 0.9%. So your view both on the Nifty as well as the Bank Nifty?
Good afternoon to you, Vivek and Hurma. So, well, I would say that, Vivek, the bounce back which we have seen coming in Nifty, until March, I would say was quite sharp, 1,800 points recovery, and definitely, 23,800 was a clear resistance, and Nifty has reversed from there. I mean, we have seen the profit booking coming from those levels after 1,800 points straight move in 14, 15 trading sessions. So definitely, if technically we look at the markets, then there is a very high possibility that the markets, or probably Nifty is forming a right shoulder of an inverse head and shoulders pattern, which is a bullish reversal pattern, Vivek. And I would say that till 22,700, 750 range on the Nifty is held, the probability of this, turning out to be a bullish reversal pattern is quite high. So whenever you get a breakout beyond 23,800, I think that would further confirm the upside. The better risk reward would be about 23,800, once they are buying on dips opportunity near the range of 23,000 to 23,000 to 22,800 range. So, buy on dips, else, buy on the breakout. That would be a strategy on Nifty. And Bank Nifty relatively has outperformed the Nifty in the fall, in the bounce back as well. And I think the overall private sector bank setup, as well as the PSU bank setup, is looking absolutely bullish. So I'm more convinced on the BFSI segment overall as compared to the Nifty overall. So that's the outperformance there is likely to continue in the entire BFSI segment. Hence, I have two buy recommendations. One is from the BFSI segment only, that's on PNB housing. The kind of steps which RBI has been taking as far as the OMO purchase is concerned, I mean, definitely has got the positive, liquidity positive now as far as banking sector is concerned, and because of which I think PNB housing is likely to perform. One can see the levels of 945 to 970 on a medium-term perspective, at least, as far as the April series is concerned. On the downside, I believe 890 is a very crucial or critical support till those levels are held. PNB housing looks, or housing finance looks quite positive. Second buy recommendation is from, Nifty India Tourism Index, which is quite up there, was up yesterday as well. And I would say that among which from the F&O space, Indian Hotels. This is one stock wherein we are seeing the long build-up happening again. So Indian Hotels is likely to be continuing its upward journey, at least till the levels of 860 to 880 in the near term, till 810 levels are held. So here to the risk reward is favorable for the longs. We have seen long build-up as well as, the FI actions in last 2 to 3 quarters, if you see. I mean, the FI has increased their position from 24% to 27.5%. So this is one stock which has remained immune in the entire fall and it's outperforming as well. So these are the two buy recommendations, apart from which, as I said, I'm overweight on the BFSI sector overall as well as the cement space.
Interesting recommendations there from Jay, PNB Housing and Indian Hotels. Jay, thank you so much for sparing time, joining us today this afternoon with your views on the index and specific stocks as well. A small programming note then from our viewers. CNBC-TV18 and HSBC India are back with Season 2 of the SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. Nominations are now open. You can scan the QR code now and submit your entries for the SME Champion Awards Season 2. We take a short break. The management of V2 Retail joins us on the other side. You would not want to miss out on that conversation. Stay tuned.
Baton of power set to shift. Bharat's youth will drive the next wave of change. The biggest leaders and policymakers, global trendsetters, business icons, and entrepreneurs will come together to inspire the next generation of change makers. Don't miss your chance to witness it all live. Rising Bharat Summit 2025.
એ જ મારી બધા યુવાને એક મેસેજ મોકલાવું છું મારા ભાઈઓ અને મારા મિત્રોને કે આપ બધા શ્રીજી બાબાના આશીર્વાદ લઈને આગે વધો અને જ્યારે ભગવાન છે તો કંઈ ચિંતા નહીં કરવાનું.
Quarter of a century, zillions of designers, and orders of style later, Lakme Fashion Week is back to rock the ramp. This year's collection.
Welcome back to Midcap Radar. V2 Retail is at the upper circuit. This is following the company's Q4 business as well as operational update. To discuss this and the outlook going forward, we are now joined by Akash Agarwal, Whole-Time Director, V2 Retail. Thank you so much, Akash, for joining us. Well, you know, whichever way we look at it, it's a very strong update that we received, especially as far as Q4 is concerned. And, you know, it's also the end of FY25. In this particular quarter, are there any one-offs that aided the performance? Especially, you know, did you have any specific festival days that came in for the month of March? And SSSG, have you exceeded the target that you set for yourself at the start of FY25?
Hi, yeah, thanks for having me. So, yeah.
Akash, I think we have you on a patchy line. We'll just try reconnecting you on the line. Akash, we'll just try reconnecting on the line. It's a patchy line. You know, for our viewers, yeah, I think we have Akash back on the line. It was a bit of a patchy line. Akash, are you able to hear us clearly?
Yes, I can hear you. Hi, thanks for having me.
Yeah, Akash, did you hear my question or do you want me to repeat it?
Yes, I heard your question. So yes, Eid last year was in April. So about 7 days of Eid sale transferred from Q1 to Q4 this year. So there is a slight, you know, impact on the performance because of that. But we have continued a very strong momentum that we have shown over the last 6-7 quarters. And SSSG number of 24% and the SSSG number of 29% for the whole year has definitely exceeded our expectations, because after having such a high base of 31% SSSG last year, we forecasted and we predicted that we'll only do an SSSG of around 15%. But I think it's a testament to all the hard work that we've done on the supply chain, on the product, on data analytics, that we've been able to carry on the performance and the momentum. And hopefully it carries on in the future.
Akash, good afternoon. Thank you for joining in. You know, the last time you spoke to us, you had mentioned that you are aiming for around about 50% in terms of revenue growth for FY26. You are targeting an SSSG of 15%. With the momentum that you are heading into for the new year, do you want to revisit those targets or you just want to stick to them on a conservative basis?
I think those are not conservative targets. I think they're bullish enough, because now we have reached a per square feet sale per month of more than 1,000. So the base has become quite high. So if we get a 10 to 15% SSSG on that, that really helps with the profitability. And now we've already opened 72 stores this year. So the next year, the plan is to grow revenues by around 50%. So 10 to 15% coming from SSSG from same stores, and the rest coming from new store additions.
Understood that. So Akash, you know, what we want to understand is, as far as store addition count is concerned, as well as triple SG is concerned, on both of those parameters, you've actually managed to beat the guidance or the target that you had set for yourself at the start of FY25. Now, going into FY26, you know, you've given us a sense, but also, number one, reiterate for the benefit of our viewers, your triple SG target, your top line target, as well as can we see an increase in margins?
So the store opening target for next year will be around 90 to 100 stores. And the SSSG target will be a double-digit SSSG. We are happy with 10 to 12% SSSG for next year, with a much better base than what we were at 2 years back. And the revenue targets, as I already mentioned, we want at least 50% revenue growth for next year. So these are the three targets for FY26.
Your plan. Is there a reversal in plan on opening any new manufacturing units? Because you had mentioned the last time that there are no such plans in the offing. So I'm assuming you're sticking to that as well.
Yes, there is no plan for more manufacturing units. In fact, the contribution from our own manufacturing has reduced from around 19% last year to less than 8% now. And it will keep reducing as we're increasing volumes because we're not opening any new manufacturing facilities.
Now, going forward, Akash, give us a sense of the revenue mix that you're targeting, because we believe that an increase in realization should ideally drive an increase in margins. So going forward, how do you see menswear, women's wear? We also understand that you have kids. So what will be the ideal mix for you for FY26?
So menswear has been always the largest contributor to us in terms of sale. So menswear is around 42% and women's wear and kids wear around 25% each. And the rest is lifestyle products and general merchandise. But we've seen in the last 2 years that women's wear has been the fastest growing category for us. So I think maybe, women's wear's contribution increases the most in the next 2 years, but it will remain like, primarily speaking, I think menswear will still continue to dominate in terms of proportion, and kids wear and women's wear will be very similar to each other.
What about geographies, Akash? You mentioned presence predominantly in the tier 2 and tier 3 areas. Is there an intention to head into the larger metros, say the likes of Mumbai or Delhi, or even some of the other metros across the country?
So even when we enter tier 1, it's very strategically located, the store, where there is more middle class population, where there are more migrant population, and because that is ultimately our target customer. So we already have about 10 stores in Delhi NCR, and some do better than national average. So, and we just opened our first store in Bangalore. So definitely tier 1 is also the target, but considering that we want to open 100 stores next year, 80% or more than 80% of the stores will be tier 2 or tier 3.
Akash, a couple of questions we request for a quick response. Number 1, CapEx targeted in FY26. Number 2, are you entering any new, style or any new portfolios? And number 3, what has been the impact, if you could quantify it, from online retail?
Can you repeat the first question, please?
The CapEx that you have envisaged for FY26.
So for 100 stores, we would need about 110 crores of CapEx. So per store CapEx is around 1.1 crores. And talking about categories, what we've done is we've increased the width in each and every apparel category itself, because we want to have the leadership position in apparel, and apparel has always been our strength. So to give you an example, in men's denims, if we used to do only 3 different kinds of fits, now we're doing more than 7 fits. And similarly, if in women's tops, if we were doing only 20 different kinds of fabrics, now we've introduced 30 new fabrics. So what we're trying to do is we're trying to give maximum width and maximum number of options to the consumer in apparel. And if you talk about general merchandise, we have started a little bit of beauty and footwear, and we've got a very good response in these 2 categories. So these 2 categories will also be in our focus going forward in the next 2 to 3 years.
One final question from my end, Akash. Your sales per square foot, as you mentioned, has crossed 1,000 now. You have a high base as well. Do you see this sustaining, say, are you envisaging a 10 to 15% growth, say, for levels of 1,200 by the end of FY26?
So when you open a new store, the new store does about 20 to 25% less than your mature stores. So because we are opening 100 stores next year, we might not get a 10 to 15% PSF growth for the company. But if you just look at old stores, I think it should reach 1,200 mark, which was our next target, in 1.5 to 2 years.
Thank you so much, Akash, for joining in. V2 Retail today locked in the upper circuit, and this particular stock, as you can see, in the last year has gone up 4x. So it's been a significant outperformer. Wish you all the best, Akash, as you go into FY26. Well, as we now slip into a short break, Here's some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or Google Play Store, or just scan the QR code on your screen.
That started 25 years ago believes that its best is yet to come.
Yeah, it's kind of surreal. And even when I saw Young Turks 25 years, I told you the same thing. I said, my God, we've come a long way. And when you look back, I mean, it doesn't feel like 25. I think life in the internet industry is life in the fast lane. Till 6 months before the IPO, we weren't even planning an IPO. It was Sanjeev Bikhchandani, who was an independent on our board.
Who said IPO?
Who told us on a January board meeting that, guys, you are ready to IPO. We said, what are you talking about? He's saying, yeah, 3 years ago, we were at the same level and you guys are growing faster.
What's the most unusual celebration case that you've seen?
I believe they're now breakup and turning single again
What,
parties.
breakup and turning single again parties?
Their parties and get-togethers. like, listen, now guess what? We're all single with parties. But all kinds of stuff is happening, as we know. Like, proposal economy is happening, yeah? People now, youngsters are choosing exotic locations to go make a proposal, and they actually travel.
For the last few quarters, we see our frequent travelers are actually taking more trips than they were ever before, right? It's a combination of short-term vacations, and we've seen trends like
the YOLO phenomena is here to stay.
And Gen Z, and it's real, and Gen Z.
Showcase modern sophistication with effortless elegance. The showcase is set to be bold, reflecting a connect between beauty and style. Let's take a look at the showcase straight from the runway.
How do you think beauty and fashion empower young women like you in today's world?
So I think beauty and fashion, if you have fun with it, can be very, very empowering. Like me, I like dressing very casually. I like being very chilled out. I don't play too much with like colors and stuff, and that makes me feel very empowered and very beautiful. So I think it can be used as a tool to enhance your strengths rather than cover up your weaknesses.
Who are you walking for, and tell us about your inspiration behind it?
So I am walking for AKOK. I'm walking for Anamika Khanna, and I'm wearing her silver collar collection. And I think the inspiration around it is just warrior princess, something to make women feel very powerful, very strong, very modern, very cool. That's her inspiration. I'm assuming I'm just channeling that.
The opening night showcased designer Anamika Khanna's designs that celebrated bold, ambitious women who own their space, lead with confidence and inspire with their individuality.
It's been 20.
Welcome back. It's time for our special segment, Midcap Microscope, and Nigel is here to focus on a stock that has outperformed the broader markets and is also near its all-time highs. But the question remains, will the rally sustain? Nigel is here with more on this.
Welcome to Midcap Microscope. The stock on our radar today is Welspun Corp. Remember, the stock has outperformed the broader markets. But is this rally justified? Let's break it down for you. Welspun Corp is a leader in pipe solutions. That includes the large diameter pipes, the ductile iron pipes, and the stainless steel pipes as well. But they've also expanded into building products after acquiring Syntex. So now they're into the water storage tanks, and they're also foraying into plastic pipes too. What's encouraging is, despite the heavy capex that they've lined up over the last few years, they have kept their balance sheet lean by the operating cash flows as well as exited non-core businesses. And that's what's helped them turn From a net debt company, currently they're in a net cash position. For FY25, they have guided for an EBITDA of around 1700 crore rupees. But there are various triggers in place which could help them scale up this EBITDA number. Trigger 1, their order book is at a massive 20,000 crore rupees. And guess what? 60% of it comes in from the US market. And that, remember, is a margin accretive business. In the past fiscal, this US business did not contribute much to the EBITDA number. Trigger 2, 1600 crore rupee expansion has been announced in Saudi Arabia for LSAW and ductile iron pipes business. They've already signed an MOU with Saudi Aramco, and that's a big deal. And looking ahead, well, Welspun is launching its plastic pipes business in the first quarter of next fiscal. Peers in this space, well, they trade at very, very hefty valuations. So if they can scale up this business, there could be some serious value unlocking. Finally, the company is implementing a turnaround strategy for its subsidiary, Welspun Specialty Solutions. That's post its rights issue. And now they have a solid balance sheet and good order book visibility as well. This segment could meaningfully scale up for future growth. So while Welspun Corp appears to have a strong growth trajectory, there are some risks that investors should be mindful of. A significant portion of its revenue comes in from the large infrastructure projects in sectors such as oil and gas, water supply, and construction. For example, the National Gas Grid as well as the Jal Jeevan Mission. Any kind of delays, cancellations in these projects could impact the earnings. Also, the success of its plastic pipes business remains a little uncertain. If the product launch is not up to expectations, it could impact investor sentiment as well. Well, before we wind up, let's sum things up for you. Welspun Corp has a solid order book. They're expanding into high margin markets. They're also eyeing new business verticals. So it's well positioned. However, execution risk and external factors could weigh. Will the company capitalize, or is the market being overly optimistic? Let's stay tuned to this one.
Thank you so much, Nigel, for joining us and putting the microscope on Welspun Corp. But with that, it's all the time we have on this edition of Midcap Radar. Your stocks when we return.
Fashion Week, what is in store and what can we expect?
As you can imagine, it's the most emotional, sentimental moment for us. 25 years of all of us together. It's going to be a spectacular celebration and I'm so looking forward to it.
Can you tell us on what the collection is all about?
This collection, it's called the Silver Collar, and as the name suggests, it's about elevating workwear for women and the very fact that we don't really follow rules anymore. Everybody is bringing that power to the workspace, but they also bring that emotion, the gentleness and all of that. So it's just about elevating workwear to another level.
One message that you would like to see your brand on these young empowered women wearing your collection?
I feel like if my collection can give you a sense of freedom, I've done my job. And that's what I want to do. I want to make people feel free.
From legacy designers to fresh voices, Lakme Fashion Week continues to redefine not just trends, but the business of fashion. In Mumbai, Zenia Baria.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy?
How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bazar at these times on CNBC-TV18 and CNBC.
Hello, good afternoon. You've tuned into Your Stocks on CNBC-TV18, Kalalosal Studios. I'm Vinny Motiwala and thank you so much for tuning in as always. A quick look at what the market has been doing, managing to hold on to these gains that we've seen coming in. Nifty, like you can see, is holding on to gains of almost 0.5% of trade in, gain in today's trading session. Broader markets that recovered from the day's lowest point, and as of now, the Nifty Midcap is holding on to gains of more than 1% as well. Also, we have the banking space, which is holding on to good gains as well, and Nifty Bank, in that we have HDFC Bank, ICICI Bank, the private bank side, which is managing to hold on to good gains. Realty, among the top sectoral gainers, continue to pick up that momentum. Nifty Realty is now up more than 3% in today's trading session, and all the sectors continue to trade in the green. So that's what the market setup is looking like. We have picked up momentum, especially in the broader market front, in terms of the gains that we've seen from the morning go. But on that note, let's get started with the show. And we have our experts joining in with us for today. We have Astha Jain, research analyst at HEM Securities, as well as Somil Mehta, head of alternate research capital market strategy at Mirae Asset Sher Khan, to solve all your stock-related queries. Astha as well as Somil, good afternoon and thank you so much for joining in with us. Yes, we're waiting for those Trump comments to come in and wonder what's going to be happening tomorrow. At least some bit of that uncertainty will be cleared. Somil, but today in terms of the charts, anything that you're picking up in terms of an indication, or maybe we should watch out for volatility?
There's definitely volatility ahead, and I think even today we'll be having a little bit of volatility, but it is a broad range at the moment where we are trading between 23,100 and on the higher side 23,400. 23,400 remains a very crucial resistance going forward, which is 200 daily exponential moving average. My view is that the markets will rally upwards in the short term. In the medium term, bias remains positive, and I think the financials, the banks, the smaller banks will outperform.
Okay, surely an interesting view coming in there from Somil. But on that note, let's get started with the query for today. The first query we have is coming in from Sampurna, who's writing to us from Meghalaya. Holding 100 shares of Indian hotels. This is at a price of 600 rupees per share, making a profit on this one. Wants to know the outlook for the hotel sector going forward. Astha, let me take this to you first. You know, we have the holiday season coming in as well, and Indian hotels has performed well over the last few years, though the buy price of the viewer has been 600 rupees per share. But outlook from here on for the hotel sector, what should they be watching out for?
Hi, good afternoon to all of you. We are recommending hold on this counter, so I would like to suggest that one can remain invested in the counter with an initial price target of around 890 to 900 odd levels. Now, talking about the fundamentals of this counter, company has a strong plans. In fact, they intend to increase their operational rooms by 700 plus over FY24 to FY30. So strong plans they are having. They have a good capex also. So I think all these points are signaling towards a good long-term story in this space. And in fact, I think industry tailwind is also working well for this company. So overall, with the strong fundamentals, I think this company is well poised to show more upside from here. Remain invested in this counter. This is what we are suggesting with a price target of 890 to 900 at the initial.
Okay, 890 to 900 would be the initial target that one is watching out for. Somil, but coming to you, in terms of technicals, last 1 year, we've seen the stock move up from around, I think, 600 odd levels. It's come up. 590 was the lowest level. To that today at around 829, 830 levels. What is the upside that you're watching out for from Indian hotels? And would you suggest the viewer continue to hold Indian hotels or maybe move to another hotel sector name? Any stock in that front?
No, I think Indian hotel looks great, and I'm still expecting the stock to rally on the upside. The momentum is strong. The stock is going, has formed high tops, high bottom on the higher time frame as well, on the weekly charts as well. So it's above the averages. The momentum indicator on the higher side is still a long way to complete the entire cycle. So I think a long way to go. I agree that the short-term target should be around 890, 900, but I would say that in the medium-term outlook, it would go to 1,050 levels.
Medium-term outlook is 1,050 levels for Indian hotels. So both our experts are saying continue to hold Indian hotels. Let's move on to the next query for today, and this is coming from Nisha Jain, writing to us from New Delhi, holding 60 shares of Shriram Finance. This is at a price of 250 rupees per share. Wants to know the long-term prospect of this investment. Shriram Finance, your view on this one, Asta. What should they be doing with this?
So we are positive on this counter, recommending a hold with the price target of somewhere around 700 to 750 odd levels in the long term. Talking about the fundamentals of this counter, the major focus of this company is their reduced dependence on the CV portfolio. This is what we have started seeing, in fact, in the Q3 FY25 numbers as well. So I think that is and in fact, their asset quality is also now becoming stable. They have a good provision coverage ratio of around 51.6%. So if I take all the fundamentals, I think this counter has more potential to move upside from here. So recommending a hold as well as buy on dip strategy can also be applied. Initial price target can be set at around 700 to 750.
Okay, and Somil, your view coming in on the charts and technicals as well. Asta has given a thumbs up on the fundamental front. Should the viewer continue to hold on the technicals as well?
In the medium-term outlook, definitely I agree with Asta that it looks definitely good. But in the very short term, I think the correction is going on, and this correction can go down till 580, 590 levels. So that would be a very crucial support. That will be a buying opportunity as well in the medium-term outlook. And I would be expecting this stock to make new highs. So buying opportunity around 600 levels, and new highs would be expected. In the short term, I'll be expecting the previous swing high, which is 697, 700 levels. That would be my target.
Okay, keeping an eye out on those levels over there. Next query for today, Balaji, who is writing to us from Tamil Nadu, holding 3,000 shares of Indian Overseas Bank. This is at a price of around 50 rupees per share. Currently, the stock is trading at 37 rupees. Wants to know what should he be doing with this? Should he look to exit IOB, and what should they look at if they exit IOB as well? Your view on this one, Asta, and is averaging a possibility of a IOB, or would exit just be an option?
So I would like to suggest that rather than doing averaging, just try to exit at the higher levels, because right now he's just, the cost is also the same, whatever price it is putting right now. Talking about the fundamentals of this counter, if I talk about the fundamentals seems to be okay. Asset quality is more or less stable. And in fact, we have seen the margins are also looking decent, but we are very much positive on the entire PSU banking space. So there are various other names also if anyone wants to make entry, in which SBI is our preferred choice, followed by Indian Bank also. So these are some of the counters in the PSU banking space where one can keep an eye on. Although for this counter, even I'm recommending hold and try to exit at the higher level of around 40 to 48.
Okay. Try to exit at the higher levels, and there are other options which Asta is highlighting as well, where you can look in the PSU banking side. Somil, your view also coming in for IOB, and would you also say other PSU banks may look much more attractive? And also, if you suggest the viewer to exit, then what level are you also highlighting for the exit?
This stock started the rally in 2020. The lows were around 6, and the highs we've seen in the last 6 months would around be 80, 82, and it has retraced almost 61% now. Great buy at this time, but I'll be looking for a reversal pattern to happen. Till the time we don't get a positive monthly close or a reversal pattern or something, I would not get into it. But these are very attractive levels to buy IOB. The previous rally was an impulse, so it is in a uptrend in the long-term outlook, and these are very good levels. But I like other banks as well, like Federal Bank, Union Bank. These are very good picks at this point of time, and you can buy those as well.
Okay. other names suggested in the place as well, which you can look to buy in this space. But let's move on to the next query for today, again coming in from the banking side, where Puneet was writing to us from Noida. 1,000 shares of IDFC First Bank is what they're holding, and this is at a price of 93 rupees. Currently, the stock is trading at 57 rupees, so they're making a loss on this one. They bought the share in 2023. Now he wants to know, should he continue to hold this or look to exit this one? What is your view on this, Asta? You know, at one point of time, this was surely one of those favorites coming in for everyone. But then we've seen a bit of a downtrend that started for the stock. So what are we watching out for?
So I think the major problem with this counter is their MFI portfolio. So I mean, that is showing stress, and that is the major concern. And in fact, what we were expecting few months back, that this bank will definitely show a very strong performance on their NIMS side. That has not come in as of now. So I think these are some of the major points that right now this bank is not performing like other private sector banks. So idea here is, since cost price is so high at rupees 93, if he makes exit at this point of a time, definitely the quantum of loss will be very high. So idea here is to stay invested in this counter, let the results of Q4 FY25 come in along with the yearly or annual results, and then again review the query. Right now, stay invested in this counter.
Okay, stay invested in the counter, wait for the Q4 results before you make any decision. Saumil, your view on the charts and technicals, right? Last 1 year, we've seen almost a 30% decline coming in, and the viewers' buying price, unfortunately, was among those highest levels that we've seen in the last 5 years for the stock. So, what should they do now?
In the medium-term outlook, it is in the downtrend. There's no doubt about it. But in the very short term, there's an inverted head and shoulder pattern formed here. The momentum indicators have a positive divergence. So I'm a little positive in the short term. Good risk reward. The stop loss would be around 54. Very strict stop loss on this stock. And on the upside, I think the targets would be around 62, 63 levels in the very short term. However, in the medium-term outlook, if this stock gives a closing above 68 levels, only then there'll be a buying opportunity in the medium-term outlook. But I think the trend is down, and it is for a few years it has been down. So I'm not expecting too much out of this. But in the short term, you can trade it.
Okay, that's a view coming in there on the technical front. Thanks for that. But on that note, we're going to slip into a very short break, viewers. And here's some good news for our viewers. India's business leader is now a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates at your fingertips. Download the CNBC-TV18 app now from the Apple Store or the Google Play Store, or you can just scan the QR code on your screens.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest-running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC TV18 and CNBC-TV18.com. CNBC TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
India is amazing. Every time we went over the Himalayas, and I'll tell you, Butch got some incredible pictures of the Himalayas. They're just amazing. And you can see, like I've described it before, just like this ripple that happened.
Welcome back to Your Stocks on CNBC-TV18. Thank you so much for staying tuned in. We still do have our experts with us, Astha Jain as well as Somil Mehta. This next query is now turning interesting because we've highlighted this before as well, and this is Vodafone Idea. Now, obviously, yesterday we had that update that came in, that the government will be converting, the share amount. They'll now be the biggest shareholder coming in for Vodafone Idea. Astha, we have Kamal Kapoor, who's writing to us from New Delhi, 100 shares of Vodafone Idea, they bought it at 5 rupees per share, wants to know, given that this recent buying has come in and, the conversion to equity, what should they now do with Vodafone Idea? Any different story that you're watching out for, anything with it?
So I think it's better to stay invested because now, as we know, rupees 10 per share is the price at which the even government is setting it. So I think it has a potential to move till those levels. Now, talking about the other factors, we all know that our ARPUs have not increased that significantly despite the tariff hikes. And we are now, we are very much aware that even they have seen a drop in the subscriber base also as compared to other private players. But due to this new movement which has happened in the stock, I think this stock can move up till those levels. So it's better to stay invested and try to exit at the higher side of around 9.5 to 10 rupees.
9.5 to 10 rupees, you can exit at those levels. Somil, what's your view coming in for Vodafone Idea now, right? Do you think it can go above that 9.5, 10, 12 on the technicals, or maybe those levels are still something that we're just watching out for?
I'm not very optimistic on this these charts because it's been in downtrend for a very long time. It's not been able to close about 20 weekly moving average, which is not good sign. Yes, I do agree that in the very short term there is a small ending diagonal pattern breakout on the upside, and it can go till the 200 daily exponential moving average, which is close to 9.80. So that will be my target, and you can definitely buy on declines for a target of 9.80, and the stop loss would be very strict. 7.30 would be a very strict stop loss.
Okay, strict stop loss, and 9.8 is what Somil has highlighted. 9.5 is what Astha has highlighted. So yes, despite those positives, but you can exit at those levels is what our experts are highlighting. Let's move on to the next query. We have this coming in from Sriram, who's writing to us from Chennai. He's holding 10 shares of Astra Microwave. This is at a price of 886 rupees, currently making a loss on this one. He's been holding this since the last 4 months. He wants to know the outlook on this stock, not mentioned long-term or short-term. So, Astha, the view that you have on Astra Microwave in terms of the fundamentals, both for the medium-term and long-term outlook.
So their domestic order execution is really going well for this company. They have a strong order pipeline also. So I think this counter has the potential to move upwards, and maybe this can go till the level of 670 to 680. So right now we are just restricting our price target to those levels. We really want to see the results after all. So right now stay invested in this counter with a price target of 670 to 680 at the initial junction.
Okay, 680 right now is what it's trading at. So just wait out, maybe it results season, and then you could decide something on this as well. So hold on to it as Astha's view. Somil, on the charts and technicals, what's the story that's playing out from Astra Microwave?
This stock started rallying up from 2023, and it started from 200 levels to all the way up to 1,000 levels, 1,050 levels. And now it has already retraced 50% at the lows of around 600 lows. So I think from here on, it's a very good level to buy. In the very short term, there's a small inverted head and shoulder pattern formed. However, it is taking resistance at 200 daily moving average. Stop loss would be around 660, very strict stop loss in the very short term. And the target would be around 7. And the levels would be new highs for the stock, but you'll have to wait for the breakouts.
Okay, we'll have to wait for the breakouts. But Saumil, does that mean that the viewer should average? And have we changed your stance this time and getting you to tell the viewer to average then?
No, I would not say because I don't believe in averaging, so I would not say. But you can hold on to this stock for new highs because I think these are very good levels to invest, entry new and invest for new highs actually.
Okay. Okay, surely keeping an eye out on these levels over there with that strict stop loss also that Saumil highlighted. Let's move on to the next query. We have Vinita Patil who's writing to us from Kolkata. She's holding 2,300 shares of Shipping Corporation. This is at a price of 72 rupees per share. Wants to know if she can continue to hold this for the long term. Astha, your views for Shipping Corporation of India?
So first of all, I would like to apologize. My previous target for Astra Microwave was 780, and I think I said
no worries. Yeah.
So apologies on that part. It was 780 for Astra Microwave. Sure. The targets were 780. For Shipping Corporation of India, first of all, would like to congratulate because here the profit is huge. The cost price is at a lower level. So I really suggest to book partial profit at this current moment of a time, because the only problem which I'm finding about these companies, these defense companies or shipping companies, is their valuation. So valuations are really looking high at this point of a time also. And that is why my idea here is to book partial profit, not fully. Profit booking is recommended from my side, but partially one can definitely take out some profits and remain invested with a price target of somewhere at around 200 to 210 odd levels.
Okay, surely keep an eye out on those levels over there for Shipping Corporation and can book some profits is what Astha is suggesting. Saumil, your view coming in for the charts and technicals for Shipping Corporation?
Definitely looks great. Small flag pattern has formed on the daily charts. I'm expecting the breakout on the upside. Momentum indicators on the positive side. Trading above the averages. My target should be the same 210, 200 levels. In fact, 200 daily exponential moving average is at around 202. That will be my short-term target. And I think in the medium-term outlook, I'll be looking out for at least 240 levels.
Okay, medium-term outlook, 240 levels for Shipping Corporation. So the viewer can continue to hold this one. But that was the last query for today. So thank you so much, Astha, as well as Saumil, for joining with us on the show and helping our viewers solve all their stock-related queries. And viewers, thank you so much for tuning in, and thank you so much for sending your queries as always. We'll wind down this edition of Your Stocks. Up next, your closing bell.
The baton of power set to shift, Bharat's youth will drive the next wave of change. The biggest leaders and policymakers, global trendsetters, business icons, and entrepreneurs will come together to inspire the next generation of change makers. Don't miss your chance to witness it all live. Rising Bharat Summit 2025.
It's collided, and then as it flows down into India, it's many colors. I think when you come from the east going into like Gujarat and Mumbai, the fishing fleet that's off the coast there gives you a little bit of a beacon that here we come. And then all throughout India, I think the impression I had was it was just like this network of lights from the bigger cities going down through the smaller cities. Just incredible to look at night as well as during the day, highlighted of course by the Himalayas, which was just incredible as a forefront going down into India. I hope, and I think for sure, I'm going to be going back to my father's home country and visiting with people and getting excited about the first, or not the first, but the Indian astronauts who's going up on the Axiom mission coming up. Pretty awesome. They'll have a hometown hero there of their own that will be able to talk about how wonderful the International Space Station is from his perspective. But I hope I can meet up at some point in time and we can share our experiences with as many people in India as possible, because it's a great country, another wonderful democracy that's trying to put its foot in the space countries, and we'd love to be part of that and help them along.
Beyond market headlines, to understand the reasons for the day's movers and shakers, and get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng down 0.8%. The Taiwanese index trading above the flat line.
Deliberations on exactly what tomorrow will look like are still ongoing. There are still meetings scheduled today.
Now, the Nifty's managed to hold on to 23,142 yesterday.
There could be a pretty interesting buying opportunity from April 3rd and 4th and onwards.
23,210 is where the Nifty is at, about 1/3% higher.
I'm still as sanguine and optimistic about the business.
Better sense prevails as it should. Reciprocal tariff should not come.
The benchmark indices in the green with a gain of about 0.6-0.7%. The Nifty is above 23,300.
India's crude oil imports from the US rose 67% on month-on-month basis to 244,000 barrels per day in March.
India has offered to bring down the average tariff rate down.
The new 10-year has fallen from 6.58 to about 6.49. So basically 9 basis points at least.
The Nifty at the highest point of the day. We take that considering the uncertainties that we are surrounded by currently, and of course the sell-off that we had in yesterday's trading session.
Well, that is the day so far, and the market is doing well on a day like today when the big talking point is only going to be revealed later today, and it is going to be a reveal, literally like a product reveal, reciprocal tariffs reveal, because so much, hand-wringing about what is to come, and a lot of commentary, but no one knows.
You know what the event is called?
Liberation.
No, that's Liberation Day. Make America wealthy again. It's Mawa now, after MAGA. Yeah.
But the risk is now what comes out, right, today? The risk is that things linger on.
Yeah.
You hear one thing, and then what will be the retaliatory tariffs other trade partners will impose, what kind of inflationary impact. So the question is, will this unleash a trade war, or will there be a climb down? All we know is that the announcement is going to be at 1:30 p.m. India time, 4 p.m. Eastern time. I think that's the only thing that we know for sure. And
I think I'll go with Prashant's word. He's been saying, will this be a clearing event? I don't know why. No scientific reason behind it. I get a gut feeling, I'd want to believe. I think the markets would want to believe that it indeed is that.
No, I think so too. The risk of being proved immediately wrong. I think we probably get a relief rally tomorrow.
Yeah.
It may not last because tariffs ultimately are bad. There's no question. But it's just that, the event buildup has been so large.
Yeah.
Just to complete the arc, so to speak, we get maybe we complete this at least for now with a bit of a relief move. But we'll see. We're, of course, here in the studios. Nigel is joining us from the newsroom floor. Nigel, hi, good afternoon.
Hi, good afternoon. Good to see, right? We are seeing buying into the markets, but I think the most encouraging aspect in today's trading session, Prashant, I recall when we started off trade, we were highlighting how the breadth of the market isn't great. Guess what? We have 3 stocks now advancing in comparison to 1 stock that's declining. So I think that's the highlight for me. It seems that the broader markets have got their mojo back, and hopefully President Trump doesn't announce something that's too negative. I guess that could continue.
No, absolutely. And, we'll see what comes out of it and what really happens. But at some level, I mean, the bar for a relief rally, it's counterintuitive, but the bar for a relief rally is actually, I would say, is quite low. I mean, in the sense that you just want to get over this, at least for once. But the point is, beyond tomorrow, if you get that, will it last? Because then you will, again, at least globally, you will start to go back to the question of economic data. In the US, we've had many prints which show that activity is slowing, but inflation expectations are rising, etc., etc., etc. Here in India, of course, I mean, it's a waiting game, a couple of quarters. These tax cuts will take into effect. RBI, 9th of April is the monetary policy meeting, maybe a rate cut here. So all of that needs to start to happen. So it's not, it's just, I mean, maybe too much concentration of what just happens tomorrow. But it's possible we get that. For now, 23,300 is where we are at, 140 points higher. And big move on the currency. It's a 14, I think, almost 14 paise, I think, on the currency. And the yields, you look at the India 10-year bond yield, and Lata will join us in a little bit to talk about that as well. That's a very, very sharp move that we're seeing there. So lots to track here over the next 60 minutes. We'll get you lots of opinion as well. Rima.
Well, Europe is in the red now. The CAC, that's the French index, is down about 2/3 of a percentage point. The DAX has lost over 1%. So European markets are a bit nervous. But back home in India, there is no nervousness. 23,300. And to run you through some of the big movers on the way up, many of the FMCG names. So Tata Consumer right on top, 7.5% at the day's high. Nimesh will tell us more about why Goldman is bullish now on Tata Consumer, but Titan, Britannia on the buyers list, and Trent at that. IndusInd Bank continues to see buying from yesterday. Auto names like TVS Motors, Maruti up nearly 2%, and IT is having a good session led by Tech Mahindra. Even though the Q4 numbers are likely to be subdued, IT stocks are higher. On the way down, you've got BEL, that's the top loser, down 3.5% today, 6.5% over the last 2 days, as the street is disappointed by the overall FY25 performance. And considering where the valuations are, stock has taken a bit of a knock. And other losers include Agritech, Power Grid, Nestle. HCL Tech in the IT large cap space is under pressure, and that's because of the JP Morgan downgrade.
Yes, so those are some of the key moves and shakers. BEL falling because they've missed their order book guidance for the year, bit behind the curve. And the market doesn't like that, especially when you have other defense majors really piling in the orders. So that's why that stock is under pressure. But look at the broader market. The broader market is behaving as if it's already moved on beyond the event, beyond the 2nd of April. Because there's such action in individual names. Kalyan Jewellers, let's pull that one up, 9% higher, suddenly drawing in a lot of momentum in the last hour and a half or so. There we go, days high on that stock. Look at V-Mart Retail. We caught up with the management in the morning. They were sounding confident. They've fourth quarter is even better than third quarter, 17% growth in terms of the top line, 8% same-store sales growth. And the stock reaction is on your screen. CSB Bank, again, a stock reacting very well to the fourth quarter update. By the way, once again, I'm just looking at Bazar style retail, because same time yesterday, this stock was, really on a flight. And today it's up 20%. So there's some serious buying going on in this small cap name. Many such movers and shakers, actually. Look at Galaxy Surfactants, for instance, 8.5% on the upside there as well. So largely speaking, the mid-cap market is alive and kicking. And Nigel, I completely take your point. I think traders want to believe that the worst of this uncertainty is over and then it gets better from there. The only caveat is this FPI selling number. 2 days running, it's very heavy-duty selling. And that ends up souring sentiment in the broader market. So if that continues, it could be a bother. Let's see.
I agree, absolutely. That FI sell number is something that you'll have to track. For the time being, it seems that the domestic money is doing what it can do. You're waiting for the outcome of what President Trump is going to say. But I think from tomorrow onwards, we'll have to track the FI number. Maybe they're lightening some positions ahead of the event. But let's see how this goes from here on, because in the last few trading sessions, they were showing signs that they want to come back into the Indian markets. But a good session, I'll say, for today. Midesh Thakkar joins us. Midesh, well, the markets are doing quite well, and the Nifty Bank is now up 450 points. It's back above that 51,000 odd mark, which yesterday it broke. What's your view on both the Nifty as well as the Nifty Bank, or would you take a call today that is too much volatility? You want to, exit positions and not take a position on the Nifty and just keep it on stock calls?
See, I think I wouldn't go with the idea of too much volatility in good afternoon, purely because of the fact that, my sense is that this is a market which is positively biased. We have 2 days of some kind of a negative movement, but now I think, the market is playing catch up nicely. And therefore, this is a time to possibly maintain on to hold on to your long positions. And then let's hope that, the up move kind of continues and extends. So my sense is that stay long. I think today we've got the bounce back, which I was looking for in the last 2-3 sessions. I have a buy on Indus Tower. Obviously, Idea news yesterday was good, but then yesterday markets fell, so it came down. But today it's picking up steam again. I think this is heading towards levels of around 375, 380. So buy here with the stop at 355 or just below it. And IRB Infra is another one that's a buy as well. Keep a stop just around levels of 45.5. Look for targets of around 49.5.
Okay. All right, Midesh, got it. We'll come back to you with some more questions in a bit. Before we talk more equities and, of course, individual stocks and ideas, let's talk about the money markets, because we've seen, very clear weakness in the rupee, and bond yields have had a really sharp fall, almost 10 basis points. And this after the RBI decided to go ahead with an 80,000 crore rupee, bond purchase in this month. This, of course, announcement came in yesterday. It's going to happen in multiple tranches, but that is the kind of liquidity that the RBI is going to be infusing in the market. This is just in April. Lata is joining in to make sense of this development for us. Lata.
A 10 basis point fall is rather unusual. So the benchmark 10-year, now the new 10-year has fallen from 6.58 to about 6.49. So basically 9 basis points at least of fall. And that is, as you said, because of this quite unexpected 80,000 crore bond calendar. Very rarely does the Reserve Bank say that I'm going to do one every week. And it's, 4 bond auctions of 20,000 crore each. It indicates a determination of the part of the RBI to keep liquidity plentiful. Actually, we ended the financial year FY25 as well with a decent surplus in the interbank borrowing market. What you call core liquidity was positive surplus by about 1.5 lakh crore. And the Reserve Bank coming proactively and saying we will be doing every week indicates that they probably want to keep the liquidity at a 2 lakh crore surplus. The market is reading this as extremely dovish because that means they will be dovish in the monetary policy coming up on Wednesday next, April 9th. A rate cut was always factored in by the market, but now the market's reading more. Will they also go in for a stance change? The stance currently is neutral. Will they go in for something like, a more accommodative stance? Will the language change? And therefore, you are seeing a fairly outsized reaction in the bond market. But now the 25 basis point rate cut expected on April 9th is completely priced in. And then, of course, there are other small positives as well. The US bond yields have also fallen, and there is rising talk, including from Goldman Sachs, about a possible recession. So all that is also abetting the rally in the Indian bond market.
Okay, all right, got it. Lata, thank you very much for that. So that's, of course, the local development that's driving up bond prices today. And, of course, tomorrow we'll have the big global Q to talk about as well. Let's take the conversation forward. We have Prakash Diwan joining us on the show this afternoon. Prakash, great to have you on. I want to start first with Tata Consumer. In fact, I think we'll have Nimesh join in just a bit with the highlights of that brokerage call. This is Goldman Sachs, and they've said a bunch of things, including how the tea business will improve, and they're expecting better EPS growth as well in the next 2 years, FY26 and 27. What are your thoughts on the stock?
Good afternoon, Supreet. So I think what's probably getting factored into this positive note from Goldman Sachs is very clearly the fact that Tata Consumer in the last 18, 24 months has been consolidating around this zone quite significantly. They've done a lot of things to kind of change themselves organically in terms of price points, in terms of product mix. There's a massive change in the last 2 years. So the first 2 years post the pandemic was like recovery. This is really kind of building themselves up for the next phase of growth. And that's it. That is something which will start getting EPS accretive. So my sense is that's what the brokerage house is talking about, or is trying to factor that in and explain to us that whatever changes they've done in terms of segments, and as you rightly said, some of the segments haven't deepened enough in terms of whether it's the mix or the price point. We've not heard of any innovations that they've done in most of these areas, and they potentially have so much to do, possibilities of doing so many newer things. The acquisitions that they've talked about, they've not been harvested fully yet. So all that assimilation is probably now done, and then you'll probably see a very significant upside in the next 12, 18 months. But remember, a lot of the consumption expectations are built into because of the this theory of more money in the hands of people. The monsoon should be decent enough. Some of the smaller ones like V2 retail have already quadrupled in the last 12, 15 months, given certain pockets where they are present, having done so well, whether it's UP, Bihar, thanks to Mahakumbh and all of that. So Tata Consumer is more of course, pan-India, so they'll have to wait longer to see all that benefit. But subject to that consumption boom, a pickup, let me not call it a boom as yet, but the pickup in consumption, I think they will outperform the broader markets, and particularly in the segment.
Okay, all right. Prakash, request you to stay with us. Let's focus on a couple of those names itself. Tata Consumer, that's one of the big stocks in today's trading session, one of the big gainers. It was our stock on standout brokerage report as well, and that's clearly caught everyone's attention. Nimesh, run us through the details of the report.
So, as you said, we highlighted this in the standard brokerage as well in the morning, and clearly it looked like this will be the stock of the day. After a very long time, you're seeing an upgrade on a stock like Tata Consumer, and the reason for the big upgrade is the fact that Goldman believes that there's going to be a big revival in earnings for Tata Consumer. So, from a stock point of view, they upgraded the stock to a buy from neutral, and they've raised the target price on Tata Consumer to 1200. Now, Goldman believes that the company is poised for a very strong EPS growth over FY25, FY27, and that will be driven by three key factors. The first factor is that recovery of tea margins, because they've hiked prices there. Second is strong innovation and distribution expansion on the growth businesses. That's going to be the key focus area for Tata Consumer going forward. And the third one is low interest cost, because a lot of the acquisition that they've taken, that's been paid down. So on back of all these three reasons, Goldman has increased the EPS estimate for FY26, FY27 by 3 to 7%. And Goldman believes that within the FMCG basket, Tata Consumer is going to report the strongest earnings growth going forward. So that's the reason why there has been a big upgrade, and we've seen a very big reaction on Tata Consumer today.
Okay, all right. Nimesh, thank you very much for that. It's a big one, right? I mean, it started off in a very, very strong way, and it sort of continues the move that it is seeing at this point in time. By the way, it's a day full of lots of movers. The biggest volume-led gainer this afternoon is Kalyan Jewellers. It's a 10% move coming through on Kalyan at this point in time. We already, of course, discussed Tata Consumer, but look at Style Bazar, which is up 20%. V-Mart is up about 11.5%. And a few others as well. I can spot KPR Mills, which is up 6.5%. These are all names which will be in focus. Prakash, you've discussed the outlook for the entire spirits industry more than a few times here on the program. How does this stack up in relation to tariffs? We charge 70-80% tariffs on imported wines and liquor, etc. Now, US is not the big geography from which imports come in. It's more UK, etc. Yeah. But what is your sense? I mean, what does it mean for if we are, as reports have been suggesting, willing to lower tariffs substantially? What would it mean to pricing here for incumbents, etc.? Go on.
No, that's an interesting space. Generally below the radar, doesn't get discussed much. As you rightly said, the significance is a function of the size, and that's not too much. But remember, sometime back we had tariff reduction, duty reduction in the bourbon category, and bourbon as a segment in India is too minuscule. I mean, except for some of the well-known brands, we really don't see much of things coming from the US. But globally, bourbon stands as the second choice to single malts. So it's like for whiskey drinkers, it's a choice between these two largely. It could probably be skewed at 60-40 or 65-35 in terms of choice globally. But in India, I think as a percentage, it's not even 3% of our IMFL sales. Non-IMFL sales. What happens is it opens up the gateway for the American industry to be able to supply a lot of other varieties, which we have not kind of seen very positive response to. And this could eventually become a very large flow. It's something like California almonds. We've been having almonds all our lives, but the moment California almonds started coming into India in a significant way because of the favorable duty structure, they flooded the market. This could happen to some of these segments. I don't think wines is a great area from California to be welcomed here because there's lots of competition globally. But yeah, whiskeys, yes, and I think bourbon is the one that will stand out. So impact on Indian companies, I don't think Indian companies have to really worry about because that segment is very different. It's niche, and then the hit will probably be with the Scottish imports. There, the big elephant in the room is the FTA with the UK. If that were to go through, you'll probably see a far bigger impact in India on liquor sales rather than the US tariff changes. So hopefully it won't be disruptive. Will probably be conducive, will grow the market. And that's always good for either distributors or for the importers. There's lots of other people who will benefit if that happens. But I don't think it's going to be negatively disruptive for the Indian players as yet.
Prakash, BEL, 7% gone in 2 days. The top line looked good, 16% growth last year, but the company achieved only 75% of its order inflow guidance. It's still a big number, 19,000 crore, but it fell short of expectations.
No, Rima, I think the expectations were too high. And to be fair, the order book swelling up in a very short span of time was something which is, you've seen that in shipbuilders as well. There are lots of shipbuilding companies which saw a very significant ramp up in order books, and then the execution, of course, takes its time. Fortunately, for BEL, there's much more shorter cycles in terms of whatever product life cycles that they look at executing. And there are a lot of, this whole new set of products that will also start getting eligible for export. So it's no more import substitution for BEL. And there will be a significant amount of electronics and telematics and all, informatic related stuff which goes into modern warfare. In fact, hardware is getting replaced by midware and software. So that's where, BEL could probably benefit. So I think any dip you see, given the expectation mismatch, is actually a good long-term bet to hold on to. In fact, it becomes a proxy to the defense play. Any order that you see getting, outlaid by the government, BEL always has a share in that. So, whether an HL gets it or a GRAC gets it, it's not very sure, but a BEL definitely gets it. So I think from that perspective, the participation will be even better going forward. The conversion in terms of realization will be better. So I think it's a good buy on dips. It had run up, it's lost some ground, it'll probably go back to its earlier highs and even go beyond that. But you'll have to be patient because the segment is such, it depends a lot on the announcement from the government and execution thereof. So, but I think I would not be really worried with these numbers, just saying 75% of a very larger book that they've built up for themselves.
Okay. All right. Prakash, good to have you on today. Thank you so much for joining in and sharing the perspective on all the themes that we have discussed. We do have to take a very quick break. Come back on the other side and we'll have Rahul Veera from Nippon India AIF joining in with some perspective on the market.
Baton of power set to shift, Bharat's youth will drive the next wave of change. The biggest leaders and policymakers. Global trendsetters, business icons, and entrepreneurs will come together to inspire the next generation of change makers. Don't miss your chance to witness it all live. Rising Bharat Summit 2025.
મારું યાત્રા ચાલે છે પદયાત્રા.
Welcome back. Time for our special segment now, Midcap Microscope. Nigel today puts the spotlight on a stock that has outperformed the broader markets and is also near its all-time high. But the question remains on whether the rally can sustain.
Welcome to Midcap Microscope. The stock on our radar today is Welspun Corp. Remember, the stock has outperformed the broader markets. But is this rally justified? Let's break it down for you. Welspun Corp is a leader in pipe solutions. That includes the large diameter pipes, the ductile iron pipes, and the stainless steel pipes as well. But they've also expanded into building products after acquiring Syntex. So now they're into the water storage tanks, and they're also foraying into plastic pipes too. What's encouraging is, despite the heavy capex that they've lined up over the last few years, they have kept their balance sheet lean by the operating cash flows as well as exited non-core businesses. And that's what's helped them turn from a net debt company. Currently, they're in a net cash position. For FY25, they have guided for an EBITDA of around 1,700 crore rupees. But there are various triggers in place which could help them scale up this EBITDA number. Trigger 1, their order book is at a massive 20,000 crore rupees. And guess what? 60% of it comes in from the US market. And that, remember, is a margin accretive business. In the past fiscal, this US business did not contribute much to the EBITDA number. Trigger 2, 1,600 crore rupee expansion has been announced in Saudi Arabia for LSAW and ductile iron pipes business. They've already signed an MOU with Saudi Aramco, and that's a big deal. And looking ahead, well, Welspun is launching its plastic pipes business in the first quarter of next fiscal. Peers in this space, well, they trade at very, very hefty valuations. So if they can scale up this business, there could be some serious value unlocking. Finally, the company is implementing a turnaround strategy for its subsidiary, Welspun Specialty Solutions. That's post its rights issue. And now they have a solid balance sheet and good order book visibility as well. This segment could meaningfully scale up for future growth. So while Welspun Corp appears to have a strong growth trajectory, there are some risks that investors should be mindful of. A significant portion of its revenue comes in from the large infrastructure projects in sectors such as oil and gas, water supply, and construction. For example, the National Gas Grid as well as the Jal Jeevan Mission. Any kind of delays, cancellations in these projects could impact the earnings. Also, the success of its plastic pipes business remains a little uncertain. If the product launch is not up to expectations, it could impact investor sentiment as well. Well, before we wind up, let's sum things up for you. Welspun Corp has a solid order book. They're expanding into high-margin markets. They're also eyeing new business verticals. So it's well positioned. However, execution risk and external factors could weigh. Will the company capitalize, or is the market being overly optimistic? Let's stay tuned to this one.
Well, it's very, very interesting. Welspun Corp, stock's done, relatively it's done phenomenally well because it did not fall when the rest of the market fell. And so in that sense has been an outperformer. Well, we of course will talk more about this and more, but let's welcome in our next guest. Rahul Veera is with us, Fund Manager, Equity Investments at Nippon India AIF. Rahul, good afternoon. Good to have you with us here. Before I come to you, I just want to quickly once again put out that table which we've been sort of discussing. This is sector-wise implications. We'll talk about the broader market, but let's maybe just focus our minds a little bit in terms of individual sectors where this impact may show up. And that is the table that we've been highlighting. Chemicals and pharma is a high tariff differential sector. Textiles and clothing is very large. And agri and meat products is another one which is extremely, the differentials is very large. So, that's where there is, vulnerability is a little higher in that sense. Rahul, so let's just start with the tariff bit, right? Now, broader market, etc., we'll talk. But I think you do at the margin, like chemicals as a space, you see some opportunity there. What is your sense? That table just showed large tariff differential between what US charges, what we charge as a sector. And a lot of the chemical business is value addition at the end of the day, right? We don't make everything, it's not completely backward integrated. So we buy from somewhere, add value, and then sell, export, etc. Is it a space which gets hurt if tariffs are changed substantially? What is your sense?
See, overall, the specialty chemical market, right, globally is close to $700 billion. India is doing close to $35 billion of exports as of now. So even if 5% change happens, right, from a global supply chain perspective, there's an incremental opportunity for India. So from a perspective that China will also face some tariffs, which is one of the largest exporters, we would have an indirect second order benefit for India from a volume share plus market share gain. So from $35 billion, we can probably move to close to $50 to $60 billion. So very large opportunity for chemical manufacturers, which will be offset by volumes given the tariff structure that will come possibly on the Indian manufacturers.
Right. No, you're saying if tariffs on India are raised to say 10-11%, it is positive for Indian exports.
So it will be benefited directly by China volumes as well. So the tariffs will also be applied to Chinese manufacturers.
Correct.
Yeah. So the differential between Indian tariffs versus the Chinese tariffs, there is still a large differential there. So the volume growth for Indian manufacturers will be relatively better off.
Got it. The only thing is that the cost of production in China is already low. Scale is much larger. They're much more backward integrated. And China, lots of industries receive state support. They may decide to do that, which is not the case here. So there are lots of variables, right? I mean, is it as straightforward?
No, so specialty chemicals wise, right, India is relatively better off. So whenever there is a chemistry, right, between volumes and value added, volume China is relatively better. Whenever there's a value add manufacturing process is concerned, Indian manufacturers are relatively better off. So whenever there is a little bit complex chemistry, right, Indians are relatively better off if you see all the competitive chains.
And which names specifically, Rahul, if you want to sort of just highlight a few names here in the specialty space?
Some of the fluorochemical manufacturers, right, where there is a consistent contract manufacturing opportunity is consistently increasing there.
Okay, and pharma also is another area which you like. Again, we don't know if tariffs will go up or not, but irrespective of it, you think it's a good. And US generics, yeah.
Yeah, so US generics export from India to US is close to $10 billion. Almost 40 to 45% of RX that is given in US, right? If the manufacturers are from the Indian manufacturers. We believe going forward, right, if there is a tariff increase, some of the molecules will be taken off by these large manufacturers given the low ROE kind of a business, but that will eventually be good for some of the other manufacturing companies who are doing large-scale manufacturing of that particular molecule. So some of them will close down the exports to US, the other ones will start exporting all the more. So it will become more of a volume game. Whoever is large in particular molecule will do relatively much better now. Plus the pricing impact because of the lower competitive intensity that they will get.
Okay, hi Rahul, good afternoon and good to see you, Ben. Well, let's keep the tariffs out of the way for the time being. Let's focus on the domestic stories. I believe you like cement. What do you like from there? It appears that pricing hopefully has seen a bit of a bottoming out. Volumes, I understand, have picked up as well. But how do you play this theme? Because you have two large conglomerates in there that are fighting for market share. And because of that, we're seeing a push through of volumes. So give us your preference in that space.
Right. So top four cement manufacturers, right, are almost having like 65 to 75% of the regular capacity-wise volume share. Now, going forward, what will happen is a consolidation that had to happen from the mid-cap and the small-cap space. Largely 70% of the possible acquirers are done. Going forward, a few names might be acquired going forward. So this consolidation over the next 3 years seems to be very positive. Also, last year, given the low base of volume, right, 4 to 5% of volume growth that we saw last year, we believe the government capex will help push the cement volumes, plus the pricing impact will play out. So from a 1 year perspective, definitely the base impact will come into play. But from a 3 year perspective, the consolidation will help the industry overall.
Rahul, hi, afternoon. What else do you like? So if you're not too worried about India, the tariff threat and the impact that it will have on India, what are you doing with respect to your portfolio?
So we are very bullish on power sector. Right. So if you see the budget, right, the government allocation within the capital outlay of 11 lakh crore that they're given. So all the other subsectors other than the power, whether it was rail, roads or defense, had kind of a flattish outlay. Only power sector saw 14% of an incremental outlay YY basis. So we believe power sector is one of the themes that we need to consider from a long-term perspective. Also, if you see the overall policy for the government, right, there is a 9 lakh crore kind of an outlay over the next 10 years for the overall power distribution segment, out of which 3 lakh crore has already been tendered out. The other 6 lakh crore is expected to come over the next few years. Now, within this, we expect not the direct power generators, but transmissions, EPC players. There is enough opportunity over the next few years to generate decent alpha in the portfolio.
I was speaking to one of those players in the morning today, KC International. They completely, their outlook on the business concurs with your view that there's a lot of activity in the T&D segment going on. And they're beneficiaries of that, among other companies. Got that point. Rahul, let's talk about some of your other, preferred areas in the market. I think you like banks. You also like pharma. On banks, there's a big debate raging. There's this whole talk about whether credit growth will not pick up to the extent that one would have liked, whether it'll still be 10-11% credit growth this year. The other part of that debate is whether the best of the NIM phase for Indian banks is over, because you're just not getting low-cost deposits anymore. So then what will be the play here? I mean, what is it that will make bank stocks outperform the market?
Right. So see, if you consider NSE 500, right, the total profitability pool was close to 15 lakh crore last year, out of which 6 lakh crore, almost close to 40% the profitability pool comes from the banking sector. Now, for the past 5 years, even though the EPS compounding CAGR from 2019 to 2024 for the banking sector was close to 12 to 15%, but given the X of bank, NSE 500 companies were growing at 25%. So technically, the banking sector never got re-rated in the past 5 years. So going forward, again, X of banks, NSE 500 will be close to 10 to 12% kind of a PAT growth, but the banking growth will continue at 12 to 15%. So slightly better off than the lot of small cap, mid cap names will be continuing to do better. Hence, we believe that there will be considerable shift, even though the ROEs or the ROIs of the names are largely behind, but the valuation comfort is something that we are looking forward to. Now, on the credit growth, although the 10 to 11% expectation is pending for most of the street players, but we believe ideally 10.5 or to 9.5 will be the place where credit growth will take place. So a lot of the funding, right, recently on the credit growth side was directly done by the capital market itself. A lot of equity funding, QIPs prep over the last few years we saw. So that is kind of a slightly marginal impact on the credit growth that we saw in the industry. Then that will continue going forward.
Rahul, what about technology? Earnings is expected to be weak. FY26 is going to be a very subdued year in terms of growth, perhaps no better than what we had in FY25. Earnings estimates have been brought down, but stocks have also corrected and valuations have derated. So now how is the risk reward for tech?
The downside overall for the IT sector will be limited from here. So from the large cap perspective, 3 to 5% of the broader CC growth that is expected by the street. And for the mid cap names, 10 to 15% is the broader range. But the corrections across the large cap, mid caps has already taken place. 5-year average Ps are back to where they are. We believe downside will be limited, but at the same time, even upside is going to be very limited. We are overall underweight on the sector as of now.
Underweight on tech, no upside, no downside also. That's the view coming in. Rahul, thank you very much for joining in. We'll get into a break. On the other side, we'll get you a check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you a few BTST calls from our experts.
જામનગર અમારા ઘરથી દ્વારકાધીશ સુધી અને બસ આ બધાના આશીર્વાદ રહે અને શ્રીજી બાબા દ્વારકાધીશના બધા ઉપર કૃપા રહે આ જ મારી પ્રાર્થના છે અને અમે હમણાં પદયાત્રામાં 5 દિવસથી ચાલીએ છીએ અને 2-4 દિવસમાં પહોંચી જશું. દ્વારકાધીશનું કૃપા રહે અને બધા શ્રીજી બાબા બધાને સંભાળીને રાખે ને બધાને આશીર્વાદ આપે. બધા યુવાને ભગવાનના પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને સનાતન પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને બસ એ જ મારી બધા યુવાને એક મેસેજ મોકલાવું છું મારા ભાઈઓ અને મારા મિત્રોને કે આપ બધા શ્રીજી બાબાના આશીર્વાદ લઈને આગે વધો અને જ્યારે ભગવાન છે તો કંઈ ચિંતા નહીં કરવાનું.
Investing.
Welcome back. Just highlight a couple of stocks that have moved to the day's high. Sun TV, that's been a big underperformer. It's seen a big correction from the recent peak, and we've normally seen it around the 650 odd levels. It gets some kind of valuation support because of the IPL franchise as well as because of the cash in the books. That one's moved to the high point of the day. And the other one is BDL. Bharat Dynamics just came out with the release on the BSE. It appears, at least first look at it, the street likes what they had to say. So that is well seeing a bit of an uptake. But it's that part of the day where we get to D Street Chatter. Nimesh is back with us. Nimesh, how are you reading today's trading session? It seems the bulls for the time being are going with an optimistic scenario. Markets at the day's high.
Nigel, you know, a bit of confusing market for the last couple of days, right? Yesterday there was no reason for us to fall 300 points on the Nifty. Yeah. Of course, post markets we got to know that there was a large FI selling. Today we've recouped half of the yesterday's losses, but again, no specific reason for stocks to go up just one day before a very large event. So it looks like it's a bit confusing from a Nifty and a Bank Nifty point of view. But what is consistent is the outperformance in the broader markets. Even yesterday when the Nifty and the Bank Nifty was down, mid-cap index was buzzing. I spoke about a lot of SME stocks were up 8-10%. So that trend of mid-cap outperformance continue. Index is up 1.5%. The breadth is quite strong, and there is momentum in general in the broader market stocks, even in today's market. From a flow perspective, again, it looks like it's a mixed day. I haven't heard very large selling or a very large buying from larger institutions. So I guess it's a wait and watch out of the big event which will come out tonight. So I guess markets will react big time tomorrow on that tariff thing. So that's something to watch out for. Real estate as a space is doing good today, but I guess it's a combination of short covering as well as buying. There is a small buying is what I understand across real estate names, but I guess it's also to do with a bit of short covering. after yesterday's fall on that Maharashtra news. So that's the sector to watch. I guess tomorrow a lot of sectors like pharma, IT, and textile will react, and which we've been highlighting as well throughout the day. So nothing big to talk about that. But I guess at least from a larger institutional point of view, it's a wait and watch out of the big event tomorrow.
All right, on chatter, we want to tell our viewers, I'm lucky I cleared a couple of my doubts before Nimesh goes live. But Nimesh, which are the top stocks that you picked out for our viewers?
Sure. So in terms of individual names, I'll start with a couple of pharma stocks. Well, of course, it's going to be a big event tomorrow. But for the last few days, there has been consistent selling in some of the pharma names, especially Dr. Reddy's, which has been selling for the last many days. And today, for a change, there is a selling in Aurobindo Pharma as well. So both these names will see high delivery-based selling. And that's to some larger FISMs to be selling on those names. So that's the first couple of stocks. The second stock is Paytm. That's been buzzing for the last few days. Even today's market, it's been buzzing in trade. The volumes on the higher side. I guess for Paytm, the street is anticipating that there could be some clarity with regards to the MDR. And that could be a significant trigger for Paytm going forward. So that's something to watch out for. Maybe something is likely in the next couple of days on that MDR front. So that's to watch out for there. The third stock is delivery. This is going to be quite interesting. The stock has been correcting in the last many weeks now. In the last few days, you've seen a bit of consolidation, a bit of buying as well at lower levels, almost at 52-week lows now. But now I understand in delivery, there could be a corporate development, a potential inorganic move is what I understand in delivery very soon. So that's something to track there. And the last name is Godrej Properties. I spoke about some bit of buying in real estate names. Godrej Properties stands out in terms of all the real estate stocks. This is one stock which was well bid, the volumes on the higher side, and looks like some institutional interest is back in Godrej Properties at current levels.
Nimesh, thanks for that. By the way, hearing anything you've heard on Kalyan?
Well, Prashant, there is a lot of chatter going around about, again, a possible corporate development there. I'm not sure whether, in the cool-off period, whether the company can announce a buyback or anything of that sort. But that's the kind of anticipation which is there. And I guess that's the reason why you're seeing aggressive short covering in Kalyan as well today.
All right. We'll see if that comes through, possible or not. I think that's the buzz at least, but big move, about 11-12% or so, 510. Mitesh is with us with what to do in the near term, buy or sell for a reverse trade when we come back tomorrow. Mitesh, what does one do? Mitesh, you'll have to unmute yourself, please.
Kalyan Jewelers is one of the BTST calls for me. In fact, that's a stock which has done well and closing with some kind of a reversal sign today. So BTST here with the stop at 503 for targets of 522, and the other one is Jubilant Foods. I think that's also near the day's high. BTST here with the stop at about 677 or 676 and the target of 695.
Got that. Nimesh spoke about Godrej Properties, but generally most of the Mumbai-based real estate companies have rebounded after yesterday's fall. So Macrotech Developers 5.5% up. Oberoi Realty is also gained close to about 3% and the broader markets are picking up in terms of momentum. The mid-cap index is up 1.6%. The small-cap index has moved to the day's high, inching towards a 1% up move. But let's talk about IT. JP Morgan has come out with a preview note for Q4, and they're saying with the NSE IT index down 14% on a year-to-date basis, a lot of the negatives are priced in. They're going to play for relief rally in beaten down names. So their preference lies with Coforge, Infosys, KPIT Tech and Tech Mahindra. They're avoiding a TCS, Wipro, HCL Tech, Tata Tech and Tata Elxsi for the quarter. Two changes that they've made. One, a downgrade on HCL Tech to a neutral from an overweight, and the key reason is that Q4 is likely to be soft. Deal momentum has been a bit subdued, and therefore FY26 could see lower growth compared to FY25. They've cut the target price to 1700, and they've upgraded Tech Mahindra to a neutral, because here the premise is that when all the companies are struggling with growth and we are in a low growth environment, this is a company which is reporting margin increases. The company is on a margin improvement trajectory. From 10%, they want to bring it up to 15%, and that will help the overall narrative. So that's the call. TechM up 2%, HCL Tech under pressure.
Absolutely, and it's the IT stocks in focus now. Trump's Liberation Day, the 2nd of April, is here. I mean, and investors, of course, are awaiting the tariff rollout. Let's actually get to you a more logistical piece now about how this is going to happen and when will we hear these tariffs, etc. This is Karen Zoe of CNBC Network with details.
We're now just hours away from President Donald Trump's tariff announcement, with America and its trading partners holding their breath. The White House has provided little detail on what to expect, but what we do know is this. Reciprocal tariffs will take force from today, immediately after the announcement. Treasury Secretary Scott Bessent has labelled this as a cap of the highest duty level, which could go down if countries meet demands. On Tuesday, the Washington Post reported that one draft proposal would see the US impose a levy of 20% across nearly all imports into the United States. A blanket tariff is a potential. Donald Trump will deliver his tariff announcement in the Rose Garden today at 4 p.m. Eastern Time. That is 9 p.m. BST, in an event that some are calling Make America Wealthy Again. Alongside reciprocal tariffs, there are further measures coming to effect from today. The US will place an extra 25% levy on countries that buy oil from Venezuela. It will also lift the pause on additional duties on Mexico and Canada, and the 25% tariff on all autos imported into the United States that Trump announced last week will come into force from today. So even complex on the detail we already have. Now, Europe is planning to retaliate. European Commission President Ursula von der Leyen has vowed to respond with a strong plan against the US, telling the EU Parliament on Tuesday that the bloc holds a lot of the cards in negotiations. Meanwhile, UK Prime Minister Keir Starmer has reportedly told cabinet members they should brace for tariffs to hit the UK from today, but that he remains hopeful of striking a deal down the line. Starmer has already signalled he's willing to pare back the UK's digital services tax on American technology companies.
Okay, well, Karen, thanks very much for that. We've been, of course, taking stock of sector-wise implications here. And pharma seems to be in a bit of a crosshairs as well. And lots of divided opinion, though. It's an essential sector providing essential medicines to the US. Will they really go ahead and increase tariffs for this? Some believe no. Others say, well, you know, it's going to see tariffs going up as well. Vinny is here with company-wise sort of data, exposure to the US and what could implications be at a certain level of tariff imposition. Vinny, over to you.
Afternoon, Prashant. So yes, in terms of India, as of now, as an overall basis, you see for pharma imports from the US, they do charge around 10% tariff coming in, while US doesn't charge any tariff, and that's where the issue comes in, right? So at the best, the highest that we could see a tariff that everyone was indicating would be around 10% that we could watch out for in terms for Indian medicines that are imported to the United States. Now, who is at risk and which companies face the most risk in pharma as a sector as a whole? Generic players as well as in terms of CMO players. That's the contract manufacturing companies which face the most in terms of the risk that possibly one could see coming in from these tariffs. Other than that, you know, in terms of exposures that one has, if they do imply and there is an implication of around 10% tariff, then there would be an impact of one-time EBITDA hit for most of these companies in the range of around 9 to 12%. Gland Pharma, that has the most amount of exposure to the United States, 50%. So the EBITDA impact on the company would be around in the range of 8 to 10%. Aurobindo Pharma is the second one, 48% exposure. That 12 to 13% would be the impact on the EBITDA for the company. Negative impact is what I'm saying, that they would take a hit. One-time hit is what they're saying, followed by Dr. Reddy's, Zydus, Lupin, Cipla, and Sun Pharma. But do not forget, some of these companies do already have a facility coming in, right? Trump wants to put these tariffs. Why? Because so that companies can open manufacturing over there, and manufacturing in United States is improved. So that is one factor that comes into play. So some of these companies who already have an exposure or already have facilities are Cipla, Dr. Reddy's, Lupin, Syngene, Piramal Pharma, as well as Sai Life Sciences. So the impact on these companies would be a bit lower. Even if they have to set up a facility or anything that comes on that front, then these companies have a better positioning than other companies.
Okay. All right, got that, Vinny. Thanks very much. So, awaiting more clarity for the pharma sector as well. Let's take this conversation forward with Mayuresh Joshi, Head of Equity Research at William O'Neill. Mayuresh, thank you for joining in. You know, that's the thing. I was just looking at Bharat Forge's stock price. We'll talk pharma in a bit. But for instance, Bharat Forge, Baba Kalyani admitted to us that out of his total exports, 20% is to the US market. However, there's too much that's up in the air. They're also trying to, for instance, optimize their US plants. So even stocks that have exposure, direct exposure to the US, they haven't like fallen off the cliff. Let's get the Bharat Forge stock price if we can. In fact, in the March move, the stock had a pretty decent rally. That's today. Let's pull up maybe a 1-year chart or a 6-month chart. March, the stock did really well. April, it's come off just about 10 rupees from the top. So, my short question really is, should investors be worried about these kind of stocks, Bharat Forge, some of these pharma names, large generic players that have exposure to the US?
Afternoon, Surbhi. No, to a certain extent, I think how the entire tariff scenario is going to play out is a large unknown at this point of time. And therefore, I think tonight's announcements will probably lay a base case scenario on what the Trump administration is looking at countries, at specific sectors, and the longevity in terms of these tariffs and the reciprocal tariffs that can probably come through as well via each individual country as well. Therefore, the risk factor here is that if the longevity of this tariff announcement continues without any negotiations on the table, companies will take a hit. There is no two ways about it. Obviously, I think it means that goods will be a little bit more dearer to the US consumer. And how does the US admin play that around is something to be seen. Obviously, for companies like Bharat Forge as an example, they have been diversifying, obviously from the non-US business, from the truck business as well, specifically Class 8 trucks, more or less into defense and other areas as well, like railways. And therefore, I think the growth that can come through from these segments, whether that offsets any kind of incremental damage that the tariffs probably do, is something to be seen. And obviously, I think if this happens, as I said, it's an EBITDA and an EPS hit that these stocks do take. But again, I think out of all the stocks that you mentioned, pharma is one sector where our belief is as a house, where the tariff imposition should not be as severe as one probably hopes it might. Because ultimately, outside the US, India has the largest FDA capacities. If you're probably looking at the generic pricing itself, that is only possible because of the capabilities that have been developed by Indian pharma companies. And obviously, I think for new units to probably mushroom in the US, whether it's a new drug or an abbreviation of an earlier drug as well, I think it takes time and a lot of cost efforts as well. And therefore, I think pharma is one sector where the initial belief is that there might be a huge amount of impact that can come through. But our own sense is that this sector might be a little bit less skated. We continue holding, as a disclaimer, stocks like a Sun Pharma and a Lupin in our group.
Absolutely. Mayurish, stay with us. We're going to take a quick commercial break here. There's 8 minutes to go for close. Markets are doing very well. 165 points, so recovering more than half of what they lost yesterday, at least on the Nifty. Back in just a bit.
Welcome back. Markets looking good, but the sector that's really bounced back today is the real estate space. And DP Realty is another stock that's up close to 13%. The sector on the whole, in fact, the index is the biggest gain, up 3% today. Mayuresh, anything you like from here?
Yeah, hi Nigel. So again, I think the real estate stocks are bouncing back with the announcement which happened after the budgetary session as far as Maharashtra was concerned. But I think we like the proxy players more at this juncture compared to the main developers, Nigel. And therefore, housing finance companies, as an example, stocks like a PNB Housing Finance, which has done exceptionally well in terms of reported numbers. The NIMs have probably remained far more stable. The expectations in terms of their emerging portfolio, which has a higher yield business, is expected to do really well going forward as well. And that should probably take center stage, because as that probably improves in terms of the overall pie as far as their entire product mix is concerned and the segmental mix is concerned, the expectations in terms of asset quality pressures specifically for this segment, I think a little bit older on as we speak. And therefore, I think better credit underwriting with expectations of lower cost to income ratios and better growth dynamics might actually keep these housing players probably more in the limelight. So something like a PNB Housing, a Canfin Homes, a proxy to the real estate players is something that we like at this juncture.
All right. What about the pipe makers? Mayuresh, we just put out a piece on Midcap Microscope on Welspun Corp. Talk about the mid and the small cap still being far away from its all-time highs, but this one's been making all-time highs. And normally the Welspun Group stocks are a little bit jittery when the markets get jittery, but that's not been the case this time around. They also have their unit in the United States itself, which will protect them from any kind of tariffs. Any view on this stock at around 850 rupees?
So very positive, Nigel. And again, I think clear this term, we hold these stocks in our portfolios as well. You're absolutely right. I think they're expanding their capacities as far as the core US market is concerned. They're one of the top 3 players as far as the line pipes are concerned. And obviously, I think the kind of expansionary modes that you've probably seen across the globe in India, the entire context in terms of 11,000 odd kilometers being put through in terms of oil and gas pipelines, the Nal Se Jal Yojana, which is expected to garner steam going forward. There's a 70,000 crore allocation happening towards that. Saudi is having a huge earmark. It's already reflected in their order book as well. The US is having a huge order book earmarking as well, and they've got a decent order book out of that as well. So 15,000 crores worth of orders on hand. Revenue visibility is fine. The expectations in terms of their execution has remained steadfast, and therefore the margin performance has remained extremely solid and robust for the group as a whole. And therefore expectations in terms of the various lines of business actually doing well can actually augur well in terms of their earnings profile going forward as well. Ratings, ranking, institutional holding, whatever we can slim, actually gets fulfilled on all parameters. So yeah, I remain positive and optimistic.
Okay, all right. Mayuresh got that. By the way, some of these consumer stocks are really going home with big gains, not just Tata Consumer, but even Kalyan Jewellers, V-Mart we've discussed, Bazar style retail. Lots of buying in the consumer space. Mayuresh, very quickly, 30 seconds before we run into close. Your favorite non-FMCG consumer stock?
I think hotels, ITC hotels, I think everybody wants to travel. The industry is probably having the best quarter, which is expected to come in the quarter coming by. And therefore, I think the kind of enthusiasm that is probably getting reflected, the kind of demand-supply dynamics that still favor the industry as a whole, I think the hotel industry might probably do well going forward as well. So ITC hotels is something that we can do.
Okay, all right, Mayuresh, just stay on. We'll quickly recap the market close, and then we'll come back for some more questions. It's been a good day, and it's been a good comeback as well by the bulls. Finally, ending with a gain of almost 160 points on the Nifty. That's how this Wednesday is going. And the mid-cap market has had so much of a flare. It's done much better. The index itself is up about 1.6%. And the advanced decline ratio is very positive. 3 stocks advancing for every 1 declining. So good tally there. Let's talk about the large cap winners. Tata Consumer, 7%. Zomato's had a great run today, 5% higher. Titan, it's really consumer all the way. Throw in a Trent there as well, 1.5% on that stock. Maruti Suzuki has had a decent run. Then you look at some other names like Tech Mahindra, HDFC Bank. They've contributed, even Infosys. So IT is not too bad today. Most of these names are up and about. ICICI Bank has been supporting the market. So these are some of the key movers and shakers. Other gainers include SBI, ITC. So these are the other gainers. On the downside, however, BEL, because of the disappointment on the order inflow, they've missed their target for the full year. Nestle down on a brokerage note. Ultratech Cement, Power Grid, and the Bajaj Twins, Finance and FinServ, they've seen some profit taking, but otherwise a great day for large caps.
Absolutely. It's a fantastic day for large caps and a fair bit of gains sort of coming through as far as the bigger stocks are concerned. A good day, especially for the consumer names, as we've been pointing out. So Tata Consumer, Titan, Trent, Zomato, top of the list in terms of what did well. So all in all, a pretty good day and interesting kind of setup as we head into tonight. For the week, by the way, we're still down about 0.8%. That is from last Friday's close. Monday, of course, was a holiday. But the 2 days that we've been trading, we're down about 0.8%. So, and that is, of course, because we had a 300-point dip yesterday and we've only recovered about 150 of those 300 points today. Well, I think it's a wrap of this edition of Closing Bell. We'll take your leave partly. Rima and I will stay on. We'll get your markets forward in just a bit.
If they pump in more capex into their business, then Indus Tower gains definitely, because they'll get better tenancies and they will also get newer towers with that capex. And the last stakeholder is Bharti Airtel and Jio. They are stakeholders to this as well. Contrary to many beliefs, my belief is that a stronger VIL is better for both those companies than a weaker VIL. For a simple reason that a weaker VIL will resort to pricing and discounting. VIL has taken care of its spectrum dues till FY27, and this will allow them to borrow money from the market and pump it back into capex, which allows them to stay competitive in the market. That's immediate gain that they have. The issue is that the problem doesn't get completely solved here, because in March of 26, they'll be due for their AGR dues, and their current EBITDAs do not allow them to cater to that fully, although there'll be some growth in the ARPU, etc. But for now, the money is available with them on their cash flows are not good enough to take care of their capex requirements in the immediate future. So, so they're not completely out of the woods.
મારું યાત્રા ચાલે છે પદયાત્રા અહીંયા જામનગર અમારા ઘરથી દ્વારકાધીશ સુધી અને બસ આ બધાના આશીર્વાદ રહે અને શ્રીજી બાબા દ્વારકાધીશના બધા ઉપર.
Market ends in the green ahead of Trump's big tariff announcement. Nifty at 23,300 levels, but the Sensex ends near 76,600 levels. Real estate, FMCG and consumer durables lead. Broader markets outperform.
The world races for US President Donald Trump's reciprocal tariffs. Meanwhile, sources told CNBC-TV18 India has given a far-reaching offer to bring down average tariffs to the US. Alongside, it's working on different scenarios to assess the possible fallout of US tariffs.
Indian bond yields fall by 10 basis points after RBI signals buying of 80,000 crore rupees of bonds via an open market operation. Market believes RBI may be preparing for a stance change and likely rate cut. Hello and welcome to a fresh new edition of Markets Forward, your go-to program where we aim to get you everything you need as we look ahead into the next trading session. But between today and tomorrow, there is the reciprocal tariffs. I'm Prashant. With me, my colleague Rima. Rima, hi.
Hi, we did okay, right? Benchmark indices up nearly about 0.7, 0.8%. Considering the event risk ahead of us, we did okay.
Yeah, basically 50% of yesterday's losses recouped in that sense. We're still down for the week by about 0.8% on the Nifty. Things did come back in a decent kind of form, which actually leaves things in a bit of a tricky zone because, typically if you get, and the event has been built up so much, and will we get a bit of a relief rally? It's possible. But the market, of course, is bounced today, so maybe there are some expectations already. It's a small one. I mean, it's 1%, 1.5% on the Nifty for the Nifty and the mid-cap and the small-cap indices. But it's possible that some of that is perhaps built in terms of what we've seen. On the other side, there are enough people who believe that even from here, despite all the build-up that we've seen, there is still actually the event itself may prove to be a bit of a risk-off for markets, not just India, globally as well. So, there's no way to tell. And I guess 1:30 a.m. If you're up for it, you can tune into CNBC and hear President Trump announce it. And I think that's the only way to really know if that is about what is going to happen as far as tariffs are concerned. Rima.
But a good bounce back, and as you said, right, from most of the sectors which were under pressure yesterday. So the Nifty Realty Index was up about 3.6%. Banks outperformed. The Nifty Banking Index up nearly 1%. Capital market plays higher. Many of the Tata Group stocks were up and about. FMCG broadly closed higher. IT was up and about. We'll talk about individual stocks. Let's quickly first tell you what we have for you on our show. The top movers and shakers with Hormis. The stocks on our radar include Tata Consumer on the back of Goldman Sachs upgrade. Meanwhile, India's pharma sector, how will it react to the US tariffs? We get you the numbers and the analysis. And then the key market events to watch tomorrow. But it's over now to Hormis. He's at the big wall with the top stock movers of the day.
No reason to complain with the moves that we saw today, particularly ahead of a major event. And one pocket that really shone bright in today's session was the retail segment, particularly after the business updates that most of these companies came out with. Bazar style retail, V-Mart, positive commentary from V-Mart with us. V2 retail also had positive commentary, upper circuit there. But Bazar style 20% higher in today's session. And in anticipation of stronger updates, Vishal Megamart and Avenue Supermarts too ended at the day's highs as well. Now, ahead of their own respective business updates, a lot of other companies also surged in today's session. Kalyan Jewellers was one of them, 12% higher today, ending at the highest point of the day, as did Godrej Properties, Macrotech, IndusInd Bank and HDFC Bank. That sharp spike that came in towards the close of the trading session in anticipation of their own business updates. Plenty of brokerage commentary came in today's session, but the star today was Tata Consumer after the upgrade that came in from Goldman Sachs, 7% higher in today's session. Can't say the same for both Vari and Premier Energies. A not so good report coming in from Bernstein. Dixon after the upgrade from Kotak, and Nestle after the initial gap down, recovering some of the losses despite the downgrade that came in from BofA. A lot of other newsmakers in today's session included Kernex Microsystems, which are on the back of the order win, a 5% circuit there. CSB Bank on a very strong business update. NBCC and GPT after an order win, and Paytm after the tie-up that they made earlier in the day also sent its stock price higher. And lastly, some of the movers on the volumes front, and Central Bank of India continues to sell off in this third straight day of losses, 10% lower in today's session as well. Quest Corp gave up some of those gains. Bombay Burma, Aegis Logistics too had a very good day on very strong volumes. Back to you guys.
Thank you very much for that. Let's go across to our guests now. Mayuresh Joshi of William O'Neill is still with us, and Shrikant Chauhan of Kotak Securities. Shrikant, let me start with you. Have you kept any positions open? What have you recommended to your clients ahead of the big event?
Yeah, good evening, Rima and Prashant. Today, really, the market did much better than the expectations. It was expected that the market may remain under pressure, and it may even break the previous low. But the best part was that it has not only managed the previous low, but also it closed at the highest point of the day. So while looking at the overall technical pattern, I am of the view that the markets are heading higher. And it was we were expecting this particular corrective sort of pattern. to the previous rally that we saw in the month of March. So we feel that the market has completed its corrections somewhere close to 23,100. And now again, we are moving towards the levels of 23,800 or maybe 850. So yes, we have asked our clients to keep their long positions intact or look for adding some call options with a view that tomorrow, in case if there is any gap up opening, then we'll get opportunity to utilize that particular event.
Fair enough. Got that. By the way, it was not just stock markets, right, which were bouncing. We had bond prices, which also rose. Yields fell 10 basis points after RBI signaled buying of 80,000 crores worth of bonds via the open market. Lata is joining in with more details. Lata, take it away.
A 10 basis point fall is rather unusual. So the benchmark 10-year now, the new 10-year has fallen from 6.58 to about 6.49. So basically 9 basis points at least of fall. And that is, as you said, because of this quite unexpected 80,000 crore bond calendar. Very rarely does the Reserve Bank say that I'm going to do one every week. And it's, 4 bond auctions of 20,000 crore each. It indicates a determination of the part of the RBI to keep liquidity plentiful. Actually, we ended the financial year FY25 as well with a decent surplus in the interbank borrowing market. What you call core liquidity was positive surplus by about 1.5 lakh crore. And the Reserve Bank coming proactively and saying we will be doing every week indicates that they probably want to keep the liquidity at a 2 lakh crore surplus. The market is reading this as extremely dovish because that means they will be dovish in the monetary policy coming up on Wednesday next, April 9th. A rate cut was always factored in by the market, but now the market's reading more. Will they also go in for a stance change? The stance currently is neutral. Will they go in for something like, a more accommodative stance? Will the language change? And therefore, you are seeing a fairly outsized reaction in the bond market. But now the 25 basis point rate cut expected on April 9th is completely priced in. And then, of course, there are other small positives as well. The US bond yields have also fallen, and there is rising talk, including from Goldman Sachs, about a possible recession. So all that is also abetting the rally in the Indian bond market.
Absolutely. Mayuresh, any thoughts? It's a big move, 10 basis points. But, it's always you can... falling yields can be read as positive and can be equally strongly explained as a negative as well. Where are we at, according to you?
That's the problem, right? And therefore, I think it's a classic argument between whether it's growth or whether there is pain ahead in the economy as well. But frankly, I think how the Indian economy is positioned at this juncture, with the expectations of the tax cuts expected to take place from this quarter itself, a large part of the consumption basket, which was probably lagging for the past 2 to 3 quarters for various reasons, should see a very smart bounce back. Also, I think a part of whatever savings will come through might also come back as bank deposits. And therefore, I think the deposit growth, which has largely been lagging, might also start improving in the next few quarters as we speak. Obviously, I think as Lata just mentioned, I think the market is now penciling in a 25 bips rate cut. But I think financials, in my opinion, still look robustly placed, both in terms of the earnings trajectory, valuations, the price strength on how they're positioned as well. And therefore, I think financials, in our opinion, at Markets with India, looking at rating and rankings, might actually continue doing well in the next few months.
Got that. Let's talk about Tata Consumer, a top Nifty gainer today, up 7%. This is after Goldman Sachs upgraded the stock to a buy, raised the target price. Nimesh had flagged it off early in the morning before markets opened up, as this is the stock to watch out for. Nimesh, fill us in with the details.
Well, Rima, as you rightly pointed out, it was the stock of the day, up 7%. Big move as well. And I guess, markets reacted also because after a long time, you're seeing a bit of an upgrade on Tata Consumers today. So Goldman has upgraded the stock to a buy from neutral. They've raised the target price as well to 1,200. Now, the biggest concern for Tata Consumers for the last many quarters has been the weak earnings. And Goldman believes that earnings is at an inflection point for Tata Consumers. And from here on, they are poised for a very strong EPS growth between FY25 to FY27. And they've identified a couple of reasons why earnings will improve. The first is that there's going to be a recovery in the tea margins because they've raised the prices there. The second, strong innovation and distribution expansion of the growth businesses that they're focusing on. And third, the interest cost is going to come down because because of the acquisition that they've taken, that is getting paid down from here on. So all the three reasons is why they believe that earnings will improve, and hence they've raised the EPS estimate as well between 3 to 7% for FY26 and FY27. And Goldman believes within the FMCG basket, Tata Consumer is going to report the strongest earnings going forward. So that was a key reason why for the upgrade, and that's the reason why we saw a big reaction, up 7% in today's market.
Absolutely. It never stopped. It never came off after starting strong. Nimesh, thank you very much for that. Shrikant, you want to sort of come in here? How is the stock looking, and any thoughts at all?
Yeah, Prashant, this one is showing a lot of strength on the chart. It has been consolidating since last almost 3 months within the range of 1075 and 900, 925. And today it is when there was specific news flow on the upgrade and all, we saw the stock was crossing the level of 1075. So broadly, I am of the view that the stock is heading higher. And eventually, yes, we could see the levels of 1200. That's the overall view. And based on volume statistics, in case if there is any correction, then we should look for adding the stocks. The overall formation is suggesting us more bullishness.
Okay, let's talk about pharma. Now that, we fear could be the vulnerable sector, could feel the impact of Trump's reciprocal tariffs. But how do the tariffs stack up? India to US and US to India. Vinny is now joining in with the numbers.
Hi, so in terms of tariffs right now, what we're seeing, India is charging 10% tariff for imports from US, while US is not charging any tariff on these pharma products to India as of now. So if we see an amount coming in, we could see as much as 10% coming in, is what analysts are highlighting, that as much as 10% is a possibility. Now that could be the worst case scenario highlighted so far. Who gets impacted the most? Generic formulation players as well as CMO players are at high risk in the pharma sector itself. Companies with high exposures on the generic side will see the most impact, and as much as an impact of around 9 to 12% would be an impact on their EBITDA. A one-time hit is what they're saying. Now, when you look at it, who's the company, which companies have the most exposure? Gland Pharma, 50% exposure in terms of US sales. Consolidated revenue is what we're seeing. So the EBITDA hit that they would take would be around 8 to 10%. This is a one-time hit. Other than that, we have Aurobindo Pharma, 48%, 12 to 13% hit that the company could see if there's a 10% tariff. Zydus Life, Dr. Reddy's, that could be in the range of 8 to 12% as well. Lupin, Cipla, Sun Pharma and Torrent are the other ones, much lower versus the other companies which I just mentioned. Now, why is that so? Because you see Lupin, Cipla, Syngene, Piramal as well as Sai Life, they have plants and they have formulation plants, API plants, biologic plants in the US already. So that exposure reduces because Trump's plan is to increase the manufacturing in the United States. So if someone has to set up a plant, these people already have the plant set up in US. So that exposure and the impact could be a bit lower. So as of now, what we're expecting the most impact would be on Gland, Aurobindo, Dr. Reddy's in terms of for the EBITDA front if there's a 10% tariff. We'll be watching out for what actually comes in overnight from Trump.
All right, thank you very much, Vinny, for that. I mean, that's an area around which, even though there is a lot of uncertainty, there is at the margin some bullishness as well, for a variety of reasons. Mayuresh, any thoughts here? Pharma, you heard Vinny explain.
No, I think very logical that Vinny said. But again, I think our take is that it might not be as stringent as one is really expecting, because I think the cost of developing a drug is extremely costly and it's a time-consuming process. Obviously, outside the US, India is one of the maximum FDA-approved facilities as we speak. And therefore, I think the number of drugs in the pipeline, both generics as well as specialty drugs, a lot of Indian pharma companies have actually filed for NDAs. They've filed for special applications in terms of specialty drugs itself, which again are going to be pocket-friendly for the ultimate US consumer itself. And therefore, I think from a pricing perspective, our own sense is that because end prices and the entire product cycle itself is extremely time-consuming and extremely specialized process as well, I think there might not be too much of tariffs that might come on the sector as well. Again, that's our take. We might be completely wrong, but if this probably happens, I think a large part of the leadership stocks who have already invested heavily in terms of creating the specialty pipeline might actually bounce back very, very smartly. So I think Sun Pharma, Lupin, as I mentioned earlier, is something that we continue holding in our global portfolios.
Okay, gentlemen, thank you very much for that. We will head into a short break, but as we do that, we'll leave you with some key corporate commentary from Lalit Agarwal, founder and MD of V-Mart Retail, where he talks about the improvement in mass consumption and more.
Seeing the mass consumption and the rural consumption inching up a little more and becoming a little better than the last year. And that also has driven some kind of consumption, especially in markets of Uttar Pradesh, Bihar, where we were struggling fundamentally. But I think, yes, volume growth is something which is very, enlightenment. We're really getting good news about that volume growth. And this is also being led by fashion, because there's a lot of fashion change which is coming to the market. We expect some more consumption coming in especially from the tier 3 and the rural areas. That is where we believe if those consumptions are back and monsoon remains good this year as well, we would definitely clock once again, almost a double-digit growth. That is what we should expect from our team, and that is what we are all getting prepared for.
आज મારી પ્રાર્થના છે અને અમે હમણાં પદયાત્રામાં 5 દિવસથી ચાલીએ છીએ અને 2-4 દિવસમાં પહોંચી જશું. દ્વારકાધીશનું કૃપા રહે અને બધા શ્રીજી બાબા બધાને સંભાળીને રાખે ને બધાને આશીર્વાદ આપે. બધા યુવાને ભગવાનના પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને સનાતન પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને બસ એ જ મારી બધા યુવાને एक मैसेज
Okay, welcome back. The big story, of course, globally is going to be the US President Donald Trump's reciprocal tariffs, which are being very, very closely watched. Now, how is this going to play out, both, of course, in terms of what is being proposed, discussed, the latest, etc., but also in terms of when will we hear the announcement actually come through? This is, of course, our colleague from the CNBC network, Karen So, with that. Karen, over to you.
We're now just hours away from President Donald Trump's tariff announcement, with America and its trading partners holding their breath. The White House has provided little detail on what to expect, but what we do know is this. Reciprocal tariffs will take force from today, immediately after the announcement. Treasury Secretary Scott Bessent has labelled this as a cap of the highest duty level, which could go down if countries meet demands. On Tuesday, the Washington Post reported that one draft proposal would see the US impose a levy of 20% across nearly all imports into the United States. A blanket tariff is a potential. Donald Trump will deliver his tariff announcement in the Rose Garden today at 4 p.m. Eastern Time, that is 9 p.m. BST, in an event that some are calling Make America Wealthy Again. Alongside reciprocal tariffs, there are further measures coming to effect from today. The US will place an extra 25% levy on countries that buy oil from Venezuela. It will also lift the pause on additional duties on Mexico and Canada, and the 25% tariff on all autos imported into the United States that Trump announced last week will come into force from today. So even complex on the detail we already have. Now, Europe is planning to retaliate. European Commission President Ursula von der Leyen has vowed to respond with a strong plan against the US, telling the EU Parliament on Tuesday that the bloc holds a lot of the cards in negotiations. Meanwhile, UK Prime Minister Keir Starmer has reportedly told cabinet members they should brace for tariffs to hit the UK from today, but that he remains hopeful of striking a deal down the line. Starmer has already signalled he's willing to pare back the UK's digital services tax on American technology companies.
Thank you. Well, let's now talk about Dalal Street and find out how Dalal Street is going into this event. Despite all the tariff tensions, we did okay. Nimesh is here with an insight.
Yes, in fact, we did quite okay, right? I mean, just ahead of the one big event, there was a lot of momentum, especially in the broader markets, with the mid-cap index gaining another 1.5%. In terms of individual stocks, though, the first are a couple of stocks which might be in focus tomorrow as well. The pharma names, Dr. Reddy's as well as Aurobindo Pharma, both saw delivery-based selling from larger FIs just one day before the event on Trump tariffs. So that's something to watch tomorrow as to how those stocks react. The second stock is Paytm. That's been buzzing in the last couple of days. The volumes have picked up. Even today, I understand there were very strong FI flows. And also for Paytm, the big trigger would be the MDR, on large ticket size and large merchant transactions. That could be a big trigger for Paytm going forward. So watch out for that. The third stock is Delivery. That's been buzzing in the last couple of days. While the stock is almost at 52-week lows, I understand there's going to be some corporate development very soon. A potential inorganic move is what I understand in Delivery is likely soon. And the last name is Godrej Properties. All those the real estate stocks did well today. And Godrej Properties stands out because on back of very strong FI buying. So it looks like some buying has emerged at these levels in real estate stocks.
All right, Nimesh, thank you very much. We'll keep an eye on these names as we come back tomorrow on the next couple of days as well. Well, it's a wrap on this edition of Markets Forward. We're back with more news and updates in just a bit.
અને મારા મિત્રોને કે આપ બધા શ્રીજી બાબાના આશીર્વાદ લઈને આગળ વધો અને જ્યારે ભગવાન છે તો કંઈ ચિંતા નહીં કરવાનું.
Quarter of a century, zillions of designers, and orders of style later, Lakme Fashion Week is back to rock the ramp. This year's collection promises to showcase modern sophistication with effortless elegance. The showcase is set to be bold, reflecting a connect between beauty and style. Let's take a look at the showcase straight from the runway.
How do you think beauty and fashion empower young women like you in today's world?
So I think beauty and fashion, if you have fun with it, can be very, very empowering. Like me, I like dressing very casually. I like being very chilled out. I don't play too much with like colors and stuff, and that makes me feel very empowered and very beautiful. So I think it can be used as a tool to enhance your strengths rather than cover up your weaknesses.
Who are you walking for, and tell us about your inspiration behind it?
So I am walking for AKOK. I'm walking for Anamika Khanna, and I'm wearing her silver collar collection. And I think the inspiration around it is just warrior princess, something to make women feel very powerful, very strong, very modern, very cool. That's her inspiration. I'm assuming. I'm just channeling that.
The opening night showcased designer Anamika Khanna's designs that celebrated bold, ambitious women who own their space, lead with confidence, and inspire with their individuality.
It's been 25 years of Lakme Fashion Week. What is in store and what can we expect?
As you can imagine, it's the most emotional, sentimental moment for us. 25 years of all of us together. It's going to be a spectacular celebration and I'm so looking forward to it.
Can you tell us on what the collection is all about?
This collection, it's called the Silver Collar, and as the name suggests, it's about elevating workwear for women and the very fact that we don't really follow rules anymore. Everybody is bringing that power to the workspace, but they also bring that emotion, the gentleness and all of that. So it's just about elevating workwear to another level.
One message that you would like to see your brand on these young empowered women wearing your collection?
I feel like if my collection can give you a sense of freedom, I've done my job. And that's what I want to do. I want to make people feel free.
From legacy designers to fresh voices, Lakme Fashion Week continues to redefine not just trends, but the business of fashion. In Mumbai, Zenia Baria.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC-TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bazar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest. Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening: it's Judgment Day in the tariff war. US President Donald Trump is all set to unveil a plan to impose tariffs on key trading partners, which is likely to include India. Investors tread with caution across the world. Special live coverage from Washington and Wall Street starts at 11 p.m. right here tonight. India has made a far-reaching offer to the US to reduce tariffs. Government sources say talks were held on sensitive issues like agri-tariffs and quality control orders. New Delhi is hoping for a temporary reprieve, even as authorities prepare to deal with all scenarios. India's crude oil imports from the US in March rise 67% amidst tariff threats from President Trump. LNG imports from the US also hit a record high in FY25. India has already cut tariffs on motorcycles and bourbon whiskey, among other goods. Bulls regained some lost ground after yesterday's sell-off. The Sensex and the Nifty gain 1%. Midcaps outperformed. Real estate and consumer stocks lead the rebound. India's 10-year sovereign bond rally after RBI's 80,000 crore rupee purchase plan. Yields dropped below 6.5%, the lowest level seen in the last 3 years. More than 43% of the companies that went public in FY25 are trading below the IPO price. Most of the gains were wiped out in the second half of the fiscal, souring sentiment in the primary markets. The government tables the Waqf Amendment Bill in the Lok Sabha. The new bill, among others, proposes that land cannot be considered as Waqf property simply because it has been used as such over time. Union Minister Rijiju says the bill does not intend to interfere in any religious practice or the management of any mosque. The Congress argues that the bill is a bid to defame and disenfranchise minorities. The Indian Army says Pakistani troops intruded across the line of control and indulged in ceasefire violation. Adds the Indian soldiers responded effectively. Indian forces are still engaged in a lengthy operation against suspected militants in Kathua district for the last 11 days. Israel expands its ground offensive in Gaza, announces a plan to seize large areas amidst fears of a famine in the war-torn region. The Forbes Rich List shows a record 3,087 billionaires own a net worth of more than $16 trillion. This is more than the GDP of all countries, barring the US and China. Elon Musk, Mark Zuckerberg and Jeff Bezos top the global list. Mukesh Ambani tops the list in India, followed by Gautam Adani. Well, let's start with the market action. Bulls did regain some lost ground after yesterday's massive sell-off. The Nifty and the Sensex gaining nearly 1%, with heavyweights like HDFC, ICICI Bank and Infosys leading from the front. 160 point higher, that's the Nifty for you. 592 points higher for the Sensex. The Nifty Bank also 1% higher. Similar story playing out for the Nifty Midcap, 1.5% higher today. So the broader market's also participating there. Prashant is standing by with the day's trading action. Prashant, after yesterday's sell-off, the markets are rebounding today, but of course nervous ahead of the big Liberation Day announcements.
Well, yesterday the Nifty got smashed. Today we recovered about half of those gains. How much should you read into these moves as we head into the tariffs tonight? I think that is questionable. A lot of it perhaps positioning. I'm not sure a lot, any of it is based on conviction one way or the other. The tariffs are going to be, lower, more dovish, or they're going to be more hawkish. This is just sort of, changing what you already own, less lightening of positions, adding on a little bit here and there. I think that's what's essentially been going on for the last couple of days now. Now, the Nifty is up on your screen. As I said, about 50% of yesterday's losses recouped. Nifty Bank did even better, about a 1% pop coming in the Nifty Bank. And mid and small cap indices were up about 1.5% apiece. So here, of course, there was broad-based buying, which we saw. Although volumes were kind of mixed. There was enough stuff which was down on volumes once again, like what we saw yesterday. Now, as far as the Nifty is concerned, before I get to the broader market, consumer names did quite well. So Tata Consumer, Titan, Trent, Zomato, a lot of Tata there, top of the sort of gainers list. IndusInd Bank did well, Tech Mahindra. Maruti was another one which actually participated in the upside. On the downside, you had Bharat Electronics, Ultratech and Nestle, which came under some selling pressure. Broader markets, I'll start with what was up. Kalyan Jewellers, big volume-led gainer. DB Realty, Shyam Metallics. There was a name like PNB Housing, Style Bazar, KPR Mill, Supriya Life, Galaxy Surfactants. This is, the bulk of what was up on strong volumes in that sense. On the downside, as I said, a fair bit as well. BEL, there was Bajaj Holdings, Vari Energy, there was a Bernstein note, skeptical on the space. Central Bank, RBL Bank, UCO Bank, then there's a banking space which saw some selling. Fortis, just profit booking after the last 2-3 days of run up. KEC, Mahindra & Mahindra Finance, Novama was down about 2%, and there was like a BKG which was lower as well. So this sort of, market action for you. The big one, of course, is what we will learn from the US session when President Trump and his team announced the reciprocal tariffs. And I think we'll just have to take it as it comes tomorrow when we return. Back to you.
Thanks very much, Prashant. And yes, we will, of course, be tracking all the action overnight. Plenty expected there from the US. Indian bonds, meanwhile, yields have fallen by nearly 10 basis points. This after the RBI announced late last evening that it will buy 80,000 crores of bonds in April alone. Latha standing by with more. Latha.
Yes, a 10 basis point fall is rather unusual. So the benchmark 10-year now, the new 10-year has fallen from 6.58 to about 6.49. So basically 9 basis points at least of fall. And that is, as you said, because of this quite unexpected 80,000 crore bond calendar. Very rarely does the Reserve Bank say that I'm going to do one every week. And it's, 4 bond auctions of 20,000 crore each. It indicates a determination of the part of the RBI to keep liquidity plentiful. Actually, we ended the financial year FY25 as well with a decent surplus in the interbank borrowing market. What you call core liquidity was positive surplus by about 1.5 lakh crore. And the Reserve Bank coming proactively and saying we will be doing every week indicates that they probably want to keep the liquidity at a 2 lakh crore surplus. The market is reading this as extremely dovish because that means they will be dovish in the monetary policy coming up on Wednesday next, April 9th. A rate cut was always factored in by the market, but now the market's reading more. Will they also go in for a stance change? The stance currently is neutral. Will they go in for something like, a more accommodative stance? Will the language change? And therefore, you are seeing a fairly outsized reaction in the bond market. But now the 25 basis point rate cut expected on April 9th is completely priced in. And then, of course, there are other small positives as well. The US bond yields have also fallen, and there is rising talk, including from Goldman Sachs, about a possible recession. So all that is also abetting the rally in the Indian bond market.
Latha, many thanks. And the big story this evening, it is Judgment Day in the tariff war. US President Donald Trump all set to unveil a plan to impose tariffs on key trading partners. which could include India. The tariffs are likely to come into effect immediately. However, neither Trump or his administration has revealed any details regarding the structure of the duties or the countries that will be impacted. U.S. officials have made it clear that top trading partners with whom the U.S. has a large trade deficit will be the target of the tariffs. The U.S. runs a trade deficit of $41 billion with India, which ranks 11th in a list topped by China, Mexico and Vietnam. So what can India expect? Our colleague Sanjay Suri reports from Washington on the proposed tariffs. Sanjay.
Finally, it's T day. T for tariffs, we all know, but what tariffs? On who? Nobody knows. Presumably, one would think the White House knows, but not everyone's sure of that either. President Trump has no doubt said that it's all settled, but several reports continue to suggest a lack of unanimity even within the Trump cabinet on exactly what model of tariffs should be applied, on whom, who should be spared. Divisions are reported to have surfaced quite sharply at a closed-door meeting at the White House here on the proposed tariffs, and this was a meeting held on Tuesday, just the day before the big announcement on Liberation Day, April the 2nd. The broad debate has been on whether reciprocal tariffs should sit alongside some form of universal tariff. Trump had, of course, suggested a universal tariff earlier on in his campaign to bring in tariffs, and he's faced some push to revive that model. The more recent, the more current approach has been for measured and negotiated reciprocal tariffs, and India and the US have been negotiating on those terms and on that basis. Trump has said, in line with all that, over the past couple of days, that he would prefer a deal to taking steps that he warned would not be pretty. And he has noted that India has agreed to drop tariffs. But we are all aware, of course, that there can be a difference between what Trump says and what he does. And so a worried world waits nervously. Not very long to wait now. Americans are no less nervous, no less worried, and the US has been in this sort of place before, so they have reason to worry. And that was close to a century back when the US raised tariffs under an act in 1930 drafted by Senator Smoot and Representative Hawley. And under that law that they brought in, tariffs were raised, and this provoked counter tariffs and set off the Great Depression. The Trump team is confident it will be different now, but already the Federal Reserve has cut growth estimates down straight away from 2.1% to 1.7%. A recession is expected. Trump himself has not ruled it out. The US is not exactly celebrating. The markets are down. They may not stay down if Trump can begin to deliver as promised, and no one really can say at the moment how big an if that is.
Sanjay Suri, yes, nervousness around the world at this point in time. That is the view from Washington. But back home, India has made a far-reaching offer to the US to reduce tariffs. Delhi is hoping for a temporary reprieve, even as authorities prepare to deal with all scenarios. Abhimanyu joins us now with the slew of tariff concessions that India has already made for the US. Abhimanyu, a lot of measures have already been undertaken since January, ostensibly to try and stave off the threat of tariffs. What are you hearing now on what next, but also recap for our viewers what has already happened so far?
Several concessions have already been announced by India for the US ever since Donald Trump took over as American president. Now, the basic customs duty on motorbikes has been cut from 50% to 40% and 30% respectively on completely built up units with engine capacities of up to 1,600 cc and 1,600 cc or more. The BCD on motorbikes has also been cut in the union budget before PM Modi visited the US to meet Donald Trump. India also removed 6% equalization levy on online ads, which is going to benefit American software giants Google and Meta and may also lead to a loss in revenue for the Indian government. India has slashed the overall effective import duties from 100% to 50% on bourbon whiskey, from 20% to 10% on carrier-grade Ethernet switches, and from 100% to 20% on synthetic flavoring essences. The BCD has been cut from 15% to 5% on the fish hydraulics for use in manufacture of fish feed. India's LNG imports from the US have also risen to an all-time high. India is also intending to increase its overall energy imports from the US to reduce the trade imbalance. India and US are already in talks for a bilateral trade agreement, as both the countries intend to increase their trade to $500 billion over the next 5 years. It remains to be seen what is going to be the announcement on reciprocal tariffs by the United States and the subsequent action which is going to be taken by the Indian government.
Abhimanyu, many thanks. Now, India's crude oil imports in March from the US have risen by 67% compared to February. This as President Trump continues his efforts to boost American oil exports. However, India's purchases from Russia have also risen by 11%. In fact, speaking to me in January, Petroleum Minister Hardeep Singh Puri had hinted that India will strengthen its trade ties with the US when it comes to energy. Take a look.
Energy cooperation, President Trump saying that India should buy more LNG, more energy from the US. He's even put out a number there saying that that should increase from $15 billion to $25 billion. I wanted to get your comments on that. We have spoken about this previously as well. Do you believe it makes sense? It is something that we should actively pursue and build on.
Energy cooperation between the United States and India was widely expected to figure in the bilateral talks. If you read the joint statement, if you read what the President said, what the Prime Minister said, that's evidence. And I think there is already fairly substantial energy cooperation. The fact of the matter is India needs more energy. We have long-term deals on gas with one country which was there till 2028. You've signed another 20 years there. We are in the market for more gas. We have a stated policy of taking it from 6% to 15% in the energy mix. And I think we have a very substantive relationship with the United States, mostly on gas. I see definitely those quantities being addressed for increase.
Well, that is the Oil Minister Hardeep Singh Puri. Now, it's been just over 2 months since President Trump arrived in the White House. His rhetoric on tariffs have shaken global markets, causing uncertainty for businesses worldwide. Here's a look back at the 72 days that have shaken the global economy. Take a look.
We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people. Canada's a very bad abuser also. Vast numbers of people to come in and fentanyl to come in.
When do you think you would enact those?
I think February 1st.
Trump asked me how long I wanted to pause tariffs. I told him a month. I'm sure we'll be able to deliver good results for his people and the people of Mexico in that month.
So today, the United States launched a trade war against Canada, their closest partner and ally, their closest friend. Now, it's not in my habit to agree with the Wall Street Journal, but Donald, they point out that even though you're a very smart guy, this is a very dumb thing to do.
We're talking about a tariff of 10% on China based on the fact that they're sending fentanyl to Mexico and Canada.
There are no winners in trade wars or tariff wars. Raising tariffs will only impose greater losses on American businesses and consumers.
The European Union is very, very bad to us. They treat us very, very badly. They don't take our cars. They don't take our cars at all. They don't take our farm products, essentially. They don't take very much. We have a $350 billion deficit with the European Union. They treat us very, very badly. So they're going to be in for tariffs.
As the United States are applying tariffs worth $28 billion, we are responding with countermeasures worth 26 billion euros. This matches the economic scope of the tariffs of the United States.
The country will be reciprocal, that's right. Everything. It won't affect everybody because there's somewhere we have similar tariffs. But the ones that are taking advantage of the United States, we're going to have it's reciprocity, it's reciprocal.
You mentioned auto tariffs the other day. Yeah. When do you plan to unroll?
Howard, I'd say over the next sometime, or maybe around April 2nd. I would have done them on April 1st. Believe it or not, I'm a little superstitious. No, literally, we had it planned for April 1st. I said, let's make it April 2nd. We're going to end up with a very good relationship with Canada and a lot of the other countries. Some we probably won't. It won't be so pleasant. But I think most countries are agreeing with me. They actually, many of them have actually apologized. They said, look, we have taken advantage.
Well, that's 72 days of Donald Trump in the White House. Our special coverage of the Trump tariff announcement starts at 11 p.m. right here on CNBC-TV18. President Trump is expected to speak at 1:30 a.m. India time, so it promises to be a long night. Join us as we bring you all the action live from Washington and Wall Street. Get the CNBC edge. And on to the action from the commodity space. Oil prices ease after falling in yesterday's session ahead of Trump's tariff measures. The new tariffs could deepen a global trade war that could limit crude demand. Meanwhile, gold prices trading off record highs, but prices still holding above $3,100 an ounce. Trump's tariff measures, weak U.S. jobs data and manufacturing data spurred gold buying. Remember, gold has soared over 18% just between January and March, clocking its best quarter since 1986. India's factory output rising to an 8-month high in March, according to data released by HSBC and compiled by S&P Global Manufacturing PMI, rose to 58.1 in March versus 56.3 in February. This was largely driven by stronger order growth, increased customer interest and favorable demand conditions. Remember, a reading above 50 denotes expansion, while a reading below 50 denotes contraction. The Reserve Bank of India has appointed Poonam Gupta as the new Deputy Governor for 3 years. Gupta is currently the Director General of the National Council of Applied Economic Research. He's also a member of the Economic Advisory Council to the Prime Minister. Gupta will replace former RBI Deputy Governor Michael Patra, who retired on the 14th of January. Her appointment comes just 5 days before the next monetary policy meeting, which kicks off on Monday. So that vacancy now being filled. Poonam Gupta is the new RBI DG. The government has collected dividends worth 74,000 crore rupees from public sector units in FY25. That's the highest number that the government has received so far. The dividend mop-up was 16% from a year before and almost 35% higher than the revised estimate for FY25. Coal India and ONGC are the top dividend payers, worth over 10,000 crore rupees each, followed by Indian Oil, Power Grid and NTPC. The total number of pending cases against SEBI orders at the Securities Appellate Tribunal surging over 50% in 2024. According to the Finance Ministry, cases pending for adjudication have grown to 1,121 cases in the previous year versus 736 cases in 23. FY25 has witnessed 78 companies listing on the bourses, collectively raising over 1.6 lakh crore rupees. However, out of this, nearly half of the listings have ended the fiscal year below their issue price. Hormuz joins us now with the details. Hormuz, take us through the year that eventually was, as far as IPOs were concerned. We had a great start, but of course a tepid close. And more importantly, what this now means for the future IPO pipeline.
Well, looking at the market sell-off of the last 3 months, it almost feels like people have forgotten about the existence of IPOs, but there were lots of them in FY25, particularly in the first 9 months. And summarizing that data from Prime Database, around about 78 companies went public in FY25, and out of them, nearly half, or almost 34 of them, ended below their issue price at the close of the financial year. That's what the Prime Database data is indicating. Now, there were 10 such companies that listed below their IPO price and stayed below them. There were 24 such companies which opened above their IPO price but ended up giving up most of those gains, and there were also 10 companies that saw a sharp surge in the initial phase but then are now down only to single-digit gains when compared to their IPO price. And there were plenty of underperformers when it comes to these IPOs. Godavari Biorefineries is leading that chart, 60% below its IPO price at the end of FY25. Kararo India, Western Carriers, Saraswati Sari not far behind, with shares falling anywhere between 50% to 55% from their IPO price. Of course, that does not mean that there were no outperformers for the financial year. There were plenty of them, and there were some of the names like KRN Heat, which has surged almost 4x from its IPO price in just 1 year of listing. And Bharti Hexacom is another one, 153% surge despite a significant correction from the top that the stock has seen. So another outperformer there. And Quadrant Future Tech, another recent listing, almost double from its IPO price. Now, some of the IPOs might be returning anytime soon, but the market volatility is keeping a lid on these future IPOs. And of course, another factor is that the shareholder lock-ins are coming to the end of these already listed companies, so expect some more action in these names as well.
Many thanks for joining us, Hormuz. Reliance has entered the esports business after its subsidiary Rise World announced that it will start a joint venture with Blast Esports. Rise plans to host large-scale gaming events on the GeoGames platform. Through this partnership, the JV will also help bring the European esports entertainment companies' events to India. We will head into a break, but up next, the government tables the Waqf Amendment Bill in the Lok Sabha. That and more when we return. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
The government tabled the Waqf Amendment Bill in the Lok Sabha today. The new bill, among others, proposes that land cannot be considered as Waqf property simply because it has been used as such over time. Union Minister Rijiju opened the debate in the lower house. He said that the bill does not intend to interfere in any religious practice or the management of any mosque. The Congress argued that the bill is a bid to defame and disenfranchise minorities.
मुसलमानों में भी जो शियास हैं, सुन्नीस हैं, बोरास, आकाकानीस, पसमानदा मुस्लिम्स हैं जिसको बैकवर्ड माना जाता है, और विशेष करके महिलाएं और बच्चों के लिए जो हमने प्रावधान रखा है, तो ये मुसलमान का कम्युनिटी के अंदर में इतना जोरदार स्वागत हो रहा है, इसका ऑडिट प्रॉपर होना चाहिए। तो ऑडिट का भी प्रावधान हम लोग राज्य सरकार के ऊपर में छोड़ रहा है, क्योंकि आखिर तो सर ये सारा प्रॉपर्टी का अथॉरिटी राज्य सरकार का है।
इस बिल के द्वारा 4 इनके मूल उद्देश्य। पहला मूल उद्देश्य है कि संविधान को कमजोर करना, टू डाइल्यूट द कॉन्स्टिट्यूशन। इनका दूसरा उद्देश्य है भ्रम फैलाना, टू डिफेम द माइनॉरिटी कम्युनिटीज ऑफ इंडिया। इनका तीसरा उद्देश्य है टू डिवाइड द इंडियन सोसाइटी। चौथा इनका उद्देश्य है टू डिसएनफ्रेंचाइज द माइनॉरिटी कम्युनिटीज।
Ashmit Kumar joins us now to take us through the contours of the Waqf Amendment Bill. Ashmit, take our viewers through what the government is proposing, what the implications and the impact will be if the bill goes through.
Well, we just heard the heated debate in the parliament, and well, underlying that debate are a lot of key changes that have been proposed as a part of this latest 2025 bill. One of the key changes is that the overarching council that sits atop these various Waqf boards, now there is a provision that has been introduced that the 3 MPs that are a part of this governing council, as such, this overarching council, they need not necessarily be Muslim. Further, there's another caveat that at least 2 members of this entire governing council need to be non-Muslim. That is, in fact, one of the key changes. The other key change is that decisions that were taken by the board as well as by the Waqf tribunals had an element of finality. What this bill does is that it adds another layer of appeal. What it does is that these decisions now that have been taken by the tribunal, which had an element of finality, now can also be challenged before the local high courts. Further, and this is an important decision, the government has said as a part of this bill that no government property can be qualified, can be designated as a Waqf property, and this will apply not just prospectively, but also retrospectively, which in fact has been a key concern voiced by various members of the opposition parties and various scholars as well. Also, another key change that has been made is that no practicing Muslim can make this Waqf donation unless he or she has been practicing Islam for 5 years or more. That threshold has been put to 5. In fact, there were comments that we heard in the parliament. Why restrict it? Why place the threshold as high as 5? Why restrict it to only practicing Muslims? These are questions that are being raised in the parliament as we speak. Also, another key change that has been made is that Section 40, which granted Waqf boards the powers to decide on the status of a property, on whether or not it is a Waqf property, that power of the Waqf board has been stripped entirely, has been taken away as a part of this new bill. So clearly, a lot of key changes here, awaiting a vote from the Parliament.
Yes, we will, of course, be tracking the developments in Parliament. Ashwin, many thanks for joining us. Before we wrap, Forbes has released its annual list of billionaires. There are a record 3,087 billionaires around the world with a combined net worth of over $16 trillion. This is more than the annual GDP of all nations barring the US and China. The US is home to a record 902 billionaires, followed by China with 516. India is ranked number 3 with 205 billionaires. The richest man in the world is Elon Musk with a net worth of $342 billion, followed by Mark Zuckerberg with $216 billion and Jeff Bezos with a net worth of $215 billion. US President Donald Trump's fortunes have doubled in the last 1 year thanks to his social media platform Truth Social and his cryptocurrency bets. Mukesh Ambani tops the list in India, is ranked number 18 in the world. He's followed by Gautam Adani and Savitri Jindal. And finally, only 13% of the billionaires in the world are women. The list has more than 2,600 men and 406 women. Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a minute with more.
India is amazing. Every time we went over the Himalayas, and I'll tell you, Butch got some incredible pictures of the Himalayas. They're just amazing. And you can see, like I've described it before, just like this ripple that happened, obviously, when the plates collided. And then as it flows down into India, it's many, many colors. I think when you come from the east going into like Gujarat and Mumbai, the fishing fleet that's off the coast there gives you a little bit of a beacon that here we come. And then all throughout India, I think the impression I had was it was just like this network of lights from the bigger cities going down through the smaller cities. Just incredible to look at night as well as during the day, highlighted, of course, by the Himalayas, which was just incredible as a forefront going down into India. I hope, and I think for sure, I'm going to be going back to my father's home country and visiting with people and getting excited.
Let's talk money.
Hello and welcome to the first edition of Let's Talk Money. You might be wondering what I'm talking about. The first edition of Let's Talk Money in the new financial year. Yes. FY26 is here, and therefore we thought that it's a good time to start from the very beginning, a very good place to start. Financial planning, why you need to understand the concept, why you need to spend some time and create the right financial plan for you. I'm, of course, your host and your friend, Surabhi Upadhyay, and today, to get us off to this good flying start, we have with us Kalpesh Ashar, who's a certified financial planner and also a registered investment advisor, and also Prableen Bajpayee, who's the founder of Finflix Research and Analytics. Ladies and gentlemen, thank you so much for joining in. And let me start by wishing both of you, as well as all of our viewers, a very happy, new fiscal. May it be a prosperous one, may be a positive one for all of us. So some opening thoughts, and I want to start with sort of experiences, because both of you interact with so many people, clients, money management, financial planning. The awareness is definitely increasing that I need to invest, I need to retire rich, all of that. But is the awareness for systematic financial planning, Kalpesh, is that also increasing now?
Okay, so first of all, thanks for having me on the show, Surabhi. And I like the new greeting which we've just coined, which is Happy Financial Year.
Yes.
So I think that should go with everyone. So answering this question, Surabhi, surely financial planning, and I would put it in perspective, personal financial planning has come a long way. I think in the last 15, 20 years, when before this, term was not even known to people and everybody just knew what are markets and what is fixed deposits, the concept of personal financial planning has really grown. And I would still like to add that there's a long way to go, considering that we are evolving so fast in our finances, in our economy, on a personal level, everywhere. And nothing is more important than everyone's individual personal financial plan.
Absolutely.
Because if you can't make this as a generalized statement, it's everybody has got a different profile, everybody has different types of challenges, and everybody has different capacities to fulfill his financial life. So financial planning per se has evolved.
Sure.
And earlier, which we used to just look at investments, now it's become more of a life planning concept.
Which is exactly what I wanted to talk about, and just bring in Prableen before we get down to the nuts and bolts of it. Prableen, because it's very true, even now I see a lot of people around me talking about buying a great mutual fund, and you want to be with the best performer. People feel very happy saying, oh, I bought NVIDIA and then it doubled or trebled. But why is it important to not sort of be very picky about these one or two aspects of your investments or tax saving? Why is it important to look at it holistically?
So I think Kalpesh has already covered it. And Surabhi, it's so important because when we talk about investment planning or tax planning, that's a small component of the overall concept of financial planning. So financial planning and how you're going to manage your cash flows, your taxes, your investments, these are all the smaller parts within this overall journey. And it starts from you analyzing, how much you're earning and spending. And I think for all of us who keenly watch the budget, we want to know how much the government is getting as revenue, how much it's spending, what is its fiscal deficit, how much are they exceeding their revenue by. I think it all actually implies on to us as well as individuals. So we need to do that at an individual level where we actually need to analyze the same data for ourselves in our lives so that, we as just the way we are expecting the economy to do well based on, strong macroeconomics, our own personal finance has to be strong so that, we have a good, fruitful financial life for ourselves.
Okay. So we need to have a financial plan. The question is, how do we get one and how do we build one along with perhaps an advisor? So what are the first steps? So the first sort of principles, Kalpesh, that one must keep in mind.
So the crux of a financial plan, it should be directional and it should be goal-centric. It should be able to help the person achieve his or her financial goals in life. There has to be a purpose, there has to be a motive. So how do we go about doing that? It's very structured, and I would put it simply that it's a way of life. It's just simple common sense. And people normally, what they say is that common sense is not common. And that's why they complicate things. So in financial planning, we have, I would say, the 4 to 5 pillars, which we would like to incorporate in the plan. First and foremost is the cash flow, which is nothing but enumerating your income and expenses. Very, very important, nothing but a personal budget.
Absolutely.
And many individuals, many people who think they are financially savvy don't even, honestly speaking, know how much they spend per month. It gets down to that level. And that is where the root cause of all problems lie. So first is understanding your personal cash flow. Second is, more importantly, understanding your personal net worth. And what is the net worth comprising of? It's all the assets which you've built up thus far, minus the liabilities.
The loans.
The borrowings, so what do you have in assets? So you have your financial assets, your stocks, your mutual funds, your FDs, your bonds, and you have real estate. You have some investments in commodities, gold, and liabilities. So that could be your different types of loans if a person has taken. And even your credit card outstanding as on date. So that would give you a very pictorial and a numerative
what your net worth
is.
Got it.
The third part is basically, I would say, the heart of financial planning, which is understanding your financial goals. Because your income, expenses, and your net worth should be moving towards achieving your financial goals.
They should be aligned, right?
Aligned. because that is where you select the right product to achieve your financial goals. And that could be different for each and every individual according to his life stage, according to his own perceptions and his shortcomings. So everything can't be hunky-dory, but for most of the people, if they give themselves a certain financial goal, say for example, a short-term goal, medium-term goal and a long-term goal, we can as planners and advisors channelize the right instruments and the products
And
which
get
help
you to
them
that
achieve
goal.
to the goals.
Got that.
And obviously the most important last thing is protection. And how do you do that? Through ring fencing your assets or your day-to-day life through the right insurance, because there's a lot of wrong insurance being sold and missold, I would say. So you get the right insurance, adequate insurance, and obviously create a contingency fund for yourself. Because what if you have a event which is not foreseen? So you can combat that without disturbing your financial plan.
This is very good. I'm going to recap this. 4 pillars. Make sure that you have your mind wrapped around them. Your cash flow, what is your net worth? Investment link goal planning. So is it all aligned in one direction or not? And then, of course, insurance and risk mitigation. Extremely important to have that as you start off with your financial plan. So what we're going to do now is, Prableen and Kalpesh, is that we wanted to reach out to our viewers and we wanted to help them at least start off on that journey of creating a financial plan, seeing if their goals and investments are matching or not. So we've got 2 viewers joining us on the show today, and we hope to be able to help them with some advice. Jaya is the first one joining us on the show. Jaya, welcome to Let's Talk Money. Great to have you on. Tell us, how can we help you? Do you have a goal in mind?
Yeah, 2 goals. One is for travel to accumulate corpus of 20 lakhs. Another for retirement at the age of 50. Targeted corpus is 18 crores.
Oh, okay. So 20 lakh for vacations and 18 crores for travel. Clearly, the travel bug has, bit you quite a bit. But we need some more information as well, Jaya. Tell us a bit about your income levels, if you don't mind us asking.
Yeah, like monthly right now, I'm getting around 75K in hand.
Okay, so a monthly salary of 75,000. How much are your expenses and how many are fixed expenses? How much are you able to save or invest at the end of it?
My fixed expenses are right now about 20K because accommodation is provided by the company for me. So food and other accommodational expenses are about 20K.
Okay, that's great. And then with the money that you have left in hand, how much are you already investing? And also your
I'm 30 and I'm investing 40K per month.
Oh, so you're investing 40,000 rupees every month. You're 30 and you have 2 goals in mind. One, build a pot for travel, and then, of course, build a pot for retirement. Got that. Prableen, let me come to you. And I must say, Jaya, compliments to you because you've managed to keep your expenses under check. You're already investing 40,000 rupees, which is a sizable part of your salary every month. So, really compliments to you on that. Prableen, what should she do? Where does she begin?
Absolutely amazing, Surbhi, because more than 50% of her salary is being invested, so which is great. So, the 2 goals that she's just listed out actually tells us that how important financial planning is, because I think more and more, many of us want to actually travel, and we do have the retirement as one of our very, very crucial goals. So for Jaya, if she's looking at a corpus of about 18 crores for her retirement, 20 years from now, she will require a huge SIP, which is actually about 1,80,000 a month if you're looking at 12% returns on her investments. Now, of course, I think 12% is a realistic estimate here, Surbhi. But if she can step up, then somewhere around 1.3 lakh a month is what is required with a step up of about 5%. The investment that she is doing now, if we just utilize the whole 40 for her retirement corpus, then out of this 40 with a 5% step up can actually give us a corpus of about 5.5 CR in the next 20 years, which is much lesser than what she's expecting. And this 18 crores, what she wants in 20 years, would have a value of roughly 5.6 crores as on date. So the 18 crore in 20 years will be worth 5.6 crores of
because
today.
Of inflation.
And so be for her, and for her travel goal, if you're looking at 20 lakhs without inflation, then all she needs to do is an SIP of 2,000 per month for the next 20 years. But if you're looking at a 6% inflation here, then the corpus need becomes bigger, about 65 lakhs, then she requires about 6,500 per month for her travel goal. So inflation is something which really needs to be kept in mind. And we are not taking this 20,000 monthly expense, I think, to calculate her retirement requirements because, I think it's really, really small as compared to what it would be if she's not getting the accommodation and once she has a bigger family size, perhaps.
Okay, so could you just repeat the advice on the SIP that she needs? She's already doing 40,000. So if she were to, either she has to obviously reduce her aspiration in terms of how much she wants to create for travel or retirement, or what is the other way, workaround, if at all?
So travel without inflation is only 2,000 a month, Surbhi, which is easily doable. Travel with inflation is also about 6,500 a month, which is, again, I think not much because she's doing 40. But the 18 crore corpus, that actually requires a 1.8 lakh a month SIP, which is big. And she's only doing 40. So, 30 gone out of it. So still, there's a huge gap there. And if she's doing a step up, then it can help. But probably she could just keep doing her 40, and as and when the salary increases, she keeps increasing. Hopefully there will be a bigger jump in the salary, but for now she needs to sort of trim down on the corpus that she's planned for herself.
Okay, so a bit of a reality check sometimes is required. Kalpesh, very quickly before we move to the next query, what would you advise?
So I think absolutely Prableen has covered the thing. Just my a little bit of input from my end regarding her travel goal, which she's putting. So rather than keeping the burden on the SIP, I would just ask her to divert, if she's getting any bonus or ad hoc pay in her job, of creating a corpus towards the travel expense.
Okay.
Because that is like a luxury.
Yeah, and you don't want to wait, 20 years to travel. You want to do it in the next 5 years.
5 years. So if she gets any bonus or an ad hoc, increment or something, that much part she keeps as a dedicated lump sum for a travel expense.
And let that compound.
And let that compound. And in that, even if not 20 lakh, I think again it's more about human behavior. If she's able to manage 5 lakh, she might as well go on a trip worth 5 lakh and enjoy that money. Why wait till 20 lakh?
Absolutely, take your point entirely. All right, we'll take a very quick break on that note. On the other side, we connect with one more viewer, try and get another financial plan going for them.
Let's talk money.
The first, or not the first, but the Indian astronauts who's going up on the Axiom mission coming up. Pretty awesome. They'll have a hometown hero there of their own that will be able to talk about how wonderful the International Space Station is from his perspective. But I hope I can meet up at some point in time and we can share our experiences with as many people in India as possible, because it's a great country, another wonderful democracy that's trying to put its foot in the space countries, and we'd love to be part of that and help them along.
Let's talk money.
Welcome back. You're with us on Let's Talk Money, and this is the first episode of the new financial year, which is why we're starting from the beginning, which is setting in motion a very clear, very well thought out financial plan. So we've helped Jaya with some of her goals and her ambitions in life. We have now Ayush Ray joining us. Ayush, welcome to the show. Tell us, how can we help you? What's your goal?
As my financial goal is to create a corpus of close to 10 CR in the next 5 years. Currently, my existing corpus would be in the range of 2.5 CR. So the remaining 7.5 in the next 5 years.
Well, that's really precise, huh? You want 10 CR in 5 years. You've reached 2.5 crores and you want to cover the rest of the distance. All right. Some more inputs will help us. What about your monthly income?
So the monthly income is in the range of 4 lakhs per month.
Lakhs per month, all right. And your monthly expenses?
Currently, I try and make it a habit of investing 2 lakhs per month, and hopefully I would be able to increase that amount by cutting down some expenses, but that's the rough estimate.
Okay, so you earn 4 lakhs a month. You manage to invest half of that, which is also great. So, kudos to you once again. Let's ask the experts. So he's got a very precise goal, 10 crores in the next 5 years. He's already reached 2.5 crores. Now, is it even if he's all in equities, is it possible?
So first of all, Surbhi, both the viewers are utopian investors. I think if everybody invests more than 50% of their income into investments, it will be a great place for our markets, okay? And for them individually to achieve their goals. So now on a realistic side, I think, again, congratulations to Ayush that I think he started early. Because already, if he's made a corpus of approximately what he mentioned about 2.5 crore, that's pretty sizable. The only thing what he, I think, needs to understand is that the target now, the journey forward, he needs to be a little bit more realistic because he's still wanting to get another 7.5 CR in the next 5 years.
Investing and 2 lakh rupees every month.
Per month. And even if we do a normal conservative calculation at 10% or 12% on a CAGR, he needs to do a very sizable, I think, SIP of almost, if I'm not mistaken, a very large sum, which is more than his salary itself. So I think what he could ideally do is stretch his retirement or this corpus time horizon and go with a step-up type of a thing where he could reduce his expenses like what he said, if that's in his bandwidth, and try to achieve that corpus. But here he needs to be realistic because he's done the journey presently very, very efficiently.
I just want to highlight this table that we have on the screen and what it illustrates. It's a really great one that Prableen shared with us. We're taking the example of someone who's doing a 10,000 rupees SIP, and let's say they want to reach their target retirement corpus by age 55. The earlier you start, the better it is. The person who started at age 25 gets to a corpus of 3.5 crores. Someone who started at 35, 1 crore. 40 years, you're only at 50 lakhs. If you start later than that, well, then, it's 23 lakhs, which is what? Not even peanuts when we're talking about retirement security. Prableen, anything to add to Ayush's query?
I think, Kalpesh has covered it. So amazing the way he's, but I think this table, Surbhi, which you shared in the example of Ayush, I think what we see is that compounding actually happens in a longish time period. So if you can allow a little more time for your money to work for you, I think it can be so much better. Because this example, which you're flashing on the screen at 45, for example, if when somebody is starting and we see just about 23 lakhs is created. This 20-year difference, we often have this tendency of overestimating our earning capacity. So even if we are doing 4 times at 45 of what we were doing at 25, we will only be at 93 lakhs. If you're doing 8 times of what we're doing at 25, we'll still be at half of what we could have achieved by starting at 25. So we have to do 16 times of what we were doing at 25, Surbhi, when we start at 45 to be able to reach the same corpus. So I think Ayush has done a great job. And if the time can be just stretched a bit for him, I think the goal achievement can be so much easier.
Whether it's a wealth creation or whether it is weight loss, both become more difficult with passing age. It's better to start early, right? I think that's the rule that comes to mind. Absolutely, Ayush. Hopefully that kind of helps you out. Now, I just want to end with some basic brass tacks rules that one must keep in mind. And probably let's talk about loans. We spend a lot of time talking about our investments. Perhaps not enough time is spent talking about loans. And I think one question that always confuses people is whether I should invest, whether I should, redeem a mutual fund and then, pay for a short-term goal, or whether I should take a personal loan. What's your preference here?
So I think dependence on debt is really rising, Surbhi, and that is one of the worries, I think, especially the today's generation. So we pick anybody, any example, I think, of course, a home loan is a productive loan, an education loan is a productive loan, but we are increasingly seeing personal loans, vehicle loans, and for discretionary spending, that bucket is really rising. So I think it's important to understand that if you're taking a loan, it should be ideally for productive reasons, which is your home and your education. Otherwise, one should try and trim it. And if you take an example, let's say, travel, because we've been talking about it all along the show. So I think if somebody wants to travel abroad and requires about 3.6 lakhs, it can be done by saving 20,000 a month. But you need that 18-month period to be able to achieve that 3.6 lakhs. And if somebody is really in a rush and says that, okay, let me just take a personal loan and go on my trip. So a personal loan costing him 14% will result in him or her paying an EMI of almost 12,300 for the next 3 years, wherein the interest amount, the extra that they'll end up paying is roughly 83,000. And if you're doing your own saving and going on the trip, Surabhi, that amount is free for you to save and invest later. And if you're doing this, taking this loan, not only are you paying this interest amount, but you can't channelize that amount because you're now paying an EMI towards any savings. So it is so important to keep your debt under check. So check your debt to income ratio, put all your EMIs together, calculate how much it is, and it shouldn't be more than roughly 30 to 35% of your take home. That is really important. And there are different ways of reducing your debt, either by following, the highest interest amount first, or maybe the smallest loans. But it's really, really important to clear out that bucket if you do have more than the home loan and education loan. So unproductive loans need to be cleared out first.
Okay, all right. That's very good advice, very well taken. Kalpesh, finally, to now come to final thoughts. You gave us the key principles of a financial plan, on which a financial plan will rest. What about the important steps or the rules, to follow through on that plan? Whether it's your expenses, whether it's that emergency corpus, whether it's stepping up your investments, what are some of the other rules that one must try to follow at least?
So a person should introspect first. And as I said, nothing more important than a cash flow. So in that, first just, create 3 buckets of needs, wants, and lifestyle. I think once a person, hand on heart does that, he will automatically be disciplined. And like Prableen gave the percentage, that even if you have a liability or you want to repay a loan or something, it should not be, according to me, more than 25%. Because then it starts eating into your lifestyle, your utilities, and even your savings and investment thing. Second thing is, be very, very careful about the insurance part. Because that is one aspect in India where I have seen people are bleeding through their nose, yet they pay premiums in the wrong policies. Just a simple fundamental rule: insurance is for protection and investment is for growth. Please do not club both the other, each other, Keep it separate. Third thing is that investments which you make should be in products which are liquid, which are transparent, which you understand. I think, trying to be a part of the FOMO or the fad or the latest thing which gives you high returns in quick time, I think they fall flat and people have got stuck at the wrong end of the tunnel many a times. So they might be making money, but they've never created wealth. And that is, I think, the fulcrum of the whole plan, that we want to create wealth. And wealth is created by a thought and action.
Absolutely.
So I would like to sum it up in that have a goal, pursue it with discipline, and check your behavior.
Oh, absolutely. Very well said and very well summed up as well. I think if we can follow even 70 to 80% of this advice, we will, go a long, long way in realizing our financial as well as life goals. Thank you very much.
Thank you.
Kalpesh and Prableen, thanks to both of you for joining in on this first show of the new financial year. Well, viewers, hopefully you found that conversation useful. Keep connecting with us. Send us more questions, topics that you want us to highlight, and we'll take it up in the coming weeks. Thank you for watching.
Let's talk money.
અમારું યાત્રા ચાલે છે પદયાત્રા અહીંયા જામનગર અમારા ઘરથી દ્વારકાધીશ સુધી અને બસ આ બધાના આશીર્વાદ રહે અને શ્રીજી બાબા દ્વારકાધીશના બધા ઉપર કૃપા રહે આ જ મારી પ્રાર્થના છે અને અમે હમણાં પદયાત્રામાં 5 દિવસથી ચાલીએ છીએ અને 2-4 દિવસમાં પહોંચી જશું દ્વારકાધીશનું કૃપા રહે અને બધા શ્રીજી બાબા બધાને સંભાળીને રાખે ને બધાને આશીર્વાદ આપે બધા યુવાને ભગવાનના પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને સનાતન પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને બસ એ જ મારી બધા યુવાને એક મેસેજ મોકલાવું છું મારા ભાઈઓ અને મારા મિત્રોને કે આપ બધા શ્રીજી બાબાના આશીર્વાદ લઈને આગળ વધો અને જ્યારે ભગવાન છે તો કંઈ ચિંતા નહીં કરવાનું
Hello and welcome. You're watching News Center with me, Ashmit Kumar. Now, the law governing the Waqf land is set to undergo a sea change. Now, the Centre has introduced the Unified Waqf Management, Empowerment, Efficiency and Development Act. We've, of course, been calling it the Waqf Amendment Bill. Now, this bill will amend the Waqf Act of 1995. The proposed law has evoked strong reactions and polarizing opinions. So what are Waqf properties? What are the changes that are being introduced and what are the concerns that are being raised? We'll try to answer some of these questions. Now, Waqf essentially means properties donated for charitable purposes. A person can donate a property as Waqf, which is irrevocable. The ownership of the property is then transferred and this Waqf property is then managed by as many as 32 state Waqf boards. Now, speaking of Waqf boards, here are some interesting numbers. Total Waqf land is pegged at 9.4 lakh acres. The total value 1.2 lakh crores. This makes the Waqf boards the third largest landowners after the armed forces and railways. So, what are the changes that the government is seeking to propose? Well, there are quite a few, but we'll focus on the few big ones. Number one, the Central Council, which was an all-Muslim grouping, now will need to have 2 non-Muslim members. Additionally, 3 MPs on the council need not be Muslims either. Number 2, the existing act provides for a degree of finality to the decisions being made by the Waqf Board and the Waqf Tribunal. The new bill, however, has another layer of legal appeal. The new bill says that decisions of the tribunals can be challenged before the local high courts. Number 3, new bill proposes that no government property can be declared as Waqf property. This provision will also apply retrospectively, and in case there's any dispute, the fate of the property in question will be decided by a designated officer appointed by the state government. Number 4, through this bill, the government is seeking to increase the threshold of who can donate a property to Waqf. Only a person practicing Islam for 5 years or more will be eligible to declare Waqf. Number 5, Waqf by user. Well, the legal understanding under the Waqf by user was that a property that is being used as Waqf land for charitable purposes for prolonged periods will be deemed to be Waqf. Now, that is under the current existing act. This legal clause, however, is being removed entirely as a part of this proposed bill. And finally, number 6, the new law has also omitted Section 40. Section 40 is the provision that gave Waqf boards the power to decide whether a property is a Waqf property or not. Now, the sweeping changes have seen various political parties and Muslim organizations slamming the bill as an attempt by the centre to dispossess Muslims of their wealth. Critics also question the stripping of powers of Waqf boards and the possible enforcement of oversight and audit powers that the bill has blessed the state as well as the centre with. Now, let's go across to the Parliament action where we had heated exchanges take place in the Lok Sabha.
मुसलमानों में भी जो शियास हैं, सुन्नीस हैं, बोरास, आगाकानीस, पसमानदा मुस्लिम्स हैं जिसको बैकवर्ड माना जाता है, और विशेष करके महिलाएं और बच्चों के लिए जो हमने प्रावधान रखा है, तो ये मुसलमान का कम्युनिटी के अंदर में इतना जोरदार स्वागत हो रहा है। इसका ऑडिट प्रॉपर होना चाहिए, तो ऑडिट का भी प्रावधान हम लोग राज्य सरकार को ऊपर में छोड़ा है, क्योंकि आखिर तो सर ये सारा प्रॉपर्टी का अथॉरिटी राज्य सरकार का है।
इस बिल के द्वारा 4 इनके मूल उद्देश्य। पहला मूल उद्देश्य है कि संविधान को कमजोर करना, टू डाइल्यूट द कॉन्स्टिट्यूशन। इनका दूसरा उद्देश्य है भ्रम फैलाना, टू डिफेम द माइनॉरिटी कम्युनिटीज ऑफ इंडिया। इनका तीसरा उद्देश्य है टू डिवाइड द इंडियन सोसाइटी। चौथा इनका उद्देश्य है टू डिसएनफ्रेंचाइज द माइनॉरिटी कम्युनिटीज।
ये उम्मीद सिर्फ एक शब्द नहीं, यह इस कानून का सार है, इस कानून का आधार है, क्योंकि यह उम्मीद देता है उन सभी गरीब मुस्लिम समुदाय के लोगों को जिनका अधिकार वक्फ के आड़ में छीन लिया गया और उसको भ्रष्टाचार और लूट का साधन बना दिया गया।
वक्फ बिल के पीछे की न तो नीति सही है, न नियत। ये देश के करोड़ों लोगों से उनके घर दुकान छीनने की भी साजिश है। भाजपा एक अलोकतांत्रिक पार्टी है, वो असहमति को अपनी शक्ति मानती है। जब देश के अधिकांश राजनीतिक दल वक्फ बिल के खिलाफ हैं, तो उसे लाने की जरूरत क्या है, जो जिद क्यों कर रहे हैं सरकार?
Well, again, as we saw heated exchanges there in the Lok Sabha. Meanwhile, to discuss this and to take this forward, we have with us Ali Daruwala, spokesperson of the BJP, Congress spokesperson Bhavya Narasimham, Narasimhamurthy, Zeenat Shaukat Ali is Director General of Wisdom Foundation, as well as senior journalist Shahid Siddiqui, also a former Rajya Sabha MP. They'll be joining us. But first, given to understand that Ms. Narasimhamurthy is with us from the Congress. Bhavya, thank you so much for joining us. Firstly, we've seen some very heated exchanges. The concern that have been raised by the opposition parties is that this entire move that is being done is being designed to strip the minority population of its franchise, to strip the population of its assets, and potentially is also unconstitutional. Why the opposition? And I ask you this because the image that Kiran Rijiju today gave while tabling the bill was that sunlight is the best disinfectant. We want to bring about more transparency, and therefore it's good to have that degree of oversight. That's the impression that the government is giving. Why the opposition?
Bringing transparency in the work property has nothing to do with this particular bill. Their intention is purely, it goes like they say, understand the chronology. You have seen their bulldozer politics, how they try to demonize the Muslim community. And today they are totally touching the Constitution of India, the basic fundamental rights that it gives every citizen of this country, irrespective of their religion, equal rights. They are trying to change that. Starting with Article 26 and Article 30. Article 26, freedom to manage religious affairs. And Article 30, protecting the rights of minorities in this country. This bill is totally against these two fundamental rights of the Constitution. And coming to, when you ask one of a religious agency, how can one religious agency be governed by someone belonging to another religion? How is that even acceptable? These Waqf board, according to this bill, can be monitored or governed by person belonging to another religion. Which religion will actually accept this? I'm a Hindu. I don't think any of the religion people will accept someone else to manage our religious affairs, which are known by, them. And not just that, it even has some restrictions in terming a Muslim as a Muslim. They want someone who has been a Muslim for the past 5 years or something. You know, they have this duration to consider a Muslim as a Muslim. This is totally encroaching these minority rights just for their political gains. We have seen how their bulldozer politics, all of these are totally, you know, only attacking minorities. As someone, I mean, our party always stands for the constitutional rights of every Indian. Whether it is a Muslim or a Hindu or a Jain or a Sikh or a Christian, we have seen their
spokesperson for the BJP.
CA bill.
Yeah, I'll just have to intervene there, Ms. Narasimha Murthy.
NRC,
just allow
whatever
me to
they're
also bring in
bringing after they come.
Mr. Ali Daruwala as well. Mr. Daruwala, thank you so much for joining us. Again, the question that is being raised by the opposition parties is that there are a lot of changes being introduced which are not consistent with either the beliefs or the practices of the Muslim community. This is not something that they are welcoming, and that this is something that will disenfranchise them. That's at least the concern that has been raised by various opposition parties. Your quick rebuttal to that.
Good evening to you and to all the panelists over here. I would like to ask the spokesperson of Congress firstly, who has made her the spokesperson for the Muslim community. Congress does not represent us, we Muslims. We have an identity. Over here, when the JPC was there, we had given them ample time. Over there were 22 recommendations which have been incorporated. They had a reservation on the collector being on the board. Over here, we have gone and we have removed the collector and we have put somebody higher up over there. The most important thing over there was the non-Muslims over there. Over here, non-Muslims being on the board did not even create an eyebrow of any of the people who were there on the JPC and the people who came out. They said, we are welcoming them. Siddhi Vinayak Temple Trust. That's what I wanted to comment over here. Siddhi Vinayak Temple Trust, the largest congregation in Maharashtra, the Palki, where 40 lakh people walk from Alandi to Jijuri. The main caretaker of the Jijuri Mandir is a Muslim. On the Tirupati Trust, we have Muslim. So why this hatred? Why Congress has a problem when we Muslims don't have a problem? A. B. As a panelist over here and yourself, I will bow down to all of y'all. In last 100 years, to show me a single establishment, a college, a school, a hospital, a medical college, leave alone all this, a masjid or even a small clinic where someone has gone and set up by Waqf and they have got some services over there. Show me one. I am asking the panelists, did she see anything made by Waqf? She is speaking over here, totally baseless. Show me right now, and we will again have a show on CNBC, and I will be totally responsible for what I'm saying over here. This is being misguided. What happened to CANRC? They say Musalman ko kha jayenge, Musalman bhag jayenge.
Let's not go there.
Mr.
Daruwala.
What happened?
Mr. Daruwala, we'll end up expanding the scope of the conversation to beyond the 30 minutes that we have assigned to us.
Can I please
Bhavya, I'll just come to you in a bit, but also let me go across to Dr. Shaukat Ali, who's joining us. I'll come back to you, Bhavya. Bhavya, just for a little, I'm asking for just a little patience. I'll go across to Dr. Shaukat Ali, who's also joining us. Dr. Shaukat Ali, the question that the BJP is trying to raise is that what good has come of the Waqf boards that we have seen for the better part of the last very many years? The question, however, is being raised by very many constitutional experts as well as opposition leaders is that, yes, it's one thing to talk about whether or not non-Muslims have a role as far as governance of the Waqf boards is concerned. I'm talking about more specific provisions in terms of stripping of powers, in terms of designation of land. For instance, no government land will be a Waqf land going forward or even retrospectively. Waqf by user. Land that has been traditionally been used as Waqf land for charitable purposes, like for a mosque or perhaps a graveyard, that will not happen. That will be discontinued prospectively from here. At least that's the assurance that has come from the government. The question that I'm asking is that are we paving the way for even more litigation, even more slugfests in terms of management of 9.5 lakh acres of land?
You have a very strong point. You see, it is going to happen because, you see, the Waqf land itself. Now, you know, in UP also we have been told that a large amount of land has already been taken away. You know, I mean, I don't know whether this is a factual or not, but, you know, rumor has it that 11,000 acres of land has been taken away, which is Waqf land, by the government, and so it has it in Karnataka and other places. Now you see, your question, what you are asking me, is it is bound to create litigations, and because it is, see, today land is the most important issue in the world. There are wars fought because of land, that the ownership of that land. You look at what is happening in Gaza, for example, and it is the land that is the ownership of that land becomes, when it becomes questionable, or when it is questioned, the litigations have gone right up to the United Nations, and so far we have not seen any kind of a consensus, because you see, people have different opinions in this matter. So, I mean, that is on a very large scale and international, but I'm talking about on a smaller scale in India, when there is land involved, whether it is Muslim land, whether it is Waqf land, whether it belongs to any other denomination, especially religious denomination. Today, religion has become, religion is meant for spirituality, to unite people, to get people under one umbrella, to make us compassionate, to make us humble, to make us caring and sharing for each other. Unfortunately, the misuse of religion today has become such that, we have begun to dislike and suspect each other. We have begun to dislike and hate each other. I mean, these are all, sort of maneuvering.
That's an interesting point that you've made, Dr. Ali. An interesting point that you make there, Dr. Ali, about whether the government or the state has a role to play as far as management of religious affairs are concerned. Let me take that across to Mr. Daruwala. Mr. Daruwala, same question to you. I'm diving into two very specifics here. One, the provision in the bill that says no government property can be declared as Waqf property. That's number one. And that will apply not just prospectively, but also retrospectively. The other is Waqf by user, again being discontinued. This is a practice that will no longer have the blessings of the law, at least as per the new bill that has been tabled in the parliament. Will it, as per you, will it not invite or perhaps create room for even greater litigation when you're providing these grounds that there needs to be a distinction made? No government land can be Waqf land. There can be no case made for Waqf by user. Is that not paving way for more litigation?
Correct. Answering your question straight. Over here, there are distinguished panelists. I spoke to Shaukat ma'am, such a distinguished lady. She had her thoughts so clear. She was, though misguided, that 11,000 acres in UP has been taken over. Just setting the record right for her. I'm sorry, I'm going beyond my purview. That now such land has been acquired in Uttar Pradesh. Karnataka, Waqf is the only board which is so active over there. They do not even adhere to the local politics and the local government. Now, answering your question straight, don't you think a government land being declared as Waqf, and by a panel, I would distinguishly, I will not call them fools or something out of due respect. This panel of 7 people, if you see how they are elected, for 100 years it is running in the family. There is no transparent election. The Mutwalli, Shaukat ma'am will understand when I'm saying this, the Mutwalli, the Imam, the Bangi, it is going in the family. And so much of Waqf land has been sold for peanuts. For a value of rickshaw, the land has been given. We have cases here in Pune where just for a rickshaw, land has been sold. Over here, government land cannot be declared. It is out of the preview of the Waqf board. And coming to the second question over here, Waqf cannot be arbitrary. In India, there is nothing that is arbitrary. Everything has to need to go to court. Did the Congress fear it going to the court? Why did it kept this bill out of the clutches of the honorable court? I, as a BJP spokesperson, can tell you with total confidence that supreme judiciary is supreme and it is not penetrable. That is my words. Anything that goes to the honorable court in India, there are no two ways that you will not get decision. Let the control go to the court. Period.
Let there be judicial oversight. Let me take that across to Ms.
100%.
Narasimha Murthy. Ms. Narasimha Murthy, you wanted to join in on the conversation. the question I want to ask you is that the government is proposing that, look, we only want more transparency. What's wrong with having more judicial oversight? What's wrong in not having government land fall into Waqf hands? That's the question being asked. And what is wrong with having some amount of high courts overseeing these issues? That's the point that Mr. Daruwala is trying to raise.
First, I want to respond to Mr. Daruwala's question as to who made me the Muslim spokesperson. Sorry, I'm not the Muslim spokesperson here. I'm a Congress party spokesperson. I speak for my ideology. So do I expect it from you. You might be a Muslim. You might be a Muslim by your religion, sir. But if you had represented Muslims, if you had, because he started it, let me just put an end to it. If you were a Muslim, if you had represented Muslims here, you would first question your own party as to why there is not one cabinet ministers from your community, why there is not one Muslim candidate.
Well, again, widening the scope of the conversation, Ms. Narasimha Murthy. We're widening the scope of the conversation, Ms. Narasimha Murthy, and urge all of our panelists to stay within the remit of the Waqf bill that we're discussing here.
Otherwise, just say you're a BJP spokesperson.
None of us are audible over the other. Ms. Narasimha Murthy, I'll just request you to stay within the remit.
Yeah, because he asked me that question, so I had to give it back. I have to tell him, like, you do not represent Muslim community at all. If you did, you would have questioned
You've given
the
your answer. Let's
politics
focus
there.
on the bill now. Let's focus on the bill, Ms. Narasimha Murthy.
That thing. And government oversight. Which other religion has government oversight? Why particularly Muslim religion is our question. Doesn't it take away their fundamental rights? And more importantly, the way they're centralizing this, doesn't it take away the federal structure of this country? Isn't it against the federal rights of the states? This is under concurrent list.
Right.
Right? And if you have a national portal, yeah, you're centralizing it. You're taking away the states' rights here, not just the Muslim community rights. Why would you impose that on all the states like this? Answer is that.
Right, Ms. Murthy, it's a volatile conversation with very strong opinions on either side. I'll urge all of our panelists to stay on with us. We're just diving into a very short break, but we'll continue this interesting conversation on this very polarizing subject on the other side of this short break. Welcome back. You're watching News Center with me, Ashmit Kumar. Now, we still have with us our panelists, Bhavya Narasimha Murthy. She's from the Congress spokesperson, Mr. Ali Daruwala, the BJP spokesperson, as well as Dr. Zeenat Shaukat Ali's Director General at the Wisdom Foundation. Thank you for all of our panelists to stay on with us. Dr. Ali, I'll come quickly to you. One of the issues that Gaurav Gogoi had raised as a part of this debate in his response, in his rebuttal to Kiran Rijiju, was that the threshold that has been set, that only a person who's a practicing Islam follower, who has been practicing Islam for 5 years or more, can declare Waqf. Why that threshold? Why place it as high as 5 years is the question being asked. Why not a non-Muslim? Why not a Muslim practicing for only 2 to 3 years? Why the threshold as high as 5 years? And that will this not create discontent in the hearts of Muslim followers?
This is a very complicated question and has many parts to it. So let me start with this, that Waqf itself is a Muslim concept of, that you give away a certain land or, a certain holdings for the sake of God, for the benefit of the community. And that can be used in various fashions. As you say, that there are khankas, there are mosques, there are endowments, there are, dargahs, there are so many fall within the Qabristan that fall within that purview. So the Waqf, the word Waqf itself that itself is a Muslim concept, and therefore, non-Muslims, do not use that concept. I guess that a parallel concept you can say that is used generally would be a trust. Would be a kind of a trust that one uses, but over here, specifically, it is used given away by the Muslims for the sake of God. You see, here it is very clearly implicated that it is for the sake of God. But I have a point here to make, that when a land has been given to you over the years for the sake of God, have you used it for the sake of God? What have you done over the years? And here I would like to come to the point that Mr. Daruwala was making, for which I am, I would say that yes, that, when there is government land involved. For example, you take, any kind of government property that you claim to be standing on Waqf. Surely, there are rules and regulations there are within the Waqf Council and within the ambit of the laws that are created and which are evolving. You see, nothing is static. We are not static people. We are evolving and we are progressing and we are reforming. We are finding ways. So there could have been a means that, certain properties where, I'm giving an example, say, of the Parliament House. One cannot dispute this. This would be a ridiculous kind of an argument. So I would say that, when you're talking about such properties, one has to give the concession, and the tribunal has had to sit down and talk it over. And you see, I would consider, say there was a Parliament House standing on Waqf land, I would say, isn't that also a sacred place where decisions of a very serious nature for the entire country and the humanity of our country of India are made? So wouldn't you consider that to be sacred land? So I mean, a sacred act. So I would consider it to be a very sacred act, of the people who are sitting there, whether they're in the proposition or the opposition, are working towards that. So one has to make those considerations, and there is no doubt that over the years, the land and the properties have been misused, sold off, gone to waste. A lot of money has been lost.
There's a strong case to be made for misuse of those properties, Dr. Ali. We're running out of time. I'll just go across to our remaining two panelists for a quick closing comment. Dr. Ali, they're agreeing that there is a case to be made that these properties perhaps have not been used in the best possible manner. The question I want to ask you is, and the point that Bhavya was making as well, Mr. Daruwala, is that in light, the oversight powers that the centre has been granted with, that the state has, will that not grant the centre and the state a fair bit of influence over the functioning of the Waqf board, of the council?
Why not? Why not? Answering your question, why not? If the central government has a say, what is wrong? You are an Indian citizen. You bred in this country, you ate in this country, you drank in this country. But when you die, you leave the property for the sake. I'll just add, because Shaukat ma'am gave a very beautiful example over here. She said that this land is going to be used for the sake of God. And to add to it, which she missed the point, that the income, the outcomes and the earnings will only and only use for Muslims. A non-Muslim will not benefit it. In the Parsi General Trust, where the Parsis are there, where the Hindus are there, where other communities are there, a South Indian, she's a South Indian over here, I can make out from her surname, from the Tirupati Temple Trust. Is there any discrimination that if a Muslim poor person comes for a kind of a bill discount or some help, can you say, no, we cannot give you money because you're not a Hindu, please go away? How does it sound? Ma'am, be a fair human being.
She's citing best practices across religions. We're completely out of time. Bhavya, coming to you for the quick 30-second final comment.
How can you send an Indian citizen away just because he's not a Muslim?
This particular bill,
honestly.
So I'm talking for every Indian citizen, whether it is a Muslim or a Hindu or a Christian.
Hindu is not entitled.
When Congress party is here, anyone's right has been violated, we speak for them. We speak for the minorities, we speak for the OBCs, we speak for the SC/STs. As simple as that. I don't care if you are a Muslim or a Hindu. I don't care if you belong to BJP or whatever. But you You are just being so selective.
I'll just have to
Please
cut this
stop.
conversation short.
But very important,
Mr.
this is
Daruwala.
totally against the constitutional rights and the federal rights of the states. Setting up a digital
Clearly
portal,
very passionate arguments being made by all of our panelists there. I'd like to thank all of our panelists, including Dr. Ali, Ms. Murthy, as well as Mr. Daruwala, for sharing their time and their perspective. Clearly a polarizing subject. We're yet to see a vote on that in the Parliament. We'll, of course, keep you updated on the latest coming in on the Waqf Amendment Bill. But that's all the time that we have. It's a wrap on this edition of News Centre. More news and updates will continue right here.
If they pump in more capex into their business, then Indus Tower gains definitely, because they'll get better tenancies and they will also get newer towers with that capex. And the last stakeholder is Bharti Airtel and Jio. They are stakeholders to this as well. Contrary to many beliefs, my belief is that a stronger VIL is better for.
Welcome to Indianomics. This is a banking special. Banks have been facing pressure on their margins because their lending rates have fallen because of the repo rate cut. Their lending rate is linked to repo rate. But the cost of their deposits has remained high. Bankers and Reserve Bank are hoping that as the Reserve Bank floods the market with liquidity, deposit rates will fall. But that hasn't happened so far. It's 2 months since the repo rate was cut. 7 trillion rupees have been infused, but deposit rates haven't fallen. Now, the other reason why deposits are staying high is Indians are saving less and less via bank FDs. Instead, they are preferring mutual funds. The mutual funds also keep their money in banks, but in the current account, from which they are frequently withdrawing for transactions. Such current accounts are unstable, so for longer-term loans, banks are forced to raise one-year money at 8% through certificates of deposit, CDs or bulk deposits. The question we are asking today, therefore, is, given the new savings pattern of Indians, is it likely that bank margins will continue to remain under pressure and never return to the pre-2022-23 levels? Will loan growth also be under pressure for want of stable deposits? In short, is the best of margins and loan growth behind us? For all these questions, I'm joined by 3 veterans: Dinesh Kara, former chairman, State Bank of India; S.S. Mundra, former deputy governor and a former chairman of BOB, deputy governor of the Reserve Bank; Srinivasan Varadarajan, chairman of Union Bank and a veteran banker at Axis in his previous avatar. Gentlemen, thank you very much indeed for sparing time for me. I'm deeply grateful. Let me start with someone whom I can call a practicing banker, Srini Varadarajan, who is still the chairman of Union Bank. Srini, what is your sense? Is this shift in savings behavior going to permanently impact banking as a business? As Uday Kotak puts it, that there is a challenge to the business model.
I think you've got to look at it from multiple perspectives. You're looking at the last couple of months, which has been, which everyone knows is the busy season as far as the banking system is concerned. And the maximum growth happens in that quarter. I think looking at it as a signal for what is deposit rates is not necessarily the right indicator. We will see some of the deposit rates coming down this quarter, which is typically a sort of a lean season. So that is one aspect. The other aspect which you touched upon is that whether the peak of bank margins in terms of NIMs is behind us, and is that something which we need to factor in going forward? I would think the market to a large extent is reflecting that, even though every analyst on the street is to some extent overweight banks or recommending banks. I think the banks are struggling to perform over the last couple of years. That, to a large extent, is due because of consolidation of market share amongst few banks. If you look at the last couple of years, incremental market share of 3-4 banks is above 50%. And therefore, every other bank is forced to fight for the remaining piece of the pie. And which means that when you're looking at bulk deposits or CD rates, when rates are set at a high level, others typically become price takers. And therefore, costs are not coming down on the deposit side. As you said, CASA and retail term deposits are growing at a steady pace, but nowhere to the pace which credit growth is happening. And therefore, NIMs continue to be under pressure and will continue to be under pressure.
Okay. Well, let me get Mr. Khara in on this. Clearly, he is a price setter. I mean, State Bank is one of the guys who's doing the consolidation. Mr. Khara, we don't see rate cuts even from State Bank. And liquidity aplenty has been given. A CRR cut in December, almost 7 trillion rupees by way of OMOs, swaps, you name it. And now we have ended the quarter with a little bit of a surplus, actually, in the interbank system. What is your sense? Is there a permanent problem? In spite of liquidity, will this deposit cut not be commensurate with the lending rate cut?
Well, I think I tend to agree with what Mr. Srinivasan has just mentioned. There are different segments of the economy, and when it comes to the seasonality of the deposit and the credit of the economy, there are various dimensions. So when it comes to deposit, particularly, when we look at the credit deposit ratio for the system as a whole, which is around 80%. So naturally, when the credit deposit is at 80%, so there are many banks which are clamoring for the deposit. And particularly when it comes to the price setters also, what you mentioned in terms of banks like State Bank of India, who are witnessing about 12% plus growth in terms of the loan book. And also when it comes to deposit, they have to maintain the pace of the deposit growth. So they cannot be out of the market. And that is the reason why perhaps they have not seen the reduction of interest rate in the deposits.
Okay.
There are, we look at it from the point of view of the structural changes, a couple of structural changes which have happened. We have seen that, for last 10, 12 years, there is significant growth in the mutual fund AUM.
Yes.
It used to be about 12 trillion. Today it stands at about almost about 67 trillion. So that very clearly means that it's one segment of the society who have become saver in this particular situation. They have only seen the upside of the mutual fund. Only for last about 2 months' time, they have started witnessing the reversion to mean.
Yes.
And that is one of the reasons why probably you would have seen that, when it comes to SIP, whether those SIPs have been paused or there have been stoppage of SIPs. So I think this is one phenomena, what you mentioned, whether deposit will go away and people will go only for the mutual fund. Perhaps this is one area where now the behavior will undergo a change.
Yes.
This generation of the savers will probably have much more mature outlook. There will be allocation principle which they will be applying. They will be going deposit and as well as for the market instrument, depending upon the risk appetite.
No, that's the point, sir. My father saved only on FDs. Whereas I would assume that, and I am on the threshold of retirement in a few years, I would perhaps be more, different in my asset allocation. So, Mr. Mundra, my more elementary point, I take what Srini and Mr. Khara are saying, seasonal, slack season, busy season, all that is taken. But isn't there a permanent issue that lazy deposits era is over? And therefore, bank margins won't be what they were. Banking business won't be as easy as it was.
Okay. Interesting point, Lata, and both Srini and Mr. Khara has made very relevant point. But let me start with, there had been certain narration, and you have also mentioned recently. Number one is about, looking at that you raise deposit 8%, where the cost ultimately comes near to 9%, and you land at 8.5%.
Yeah.
Similarly, there had been narration that CD ratio is running at 80%. Now, what I would like to argue that these are a very valid points and they indicate to a long-term trend, but they are not as binary as we can very simplistically look at them.
You're referring to the, I think we should run the Uday Kotak tweet. I think you're referring to that. That 8% cost and 9.5%, 8.5% home loan.
Yes, I am referring to that. The fact remains that while you are raising deposit at 8%, you are also having the CASA, which is maybe 3 to 5 or 7% in saving rate and zero cost at current account. So ultimately, you look at blended cost. Why I'm telling it is not as binary. Similarly, you are talking about that a home loan is given at 8.5%, but at the same time, there are loans which are also earning 11, 12%. So again, you have to talk about the blended yield. The point I am trying to make, Lata, that with all this, even with the trend which is little declining, but if you look at the NIM of Indian banks, they are still very high if you look at globally. So there is a room and there is a atmosphere is building up where I agree these NIMs have to come down to a level which is more matching with that. So I agree with Srini that couple of months or 3 months did not to be taken as a permanently lasting trend. But my opinion, fact remains, this is a high time for Indian banks that they will have to look at the credit side and move away from this model of, getting into wedlock with an asset. Means you underwrite an asset and then till maturity it remains. It has to be originate and distribute model. And for originate and distribute model, you have to have an efficient market. It was not there at all few years back. Today there are avenues are available, but fact remains that lot more is to be done, and banks have to be prepared for this change where the NIM would be under pressure, NIM would be declining, and they would have to learn to recycle their assets and do the new underwriting. As well as one last thing.
So can I come to you? Can I come to you in a minute? I'll come to you in a minute. I take your point entirely that one point you make, yes, the era of lazy deposits and therefore high NIMs is under challenge. And secondly, that now banks have to circulate their assets, buy and sell their assets a little more. I'll come to that in a minute, but I wanted to ask Srini another thing. The constant criticism, I get even trolled for that ultimately money remains in the banks. And therefore, why are you all cribbing? You tell me why it is not different. That money coming as FDs and money staying in the current account of a mutual fund, why are they fundamentally different?
Clearly, as you initially said, the behavior analysis indicates that, the current account deposits are volatile and you cannot rely on them for long-term lending. So the point one needs to understand, and one possibly the market or the regulator needs to sort of mandate, is that banks need to disclose quarterly average balances of all these deposits, whether it's current accounts, savings accounts, retail term deposits, and bulk and CDs. Because the composition of this is changing. The liability composition is changing. Even though a year-end number looks like X, actually the average balances are not that. And the composition of current and savings accounts in the overall liability profile is coming down. The system is growing credit at a faster pace than the average balances of CASA are growing in the system. Therefore, even though these are low-cost deposits, their share in the overall liability profile is coming down. Therefore, the cost is getting pulled up. So structurally, the NIMs are actually declining, and that is the truth, and that is going to continue. And I agree with Mr. Mundra that, banks have to be prepared for lower NIMs. I think whether you call it lazy banking, whatever we call it, I think the CASA profile of banks and as a percentage of the overall liability is coming down on an average basis. That has implications for cost of funds, and that has implications for NIMs, and that is not going away.
Okay, I was going to put that last line to vote. Are NIMs structurally headed lower? Srini and Mundra have already said yes. Mr. Khara, where do you stand? Just yes or no. Are NIMs structurally lower?
I would say that if at all you're looking at NIM of 4, then perhaps yes. If at all you're looking at NIM of 3, then perhaps no.
Okay, I will take it as 2.5 out of 3 votes in favor of the idea that margins are going to be a little under pressure compared to the past. We have to take a break, and after that, I want to ask you whether the regulator and the tax authorities need to change some rules. After the break.
a weaker VIL for a simple reason that a weaker VIL will resort to pricing and discounting. VIL has taken care of its spectrum dues till FY27, and this will allow them to borrow money from the market and pump it back into capex, which allows them to stay competitive in the market. That's immediate gain that they have. The issue is that the problem doesn't get completely solved here, because in March of 26, they'll be due for their AGR dues, and their current EBITDAs do not allow them to cater to that fully, although there'll be some growth in the ARPU, etc. But for now, the money is available with them on their cash flows are not good enough to take care of their capex requirements in the immediate future. So so they're not completely out of the woods.
Welcome back to this special Indianomics, where we are discussing whether India's banking model has been challenged and is looking like changing and becoming tougher. I've been speaking with Mr. Dinesh Khara, Mr. S.S. Mundra and Srini Varadarajan. Gentlemen, thank you very much for your patience, for staying on. My next question is, what can the regulator or what should the regulator do? Mr. Khara, the EBLR, External Benchmark Lending Rate Rule, the Reserve Bank brought it because banks were not passing on the rate cut even after RBI announced a rate cut. So they said your lending rate, many of them, will be linked to the repo rate or the T-bill rate. But the cost of funds, the deposits are not linked to anything. Do you think EBLR needs to be refined? Do, say, savings deposit be linked also to repo, something like that?
No, actually, there was a situation where there was an effort made by banks to link the deposit rates with the external benchmark. But what we have seen that, the market does not respond to that. And normally it doesn't really work out well. So that is the reason why perhaps, and also we have to acknowledge the fact that when it comes to savers, that community is very broad-based. There are very common men who may not like to have that kind of a risk sitting in their deposit book. So this is I really wonder whether it will be a success or not.
Okay.
But I think what you mentioned, when it was introduced that you have to link up your loan book to the EBLR, then perhaps that can be revisited. Maybe.
Exactly. That was going to be my question. Srini, do you think therefore loan book could be could EBLR be rejigged because it seems to impact only one side?
I don't think so. I'm not understanding why that should be the case. I think EBLR is now reasonably well established. Okay. I think it to some extent improves transmission. See, the whole thing on the liability. See, I think the liability side starts first. I think the license to grow for a bank comes from his ability to raise deposits in a sustained, robust manner. And I think that should be the fundamental principle behind growth in any bank. If you try and grow the asset side at a pace which is much faster than what your sustainable deposit growth is, there is always going to be a problem. And therefore, banks have to calibrate their growth on the asset side based on how their deposit profile is growing.
Okay.
If you try and grow assets and then try and search for deposits, you will end up sort of weakening your liability profile. And that to a large extent is what we are seeing in some of the smaller banks. So the thing is, I don't see any reason to tinker with the EBLR. I think what we need to do is to try and make sure that the liability side growth to a large extent drives the pace of asset growth. And as long as that is there, I think it will work. By growing the asset side faster is when I think the risk lower NIM sort of increases substantially.
Okay. Okay. Well, there are some banks, of course, with very stable deposits, salary accounts like Mr. Khara's bank. And so they can have the ambitions of high growth. But those
That's what I said, Lata. There are few banks which are on an incremental basis taking away the lion's share of CASA as well as retail term deposits because of their ability in terms of digital engagement and various other things they have in place in terms of customer profile. With the result that every other bank becomes a price taker and therefore they are in a very difficult situation.
Well, Mr. Mundra, I want to come to you because you brought the very important point that banks have to churn their assets now. You can't give the loan and hold it till maturity. You have to manage the book. Do you think the regulator also has to become a little open to banks depending on wholesale funds and managing the liability part also? The fixation with CD ratio probably, as it is, in the D of the deposits, they are not including NABARD refinancing and, the D is a little underestimated. So do you think separately, the RBI also has to become a little open to people taking bulk deposits and certificates of deposits? Nothing wrong. We have all to become marketized.
Okay. Number one, I think whenever there is a little sign of stress and the narration goes back that then our regulators should do something.
Okay.
I think all the entities are mature enough. Market processes are well established. To my mind, one, I have already mentioned that you have to manage your credit book more efficiently. You have also to become more efficient in your asset liability management. Okay. Now, if you look at it, I mean to say, you see there is something like behavioral pattern in CASA deposit, which is allowed by the regulator, right, for your ALM plotting. Now, if you look at the behavioral pattern of your CASA deposit, you also look at the behavioral pattern of your wholesale deposit, you reach to a core portion of your deposit, which you can call as a core portion. You put some allowance there also further, little bit as a cushion. That core portion is what you should use for your long-term lending. Match it. And then you have the short-term lending and the consumer loan. And that long-term book also which you create, then you should be able to churn. I think it will be a virtuous cycle. But what I am trying to say, I agree with all the gentlemen, with you, the whole structure, it has to go a structural shift. Now, there has been argument that this preemption should be reduced or other the regulatory cost should be reduced. Okay, fine. To my mind, that is not a lasting solution. That is a band-aid. Okay. Regulator do it today. Within 6 months or a year, everything will be absorbed and you are back to the same place where you are. So I think what we should look at is the more lasting and root cause solution rather than every time clamoring for that, regulator should come with some crutches and provide the help.
Okay, I want to quickly try and get two questions. Mr. Khara, does the government have to rethink taxes? I mean, debt is really getting a bad deal compared to equity. And the corporates also need debt capital. They can't only manage with equity. Is there a rethink needed?
Well, I think when particularly in the context of the deposits also, there is a scope because when it comes to deposits, it is subject to tax on accrual basis, whereas when it comes to capital gains, it is subject to tax on the cash basis.
Yes.
So I think that is one area which probably needs to be addressed. And what you mentioned that, when it comes to even the long-term capital gains also, for a economy which is aspiring to grow at much faster pace, we would certainly need the debt as well as the equity both. So the gap between the, capital gains probably it needs to be re-looked into. So I think there is a scope which can perhaps be looked into depending upon the fiscal room which is available, can perhaps be looked into.
Yeah, I guess there are a lot of votaries for low capital gains on equity, capital gains tax on equity, but there are not so many people supporting debt. Final question to you, Srini. The usual cry is when animal spirits are there, loan growth will come. After all, every loan creates its own deposit. Therefore, this argument is only because you are under pressure, you're bringing all these arguments. Once the animal spirits come, deposits and loans will both grow. Is that a good argument?
So I agree. I think the growth drives credit rather than credit driving growth. So the whole thing of trying to say, give more liquidity and credit growth will happen, and therefore growth will have an uptick. I don't agree with that. I think growth, when it happens and animal spirits are there, automatically credit will be driven up. Never have we seen banks short of money when there is demand. Just by having liquidity and money and trying to push credit, I don't think so we'll achieve growth. So it has to be that investment happens, growth comes back, animal spirits are back, automatically credit will grow and banks will be finding the deposits in whatever form.
Okay, fair point. Let's end on that optimistic note. Thank you very much, Srini, Dinesh Kara and Mr. Mundra. Very important takeaways. One, growth actually solves a lot of problems. We crib when growth is not that good. Second, there's no denying that margins are under pressure. It's not going to be as easy as it was when FDs were the way in which people saved. Third, banks will have to get more active in the way they manage their asset book, and perhaps the regulator will have to get a little more tolerant with respect to banks relying on wholesale funds. And finally, does the government have to rethink on this very big gap between capital gains tax on debt and on equity? Thank you very much, gentlemen, for a very interesting conversation.
Thank you. Thank you. Thank you, Lata.
મારું યાત્રા ચાલે છે પદયાત્રા અહીંયા જામનગર અમારા ઘરથી દ્વારકાધીશ સુધી અને બસ આ બધાના આશીર્વાદ રહે અને શ્રીજી બાબા દ્વારકાધીશના બધા ઉપર કૃપા રહે આ જ મારી પ્રાર્થના છે અને અમે હમણાં પદયાત્રામાં 5 દિવસથી ચાલીએ છીએ અને 2-4 દિવસમાં પહોંચી જશું. દ્વારકાધીશનું કૃપા રહે અને બધા શ્રીજી બાબા બધાને સંભાળીને રાખે ને બધાને આશીર્વાદ આપે. બધા યુવાને ભગવાનના પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને સનાતન પ્રતિ પ્રેમ રાખવું જોઈએ અને બધા યુવાને બસ એ જ મારી બધા યુવાને એક મેસેજ મોકલાવું છું મારા ભાઈઓ અને મારા મિત્રોને કે આપ બધા શ્રીજી બાબાના આશીર્વાદ લઈને આગે વધો અને જ્યારે ભગવાન છે.
Hello and welcome to Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. It's Judgment Day in the tariff war. US President Donald Trump is all set to unveil a plan to impose tariffs on key trading partners, which is likely to include India. Investors tread with caution across the world. Special live coverage from Washington and Wall Street starts at 11 p.m. right here tonight. India has made a far-reaching offer to the US to reduce tariffs. Government sources say talks were held on sensitive issues like agri-tariffs and quality control orders. New Delhi is hoping for a temporary reprieve, even as authorities prepare to deal with all scenarios. India's crude oil imports from the US in March rise 67% amidst tariff threats from President Trump. LNG imports from the US also hit a record high in FY25. India has already cut tariffs on motorcycles and bourbon whiskey, among other goods. Bulls regained some lost ground after yesterday's sell-off. The Sensex and the Nifty gain 1%. Midcaps outperformed. Real estate and consumer stocks lead the rebound. India's 10-year sovereign bond rally after RBI's 80,000 crore rupee purchase plan. Yields dropped below 6.5%, the lowest level seen in the last 3 years. More than 43% of the companies that went public in FY25 are trading below the IPO price. Most of the gains were wiped out in the second half of the fiscal, souring sentiment in the primary markets. The government tables the Waqf Amendment Bill in the Lok Sabha. The new bill, among others, proposes that land cannot be considered as Waqf property simply because it has been used as such over time. Union Minister Rijiju says the bill does not intend to interfere in any religious practice or the management of any mosque. The Congress argues that the bill is a bid to defame and disenfranchise minorities. The Indian Army says Pakistani troops intruded across the line of control and indulged in ceasefire violation. Adds the Indian soldiers responded effectively. Indian forces are still engaged in a lengthy operation against suspected militants in Kathua district for the last 11 days. Israel expands its ground offensive in Gaza, announces a plan to seize large areas amidst fears of a famine in the war-torn region. The Forbes Rich List shows a record 3,087 billionaires own a net worth of more than $16 trillion. This is more than the GDP of all countries, barring the US and China. Elon Musk, Mark Zuckerberg and Jeff Bezos top the global list. Mukesh Ambani tops the list in India, followed by Gautam Adani. Well, let's start with the market action. Bulls did regain some lost ground after yesterday's massive sell-off. The Nifty and the Sensex gaining nearly 1%, with heavyweights like HDFC, ICICI Bank and Infosys leading from the front. 160 point higher, that's the Nifty for you. 592 points higher for the Sensex. The Nifty Bank also 1% higher. Similar story playing out for the Nifty Midcap, 1.5% higher today. So the broader market's also participating there. Prashant is standing by with the day's trading action. Prashant, after yesterday's sell-off, the markets are rebounding today, but of course nervous ahead of the big Liberation Day announcements.
Well, yesterday the Nifty got smashed. Today we recovered about half of those gains. How much should you read into these moves as we head into the tariffs tonight? I think that is questionable. A lot of it perhaps positioning. I'm not sure a lot, any of it is based on conviction one way or the other. The tariffs are going to be, lower, more dovish, or they're going to be more hawkish. This is just sort of, changing what you already own, less lightening of positions, adding on a little bit here and there. I think that's what's essentially been going on for the last couple of days now. Now, the Nifty is up on your screen. As I said, about 50% of yesterday's losses recouped. Nifty Bank did even better, about a 1% pop coming in at the Nifty Bank. And mid and small cap indices were up about 1.5% apiece. So here, of course, there was broad-based buying, which we saw. Although volumes were kind of mixed. There was enough stuff which was down on volumes once again, like what we saw yesterday. Now, as far as the Nifty is concerned, before I get to the broader market, consumer names did quite well. So Tata Consumer, Titan, Trent, Zomato, a lot of Tata there, top of the sort of gainers list. IndusInd Bank did well, Tech Mahindra. Maruti was another one which actually participated on the upside. On the downside, you had Bharat Electronics, Ultratech and Nestle, which came under some selling pressure. Broader markets, I'll start with what was up. Kalyan Jewellers, big volume-led gainer. DB Realty, Shyam Metallics. There was a name like PNB Housing, Style Bazar, KPR Mill, Supriya Life, Galaxy Surfactants. This is, the bulk of what was up on strong volumes in that sense. On the downside, as I said, a fair bit as well. BEL, there was Bajaj Holdings, Vari Energy, there was a Bernstein note. Skeptical on the space. Central Bank, RBL Bank, UCO Bank, then there's a banking space which saw some selling. Fortis, just profit booking after the last 2-3 days of run-up. KEC, Mahindra & Mahindra Finance, Novama was down about 2%, and there was like a BKG which was lower as well. So just sort of, market action for you. The big one, of course, is what we will learn from the US session when President Trump and his team announced the reciprocal tariffs. And I think we'll just have to take it as it comes tomorrow when we return. Back to you.
Thanks very much, Prashant. And yes, we will, of course, be tracking all the action overnight. Plenty expected there from the US. Indian bonds, meanwhile, yields have fallen by nearly 10 basis points. This after the RBI announced late last evening that it will buy 80,000 crores of bonds in April alone. Lata standing by with more. Lata.
Yes, a 10 basis point fall is rather unusual. So the benchmark 10-year now, the new 10-year has fallen from 6.58 to about 6.49. So basically 9 basis points at least of fall. And that is, as you said, because of this quite unexpected 80,000 crore bond calendar. Very rarely does the Reserve Bank say that I'm going to do one every week. And it's, 4 bond auctions of 20,000 crore each. It indicates a determination on the part of the RBI to keep liquidity plentiful. Actually, we ended the financial year FY25 as well with a decent surplus in the interbank borrowing market. What you call core liquidity was positive surplus by about 1.5 lakh crore. And the Reserve Bank coming proactively and saying we will be doing every week indicates that they probably want to keep the liquidity at a 2 lakh crore surplus. The market is reading this as extremely dovish because that means they will be dovish in the monetary policy coming up on Wednesday next, April 9th. A rate cut was always factored in by the market, but now the market's reading more. Will they also go in for a stance change? The stance currently is neutral. Will they go in for something like, a more accommodative stance? Will the language change? And therefore, you are seeing a fairly outsized reaction in the bond market. But now the 25 basis point rate cut expected on April 9th is completely priced in. And then, of course, there are other small positives as well. The US bond yields have also fallen, and there is rising talk, including from Goldman Sachs, about a possible recession. So all that is also abetting the rally in the Indian bond market.
Lata, many thanks. And the big story this evening, it is Judgment Day in the tariff war. US President Donald Trump all set to unveil a plan to impose tariffs on key trading partners, which could include India. The tariffs are likely to come into effect immediately. However, neither Trump or his administration has revealed any details regarding the structure of the duties or the countries that will be impacted. US officials have made it clear that top trading partners with whom the US has a large trade deficit will be the target of the tariffs. The US runs a trade deficit of $41 billion with India, which ranks 11th in a list topped by China, Mexico and Vietnam. So what can India expect? Our colleague Sanjay Suri reports from Washington on the proposed tariffs. Sanjay.
Finally, it's T-Day. T for tariffs, we all know, but what tariffs? On who? Nobody knows. Presumably, one would think the White House knows, but not everyone's sure of that either. President Trump has no doubt said that it's all settled, but several reports continue to suggest a lack of unanimity even within the Trump cabinet on exactly what model of tariffs should be applied, on whom, who should be spared. Divisions are reported to have surfaced quite sharply at a closed-door meeting at the White House here on the proposed tariffs, and this was a meeting held on Tuesday, just the day before the big announcement on Liberation Day, April the 2nd. The broad debate has been on whether reciprocal tariffs should sit alongside some form of universal tariff. Trump had, of course, suggested a universal tariff earlier on in his campaign to bring in tariffs, and he's faced some push to revive that model. The more recent, the more current approach has been for measured and negotiated reciprocal tariffs, and India and the US have been negotiating on those terms and on that basis. Trump has said, in line with all that, over the past couple of days, that he would prefer a deal to taking steps that he warned would not be pretty. And he has noted that India has agreed to drop tariffs. But we are all aware, of course, that there can be a difference between what Trump says and what he does. And so a worried world waits nervously. Not very long to wait now. Americans are no less nervous, no less worried, and the US has been in this sort of place before, so they have reason to worry. And that was close to a century back when the US raised tariffs under an act in 1930 drafted by Senator Smoot and Representative Hawley. And under that law that they brought in, tariffs were raised, and this provoked counter tariffs and set off the Great Depression. The Trump team is confident it will be different now, but already the Federal Reserve has cut growth estimates down straight away from 2.1% to 1.7%. A recession is expected. Trump himself has not ruled it out. The US is not exactly celebrating. The markets are down. They may not stay down if Trump can begin to deliver as promised, and no one really can say at the moment how big an if that is.
Sanjay Suri, yes, nervousness around the world at this point in time. That is the view from Washington. But back home, India has made a far-reaching offer to the US to reduce tariffs. Delhi is hoping for a temporary reprieve, even as authorities prepare to deal with all scenarios. Abhimanyu joins us now with the slew of tariff concessions that India has already made for the US. Abhimanyu, a lot of measures have already been undertaken since January, ostensibly to try and stave off the threat of tariffs. What are you hearing now on what next, but also recap for our viewers what has already happened so far?
Several concessions have already been announced by India for the US ever since Donald Trump took over as American president. Now, the basic customs duty on motorbikes has been cut from 50% to 40% and 30% respectively on completely built up units with engine capacities of up to 1,600 cc and 1,600 cc or more. The BCD on motorbikes has also been cut in the union budget before PM Modi visited the US to meet Donald Trump. India also removed 6% equalization levy on online ads, which is going to benefit American software giants Google and Meta, and may also lead to a loss in revenue for the Indian government. India has slashed the overall effective import duties from 100% to 50% on bourbon whiskey, from 20% to 10% on carrier-grade Ethernet switches, and from 100% to 20% on synthetic flavoring essences. The BCD has been cut from 15% to 5% on the fish hydrolytes for use in manufacture of fish feed. India's LNG imports from the US have also risen to an all-time high. India is also intending to increase its overall energy imports from the US to reduce the trade imbalance. India and US are already in talks for a bilateral trade agreement, as both the countries intend to increase their trade to $500 billion over the next 5 years. It remains to be seen what is going to be the announcement on reciprocal tariffs by the United States and the subsequent action which is going to be taken by the Indian government.
Abhimanyu, many thanks. Now, India's crude oil imports in March from the US have risen by 67% compared to February. This as President Trump continues his efforts to boost American oil exports. However, India's purchases from Russia have also risen by 11%. In fact, speaking to me in January, Petroleum Minister Hardeep Singh Puri had hinted that India will strengthen its trade ties with the US when it comes to energy. Take a look.
Energy cooperation, President Trump saying that India should buy more LNG, more energy from the US. He's even put out a number there saying that that should increase from $15 billion to $25 billion. I wanted to get your comments on that. We have spoken about this previously as well. Do you believe it makes sense? It is something that we should actively pursue and build on.
Energy cooperation between the United States and India was widely expected to figure in the bilateral talks. If you read the joint statement, if you read what the President said, what the Prime Minister said, that's evidence. And I think there is already fairly substantial energy cooperation. The fact of the matter is India needs more energy. We have long-term deals on gas with one country which was there till 2028. You've signed another 20 years there. We are in the market for more gas. We have a stated policy of taking it from 6% to 15% in the energy mix. And I think we have a very substantive relationship with the United States, mostly on gas. I see definitely those quantities being addressed for increase.
Well, that is the Oil Minister Hardeep Singh Puri. Now, it's been just over 2 months since President Trump arrived in the White House. His rhetoric on tariffs have shaken global markets, causing uncertainty for businesses worldwide. Here's a look back at the 72 days that have shaken the global economy. Take a look.
We're thinking in terms of 25% on Mexico and Canada because they're allowing vast numbers of people. Canada's a very bad abuser also. Vast numbers of people to come in and fentanyl to come in.
When do you think you would enact those?
I think February 1st.
Trump asked me how long I wanted to pause tariffs. I told him a month. I'm sure we'll be able to deliver good results for his people and the people of Mexico in that month.
So today, the United States launched a trade war against Canada. Their closest partner and ally, their closest friend. Now, it's not in my habit to agree with the Wall Street Journal, but Donald, they point out that even though you're a very smart guy, this is a very dumb thing to do.
We're talking about a tariff of 10% on China based on the fact that they're sending fentanyl to Mexico and Canada.
There are no winners in trade wars or tariff wars. Raising tariffs will only impose greater losses on American businesses and consumers.
The European Union is very, very bad to us. They treat us very, very badly. They don't take our cars. They don't take our cars at all. They don't take our farm products, essentially. They don't take very much. We have a $350 billion deficit with the European Union. They treat us very, very badly. So they're going to be in for tariffs.
As the United States are applying tariffs worth $28 billion, We are responding with countermeasures worth 26 billion euros. This matches the economic scope of the tariffs of the United States.
Country will be reciprocal. That's right. It won't affect everybody because there's some where we have similar tariffs. But the ones that are taking advantage of the United States, we're going to have it's reciprocity, it's reciprocal.
You mentioned auto tariffs the other day.
Yeah.
When do you plan to unroll?
Howard, I'd say over the next sometime, or maybe around April 2nd. I would have done them on April 1st. Believe it or not, I'm a little superstitious. No, literally, we had it planned for April 1st. I said, let's make it April 2nd. We're going to end up with a very good relationship with Canada and a lot of the other countries. Some we probably won't. It won't be so pleasant. But I think most countries are agreeing with me. They actually, many of them have actually apologized. They said, look, we have taken advantage.
Well, that's 72 days of Donald Trump in the White House. Our special coverage of the Trump tariff announcement starts at 11 p.m. right here on CNBC-TV18. President Trump is expected to speak at 1:30 a.m. India time, so it promises to be a long night. Join us as we bring you all the action live from Washington and Wall Street. Get the CNBC edge. And on to the action from the commodity space. Oil prices ease after falling in yesterday's session ahead of Trump's tariff measures. The new tariffs could deepen a global trade war that could limit crude demand. Meanwhile, gold prices trading off record highs, but prices still holding above $3,100 an ounce. Trump's tariff measures, weak U.S. jobs data and manufacturing data spurred gold buying. Remember, gold has soared over 18% just between January and March, clocking its best quarter since 1986. India's factory output rising to an 8-month high in March, according to data released by HSBC and compiled by S&P Global Manufacturing PMI, rose to 58.1 in March versus 56.3 in February. This was largely driven by stronger order growth, increased customer interest and favorable demand conditions. Remember, a reading above 50 denotes expansion, while a reading below 50 denotes contraction. The Reserve Bank of India has appointed Poonam Gupta as the new Deputy Governor for 3 years. Gupta is currently the Director General of the National Council of Applied Economic Research. She's also a member of the Economic Advisory Council to the Prime Minister. Gupta will replace former RBI Deputy Governor Michael Patra, who retired on the 14th of January. Her appointment comes just 5 days before the next monetary policy meeting, which kicks off on Monday. So that vacancy now being filled. Poonam Gupta is the new RBI DG. The government has collected dividends worth 74,000 crore rupees from public sector units in FY25. That's the highest number that the government has received so far. The dividend mop-up was 16% from a year before and almost 35% higher than the revised estimate for FY25. Coal India and ONGC are the top dividend payers, worth over 10,000 crore rupees each, followed by Indian Oil, Power Grid and NTPC. The total number of pending cases against SEBI orders at the Securities Appellate Tribunal surging over 50% in 2024. According to the Finance Ministry, cases pending for adjudication have grown to 1,121 cases in the previous year versus 736 cases in 23. FY25 has witnessed 78 companies listing on the bourses, collectively raising over 1.6 lakh crore rupees. However, out of this, nearly half of the listings have ended the fiscal year below their issue price. Hormuz joins us now with the details. Hormuz, take us through the year that eventually was, as far as IPOs were concerned. We had a great start, but of course a tepid close. And more importantly, what this now means for the future IPO pipeline.
Well, looking at the market sell-off of the last 3 months, it almost feels like people have forgotten about the existence of IPOs, but there were lots of them in FY25, particularly in the first 9 months. And summarizing that data from Prime Database, around about 78 companies went public in FY25, and out of them, nearly half, or almost 34 of them, ended below their issue price at the close of the financial year. That's what the Prime Database data is indicating. Now, there were 10 such companies that listed below their IPO price and stayed below them. There were 24 such companies which opened above their IPO price but ended up giving up most of those gains. And there were also 10 companies that saw a sharp surge in the initial phase but then are now down only to single-digit gains when compared to their IPO price. And there were plenty of underperformers when it comes to these IPOs. Godavari Biorefineries is leading that chart, 60% below its IPO price at the end of FY25. Cararo India, Western Carriers, Saraswati Sari not far behind, with shares falling anywhere between 50% to 55% from their IPO price. Of course, that does not mean that there were no outperformers for the financial year. There were plenty of them, and there were some of the names like KRN Heat, which has surged almost 4x from its IPO price in just 1 year of listing, and Bharti Hexacom is another one, 153% surge despite a significant correction from the top that the stock has seen. So another outperformer there. And Quadrant Future Tech, another recent listing, almost double from its IPO price. Now some of the IPOs might be returning anytime soon, but the market volatility is keeping a lid on these future IPOs. And of course another factor is that the shareholder lock-ins are coming to the end of these already listed companies, so expect some more action in these names as well.
Many thanks for joining us, Hormuz. Reliance has entered the esports business after its subsidiary Rise World announced that it will start a joint venture with Blast Esports. Rise plans to host large-scale gaming events on the GeoGames platform. Through this partnership, the JV will also help bring the European esports entertainment companies' events to India. We will head to a break, but up next, the government tables the Waqf Amendment Bill in the Lok Sabha. That and more when we return.
Quarter of a century, zillions of designers, and oral.
The government tabled the Waqf Amendment Bill in the Lok Sabha today. The new bill, among others, proposes that land cannot be considered as Waqf property simply because it has been used as such over time. Union Minister Rijiju opened the debate in the lower house. He said that the bill does not intend to interfere in any religious practice or the management of any mosque. The Congress argued that the bill is a bid to defame and disenfranchise minorities.
मुसलमानों में भी जो शियास हैं, सुन्नीस हैं, बोरास, आकाकानीस, पसमानदा मुस्लिम्स हैं जिसको बैकवर्ड माना जाता है, और विशेष करके महिलाएं और बच्चों के लिए जो हमने प्रावधान रखा है, तो ये मुसलमान का कम्युनिटी के अंदर में इतना जोरदार स्वागत हो रहा है, इसका ऑडिट प्रॉपर होना चाहिए। तो ऑडिट का भी प्रावधान हम लोग राज्य सरकार के ऊपर में छोड़ रहा है, क्योंकि आखिर तो सर ये सारा प्रॉपर्टी का अथॉरिटी राज्य सरकार का है।
इस बिल के द्वारा 4 इनके मूल उद्देश्य। पहला मूल उद्देश्य है कि संविधान को कमजोर करना, टू डाइल्यूट द कॉन्स्टिट्यूशन। इनका दूसरा उद्देश्य है भ्रम फैलाना, टू डिफेम द माइनॉरिटी कम्युनिटीज ऑफ इंडिया। इनका तीसरा उद्देश्य है टू डिवाइड द इंडियन सोसाइटी। चौथा इनका उद्देश्य है टू डिसएनफ्रेंचाइज द माइनॉरिटी कम्युनिटीज।
Ashmit Kumar joins us now to take us through the contours of the Waqf Amendment Bill. Ashmit, take our viewers through what the government is proposing, what the implications and the impact will be if the bill goes through.
Well, we just heard the heated debate in the parliament, and well, underlying that debate are a lot of key changes that have been proposed as a part of this latest 2025 bill. One of the key changes is that the overarching council that sits atop these various Waqf boards, now there is a provision that has been introduced that the 3 MPs that are a part of this governing council, as such, this overarching council, they need not necessarily be Muslim. Further, there's another caveat that at least 2 members of this entire governing council need to be non-Muslim. That is, in fact, one of the key changes. The other key change is that decisions that were taken by the board as well as by the Waqf tribunals had an element of finality. What this bill does is that it adds another layer of appeal. What it does is that these decisions now that have been taken by the tribunal, which had an element of finality, now can also be challenged before the local high courts. Further, and this is an important decision, the government has said as a part of this bill that no government property can be qualified, can be designated as a Waqf property, and this will apply not just prospectively, but also retrospectively, which in fact has been a key concern voiced by various members of the opposition parties and various scholars as well. Also, another key change that has been made is that no practicing Muslim can make this Waqf donation unless he or she has been practicing Islam for 5 years or more. That threshold has been put to 5. In fact, there were comments that we heard in the parliament. Why restrict it? Why place the threshold as high as 5? Why restrict it to only practicing Muslims? These are questions that are being raised in the parliament as we speak. Also, another key change that has been made is that Section 40, which granted Waqf boards the powers to decide on the status of a property, on whether or not it is a Waqf property, that power of the Waqf board has been stripped entirely, has been taken away as a part of this new bill. So clearly, a lot of key changes here, awaiting a vote from the parliament.
Yes, we will, of course, be tracking the developments in Parliament. Ashman, many thanks for joining us. Before we wrap, Forbes has released its annual list of billionaires. There are a record 3,087 billionaires around the world with a combined net worth of over $16 trillion. This is more than the annual GDP of all nations barring the US and China. The US is home to a record 902 billionaires, followed by China with 516. India is ranked number 3 with 205 billionaires. The richest man in the world is Elon Musk with a net worth of $342 billion, followed by Mark Zuckerberg with $216 billion and Jeff Bezos with a net worth of $215 billion. US President Donald Trump's fortunes have doubled in the last 1 year thanks to his social media platform Truth Social and his cryptocurrency bets. Mukesh Ambani tops the list in India, is ranked number 18 in the world. He's followed by Gautam Adani and Savitri Jindal. And finally, only 13% of the billionaires in the world are women. The list has more than 2,600 men and 406 women. Well, with that, it is time for us to wrap up this edition of Business 360. The news will continue right here on CNBC-TV18. Stay tuned. We're back in a minute with more.
Lakme Fashion Week is back to rock the ramp. This year's collection promises to showcase modern sophistication with effortless elegance. The showcase is set to be bold, reflecting a connect between beauty and style. Let's take a look at the showcase straight from the runway.
How do you think beauty and fashion empower young women like you in today's world?
So I think beauty and fashion, if you have fun with it, can be very, very empowering. Like me, I like dressing very casually. I like being very chilled out. I don't play too much with like colors and stuff, and that makes me feel very empowered and very beautiful. So I think it can be used as a tool to enhance your strengths rather than cover up your weaknesses.
Who are you walking for, and tell us about your inspiration behind it?
So I am walking for AKOK. I'm walking for Anamika Khanna, and I'm wearing her silver collar collection. And I think the inspiration around it is just warrior princess, something to make women feel very powerful, very strong, very modern, very cool. That's her inspiration, I'm assuming. I'm just channeling that.
The opening night showcased designer Anamika Khanna's designs that celebrated bold, ambitious women who own their space, lead with confidence, and inspire with their individuality. It's been 25 years of Lakme Fashion Week. What is in store and what can we expect?
As you can imagine, it's the most emotional, sentimental moment for us. 25 years of all of us together. It's going to be a spectacular celebration and I'm so looking forward to it.
Can you tell us on what the collection is all about?
This collection, it's called the Silver Collar, and as the name suggests, it's about elevating workwear for women and the very fact that we don't really follow rules anymore. Everybody is bringing that power to the
and welcome to Startup Street. I'm Ritu Singh, and with me Ashwati Mishra and Arundhati Ramanan. Here are the key headlines from the startup space. Infinity FinCorp Solutions has onboarded Beam's fintech fund to its cap table as part of its $40 million extended Series A funding round. The NBFC plans to deploy the fresh proceeds to expand its MSME lending offerings. The firm had raised $35 million in a Series A round 3 months back, led by Jungle Ventures.
Health tech startup Stance Health has secured $1 million in its pre-seed funding round led by General Catalyst, with participation from Antler, DaveC and angel investors like Srihar Shamijeti. The proceeds will be used to grow its services in India, improve its tech platform and open more physical centers in Bengaluru and other cities.
More than 3 dozen tech startups with a combined valuation of $100 billion are set to go public by 2027, as per Bloomberg News. Flipkart, PhonePe and Oyo Hotels are among the companies seeking to list in India. Most companies preparing for an IPO have been able to strike a balance between speedy growth and profitability, according to a report by the Rainmaker Group.
Stockbroking startup Grow has secured approval from CCI to issue bonus shares to its existing investors ahead of its IPO. The proposed transaction includes the elimination of differential voting rights held by Grow's founders and the issuance of bonus compulsorily convertible preference shares to all existing equity shareholders.
And the frenzy to create Ghibli-style AI art using ChatGPT's image generation tool led to a record surge in users for OpenAI's chatbot. Average weekly active users breached the 150 million mark for the first time this year, according to data from market research firm SimilarWeb.
Those were the top headlines that we're tracking for you from the startup world. But on what's brewing today, venture debt in India is on the rise, with total funding reaching $1.2 billion in 2024, marking a 30% year-on-year growth. As equity funding slows down, dropping 45% last year, most startups, especially in the SaaS and fintech, are turning to debt to fuel their expansion plans. This, as per the Global Venture Debt Report launched by Stride Ventures in collaboration with Kearney. What are the key drivers behind this growth, and can we expect the momentum to continue in 2025? My colleague Aishwarya Anand finds out from Ishpreet Singh Gandhi, founder and managing partner at Stride Ventures. Take a look.
Venture debt overall, if you've seen the trends, what we were telling as well, it was less than 100 million in 2018, and now it's 1.25 billion. So this is almost 13x growth in like 6 years. Look, I think it naturally will grow, not to that percentage growth. Okay. So venture debt will grow as ecosystem keeps on reviving more, because I think there was a time when venture capital and private equity ecosystem has been slightly subdued in the last 2 years, if you've been seeing that. So venture debt will start growing. Also, what will grow is growth debt, growth stage debt orientation, because there are a lot of tech companies who are going towards listing. Okay, when that happens, another use cases emerge that you're doing a pre-IPO round. Can you substitute that pre-IPO round with debt? You are doing some asset-heavy businesses and the scale is becoming bigger. Can you substitute that with debt? You're trying to acquire smaller companies. Why you have to dilute so much for acquiring smaller companies? So you substitute those. So venture debt will just extend itself a little bit towards growth debt, and I think that's where the growth will happen more. Traditional venture debt will keep on growing, maybe not be that percentage, but definitely should grow.
Okay. You mentioned the pre-IPO round, and the report does mention that Ola Electric and Bluestone, they used venture debt before going for listing. Could you elaborate on that a little bit? Do we actually see that emerging as a very, very big trend now going forward, that companies who want to go for a listing, they will start depending a lot on venture debt fund to strengthen their financial, to strengthen their balance sheet, to optimize their capital requirements? How will it work?
The companies you mentioned, again, they were doing pre-IPO rounds, or they were at this clear juncture of going IPO. So when you're very clear about the IPO side, you would want to dilute less, because in public markets you'll get better returns. Correct. So for existing investors and founders, to create a structure which helps them prevent less dilution at pre-IPO rounds makes sense. And you have a defined use case, right? Pre-IPO round, you're trying to get the growth, enough growth capital that till the time you're going IPO, you're well covered, even if you linger IPO, which has happened for some of the companies for a couple of quarters, and you're well capitalized for the expansion. So typically you have now in India a pre-IPO market, which was never there.
Which was never there.
At least a couple of years back, it was not as big as what it is today. So I think that use cases have emerged more.
In terms of sectors, what is making fintech, consumer tech, very lucrative for venture debt funding? And, in 2025, could we see more emerging sectors where venture debt could play a big role? Do you see that happen?
The reason fintech has emerged as an important sector because government has got a very good infrastructure, right? Individuals, we have Aadhaar-enabled credit now. Businesses, we have GST-enabled credit now. So the fintechs are emerging onto the top of the government infrastructure. That's why the sector has progressed well, and the use cases within the sector has progressed well. And if you see consumer, it's a similar case, right? Government is concentrating on healthcare infrastructure.
Yeah.
Right? There is naturally a talk about AI.
Correct.
People are saying, how can we become a tech-oriented infra if other countries can do it? So these are the two sectors, healthcare and an extension of tech. I don't want to call it AI because AI is the buzzword, naturally everybody's aware. But at least innovation coming in an infrastructure manner which will present more companies and hence present use cases.
Now, talking about Stride, you've made $500 million across 100 plus companies in the last year. Committed $1 billion, right? So this year, how many investments are you looking to make? What are consumer tech, I think clean tech and deep tech have been one of your key focus areas. So beyond that, what are the sectors that you're looking at?
Look, clean tech has been an important stay for us for the last 2-3 years. And that sector has kept on propelling well alongside consumer and fintech. We'll still think that these three areas will remain important. So 60 to 70% of our deployment has been these three sectors. We think that it will remain same in the next, at least in the next coming year.
One final question. So, US venture debt market was 5 times larger than India. So, I want to understand what are some of the lessons that India could take from mature venture debt, ecosystems and incorporate. And by when do you think we'll reach that scale?
The learnings is from the credit perspective will be to make sure that you do products which are non-traditional products. You do very founder-first kind of products. They work very cohesively amongst each other, venture debt, venture credit. And one of the reasons for growth is very accepted. Founders have got, for them it's very generic and the first thing to use in their mind. It's very accepted form, which has gained in India. So I think those learnings of ensuring that the first word of venture debt being equally taken in the breadth of venture capital comes in.
Well, moving on to what's brewing today, Bangalore-based Agritech firm Cropin has announced its partnership with global retailer Walmart to enhance its US and South American sourcing operations. Now, through this tie-up, Cropin's AI platform is going to help them optimize fresh produce supply chain by improving yield forecasting, monitoring crop health, and predicting seasonal transactions with more accuracy. For more on the significance of this partnership and what it means for Cropin, joining me now is Krishna Kumar, who is the founder and CEO of the company. Krishna, thanks very much for your time here on CNBC-TV18. Start by taking us through the details of this collaboration with Walmart and the technology you're going to be using to help them strengthen the supply chain and the kind of revenue boost this will bring for you.
I think it's a great deal for us, being an Indian company, build a technology for the technology which is becoming very relevant for the developed countries as well. One of the challenges we are seeing from our customer who are into CPG and retail segment is the vulnerability which we are seeing on the supply chain. The surety of supply is getting disrupted because of the climate change, and most of this CPG retail segment is getting impacted. They're not able to forecast the supply and demand, and that is causing either overstock or understock situation, which is again impacting their P&L. So we partnered with them. I think one of the problem we are trying to solve in these market is how do you predict the supplier risk if there is a commitment to supply X by a certain by week. Will the supply is going to come, because you have to monitor, you have to predict the yield, whether the crop is moving faster or slower. Is it the right time to harvest? Right. So all those questions we are trying to answer for them at the scale, the scale of the growers and suppliers, and also at the country scale, right? How much the whole country is going to produce and how the harvest is going to come, right? Or when is the right time to pick so that you have one extra day of shelf life, right?
Got that.
From the produce, yeah.
Well, Krishna, this of course is part of the strategic pilot program that Walmart was running, where it had selected 3 startups as part of its growth summit in India last year. So will the collaboration be for a limited period, or what is the sort of agreement that you have with Walmart?
I think this is almost like a 18 months program we are running with them, ensuring that they have, they get to the certainty of supply using technology, AI, and data. And then, the idea is to scale with the other crops as well. So there were opportunities to work on other crops with them, but we wanted to contain this to 2 large crop supply chain, and, so that they can benefit from that and then grow alongside with that, right? So I think that this is a very crucial partnership. I don't think this is going to be one-off, but this is going to go more deep as we progress.
All right, so you hope to be able to build on this existing partnership for 2 markets. But speaking of partnerships, you've digitized about 30 million acres of farmland. You have 100 B2B customers, you say. With this in your hand, what sort of new partnerships are you looking to close in the coming year or so?
Yeah, I think if you look at, we compute around 10% of the global food production sites for our customers to provide the intelligence. And most of the solutions are deployed towards the customers who are in CPG and retail. And the customer base are growing in, we started with India, right? So India, APAC, Africa, then we went to Europe and the US and Latin America. So this has become a global platform. And I think we are going more deeper with the use cases. Solutions are helping them to predict the, take a grid or a supply chain, and you can actually ask questions on what is the future of the crop, or what is happening right now, and what has happened in the last 5 years from the climate and the field perspective, right? So it's a very, very deep product, which is also helping them to see, if I take one variety of the crop to a newer country, which are the grids which is going to give you a better yield potential? Can you find those sites? So I think these are very, very relevant use cases when you are trying to diversify your supply chain, enter into new market with the new varieties. How do you accelerate those processes, right? Using technology and AI and data. And these are the use cases are scaling up, right? So with the larger ticket size and because it's solving a bigger problem. Yeah.
Very quickly, since you're expanding and talking about entering new geographies, what about funding? Your last round was in January of 2023. Are you in the market to raise another round, as we understand? Could you give us details on how much, how soon, with who you're in talks with, what valuation you're looking at?
So we are already in the process. We have roped in the investor banker. I think in a couple of weeks, we'll be in the market to raise the capital, and we'll see how it goes. So we are planning to raise around 20 million USD. And we'll discover the valuation as we go. We follow the process and we reach to those discussions. But that is very much in the sleeves, and probably in a month's time, we'll be having those discussions.
All right, you've given us a headline there. $20 million in a month is what you're looking to raise, and have already engaged bankers. Krishna, we'll hope to hear more from you as and when that processes. But thanks very much for your time today on CNBC-TV18.
Thank you so much. Thank you.
All right, moving on. South Korean gaming giant Krafton, known for titles including PUBG Battlegrounds and Battlegrounds Mobile India, has acquired a controlling stake in Nautilus Mobile, a Pune-based game development studio renowned for its popular real cricket franchise. The 118 crore rupee transaction marks Krafton's first control deal in India. And to take us through the contours of the deal and more, joining me now is Sean Hunilson, CEO of Krafton India. Sean, welcome to Startup Street. Now, this acquisition marks Krafton's first controlling stake in an Indian company. You were an existing investor. Tell us what made you bet big on Nautilus Mobile, and you can also walk through us the details of the deal. Will Nautilus remain an independent entity? What happens to the team? And, Jet Synthesis also remains as a significant minority investor. If you could confirm this.
Yes, thank you for having me here. We have worked together and built a trust and relationship with the Nautilus for the last 3 years since our first initial investment in the studio. And it gave us conviction that we can create something bigger and something greater if we can work more closely with the Nautilus team. We are now holding more than 75% of the company through this acquisition by paying 118 crore to Jet Synthesis, in addition to the earlier investment that I mentioned in 2022. Jet Synthesis still remains as a significant minority shareholder, and they will play strategic roles in some areas such as esports. And the studio will remain independent. Of course, we are willing to provide much bigger support after this acquisition.
Sure. And we'll just get into that. So you clarified 75% is what you own now in Nautilus. And, you know, Sean, with the IPL currently underway and Nautilus Mobile being famous for its real cricket franchise, how do you envision Krafton's global expertise and tech capabilities, you know, elevating the real cricket series in terms of innovation and global appeal? What are the big plans going forward? How do you plan to empower the brand?
Well, I think that is exactly the reason why we are acquiring controlling stake in the studio. And also that's why Nautilus team and Jet Synthesis are happy to have this acquisition working for all of us. Although Nautilus is a great game developer, especially in mobile cricket game field, but it has certain limitations, mainly due to the lack of scale. Krafton, we are number 2 in Korea and maybe around top 10 as a listed gaming company. We have around 20 plus internal studios and also large global publishing capacity. We will facilitate real cricket team to observe technological know-hows and utilize our global publishing capacity from Krafton's global teams.
Okay, so what is the kind of impact you see real cricket making globally? What is the kind of demand you're seeing? And also, how do you see this partnership strengthening the sports gaming sector, both in India and globally?
As we are aware, cricket's popularity as sports are getting stronger in India and also globally. I believe there are stronger demands for good quality cricket games. Although there are few good mobile cricket games, mainly from India in the market, but it's still relatively small compared to other sports games like football, basketball, and baseball. I believe through this partnership between Krafton and Nautilus, we can position cricket video games as one of the major sports games alongside football, basketball, and etc., etc.
Okay. You know, Sean, Krafton has already made substantial investments in India, particularly in esports and mobile gaming. And in alignment to Krafton's commitment to the Make in India initiative of supporting local game developers, driving innovation and creating jobs, will we see more acquisitions going forward?
Yes, certainly. I think India has much bigger potential as a game development powerhouse than what we are seeing right now. I think Krafton is deeply invested into this market, and also we are planning to build our own R&D capacity in addition to acquisitions like Nautilus.
Okay. One final question before I let you go. The gaming industry has experienced explosive growth in recent years. Sean, how do you foresee the gaming landscape evolving in India, especially within the mobile gaming sector? What trends are you most excited about?
I think first there are more abundant investments coming from global and also local investors, strategic and financial, which will strengthen game development ecosystem in the country. And also secondly, I can see more young folks are interested in game development as their career options. And also fundamentally, Indian gamers are now demanding more high quality content and also more willing to pay, especially if they can find the value in the game as quality entertainment.
Okay, Sean, on that note, I'll have to wrap up our conversation. But many thanks for joining us today on Startup Street and wish you the very best for all your growth plans.
Thank you. Thank you, Shruti.
On that note, it is time for us to head into a short break. But coming up next, Grow Indigo secures $10 million from British International Investment to transform India's farming landscape. The funding will boost climate resilience and create new income streams for millions of farmers. We put the firm's co-founder on the hot seat to find out more.
relatively speaking, we're going to be very kind.
Also bring that emotion, the gentleness and all of that. So it's just about elevating workwear to another level.
One message that you would like to see your brand on these young empowered women wearing your collection?
I feel like if my collection can give you a sense of freedom, I've done my job. And that's what I want to do. I want to make people feel free.
From legacy designers to fresh voices, Lakme Fashion Week continues to redefine not just trends, but the business of fashion. In Mumbai, Zenia Baria.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go.
Welcome back. You're still with us on Startup Street. On the hot seat today, Agritech startup Grow Indigo has raised $10 million from UK's British International Investment, fueling its mission to revolutionize farming across India. Now, the investment will help scale the company's transformative carbon farming programs aimed at improving climate resilience and boosting farmer incomes. Already covering over 2.5 million acres of farmland, Grow Indigo is also partnering with global brands to drive sustainable sourcing across industries. To discuss the firm's growth plans, joining me now is Usha Barwale-Zehar, the executive chairperson and co-founder of Grow Indigo. Usha, thank you so much for taking time out and being here with us on Startup Street. Before we start, if you could start by taking us through what Grow Indigo does and the kind of impact that you've created on India's agricultural sector, and how are you differentiating yourself from other agri-tech companies?
Grow Indigo is very much focused on sustainability in agriculture. And when I say sustainability in agriculture, we are trying to look at what it is that farmers do and what it is that we can improve to make it more resilient going forward. To that effect, we offer two main solutions. One is around biological inputs. Biological inputs can be used as part of the fertilizer regime, as part of crop protection, but they are more microbial in nature or nature-based solutions. And the second one is around a new stream for farmers in terms of a parallel source of income by way of carbon farming. Now, when I say carbon farming, the farmers actually have to adopt a new agricultural practice, which reduces their greenhouse gas footprint. And this then gets quantified and the farmers are remunerated or paid for by sale of carbon credits. So this is what Grow Indigo is offering to the smallholder farmers across the country. We have been successful in reaching a significant number of farmers between our bio and carbon programs combined. Right. We have reach of more than 1 million farmers.
Absolutely. We'll discuss that further in detail. But if you could sort of share a little bit more about the type of corporations that, Grow Indigo works with and how these partnerships help support both the company's sustainability objectives as well as how it serves the farmers, right? How are you driving profitability for smallholder farmers?
So when the farmers are actually undertaking or participating in our carbon program, by way of changing their practice, they improve their productivity because the soil health improves, the water retention improves, and this leads to better productivity for the farmer. Now, when I say better productivity, it increases yields for the farmer and so, of course, the market value that they get. But in addition to that, with carbon as an additional crop, so the farmer is no longer growing just one crop of rice, but they are also in parallel growing a crop of carbon. It increases their income by anywhere from 5 to 10% just by participating in the carbon program.
Right. And, you've raised this $10 million from BII, right? How do you plan to leverage it to expand your operations and scale your carbon farming programs across India?
We are super excited to be partnering with British International Investment. This funding is really very much needed for expansion of our program. We started with our program in Punjab and Haryana, and we are also currently present in Maharashtra and Gujarat, but on a smaller scale. So with this funding, we see tremendous opportunity for increasing our reach, not only in Maharashtra, Gujarat, but also in MP, UP, Bihar, Chhattisgarh, and also Andhra and Telangana. With the funding, we will also be able to strengthen our data management systems, the science-backed verification, quantification that we do. So the funding is very timely and allows us to scale at a rapid pace.
Right. And what are the expected revenue streams for Grow Indigo in the coming years, especially, with the upcoming issuance of carbon credits and the sale of sustainable agricultural produce to corporations? Can you take us through your revenue targets for the year and what you're clocking already?
So from a carbon farming perspective, we have not actually generated revenues till date because we are awaiting the issuance of the first issuance of carbon credits. We expect this year that we will have almost 500,000 credits, which we will be able to sell on the market. That is the revenue that we anticipate from the 500,000 carbon credit sales. On the biological fronts, yes, we already have revenues and will continue to build that, but the carbon income will be the first time this year. So the issuance is something which is beyond our control to a certain extent, so I don't want to give you a revenue target number at this stage. But 500,000 credits is what we would look to be selling in the market at a price point of $30 per credit.
All right, fair enough. Now, with a presence across 16 states and 2.5 million acres enrolled, what specific regions or agricultural sectors do you plan to target for further expansion in the next few years?
So our primary focus had been on rice and wheat as a cropping system. Now in Maharashtra and Gujarat, we are looking at cotton and sugarcane. In some of the other states that we work, there will be other crops which will come in terms of from this funding perspective, corn, soybean would be the other crops which come in as well. The expansion of the geography would be a key driver for the use of this funding and, of course, strengthening our monitoring capabilities.
All right, Usha, thank you so much for taking time out and being here with us on Startup Street, and we wish you all the best on this journey going forward.
Thanks a lot for having me.
All right, with that, it's a wrap from Ritu, Arundhati and me, Shruti, on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.
Create effective strategies with insightful expert opinions. On the go.
Hello, welcome to Trump Watch, our special broadcast. I'm Parikshit Luthra. The countdown to April 2nd has begun and large economies are keeping a close watch. US President Donald Trump will unveil reciprocal tariffs in less than 48 hours. Speaking at the Oval Office, President Trump said that he has settled on country-based reciprocal tariffs. However, he stopped short of revealing the details. The US President was touting a flat 20% tariff on all imports into the US. But in the last few days, US trade officials have been signaling a tailored approach with different tariffs on different countries. The Trump administration has also released a list of foreign countries' regulations that it regards as trade barriers. The US Trade Representative's report continues to place India on a priority watch list, citing intellectual property concerns. It has also flagged concerns over India's internet shutdowns, data localization rules, among others. Sources tell CNBC-TV18 that the United States government is considering to give India a temporary reprieve from the proposed reciprocal tariffs. However, this is contingent on approval from President Trump. The US leader has claimed that India will be dropping its tariffs substantially.
If you look at the European Union on cars, the European Union already dropped their tariff down to 2.5%. It was announced a couple of days ago, which is what which is a very small tariff. The United States charged very little. And I think I heard that India just a little while ago is going to be dropping its tariffs very substantially.
All right, Trump there saying at the White House that India will be dropping tariffs substantially. We're now joined by former Commerce Secretary Rajiv Kher. Mr. Kher, thank you very much for joining us. You've been a close observer of India-US trade negotiations over the years, and you may also be familiar with Brendan Lynch, who is a career diplomat, and he has been a trade negotiator for many years in the Obama administration, the Biden administration, and the Trump administrations as well. Do you get a sense that the negotiations last week have been positive, and even though the reciprocal tariffs will come into effect, India will get a reprieve?
Well, thank you, Parikshit, for having me over this program. Well, first of all, as far as the negotiations and the character and nature of those negotiations in the last 4 days, I think everything has been under a cloud. One doesn't really know what exactly has happened. But I can imagine that these negotiations have gone in the positive direction, because the statements that have come out clearly show that both countries are willing to enter into some sort of a understanding, and negotiations will be pursued in that direction. Now, as far as the whole issue of reciprocal tariff is concerned, I think there is a lot of haze around it. And as you said, very little has come to be known as to what exactly President Trump means by reciprocal tariff. It can mean many things to the audience. It could be purely a manner in which, a manner of speaking as to if you impose tariff on me, I'll impose tariff on you. And then it can increase in complexity from country to country, average tariffs being equaled. It could be product-based tariff being equaled. It could be tariff line-based tariff being equaled. So at the moment, it's very difficult to really say as to what exactly is meant by the reciprocal tariff, the phrase used very often.
Right. We'd also like to ask you, because earlier today, there was a USTR trade estimate report which focused on the non-tariff barriers in India, from internet shutdowns. It spoke about regulations in the dairy sector which prohibit entry of foreign players. It spoke about data localization laws, India's digital commerce regulations as well. So, considering all of that, do you think US is putting a lot of pressure on India to reduce non-tariff barriers as part of the larger bilateral trade agreement as well?
As a matter of fact, Parikshit, the national trade estimates is a process which US comes out every year. And this essentially lists out the non-tariff barriers which different countries use against, in American perception, use against the American products. And it is for the first time that it is not as if these issues are not pursued by the successive US governments, but it is for the first time when these national trade estimates are being taken as a counterpoint for negotiations. And what one fears is that they can be tariffized. And therefore, when we interpret tariff, we can actually be talking about plain, simple tariffs, or we could even be talking about tariffs plus tariffized non-tariff barriers. So as I said earlier, we really don't know what exactly reciprocal tariff would include, whether they would be simple tariffs, import duties, or they would have many other manifestations of taxes and incentives and subsidies and non-tariff barriers and so on and so forth. So it's a very wide sort of a thing, but national trade estimates have been used by successive US governments to put pressure on us.
Okay. So I'd also like to ask you whether US and this current administration under Donald Trump can be taken at face value. Now, they're a government which has decided to stop funding and financing of the WTO. They have pulled out of the Paris Agreement once again. They are going back on several international obligations wherever they feel it is in America's interest to do so. So do you feel that US has a larger game over here? It's not just about a bilateral trade deal or about India lowering tariffs. They want to become the largest energy supplier of India. Do you think there is a larger game to it and India should be measured with the kind of incentives it gives the US government?
Absolutely. See, we cannot, tariff is simply a weapon. Trade has been used very often by different governments in different countries as a weapon. But here now we see a very concerted, very well planned, very well thought out process in which trade is being used and tariff particularly is being used as a weapon. And if you look at the history of the last 4 or 5 months, since President Trump began his campaign till yesterday, every point tariff has been used for settling all scores in 2 ways. One is use tariff as a tactic to bring the opponent to the negotiating table, and as we have seen, many opponents or many trade partners have, even without asking, have succumbed for very, very many reasons, and we can discuss that. The other is that you have open trade negotiations by challenging imposition of tariffs by President Trump, and that has brought the trade partner to the negotiating table. So tariffs are being used both as a weapon to get the partner come to the negotiating table, and they're also being used. There is a clear understanding that if required, tariffs will be imposed. The consequences of that imposition is something which has still not been explained. There are, of course, reports from economists of both sides where it has been differently interpreted as to tariffs will cause American economy to go into a negative spiral, inflation, and so on and so forth. And there are another set of economists who advise President Trump who have been saying that it will not be so. So you are right, there is a game plan, whether it's energy or whether it's any other product area where they are pursuing market access.
Right. Do you also feel, sir, that when it comes to these tariff negotiations, will these reciprocal tariffs, and no matter what the quantity may be or the percentage may be, will it really hurt Indian companies in the long run? Because, you know, as many global investors say, US has always gained from globalization, and now the US is looking strongly inwards. So even if those reciprocal tariffs are going to be on India, will India be very badly off in the next 8 months to 12 months or 2 years?
Well, Parikshit, 2 things. First of all, you know, this is part of a much larger game that US is playing. And tariffs is being used from the perspective that President Trump has been voicing, that it is being used to bring back manufacturing into the US, to reduce trade deficit, and so on. And so therefore, expecting that all of this would happen in a very short duration is absolutely unlikely, and it can be explained at length. I think from an Indian perspective, tariffs certainly in some product areas will cause a discomfort to India. If you take a short-term view, for example, automobiles, the other day automobiles were imposed 25% tariffs. Now, Indian exposure of automobiles export to US is very limited, and therefore, in the short run, it may not cause. But if India has ambitions of exporting automobiles to the US, then clearly over the long run, it will impact. So it all depends on what products. For example, look at the frozen shrimp. Now, if there is, for example, today India's largest export is frozen shrimp in the agriculture sector. Now, if there is an imposition of tariff, today it goes into the US at 0 duty or between 0 to 5%. Now, if there is an imposition of tariff on shrimp, then clearly it will impact, and therefore the industry will suffer, because US is a large destination for India shrimp. So it depends. It will vary from product to product.
Right. My final question, sir, if very briefly, if you can explain to us that when it comes to the agriculture and dairy sector, in trade negotiations, these have been the red lines, especially when it comes to wheat, maize and dairy. Now, these trade negotiations are being watched by UK and EU also to see the kind of concessions are given. Will India be able to give up those red lines, allow access to US in areas such as agriculture and dairy products, or do you think that India will not cross that line and those sensitivities?
See, first of all, if you go by the rules of the game as they are contained in GATT, then there cannot be a specific tariff reduction for A country or B country alone. It will have to be an MFN process unless there is a free trade agreement which is negotiated. And as far as I understand, what is being talked about is a sectoral, multi-sectoral, bilateral trade agreement and not a free trade agreement. So obviously, the benefits which are given here would pass on to the other trade partners as well, unless it's a free trade agreement with the US. Now, so far as India's agricultural tariffs is concerned and the products of American interest are concerned, I think we need to take into account 2 points. One, there is a complementarity between the two sides in many product areas. For example, the US interest in almonds, in walnuts, in apples, in whiskies is something where where India should have no opposition in a very significant manner. There are product areas where the US has interest and where India may have sensitivities, for example, wheat or dairy. Now, if you look at the Indian tariffs, I think they are on the higher side. In some product areas, they are significantly high. And I think there is a good case for India to review that, irrespective of the fact whether it's the US alone or it's EU. We need to look at tariffs from a very domestic perspective also, because we need to reform our agriculture sector. We need to make it more productive. And therefore, I think it makes a lot of sense for us to review our tariffs. Nobody is making a case that there should be a significant drop, or there should be drop at one go, or that there are no intermediate ways of doing so. For example, there are quotas which can be provided. But there is a case for us to look at these tariffs in a little more serious and a rigorous manner, and not just to rub them aside by saying that they are sensitive areas, sensitive products, and therefore we should not be dealing with them.
That's a very important point, sir. It's time to review the tariffs on agriculture and dairy. We cannot keep them aside as sensitive areas. It's time to review them properly all across the board. Thank you once again for being with us here on CNBC TV18. We're now joined by Anurag Sehgal, Managing Director of Pricewaterhouse & Company, and Himanshu Tiwari, Partner, Trade and Customs at KPMG. Anurag, let me begin by asking you, Pricewaterhouse has done an assessment of reciprocal tariffs on India and the rest of the world. How do you think, and which according to you are the key sectors which will immediately be impacted by whatever tariff is announced by the US government come 12:30 a.m. India time on the 3rd of April?
So thanks for inviting me here. So yes, we have done a detailed assessment. The assessment is largely on the impact on businesses and what businesses should do. Now, having said that, as far as sectors are concerned, largely all the sectors wherein India has considerable presence in the US market will get impacted. The reason is simple, because as of now, though we don't know what will be the shape of the reciprocal tariffs, but what we hear are that the reciprocal tariffs could be product specific or could be country specific. And there could be many, many different permutations and combinations between this. But even if they are country specific, India's average import tariff is considerably higher as compared to that imposed by US, whether you see in trade weighted average terms also. But if they are commodity specific, then commodity to commodity, India's tariffs are considerably higher as compared to the US. So irrespective of them, while the impact may vary in the percentage terms, but all the products, say for example, smartphones. Now India has become a hub of smartphone exports since past few years with the success of PLI scheme and all. But if on smartphones, India's import duty is 15%. If these smartphones are exported by India under the reciprocal tariff measures to US, they may also attract 15% tariff. So they may also get affected. As of now, the smartphone exports from India attract 0% tariff into US. So these may get affected. Similar impact may happen on textile and apparel sector, similar impact on pharma sector, similar impact on auto components. In fact, on auto components, a separate tariff measure has already been announced by the US. So these all sectors may get impacted. Necessarily, whether the impact in the long term is beneficial to Indian exporters or detrimental will have to be seen, because in many cases, what we have examined in our report, the impact on a pure cost arbitrage basis, as far as tariff is concerned, may also be beneficial to Indian exporters if compared with other competitive partner countries, which may be attracting higher tariffs.
All right. Let me also go across to Mr. Himanshu Tiwari. Himanshu, as far as KPMG is concerned, have you done any assessment on what extent can India reduce tariffs, the average tariff rate? So what the US is right now talking about is that India's tariff rate all across the board is as high as 17%. US is around 2.5%. When it comes to non-agricultural goods, it's almost 13%. You need to bring it down somewhere close to the United States. What can India do in terms of bringing average tariffs down comfortably to somewhere bring it in line with where the US is?
Thanks, Parikshit, for having me here. I guess India is following a two-layered approach. One is a unilateral part of the tariff reduction that we see very clearly that Feb 1st, when the Union Finance Minister announced the budget, during the budget time, the duty rates on 1600 cc and above automotive, which effectively is the area where Harley-Davidson supplies motorcycles in India, the duty rates have been reduced substantially. Also, we have seen that the duty rates on whiskeys have been reduced, originating in United States. So there is a unilateral action that India is taking in reducing the tariff in the products where the US manufacturers and producers have a deep interest. This product range includes automobile, medical devices, agricultural produce, whiskey, dairy product, steel and aluminum products. So here we will see that India is initiating the steps by demonstrating significant reduction for specific products. But in addition to that, there will be a bilateral approach where the two sides will sit together and come to a common agreement that which are the products where India is seeking market share increase in US and where US manufacturers are seeking market share increase. So that will be a subject matter of bilateral discussion. But I would emphasize this, Parikshit, that while the world has latched onto this April 2nd as the date where significant announcements will be made, but I would say that it is beginning of a period of change. We'll have to watch it out for an extended period of time. It is that the trade economic cycle that we have seen for past 3 decades, that trade economic cycle is changing its direction. We have seen in past 3 decades that the duties were being reduced. It was the phase of free trade and globalization. That trade economic cycle is changing. The tariff barriers, the more active users of trade and tariff barrier would be in vogue. and various countries would be using it. So it's a very active phase of change that we'll watch out for next decade or so. So it is not a point of time event, it is a period of time event, and we have to approach it in that manner.
All right. So Himanshu, do you believe that this is weaponization of tariffs, and it's not just limited to US? Other nations are also watching, and perhaps this is the beginning of weaponization of tariffs and trade, not just for 1 year, but for the next 1 decade?
I would say that, yes, it would be a long-term layered rollout of trade and tariff changes. I won't use the phrase weaponization. I would say that trade and tariff as a policy tool, which will be more actively used in the coming decade, and various countries will take a very calibrated approach and to these changes. It is a long-term change, and it will roll out in multiple phases with various stakeholders balancing out and observing what is happening at the other end.
Right. Let me go across to Anurag once again. Anurag, will the bilateral trade deal, there is a lot of optimism that such a deal would be signed by September or October this year when Donald Trump visits India. In fact, India has said that the talks last week have been very positive, and the US is encouraged by those talks. Will this bilateral trade agreement be actually beneficial for Indian companies in growing their trade basket, becoming a larger supplier for the world as well?
Yeah, surely. There is no doubt about it. If India and US are able to close this bilateral trade deal, it will be beneficial to Indian exporters for the sheer reason. I can give two reasons why it will be beneficial. One, when the bilateral trade deal happens, even if it is not a FTA, it is a side deal wherein MFN-based reductions are agreed by India. But then also India would seek something against the market access which India is providing. So some access, greater access to the US market will be gained by India, one. Second, if reciprocal tariffs have been brought in, or other such tariffs have been brought in, say auto component tariffs have been announced, in bilateral trade deal, India will surely negotiate a way to mitigate these tariffs. So existing trade barriers or the imposition of certain more trade barriers will be mitigated. More trade openness will be brought in terms of market access in the US market. So these two will be a great enabler for Indian exports to the US, and certainly it will benefit Indian exporters. One more important thing is the posturing. Say if US, as of now, since past 4 months, has only announced negotiation of a trade deal with India amongst all the major economies. So even the US businesses, which know that manufacturing setup in US is a long and ardent process, and cost of production could be very high, because for years now US has moved on from a manufacturing economy to a largely tech-driven, and services economy. So manufacturing can be a long drawn process. So for India-US trade deal, even the backing could be given by the US businesses who know that apart from India, they would not be able to source cost-effective, manufactured and resilient supply chain products into the US. So in all, if India is able to close this trade deal, it will be very beneficial for Indian exporters. That I'm very sure.
All right, we've run out of time, but thank you so much, Anurag and Himanshu, for joining us on the program with those sharp views on what 2nd of April 2025 means in the history of world economics going forward. With that, it's a wrap on this special episode here on tariffs and trade. We'll keep an eye out on how India is impacted on the 2nd of April.
Hello and welcome to this special edition of Market Editor. The markets may be our starting point today, but we are diving deeper into a space that's buzzing with opportunity. India's emerging dominance in the CRDMO space, we call it CDMO, contract research, development and manufacturing. And to help us decode this theme is none other than seasoned investor and market veteran Madhu Kela.
That's right. Over the next 30 minutes, we'll spend a few minutes on Madhu's current take on the market, but the spotlight is firmly on a sunrise sector where he sees immense long-term potential. We'll also be joined by the managements from Laurus Labs and OneSource Pharma, two companies at the heart of this CRDMO story, with Madhu turning interviewer, asking them the key questions on scale, strategy and science.
Well, from investment insights to industry deep dive, this promises to be a power-packed half hour. Let's dive straight in. Madhu, welcome to the program. Thank you very much.
Thank you so much.
And we can take a back seat today.
No, absolutely. We'll all do it together.
Hum aaram karenge, aap kaam karenge.
We'll all do it together.
But I think you've done so much work on the entire CDMO space. You and your team have really done fabulous. I mean, we'll try and get at least a fraction of it on the air as we go forward. But since we have you with us, Madhu, I want to start with just a quick view on the markets per se and where we are. We've come a long way from the lows. What is your perspective now?
Prashant, I think from a big picture perspective, we have spoken this many times. I would once again request that people must not extrapolate what has happened post-COVID in terms of return, in terms of finding multi-bagger opportunities where money has gone from 10 to 100 times, right? Because the lows were so drastic, the returns were fabulous, right? So I don't think that we must expect those kind of returns. Having said that, I am not in a camp that the bull market is over and this is the beginning of some bear market, and you can take the number reference from wherever you want. So if you take the reference from COVID low, then the returns will look very, very attractive.
Correct.
And hence the next 5 years may look very dim. But if you take the same base from 2013, when the market was at a low, then it is again average return which the market has delivered, including the last 5 years. So my point.
India is amazing. Every time we went over the Himalayas, and I'll tell you, Butch got some incredible pictures of the Himalayas. They're just amazing. And you can see, like I've described it before, just like this ripple that happened, obviously when the plates collided, and then as it flows down into India, it's many, many colors. I think when you come from the east going into like Gujarat and Mumbai, the fishing fleet that's off the coast there gives you a little bit of a beacon that here we come. And then all throughout India, I think the impression I had was it was just like this network of lights from the bigger cities going down through the smaller cities. Just incredible to look at night as well as during the day, highlighted of course by the Himalayas, which was just incredible as a forefront going down into India. I hope, and I think for sure, I'm going to be going back to my father's home country and visiting with people and getting excited about the first, or not the first, but the Indian astronauts who's going up on the Axiom mission coming up. Pretty awesome. They'll have a hometown hero there of their own that will be able to talk about how wonderful the International Space Station is from his perspective. But I hope I can meet up at some point in time and we can share our experiences with as many people in India as possible, because it's a great country, another wonderful democracy that's trying to put its foot in the space countries, and we'd love to be part of that and help them along.
Hello and welcome to our special broadcast. I'm Parikshit Luthra. It's Judgment Day in the tariff war. US President Donald Trump is all set to unveil a plan to impose tariffs on key trading partners, which is likely to include India. US officials have made it clear that top nations with whom America has a large trade deficit will be the prime target of the tariffs. What does this mean for India? The US runs a trade deficit of $41 billion with India, which ranks 11th in a list topped by China, Mexico and Vietnam. Sources tell CNBC-TV18 that the United States has received a far-reaching offer from India to bring down the average tariff rate. There are one of three ways that this could actually pan out for India. First, tariffs for India could be suspended if India and US reach an agreement on tariff reductions. Number two, progress in India-US trade talks could bring about a mitigation of reciprocal tariffs on India. Thirdly, reciprocal tariffs could be imposed on all nations, including India, without any exceptions whatsoever. Neither Trump or his administration has revealed any details regarding the structure of duties or the countries that will be impacted. However, White House spokesperson has said that the tariffs are likely to come into effect immediately.
My understanding is that the tariff announcement will come tomorrow. They will be effective immediately. And the president has been teasing this for quite some time, as you know. He's talked a lot about April 2nd as Liberation Day in America. It would be taking place today if not for April Fool's Day. But tomorrow will be the day, and he's been talking about it for a while. And as a result, you've seen these companies make commitments to investing right here in the United States.
All right, let's go across to our guest this evening. We're joined by Anup Vadhavan, former Commerce Secretary, Richard Rosso, Senior Advisor at Center for Strategic and International Studies, and Brian Coulton, Chief Economist at Fitch Ratings, with us as well. Brian, let me begin by asking you, it's now a given that tariffs will come into effect immediately. What's your sense on how this is going to impact the corporate sector worldwide, the immediate reaction that you see in global markets once these tariffs kick in?
This is a huge and rapid change in US trade policy that's going to reverberate right around the planet. I don't think anybody back in December thought that Trump would pursue these tariff hikes so aggressively, so quickly, and implement them on such a broad basis. So this is definitely going to take a big chunk out of global growth. I don't think anybody's going to be insulated from it completely. We've downgraded our global growth forecasts from 2.6% to 2.3. We think US growth will slow to about 1.5. It's been running at about 3% over the last 2 or 3 years. So that's a really big slowdown. We'll see a rise in unemployment, but Europe will also suffer, as will Asia, particularly the global manufacturing export centers in Asia. A lot of which are focused ultimately on providing the US consumer. So this is a huge shock for the world economy.
Right. Before we move on to our other panelists, Brian, what's your view on how this is going to be impacting India? Donald Trump has always highlighted India as a tariff king, and he has recently said that India will give concessions to the US government and the US economy. How do you see this impacting India, or you feel that India will be insulated from the larger global impact?
Well, I mean, talk about reciprocity. We've recently published a detailed report on, how do the tariff rates faced by US exporters in trading partners markets compare with the rates that the US charges on exporters from those countries. And, in the US and India comes out, when you look at the simple average MFN rate charged by US exporters to India, it's about 12.4%. That compares with 3.7% faced by Indian exporters into the US. So that gap is one of the widest amongst the major economies. So clearly, India is highly exposed to a reciprocity justified action from the US. Now, the Indian economy is not that open compared to China, so exports and imports as a share of GDP are not particularly large in India, so that provides some insulation. Exports to the US are not huge either, so in some sense it's less exposed than, say, a country like Vietnam, which has a huge part of its GDP tied up with exposures to the US. But nevertheless, I don't think India is going to be insulated. If India really addresses Trump's focus and brings down the import tariffs aggressively, there'll be a question about, are they just going to do that to the US, or are they going to make a broader attempt at trade liberalization? That will expose domestic firms in India to greater competition. So there's definitely some big risk here, even for the Indian economy, although it's less exposed than many.
Right, that's an important point. Rick, let me get in a view from you. Is it now given that those tariffs will be imposed all across the board? We hear that this is not going to be a product-by-product tariff, but these are broad brush tariffs that will be announced country-wise.
Yeah, I've heard the same things that you have. There still seems to be a lot of deliberations, even up through yesterday, in terms of what the White House, the specific plan they're going to announce. But every single review that I've ever seen, India comes out at or near the top in terms of countries that are going to be hit by whatever form the tariff rules come out. But I'm not terribly surprised by the announcement. I mean, the United States is India's #1 economic partner by far, the largest source of exports by a significant margin, the largest market for services exports, largest source of FDI. So to hear that India, and driven directly by the Prime Minister's office, as some reporting have come out, is really pushing to make sure that India comes up with a package that accommodates some of the concerns. So I suspect there's a pretty good chance India will get hit immediately, but this drive to get a deal done so that there's a carve-out sooner rather than later. They talked about the fall, but seems to me like we're pretty likely going to have something ready to go in the spring, trying to blunt that. So then the question is, what are the secondary impacts? Is India going to get flooded by exports from all the countries that have seen them lose market access to the United States? Or, are there going to be additional investments